All right, guys. What is up? So let me know if you see this, if you're here, if you're, doing this, if it's happening. Oh, now I see it again. Okay, cool. Good. So we have one people watching. That's amazing. That's fantastic. Let's pop those numbers up and let's get people in the house. So we are making a transition. Now this is the time. Sai, you and I are here now. 3 people. Now how long will it take us to get to 100 people? How long does it take? So I'm gonna start my stopwatch. So please, guys, spread the links. Let everybody know that we are here. Um, so it says, "What's up?" Now we're 12 people. In 8 seconds, we're 12 people. Come on. Uh, do we still have in this studio that song that we had?
I want money.
Let people know that we are starting here. We had to swap over. Let me actually pull Ren's show up. Let me actually pull Ren's show up and do this. It is coming up now in 5 minutes, 6 minutes. So guys, we need everybody to join here. We've got 21 people joining. That's incredible. So it's very good. Let's wait out. And then I will really need to go. So David or someone, if someone from the team could come in here and join, that would be fantastic. I will need to go. I'm actually gonna give a little tip for you guys, or a little, not tip, sorry, I've been up for so long. A sneak peek. So we are starting a series. If you've been on our Discord, you saw that I've posted that we are starting a series called Connecting the Dots, quoting the famous Steve Jobs on how successful traders became successful and successful players in the industry became successful. So the way we're going to do that is we're going to interview people, or I'm going to interview people in a long Joe Rogan type of format, and we are starting with Annie. We've done one with Kyle. Now we're gonna have one with Annie. I'm gonna record that in 40 minutes. So this is why I have to go. And I'm going to do one with Garrett Soloway. It's gonna be super duper exciting. It's gonna be on this channel. So smash the like button, smash the subscribe button, and let us know if you see this. Ren's show is coming up. That's fantastic. If someone from the team could just jump in here, that would be incredible. So we don't drop people until then. I can share my screen until then, if so we don't. You know what I'm gonna do, guys? I know what I'm gonna do. You don't know what I'm gonna do, but I know what I'm gonna do. And what I'm gonna do is gonna be good for you as well, I'm telling you. So look at this. This is Banter Bubbles. Now Banter Bubbles is a tool that is just incredible. And it really is, not because ours, but because it's really good. So the reason why it's really good is because you can come in here and you can pick all the coins that you want. You can filter for day, you can filter for week, you can filter for month, and you can see all these bubbles. And the good part about it is you connect it with your Twitter, you click in one of the bubbles, and if you're signed in, you can just post in here and discuss with people. Now it's it's just coming up, so the interaction needs to be up on the bubbles, but it is coming up and coming. Like, this is the underdog, and I'm telling you, this is gonna be the most powerful tool in the next bull. I truly personally believe that seeing Josh the legend, developing all these tools in it, and you've got filters and you can do so many things. So I can just come here, I can create my own portfolio, I can create different characteristics, so I can make sure that I can filter the bubbles based on market cap. So the bigger the market cap, the bigger the bubble, then I can filter them based on the content within can be the market cap. So I see the market cap, I can see the volume, the 24-hour volume, so many stuff that can be done with this. And this is literally just the beginning. I can filter for what kind of category I want. So for example, I can look at all the alleged SEC securities. So the coins that the SEC said, that they are securities, you can look at these and then just decide if you want to get in there, or if you see one of them popping, you might just want to research that a little bit and see if that's something that you might be interested at. So yeah, that's about it, guys. Ren's show is starting very soon, so I think I'm gonna pull that one up. It's starting in like 1.5 minutes. Unfortunately, I have to go. I see David here in the background. I will have to go now. I appreciate your presence, and I just want to give a big shout out to the entire Crypto School team and volunteer team, because the work that's been put into these is just incredible. Special shout out to Chris for pulling this whole thing together, taking ownership, and working his way through the whole Crypto School team, the volunteers, and you guys for being here. And I see some people be here for like the past 12 hours, which is just incredible. It warms my heart to see this. And I just want to tell you that it might sometimes, this whole choppy market might seem like, you know, you're wasting all your time and we're never going to make it. But I am here to tell you that we are going to make it. We are going to have a next bull market. And you who's been living through all this choppiness and all this decline and all this bad depression, you are going to be the one that's going to make it in the bull market. So it's crucial for you not to give up right now. Maybe it's going to be 2 months, maybe it's going to be 4 months, maybe it's going to be 8 months. I have no idea. But what I know is that if you give up now, you really lose. So the only way you lose is to give it up now. The other thing is that we're going to have constant videos coming up on this channel. So make sure to subscribe and hit the like button. And if you can share it, that's just, you know, the cherry on the top. So I think Ren's show is going to come up very, very soon. It's starting. We're waiting for Ren. So we should do that. I will say goodbye, everybody. I'm going to put some music in that can be removed later. So until then, we have the music going here. And yeah, I love the session. I love the man. See you guys.
did last night was he may have actually broken the market. What is it that he said that actually scared people? And why is it that right now, if we look at Bitcoin, last night was he may have actually broken the market. What is it that actually scared people? And why is it that right now, if we look at Bitcoin, here we are at 26,540. You remember before FOMC last night, we were at 27,400. We thought we were going to get a pump. We also touched the top of the Bollinger Bands, and now we're going to come down. Now, if we start coming down again to the bottom of the Bollinger Bands, we could go back down to 25,155. So what did he do? What did Powell say? What did Powell do that has set off this reaction, that has set off the Dixie? Look at the Dixie. The Dixie has now had 1, 2, 3, 4, 5, 6, 7, 8, 9. We are in the 10th green weekly candle for the Dixie. And to make matters actually even worse, if you go on to the daily, the Dixie has just had a golden cross. Now, you know what a golden cross is. The golden cross is the opposite of the death cross. When you have a death cross, usually prices continue to go down. When you have the golden cross, that's when prices usually go up. And I'll take you to the last time that we had this golden cross. Look what happened to the Dixie. So what did Powell do? Why is the market responding the way the market's responding? We need to talk about that. I'm also going to show you something now. And then I'm going to tell you why I'm showing it to you. So first of all, I want you to watch this, because this is probably the most important clip that you will see today.
Channel where we critique, attack, and Hello there, you Awakening Wonders. Now, this isn't the usual type of video we make on this channel where we critique, attack, and undermine the news in all its corruption, because in this story, I am the news. I've received 2 extremely disturbing letters, or a letter and an email, one from a mainstream media TV company, one from a newspaper, listing a litany of extremely egregious and aggressive attacks, as well as some pretty stupid stuff like my community festival should be stopped, that I shouldn't be.
So that's Russell Brand, and that's the beginning of something that he said, and we're going to talk about it a bit later. And I know you don't know it now, but I'm going to show you why that is the only reason in the world that you need to go out and actually buy Bitcoin today. It's the most important thing that you're actually going to do. I'm going to link it back to the Russell Brand story. That's going to be something that we must talk about today. This is a story that cut me deep, and we have to spend some time talking about Russell Brand getting potentially cancelled and why that means that you and I need to buy Bitcoin absolutely immediately. Then I'm going to show you a brilliant trading tool, that's going to change your life. I'm going to show you how I made 1 ETH in less than 1 hour, and you can make 1 ETH in less than 1 hour too. I want to talk about a new blockchain. The blockchain is that blockchain over there, which is a combination of Solana, Cosmos, Celestia, and Ethereum, and why this may actually be a complete revolution in blockchain, and maybe even set off another bull run or be a catalyst for the next bull run. Then, lastly, if you want $100 for free, what you need to do is stay tuned until the end of the show. And so, to get the show going, I want to thank the community who sent this to us.
Bull run's coming back. 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 Crypto Panda, I need crypto Panda. Give me crypto Panda, I need crypto answers.
Let me know in the comments if you like it. I didn't make it. Obviously, community members sent it to us. Thank you. If you were the people that sent it to us, we will give you guys a thing. I mean, I didn't like it, but then the whole day I was like, crypto banter, baby, crypto answers. Someone says the song's terrible. Yeah, well, you let me know what you think. Listen, first of all, I want to apologize to you guys. I want to apologize on behalf of Jerome Powell for giving us the most boring FOMC meeting of our lives. I feel that we all wasted about 2 hours of our time last night. In fact, the most exciting part of the whole event last night was watching on our new channel. So this is our new channel called Crypto Banter Plus. If you're not already subscribed to Crypto Banter Plus, go and subscribe to Crypto Banter Plus, because we're going to have a whole lot of trading videos here, Annie's trading videos, my trading videos, Sheldon's trading videos, and a whole lot more content here. And as you subscribe, what you'll see is that we've made this little counter to see everybody subscribes. How do you subscribe? There's a link below. It's a top link. Click on that link, go to the channel, subscribe to the channel. You're going to miss out, because yesterday, the video, the FOMC that we did, we actually watched it here on Crypto Banter Plus. So this is where a lot more content is going to happen on Crypto Banter Plus. So be there, join us. This is where a lot of stuff's actually going to happen. And the most exciting thing about last night was actually just watching the subscriber count. It was the only thing that was going up and down. Anyway, be that as it may, today, unfortunately, things aren't so good. We are dealing with a delayed reaction, a hangover. There we go. I see you guys are subscribing. We are dealing with a hangover. We're dealing with a delayed reaction from what Powell did or what Powell said last night. And we need to understand why the market reacted the way that it reacted. And that's what we're going to be doing today. We're also going to be talking about Russell Brand and how Russell Brand is actually getting canceled, and the lengths that governments are going to cancel him. Why are they trying to cancel him? And why is that a reason why you and I need to buy Bitcoin immediately? So listen, if you're not already a subscriber to this channel, subscribe to this channel. If you're not a subscriber to Banter Plus, go and subscribe to Banter Plus. I see you guys subscribing to Banter Plus. Thank you, thank you, thank you. Let's get this show on the road. We've got a lot to talk about today. As we stand today, we're still positive for the month of September. Remember, I said we're going to be positive for the month of September. We are still 3% up, even though it's not looking good out there. It's not looking good. 26,570. Bubbles are absolutely, absolutely red. If Benjamin Cowan is right, he says, get this, let's change the scene here. Let's make it look more elegant. How cool is that? So in 2019, after the first 20 days of September, Bitcoin was up 6%. But by the end of the month, Bitcoin was down almost 14% from its monthly open. In 2023, after 20 days, Bitcoin is up 5%. Wake me up when you know what I mean? Saying wake me up when September ends. So question is, are we going to follow this pattern, or are we going to follow the pattern that I said, where we continue to go up? I do have one little bit of good news for you guys before we start talking about the FOMC. The one little bit of good news that I have for you is that the Mt. Gox trustee has actually come out and said that instead of paying all the Bitcoin that were in Mt. Gox this year, they now postponed it by another year to October 31st, 2024. Why did they postpone it? Any guesses as to why they postponed it? Come on, you guys are smart. Why did they postpone it? Because that's how the liquidator makes money. If the liquidator paid everybody out, the liquidator would have nothing to do, then he wouldn't make money. But if he delays it for another year, it's been delayed for since 2014, then, well, he makes more money, right? Got it? So that's why the Mt. Gox trustee is not flooding the Bitcoin, the Mt. Gox Bitcoin into the market. So we have been talking about them. That was like one of the big risks today. And now we know that risk isn't actually going to materialize today, or this year, because the Mt. Gox trustee is going to be delaying it. All right, so before we talk about FOMC and why we're getting the hangover, I want to show you, I did promise you guys, I'm going to show you one of the most awesome trading tools that you will ever have in your life. And to be honest, we didn't actually want to share it because it is one of the trading tools that is unique to Banter. It's something that we keep in-house. It's one of like our secret weapons. And one of the reasons why we don't want to share it is we don't want to share our amazing IP with competitors, because like that would be exposing our amazing IP to competitors, the things that makes us amazing with competitors. But you're not. Since you guys are part of the family, I want to show you an amazing trading tool that's really, really, really going to change your life. So you know that we built Banter Bubbles for you guys. And the reason why we built Banter Bubbles for you was because what we wanted to see, we wanted you guys to see whether tokens were going up or down. And then what we wanted to see is why they were going up or down. So if you click on Immutable X, you could sound today, you would have found out is because it was listed in one of the Korea's exchange. You see, so there we go. That was actually written here. But now we get our information at Banter through a thing called the Banter Newsroom. It's a group where all our researchers congregate, and we use that group for all of us to get all of our alpha. What we've done now is we've put the Banter Newsroom on the Banter Bubbles. Okay, so you can literally see all of our our analysts and exactly what we are looking at, exactly all the news that I get while I'm getting it live on the show. You guys can get it here while you watch the bubbles. Now, if you want to, like, as this news comes out, this is going to scroll, and you can kind of set it onto the 5-minute time ratio to see which news is actually moving the market. So here you have 43 of the brightest minds in the industry dropping all the stuff that they are watching, right? And you can basically see our internal newsroom chat while you are watching the bubbles. It's available on the app and it's available on Banter Bubbles. So listen, go and check it out. You can't comment, you can like stuff and say, okay, talk about this. When you like something, we'll talk more about it. So that's why we're doing it. It's a secret weapon. We were like contemplating, should we launch it? Because if we launch it, that means that all the other channels are also going to start looking at our thing. But you know what we realized is they're all copying us. I mean, one of the other competitors also launched a plus channel. Not going to say who. Not going to say who. But he launched. This is the best trading tool that you will ever have. It's basically a Bloomberg feed curated by our entire research team. And by the way, if you like any of our researchers, you can just click here and you can just follow them on Twitter. I'm not going to do that now, but you can see it. Anyway, all right, let's talk about the news and let's talk about Powell and let's talk about what he said yesterday that upset the market, because something that he did or something that he said actually upset the market. He didn't upset the market last night, but as the market processed the information, the market didn't like what Powell had to say. What was it? And actually, quickly, let's just see what the US, everything's red. It's, what a terrible day. Okay, the US 30 is down 0.2%. The US 500 is down. The Dixie, absolute tear. So let's look at what actually happened last night. In a nutshell, it was very, very, very simple. They left rates unchanged as predicted. There was 99% chance that they wouldn't raise interest rates. However, I said to you guys as we were going in that the main thing we have to look out for is the dot plot. That dot plot is going to determine the sentiment or what the Fed officials are thinking. So here is the dot plot. Here's what happened. Yesterday, in the dot plot, what you can see is that 12 Fed officials out of 19 Fed officials said that there's going to be another rate hike this year, which means that if you look at the Fed meetings for this year, there's only 2 more this year. It's November, and after November, it is the 13th of December. So what they're saying is that in the next, let me make it a bit better. So in the next 1 or 2 FOMC meetings, there's going to be a rate hike. Now, I said for a long time that there's going to be another rate hike. I actually said I'm willing to put a 90% probability on the fact there's going to be another rate hike. Now, if you look at the probabilities for November, there's a 68.5% chance that there's going to be no rate hike. That's what the market's telling you right now. And if you look at December, still 54% chance that there's going to be no rate hike. And if you look at the probabilities are saying no more rate hike. That's what they're saying. No more rate hikes. So the Fed thinks there's going to be another rate hike. The market doesn't believe the Fed that there's going to be another rate hike. But then Powell may have said something else. He said, it may be that the neutral rate has risen. Median of neutral rate estimate hasn't risen, but people are moving their estimates. It is plausible that the neutral rate is higher than the longer run rate. What does that mean? Sounds like a whole lot of gibberish. The neutral rate is the rate at which the economy is neither growing nor shrinking. So it's like, what is the interest rate where the economy doesn't shrink and doesn't grow? And what Powell says is that it may have risen, which if you translate that into English, it basically means that rates are going to be higher for longer. Rates are going to be higher for longer. And that's exactly what people are talking about now. The market is now saying that the first rate hike will only come next year in July and actually potentially next year in September. And that's the problem. Powell said he is focused on getting the soft landing. He kept talking about the soft landing, and he said, in order to get the soft landing, we're going to need to keep rates higher for longer. And that, of course, scared the market. So let's listen to what he said, and let's understand why the market got so spooked by something so basic. So let's listen.
A soft landing is a primary objective, and I did not say otherwise. I mean, that's what we've been trying to achieve for all this time. The real point, though, is the worst thing we can do is to fail to restore price stability, because the record is clear on.
Okay, so you heard that, right? I'm going to play it again and tell me if you hear the word recession.
A soft landing is a primary objective, and I did not say otherwise. I mean, that's what we've been trying to achieve for all this time. The real point, though, is the worst thing we can do is to fail to restore price stability, because the record is.
Did you hear the word recession? I'm going to play it again.
A soft landing is a primary objective. And
You don't hear the word recession anywhere here. However, the market interpreted that as that Powell is forecasting some kind of recession. So why did that happen? Because if you look at the statistics, statistically, the number of times that people say the word soft landing is often followed by a recession. So that's why people are saying, if he keeps talking about the soft landing and not sure that he can engineer the soft landing, that means that we're going to get into some kind of recession. Now, we may be getting into some kind of recession, but I don't think so. The reason why we may be getting into some kind of recession is because people's savings are finished. When this orange line gets down to the bottom, there's no more savings. There's no more, people don't have savings, and therefore people aren't going to be spending anymore. People are depleting their savings. So where are we? Right now, the market is starting to respond to what Powell said. What is the market doing in response to what Powell said? First thing is, interest rates on 10-year treasuries are going up. Okay, high up, which means that people are now convinced that interest rates are going to remain high, and they're going to remain high for very, very long. The last time that rates were this high was in 2007, before the 2008 collapse. So it's quite scary. What it means is the market is starting to understand, to comprehend the fact that we're going to have high interest rates for a long period of time, which means it's not going to be easy on the economy for a while, until or unless the Fed breaks something. The dollar, big problem with the dollar. On the weekly, 10 green weeks in a row. On the daily, we have the golden cross, which means that people are expecting the dollar to strengthen. Hedge funds are starting to buy the dollar. So it's quite scary, because a strong dollar means markets coming down, means Bitcoin coming down, means liquidity coming down. It's not good. So we still have an inflation problem in the US. This is why this is all happening. Powell says, though, get this, Powell says, if you exclude volatile food and energy prices, core inflation is actually coming down. So that's quite a good thing. So basically what Powell's saying, according to Adam Cochran, is as long as you don't eat, heat your house or cool your house, or need to see in the dark, then you can afford to live. There's no problem. Then your inflation is pretty stagnant. One of his better tweets, because he's not talking about a Binance. So that is actually one of his better tweets. One other thing is, remember that CPI has moved up because what drove up the increase in CPI was actually fuel, energy, and gasoline. That's why CPI moved up. But remember that up until now, Biden has actually been depleting the US strategic oil reserve, which is exactly that. It's a strategic oil reserve that you're only supposed to use in extreme situations and maybe times of war. And Biden has been depleting it to try and reduce prices. But now he can't deplete it anymore because it's almost gone down to zero. There's nothing left to deplete anymore. He's done it so badly, so badly, that if you look at all the presidents that have done this, the one who's destroyed the oil reserve since 1977, the one who has destroyed the oil reserve the most is Biden, and not by a little bit. This guy has done a job and a half of destroying the U.S. strategic oil reserve, and in my opinion, also the economy. Oh, wait, I better not say that. I'm sorry, Mr. Biden. I'm not going to say that. You're doing a fantastic job, and the only reason why I'm saying Biden's doing a fantastic job, I'll tell you why. Biden's doing a fantastic job, because I don't feel like getting cancelled. So, Joe, you're doing a fantastic job. Kamala Harris, you're the best vice president that there ever was. Who else? Who else is there that we need to praise? Maxine Waters, you are absolutely amazing. You are the best person in the whole world. Who else? Come on. Nancy Pelosi, you definitely did an insider trade. You've got to say all these things, because if you don't say all these things, you could actually be cancelled. And being cancelled is a very, very, very serious thing. And I want to spend some time talking about being cancelled. The scarecrows could cancel you. I'm not worried about that. I'm worried about what's going on here. This is This is a very, 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 very Gary Gensler. You're also amazing. You're the best SEC president you've ever had. You've protected more investors than anyone I've ever met. Hillary, you're also amazing. Who else? Who else is? There's actually a lot of amazing American politicians, especially the old ones. They're really good. The old ones are really nice. Have your respect for your elders. I think it's like one of the 10 commandments. No jokes. I got to say all these things. I can't really say what I feel. You know why? Because I'm on YouTube. And the problem is that if you're on YouTube, you can actually get canceled. And I want to show you why this is the one reason in the world. If there's no other reason in the world that you want to buy Bitcoin, I want to show you something very, 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 very scary. So here's how it starts. And it's been playing on my mind all day. It's something that's killing me. It's eating me up inside. I saw this tweet by Mario Norful. Now, what you may know is that there have been some allegations in the media, not in a court and not proven guilty at all, but there are some allegations against Russell Brand.
There you awakening wonders. Now, this isn't the usual type of video we make on this channel where we critique, attack, and undermine the news in all its corruption, because in this story, I am the news. I've received two extremely disturbing letters, or a letter and an email, one from a mainstream media TV company, one from a newspaper, listing a litany of extremely egregious and aggressive attacks, as well as some pretty stupid stuff like my community festival should be stopped, that I shouldn't be able to attack mainstream media narratives on this channel. But amidst this litany of astonishing, rather baroque attacks are some very serious allegations that I absolutely refute. These allegations pertain to the time when I was working in the mainstream, when I was in the newspapers all the time, when I was in the movies. And as I've written about extensively in my books, I was very, very promiscuous. Now, during that time of promiscuity, the relationships I had were absolutely always consensual. I was always transparent about that.
Okay, so look, I don't want to get into the allegations. I just want to say that they may or may not be true. I don't know. And to be honest, I don't really care. What irks me, and the problem with the story, is this tweet over here. So here's how it goes. The US government is now getting involved in aiming to cancel Russell Brand. The British government, get this, the British government sent a letter to TikTok, Rumble, and now we also know Twitter, asking if Brand is able to make profit from his content on the platform. This implies that they are directly targeting Brand and attempting to fully deplatform him. The trial hasn't even started, but the government is participating in the court of public opinion to cancel someone who hasn't even been to court. So now you've got the media coming up with allegations. As a result of these media allegations, big brands, people that have worked really, really, really hard to build channels, are being canceled, and governments, cancel culture, left-wing governments are starting to cancel people. So get this letter. This comes from the Culture, Media and Sports Committee from the House of Commons. It was sent to TikTok, it was sent to Rumble, it was sent to Twitter. It says, "Dear Theo, I'm writing concerning the serious allegations regarding Mr. Russell Brand in context as a user of TikTok with more than 2.2 million followers on the platform. The Culture, Media and Sport is raising the question whether the broadcasters who previously employed Mr. Brand or production companies who employed him to examine both the culture and industry in the past and whether that culture still prevails today. Although Mr. Brand no longer appears on television, he now has a follower base on social media, including TikTok, where this weekend he republished his preemptive response to the accusations that were made against him by the Sunday Times. While we recognize that TikTok is not the creator of the content by Mr. Brand, and his content may be within community guidelines set up by the platform, we are concerned that he may be able to profit from his content on the platform. We would be grateful if you could confirm whether Mr. Brand is able to monetize his TikTok posts, including his videos relating to serious accusations against him, and what platform is doing to ensure that the creators are not able to use the platform to undermine the welfare of his victims of inappropriate and potentially illegal behavior." Now, bear in mind that up until now, Russell Brand hasn't even been proven guilty. These are just media allegations by mainstream media, who we know, because we've just lived through COVID, are the masters in fake reporting. So Elon Musk says, of course, the mainstream media here don't like competition. This guy here, Konstantin Kissen, says, "I don't know if Russell Brand is innocent or guilty, but I do know that this is very, very, very wrong and very, very, very scary, because this is the letter that was sent to Rumble." Elon says that there must be something more than meets the eye here, because if the concern is actually sexual predation in the entertainment industry, there is a very, very long list. And why are they going after him, and why are they going after him now? Remember, he's got big channels. He's got 6.64 million people on YouTube. And by the way, YouTube were the first people to demonetize him. So basically, what they're trying to do is choke the way that he makes money. He makes money out of broadcasting. There's mainstream media allegations against him. And what do? They cut out his money making abilities. Who are the first to comply? Obviously, Facebook and Google. Okay. Again, remember, who were the first people to take Dr. Robert Malone off the air? The one who actually told the truth, maybe the truth, around COVID. Who was it? It was YouTube and it was Facebook. And now they're doing it again to him. Now, look, he is a character that is, he speaks. He speaks
energy companies that profit when there's an energy companies that profit when there's an energy crisis, military industrial complex that profits when it's a war, pharmaceutical companies that profit when there's a pandemic. You're creating the necessity for ongoing crisis.
Yes.
If the elites in a society benefit from situations that are detrimental to everybody else, that's what reality is going to become. That's what
Exactly.
reality has become.
That's such an important point, because that's almost undeniable. And to say that they wouldn't do that because they value human life and morals and ethics over profit, that's never been exhibited. That's not true.
Okay, so now Russell Brand has been accused.
Energy companies.
I mean, after saying things like that, after taking on people like Bill Gates, I mean, you got to hear this.
Bill Gates epitomizes this trend. I've got no particular thing against Bill Gates, but he does represent a certain mentality. I'll do what I want to do. You do what I want you to do. That's the Bill Gates way. And today we're going to work out who's contributing more to climate change, you or Bill Gates. Let's see. Bill Gates has shrugged off allegations that he's a hypocrite for climate campaigning while traveling by private jet. In an interview with BBC's Amal Rajan, Gates addressed the accusation by saying he offset his family's carbon footprint and contributes to solutions. Oh, I didn't realize that. That's cool. Let's have a look.
What do you say to the charge that if you are a climate change campaigner, but you also travel around the world on a private jet, you're a hypocrite?
Well, I buy the gold standard of funding Climeworks to do direct air capture that far exceeds my family's carbon footprint. So, should I stay at home and not come to Kenya and learn about farming and malaria?
Yeah. You know how you're just making up a reason for why you should be able
Okay, so he's taken on the establishment. He's taken on people like Bill Gates. He's done it many, many times. I'm going to show you one more, and then I'm going to show you why this is so scary and why you need to buy Bitcoin. There's a story. There's a link.
Moving on.
Bill,
Yes.
out of respect for you and your show, I've brought some facts. Would you, if you like, actually,
You just get the fuck out of here. This is not the place.
I thought you'd like facts.
We do. We love
Mate,
facts. I love facts.
I wouldn't have mentioned it. I'm English, and you know that politeness is our fundamental religion.
Yeah.
But they do pertain to this issue. So may I say something?
Please,
if they
please do.
inconvenience you, I'll stop saying them. The pandemic created at least 40 new big pharma billionaires. Pharmaceutical corporations like Moderna and Pfizer made $1,000 of profit every second from the COVID-19 vaccine. More than two-thirds of Congress received campaign funding from pharmaceutical companies.
I don't want to play much more of that on the channel, because the next thing we're going to be the one that gets deplatformed. But he's speaking facts, and maybe you don't like the facts, but that's the story. So here's the story. Here is a list of just a few people that I made this morning while I was driving to work, and I said, here is a list of just a few people that have been cancelled recently. Andrew Tate was cancelled. I don't know. I mean, he was cancelled by mainstream media. He was deplatformed of Instagram. He was deplatformed of TikTok, and all the other ones. Tristan Tate, his brother. Joe Rogan was deplatformed. I don't know if you remember that. Donald Trump, a sitting president, was deplatformed by social media, all social media. Russell Brand, deplatformed. Dr. Robert Malone, I spelled it wrong. It's Dr. Robert Malone, the anti-COVID doctor who claimed to have invented the mRNA vaccine and said that it's not the right vaccine for COVID. Okay? All those guys have been deplatformed. So what's the story? Actually, I'm just getting now, I'm getting a mail here. Let me open it for you. Rumble's response. So this is what Rumble said. It doesn't want to open for some reason. Let's see if I can. It doesn't want to open. It's the same one. It doesn't want to open. All right. Well, Rumble sent a response and said, look, look, we're not playing this game. We actually, we are Rumble. We actually decided that we exist because we don't want people to be deplatformed. And the same thing Elon said. Elon said, look, we're not deplatforming. We're not playing this game. There's no charges and there's no allegations against this person. Here is the punchline here. This is a crypto show. This is not a show where we talk about Russell Brand and where we talk about controversies. We will maybe one day have a channel like that. But if we could get the Rumble response, that would be good. If we can get a tweet that could actually open. This is why I want to talk to you about this. Read what this letter says again. We want to confirm whether Mr. Brand is able to monetize his TikTok posts. What are they asking here? What are they trying to do? They're trying to cut off his money. They're trying to cut off his source of income. Because they know that if they can suffocate his source of income, he's powerless, right? If he's got no money, he can't fight, he can't do anything, right? Emails and letters to the government, right? That's how they're doing it. They're doing it using a very manual system. Guys, very, very, very soon, there's going to be an automatic system to do this. It's going to be called a CBDC, a central bank digital currency. And if they want to cancel you, if the government want to cancel you, they're not going to write letters to TikTok and to Instagram. What they're going to do is they're just going to cut off your wallet. And you're not going to be able to spend your money on anything. They're just going to cut you off and you're not going to be able to spend your money on anything. And so this is, if you ever needed a reason to oppose CBDCs, you need to see what's going on here. We would be grateful if you could confirm whether Mr. Brand is able to monetize his TikTok platforms. The first thing that YouTube said is, YouTube said, we cutting off his monetization. He's no longer able to monetize his channel. When they launch a CBDC, there's going to be no more of these letters. I can promise you that. And what they're going to do is they're just going to not allow him to get money into his wallet and not allow him to pay money out of his wallet. That is the problem of a CBDC. And so the reason why I'm speaking about this today is because, listen to this, yesterday was Wednesday. CBDC efforts were opposed and advanced by the House by Republicans. The House Financial Services Committee approved, yesterday a bill was approved in the United States to prevent a US central bank digital currency. So even though there is a shutdown coming up, Republicans in the House cleared a bill that Patrick McHenry's panel said would ensure that any US CBDC must be explicitly authorized by Congress and also protects Americans' privacy and our financial system for the future. Even as the Congress approaches a precipice of a US government shutdown, House lawmakers took time to insist Wednesday that a so-called digital dollar is strangled before it is conceived. The bill was designed to ban CBDC pilot programs before their proposed outlaw, and the Federal Reserve is issuing a retail digital currency that could be used for citizen surveillance and require any government-backed token that would explicitly be empowered by Congress. So what's also interesting here is if you look at the reaction of Maxine Waters, you need to understand how bad this is. She says, as with the stablecoin and crypto market structure legislation advanced by the committee, this bill was opposed by the panel's top Democrat Maxine Waters. You know who Maxine Waters is, okay? Listen to this, okay? Now, these are the same people that are against blockchain and against innovation, right? He accuses who is pushing blockchain out of the United States. Listen to what she says. Listen to what she says. She says, this part made my blood boil. If we don't have pilot a CBDC, she says, it will keep the US behind other countries, including China, as a race forward to develop a global standard for central bank digital currencies. Waters said, accusing Republicans of taking a deeply anti-innovation stance on the technology, which has been embraced by other nations. She said the legislation would stifle that research and prevent us from moving forward, even if it means the dollar loses its status as a world reserve currency if it means that the US citizens lose out on faster and cheaper payments. Okay, hold on a second. This is the same Democrat and the same Democratic Party that is pushing blockchain out of the United States. And they are saying, you must allow us to implement a central bank digital currency, because if you don't allow us to implement a central bank digital currencies, it'll keep the United States behind other countries, including China, as a race forward to develop a global standard for CBDC currencies, taking a deeply anti-innovation stance. These are the same people who have pushed blockchain out of the US, who these are the people that control Gary Gensler. These are the same people that are fighting the war against blockchain. But what they do want is a central bank digital currency. And now you know why, because I've showed you exactly what is going on behind the scenes. Today, it's about writing letters from the government to the big platforms. Tomorrow, it is about something that is much quicker. And okay, so thank God it was passed. It's now past the floor. It does need to get to follow a whole process until eventually you get the House and the Senate have to pass this thing, and then only it's going to sign the bill into law. But at least it's passed. We got one step further here. So thanks very much to Patrick McHenry. That's huge. Like, you guys, please let me know in the comments if you agree with me that about what's going on here. Because when I saw this, I was like, holy shit. And you know what? Also holy shit. Also holy shit, because this show is going to get taken down by YouTube for sure. Holy shit. Okay, rant over. But sure, you understand why my blood was boiling there, right? You do understand why my blood was boiling. Anyway, let me show you how I made 1 ETH. Actually, is it 1 ETH? Let me see. I think I probably made more now. I've made 1.116 ETH in less than an hour. I think you can make the same. I'm going to show you how. So smash the like button. Let's get to 1,000 likes. I'll show you. Also, I'll show you how you can get $100 for free. So let's get to 1,000 likes, and I will show you how I made 1 ETH in 1 hour. Let's go. While we are waiting, I just want to remind you, while we're waiting to get 1,000 likes, I just want to remind you, we are going to do a free Deribit options trading course. In order to participate, you've got to have a Deribit account. You have to KYC the Deribit account. I think you need to learn how to use options. So go and sign up. There's a link below. And then either this weekend or next weekend, we'll do the free course if you want to learn how to use options. There's no cost. You don't have to have money, but just go and sign up because you need it. You need it. You will need it. So go and do that. Anyway, I see we are getting close to 1,000 likes. Let me show you how I made 1 ETH, 1.11 ETH in a few minutes. So there is a new friend.tech competitor. You know, the friend tech competitor. And I think this one actually might work. So it's built on Arbitrum and it's called post.tech. Okay, here it is. It looks and feels exactly like Twitter. I can go to my profile. I can write a tweet. Okay, so that's my profile. You see, it's taken my profile off Twitter. I said this app just ended friend tech. I can write a post and I can say, this is the post. Hold on a second. I've got so many monitors here. This is the post that shows my community how cool this app is. Bang. Post. Works exactly like Twitter, except that people can buy your profile. And when they do, you get trading fees. Now, anyone can do this. So just go to post.tech. You do need a code. I'll try and get you guys some code. If you guys know where I can get codes from, we'll drop them in the research group. I'll show you just in a few seconds where you can get these codes. But just go and sign up, because literally I've done nothing but post. I've already got 1.16 ETH, and I'm going to be able to withdraw the 1.16 ETH very soon. Or I can use it to actually buy people's ETH. Like, for example, let's see if I can find like some of my friends. Okay, it's the search bar is coming soon. Okay, so you understand how this works. I made 1.16 ETH. You can see it. You can also make some ETH. I do want to talk about this as well. It's a new kind of blockchain. And I think it's a revolution. I'll tell you why I think it's a revolution, because there are different blockchains that are good at different things. Some blockchains are very fast. Some blockchains are very secure. Some blockchains can store good data. There is a new kind of blockchain, and it's really, really exciting because what it's doing is it's taking the best of all the blockchains and it's creating like a layer 2, which is the best of all the blockchains. The project is called Eclipse. It's not yet launched. Okay. What it is, it's an Ethereum layer 2, but it's powered by Solana virtual machine, and it has data availability from Celestia. So it's almost like a layer 2, which uses Solana, Ethereum, and Celestia. I think it's they call it modularity. And I think that this is a very, very exciting thing because it, as a user, I just want the best execution. I don't really care whether you do it on Solana or on Celestia. I don't give a shit. Just get it done. And what this does is it gives you modularity. So you're using the Solana virtual machine plus you settling on Ethereum because Ethereum is the best settlement layer. And I think we must keep our eyes open for this kind of innovation, because this is an amazing kind of innovation. It's called Eclipse. As I said, it's not yet launched yet, but we must keep up. We must actually keep up with what's actually happening there. Some other news, which I think is good. PayPal now launching PYUSD to Venmo, so more crypto adoption, which is amazing. Remember that Bybit. Okay, remember I told you that if you want $100 free, you want a free $100, I'll give you a free $100. It seriously is this simple. Okay, all you need to do, go and open a Bybit account. There's a link below. Go and open a Bybit account. Deposit $100. You'll get $100. Yeah, if it's a new Bybit account, you open the Bybit account, you deposit $100, you get $100. I told you, simple. I'll show you how to get $100 for free. Now you know how to get $100 for free. Got it? All right, listen. If you want a post-tech link, we will get some dropped into the news group. Let me just see. Here is where the news group is. Remember that for me, I think that this is the most. Josh, is it still not scrolling? I see my last post is 40 minutes ago. Let's just refresh that. Okay. Oh, on the 5 minute, okay. So that's the newsroom. Quickly again, how do you use the newsroom? It's available on our app. What you can see is this is what we see at Banter. So quickly, let's just see. While we started the show, what's happened? Nothing. China real estate. Lumerin, no. Grayscale investment files for an ETH ETF. Okay, cool. We know that that's news from yesterday. You can see there's 40 of us actually posting here. Binance Labs. You see, and this is literally where we get all our news from. This is the Banter newsroom, and it's now live on the app. Down Bitcoin, just an idea. Similar price level, similar price action on the 4 hours. So you see, this is where we get our stuff. Crypto is literally the last place that people are looking to allocate. No real news. Rupert Murdoch stepping down. Sun takes over. That's quite big news. 28 minutes ago. And the idea is that you should be watching. You should have us opening your desktop. You should be watching this, and you should be looking at the bubbles at the same time, and then kind of like seeing what it is that actually moves the bubbles. So that's the story. All right, remember, if you want to try and make money, go to, either deposit $100 on Bybit, KYC your account, deposit $100, you get $100, or go to post.tech and just sign up. It's free. And I don't know, maybe people will start buying your profile like they started buying mine, and you'll also make 1 ETH in a few minutes. See you guys again tomorrow. Oh, wait. Say again? Yeah, big Friday banter tomorrow. Big Friday banter tomorrow. It's me and Harry Dent. Got to talk to him. After the FOMC meeting yesterday, I've really got to talk to him. So I'll see you guys again tomorrow. Until then.
Bull run's coming back. 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 Crypto banter, I need crypto banter. Give me crypto banter, I need crypto answers. Hey, go, stack it up on my nose. I'm getting obese from these and more. Sip coffee on my twins, the crypto show. I'm a bull on the gold, I'm turning these bears into ghosts. Snap at school, that's the crash course.
Hi, guys. Hi, David. How are you? Hi, guys. Hi, David. How are you? I don't know where the lagging. I'm going to move rooms, guys, because the lagging in the internet. So, David, you must be exhausted. You've been up since 3 o'clock, or did you even sleep last night after the live workshop? I can't hear you, David. Are you muted?
Yeah, I was being talking to Cass. Yeah. Cass. Yeah, I didn't sleep. I woke up yesterday at 5 a.m. and then I didn't sleep once.
Oh my goodness.
And then I got jumped into this. It's amazing. Right? What are we?
Yes.
Like 30.
So, guys, sorry, I'm wearing
later?
my sunglasses. Oh, shit. My sunglasses, guys, because my glasses broke and I've got to get my lenses from Israel. I hope you guys are all enjoying the stream. It's been a lot of work, and I've been watching since I woke up this morning. The guys have done an absolutely smashing job. Well done, David, for doing this. You must be exhausted, and we all just really appreciate you doing what you're doing. Thank you, David.
Thank you.
Yeah.
Michelle said, "There's Michelle." They said good morning. It's a bit late for morning, but yeah.
It depends on where you're living. It depends on where you're living, David. I mean, for us, it's going into I'm in the afternoon, 4:15 in South Africa. And David, you are behind me, aren't you?
I am ahead of South Africa time. It's 3:13 for me. Oh wait, no. Yeah, you're
behind.
Are you one ahead?
Yeah, we're 4:15.
Behind, okay.
So, guys, unfortunately, I can't share a screen. And to be honest with you, with this live, I've been on it all day, so I haven't even looked at the charts. I really enjoyed listening to Ran. I haven't had a chance to do that for quite a while with, working at school. And I really enjoyed watching all the guys that have been banned, that Russell Brand and Andrew Tate and all of that sort of thing. Ran always brings up the controversial, and I quite enjoy that. So, David, it is always fun.
Think.
No, I think he does it on purpose, and I think it's fantastic because a lot of people. So, David, I can't read any of the comments because I'm on my phone because it was just too slow. So, if you see any comments or questions, then just read them out and we can answer them. So.
All right, that's. Phantom Bubbly said, "Poor David. At least he had 3 hours of sleep." I didn't get 3 hours of sleep. What the hell? These lies,
no, I think
bro.
I don't think you slept at all, did you, David?
No, not since yesterday.
No. And you're going on till 3. Oh, David.
Yeah,
and you're going on till 3 o'clock this evening. Yeah, you've still got another couple of hours to go. Hey, another 10 hours or so.
Something like that, yeah.
Yeah. So are there any questions? Are there any questions that you can read out and we can answer? Guys, how are you enjoying Discord? Are you enjoying the help from the mentors and the moderators? Are you guys getting what you want in Discord? Just write down a little bit of things there that David can ask me, and then we can see how you guys are enjoying the community and Discord. And when I started trading and being on the at school, it was the community that pulled me in, and that's how it got me into trading. And I met a lot of people that are like-minded, and so for me, Discord was huge. So what did Simon write there, David?
He's asking if you can sing for them.
No, I'm not that kind of. No, Rand can sing. I'm not singing, Simon. I'm going to pull you up here if you're not careful, Simon. So for me, the Discord community is where I've met my clan. It's the people that are like-minded. We trade together. We cry together. We literally cry often with us trading what's going on in the market at the moment. But I must be honest, I'm quite happy with the market at the moment.
Us a couple of opportunities here. We've also
Okay, guys, we're
got
off.
BTC sitting on a fib, which I'm going to show you guys shortly. We've now got alt sitting on corresponding fibs. So BTC is on a 382. I've got things like Lido on a 618. We've got Injective on a 382. We've got GRT on a 382. We've got Optimism on a 618. So things are holding now. It's like a creaking, like an old pirate ship here. And maybe we're going to get our entries here, maybe not. I've added to my Sol position. It's sitting in a nice area. I'm still sitting in Rune, which I rode to the depths of hell yesterday after we took that Rune long at the end of our session. I'm still in Rune. I'm hanging on to that region there at the moment. And Cass is sitting on a trend. I'm going to exit Cass if I lose a certain area. So I'm going to tell you guys about that shortly. Right, I've got Dave and I've got Bruce with me today. Simon is not here, but he's going to update us from the Discord. Dave, what's happening?
What's going on, guys?
And Bruce, the Tomo King, is here, and we know that you are in a Tomo position right now.
Good morning, and that just happened moments ago.
Quickly, long or short?
Long.
Long Tomo right now. Bruce is long Tomo right now, guys. Okay, so just looking at this banter bubble situation, again, I don't know why we keep seeing Pulse and Hex. They shouldn't even count. But the rest of the market, guys, is not looking pretty. Unless you're an IMX fan, then you're cooking. But you know, everything's taking a bit of beating here while BTC was settling down. And we've lost a couple of trends I've seen. So guys, let's jump into BTC. Dave, I want to hear your comments on BTC as well. I see we are on quite a critical area here. This is the 4-hour range that I love to play with, as you guys know. And what I've done is I've pulled my fibs from this low over here to the latest high, and we are sitting bang on this 382. And no coincidence, again, guys, when BTC sits on a nice solid fib, we've got the alts doing similar things. Well, not all of them, but some of them, and that's how we like to play this game. So is this sell-off done here, Dave? What's the plan?
I'm feeling like it is, but I do think we might see just one more fake out, and then we go. So paying attention to that.
Okay, so yeah, I mean, looking at that, then if we do get one more dip here, we probably looking at this area here, 26,160, which also ties in with this major area that we've been watching for absolute weeks here. So, you know, these are areas, and I think if BTC starts losing this now, we need to start watching dominance to see if these alts are actually now holding these key areas. If we get that little whip down on BTC. Let's look at the bigger picture stuff quickly. This is BTC 2-day, guys, and you can see the iron wall actually played out. I remember on the way down that iron wall did nothing for me, and we crashed straight through it. But here it is, you know, pumped straight into the iron wall. Why is it an iron wall? It's a massive time frame, 382. We've got horizontals there. We've got trend. I've got the 200-day MA, the 200-week MA, and the 50-day MA. It's a massive area for BTC. So yeah, a lot of work to do over there. But right now we are watching this area. On a bigger picture, you can see that center little portion also playing out here for us. So what is this? 26,300, which has been a key talking point for us for the last while. Okay, guys, let's jump into some of these altcoins. I do have a couple for you. Here's Sol, which I've done a full round trip on. I've really enjoyed the journey. It's been a lovely ride, all the way up, all the way back down. We back at the top up zone over here. Here's the old 382. I've got horizontal. I've got trend, and you can see. This is why I love these reaction zones. Obviously, guys, just because it's a reaction zone doesn't mean it holds forever and it pumps forever. But you know I love these sensitive areas. And look how Solana is reacting here. Horizontal 382 trend, we've got our little reaction. So, you know, for me, this bullish trend is still in play. If we lose this trend, things start turning bearish, and we have to reassess our strategy, because once we lose a trend like this, for example, we start looking to sell these pumps, and we look at bearish sort of areas. So right now the bulls are still in control here, in my view, in this area, unless we start losing this trend. So this is the Sol 4-hour currently that we are watching. So yeah, let's see how that plays out. Rune, look at this thing. We hung on for dear life here because we had the Lux algo indicator as well as these fibs telling me a story. and you know, I stayed in this position here on Rune, and now we're getting our result here, fortunately. So yeah, I'm going to move my stop up now after feeling that pain all the way down to what was it, 1.747. That was that was quite a deep burn, that one. But okay, so we're good to go here on Rune for now. Scalpers, you need to zoom in a bit now. If you've missed this lower entry, you're going to have to zoom in a little bit, look for a setup. You probably missed a break now. If we look at this, yeah, you can see this thing has broken a bit of a trend, and it's well on its way now. So let's see what we got here. Okay, so that one is well on its way. Let's see how that plays out. Render, this was a good one. We got that break of trend, guys. If you're on the Banter Discord, you would have got your alarms yesterday. We had an alarm set for this break of trend, and we looked at stop areas. And guys, this is a great discussion point for later as well, as to how we play stop losses with these cryptos, because sometimes they can be hell of a volatile, especially with that with the interest rates yesterday. So we had stop areas that were of interest. You can see this zone here actually played out perfectly. We got that little pullback, but then it was a beautiful move up for Render. So if you guys got that and you gave yourself some breathing room yesterday, you've taken advantage of this lovely move. And that was a typical mid-range trade. It wasn't a high impact zone. We turned into scalpers there yesterday. So you can see this area still playing out, but we are still mid-range and we are tracking up. We want to just slowly make our way up there, and you know, you can create these trends, guys. And when we start losing these trends, then you start looking at these areas lower down. Optimism, look at this guy, perfect 618. I pulled a 618 from the low on the 11th of September to the high, 618 bounce, tied in so nicely with these horizontals. And we got our reaction that we wanted to. So now what I'm seeing on Optimism, for those of you who like this token, possible head and shoulders scenario playing out here, look out for this. You might get a rejection up there if we push that high. So this 382 for me now is going to come into play as a resistance zone, and you can see why. So potential bear country up here for the shorters for this head and shoulders. Injective. 786. Nice. Little move there. Bigger picture. Okay, small picture, 786. Bigger picture, 382. So, you know, I grabbed this injective for 786. There's my BitGet. I'm warming up for this BitGet tournament, guys. Me and Sheldon on the same team. And I'm just scalping a little bit here. Here's this Rune situation I still find myself in. There's the injective that I bought off that 786. So just getting used to the platform. I'm loving it so far. So yeah, guys, don't forget, join Sheldon and my team. We are in that competition next month. We need you on our squad. Dave, Bruce will obviously be with us. Simon will be with us. We got quite a formidable team forming here. So guys, the link is in the description. Sign up there, but join our team, and let's get stuck into this competition. Matic, guys. Look at this thing. We lost this major support, but we got our trend. So unfortunately, it wasn't my preferred zone or bounce zone for Matic. I love it when we get that 382 tied in that horizontal. That's normally my favorite play. But we did get a reaction on trend, so that this bull trend is actually still intact. If we lose it, guys, we start looking at things like a 618 bounce. Then things look bearish. We ride it up. We can look for rejections at old support, which then becomes resistance, trend lines, things like that. I got you guys Kuji. I mentioned this yesterday. Oh, this has just happened. How's that? This is just happened.
Wow.
Guys, you got to trust the science. Look at this thing. Okay, this has happened in the last minute or whatever, because I had this chart ready 5 minutes ago for you guys. Yeah, so look at this, a dump straight into the 618 and trend. If you play this game, you play the fibs, you play the high time frame fibs, you play the horizontals tied in with trends and things like that. Look at this move on Kuji. 12% buy. just for saying hello from a 618. So somebody was obviously prepared for that, waiting for it, and they got it.
That's awesome.
Yeah. So yeah, well done if you caught that. Sure, that's a hell of a move, guys. TRB. So I don't know. Maybe someone in the chat can tell us about TRB. I know Fahad's in the chat. He often talks about it. Yeah, we had a nice move yesterday. A classic 382. Look at this. We had a 12% move off this 382 yesterday. Perfect little scalp. And now it's in a confirmed downtrend here. So we need to figure out how we're going to deal with this one. Guys, let us know if this trade is over here. I'm not sure fundamentally what the story was with this token. So yeah, let us know the situation there. I see Frank's asking for GRT. Somebody says, I'm the Fibonacci scientist. We call it science, you know. We like to think we scientists. We draw these lines on these charts and we call it science. I love it. Yeah, Rune, we're dealing with. Okay, guys, cool. Rodolfo's here again. GM. Sol bounced on 19.3, correct. Okay, nice, guys. Good to see everybody here in the chat. Are we part of the, are we currently with the school marathon, guys, right now?
Yeah, it's been doubled. So it's being doubled in more places.
Okay, so we are live now with the sniper or the crypto banter school 24-hour marathon, guys. It's a 24-hour session of all things crypto happening now. Okay, cool. Let's see what else we got. Cass, we got to deal with Cass. This thing is going to kill me. 618. I refuse to exit this thing until we lose this area now. So this is me for now. If we do lose this trend, guys, we're looking at that type of bounce. Then we're looking at a possible rejection area. You'll be able to pull in your trend, and you'll be able to track it down. So you know, for me, this is last chance saloon. How are you looking on Cass? Are you involved in it?
I am not involved. I died. No, I did the buffer strategy, and I made some profits. I barely missed an order on that dump on that weekend. I did get a message from somebody on Twitter that they were very thankful they did the strategy and made a killing of a profit there. But hindsight 2020, I think a little bit lesser leverage, the buffer strategy would have worked out, because that red candle there took out the highs and then went down. Would have been good. But
look, I must say, Cass doesn't always listen to the science, and maybe that's why I struggle with
not.
Yeah. So you know, I have a certain set of rules and things that I use in my system, and for some reason, some tokens love it, some tokens just don't always agree. So Cass is my nemesis, but one day we're going to get it. Simon is in the chats, and he's saying, don't forget, spot, hold Cass, long, Lambo.
Yeah, go to the beach,
Simon,
as he said.
that is why I do have a little bit of spot of this Cass situation, but I like to trade it. It feels better when you pull out a bit of leverage and you hit it. And Ratta says scientists should be in white lab coats, not black t-shirts. Well, this is a different house of science. This is our house of science. Guys, Selena is also a nice one to look at. I've been playing around with this one on the Discord. You guys would have picked that up if you are on the Banter Discord. Just classic range play right now. I mean, it's just respecting this so well. You know, pumps, rejections into this major area, 0.112, just every time plays out. I've got a little bit of fib action here as well. We've got this fib situation from 17th. So we got a 618 sitting here with some horizontals, and you can see, look how this is just reacting in this area so nicely every time. So if you're buying these supports, getting your reactions, and again, guys, you can play these trends, you can play these ranges, you play them until they break. Obviously, they don't hold forever, and that's why we never win all of our trades. We win a percentage of our trades, and as long as we have our risk management in play and we focus on these key areas and watch supports, trends, that sort of thing, you are going to win more often than not. IMX, yes, guys, we have to look at IMX. There was some news on it today. Guys, let us know in the chats what the news was exactly. I heard the research guys talking about it earlier today.
Oh, IMX. Interesting.
Let's pull up IMX.
Nice.
I know Craig loves IMX.
Jesus,
this is one of his
20%.
favorite. Look at that. Okay.
Mm.
So you get a pump like that, guys, and what happens? You look when you see this pump. If you've missed this pump, we had it with Trader Joe as well. When you see a wild pump like this, driven by maybe a short-term news situation, you often get your opportunities to grab your shorts off high impact zones. And look at this area that it was driving up into. It didn't quite hit the 200-day, but this was definitely in range here, and that would have offered up a beautiful rejection. So unfortunately didn't ping that completely. Would I buy IMX now? It's a tricky one. This is the 12-hour, so you can zoom in obviously and look at things slightly differently. You can see what it's doing right now. It's trying to hold this 382. It's a little 382 zone here that it's busy fighting with at the moment. Is an area or response area. And then guys, this 50-day MA that we are seeing come into play all the time here on these altcoins. Don't forget about it now. It's the new 200-day MA. It's just these alts are loving it. I scalped 1 inch this morning. Literally blew off this 50-day MA. Look at this thing. It started pushing and then it just ripped straight through it. Quick little move there on 1 inch. They're responding really well to these 50 days. The 50 days. So if we lose this on IMX, I would start looking at this zone as your next region. You can see it's a 618. It's a 50-day. There's a bit of action there. Otherwise, you're potentially looking at this type of range play now. Let's see how BTC goes. How are we looking here? Still just hanging on. Just hanging on. Okay, guys, that's what I have in front of me. I'm keen to hear about Bruce's Tomo trade. I want to hear what Dave's doing. And guys, while they're talking, I'm going to look in the chats and we'll start prepping some charts from you guys in the chat. So yeah, guys, cool. Dave, Bruce, you want to take it away there?
Either way, totally up to you. Dave, go for it.
Sure.
Or I guess I will. So
there's a Bruce's screen. Okay, cool.
Yeah, that's cool. Whatever. So yesterday we covered Tomo really being at a kind of decision point. It was up against resistance. Was a perfect setup for short, but I wanted it confirmed, so we drew that. This is what was up on Discord, was these 2 lines, and it clearly, instead of breaking down, broke up, which is the green one. So we have our decision, and now we have this, and it behaved beautifully. It's just a simple, what Sheldon calls an SR flip, or I call break and retest. So broke above this strong level, came back and retested, bounced right off that trend line. So I entered, I was asleep on the first part of this, but personally, I entered on right there. But as far as I'm concerned, anything under that downtrend line is still a valid entry. I would let it come down a little bit more, but frankly, at any point in this region is probably a decent entry with a stop below that trend line. In other words, if it breaks back through this trend line, that shows that it was this is just a deviation, right? And it's going to come back into this range. But to me, this is a worthwhile entrance right there.
What time frame is it?
I'm on the 1 hour right now.
Okay.
And
I'm looking at this now. I want to join you on this trade.
Yeah.
So are we waiting for a little bit more downside?
It might be. It's came down. It really retested right there, which was 3 a.m. my time, and then it pumped up a little bit, and then it printed a red candle, and that's where I entered it right before the show. So
okay, so just keep your eyes on that. If it does pull down, let me know. I want to take a look at that.
Right. If it pulls down, it's definitely a good entrance or a decent entrance. We'll see. What I'm looking at, by the way, is coming up to is a 5 and 5.5% into that range right there. But keep your eyes open for the fact that the 50 MA is going to interfere at some point. So right at the range of like 1.305, keep your eyes open because it might run into some resistance from the moving average there. So I also did enter Solana. I took a look at where it bounced to. I'm just going to pull it up real quickly. But to me, I pulled the fib from this last pump. And Dylan did it from down in the bottom. It was a 382. Interesting how science works. But if you pull it right from here, this is exactly at the 618. And so it's a 618, strong horizontal level, break and retest, rejecting off the trend line. To me, that's classic. So I also just entered into Solana, which is doing well.
Okay. Yeah, it's a good area. It hasn't lost that that trend, so we can't call it bearish yet. We have had some deep red candles. We felt nice and uncomfortable, and it's the way we like it. And that normally presents entries for us, guys.
But that's what you say all the time, is right. You should be entering trades when they're deep for longs, when it's red, and when you're nervous and you go, oh my God, maybe it's going to go further. That's where you get your best entries.
Yeah.
And if you control your risk, and you get stopped out, so be it. But this is also where you make the most profit, is when you take entries like that. So it's a balancing game. Take a look at a couple others. And this one up too late. I set up Unfi.
What's it? Unfi again.
Yeah, I know. I set that up right.
I'm adding this right.
I set it up there. I was going to talk about it on the show, thinking it was going to be down over here, but bye. It's just pumping right now. So
absolutely
see ya.
ripping.
I love that. I love it. I love it.
Okay, I've added this to my watch list, guys. We're going to deal with this thing decisively.
I tell you what I like about it. Its moves are nothing's predictable, but its moves are classic in that, when you set up a TA on it and you take the time to do good analysis, as often as not, it listens to it. Unlike some other tokens, which are wild and woolly. I'm just really growing fond of this one for now.
Yeah, very nice. Very nice.
And
look on the 4 hour, there might be an entry on the 4 hour later on.
Yeah.
Yeah, you're gonna have to just let it play out a little bit.
But you're playing in. Let me just zoom in a little bit. You're playing right now in that range, right? You can see it, right? It's bouncing around in there. So I would, at some point, it's either going to break up over there or it's going to break down over there, and that's going to be a bigger move. There's a boatload of liquidity sitting hidden in this area. So if it comes back and retraces,
if you can zoom in a little more on your chart for everybody.
Yeah, I can. Is that better?
Yeah.
So yeah, I mean, the fact there's a lot of liquidity gap over there. It could just reject. Notice this middle area. It's constantly rejecting there. So if it rejects in the middle, comes down, I wouldn't mind getting back into it. That'd be pretty good, but keep an eye on it. Too late for now. The other one I'm looking at is GMX, which to me is, just sitting right there. We had one set of setups, and we did take that one, which was cool. Let me actually redraw some of this because those aren't needed anymore. But basically, broke out of this resistance area, came back, retested the support, and then with yesterday's dump, it came back and is really testing it again. So I haven't quite fine-tuned the entrance on this, but I probably want to get down to 15 minute. Let me see. Yeah, there we go. You're looking at.
If you can zoom in a little bit there for us, Bruce.
Yeah, again, I'm just kind of getting my arms around this one now, but I like it. Right, you're consolidating in this range right over here. It's about exactly on the 382. So I'm gonna say that this is likely to be a decent setup. I would have I would give this one a little bit of room because you might expect a slight liquidity spike. So this one I might give it just a bit more room than normal for me to breathe. But I see definite potential 5.5% long sitting right off support there.
Okay, nice. So yeah, guys, again, there's multiple entry options when you are trading. There's obviously the cowboy style where you do no TA and you just buy shit. Then you can look at levels and things like that. And obviously we form an opinion here based on what we're looking at. We draw these lines. We have our own inherent bias as to the day, how we think the day is going to play out, and our stuff plays out in that direction. So there's guys in the chat saying GMX looks like it's going to go down. Other guys are saying GMX looks like it's going to go up. Again, guys, we use TA, we play support. If you're unsure on a level, for example, wait for the break of trend, wait for the retest, then you started a new uptrend. You can play that game all day long. There's a million ways to do it.
Yeah, I mean, here's the thing. I mean, the people that say it might go down might be right. At which point we're likely to see it drop into, wild guess, this area at the right above the 618. There's strong support there. So you get a small stop loss over here, right? And then you get an extra if you catch the next long. All that means is you're going to get a better entrance. You're talking about an extra. Let's say it's right there. You're talking about an extra 2 or 3% on the upside. So if you get stopped out, you get stopped out. You wait for better entrance, and you make a little extra money.
That's why we do what we do, and that's why we play this game, and we look for these high impact zones. And if the first one fails, there's always the next one. So Dave wants to know, when does the BitGet.com start? It starts at the end of this month, and it runs for a month. So guys, make sure you signed up. Make sure you are joining Sheldon and my team. We want to win this thing. Run and Annie and Kyle, they're talking big game out there. We know what we can deliver, and we want to deliver it with you guys. And we want to do a lot of that stuff here on this live. We want to take these trades live with you guys. So join our squad. It's in the description.
Are we going to have them crying for their mama?
Yes, we will have them cry.
We're gonna do our best. Yeah, I can tell you that much. You got guys. There's some of the best traders just hanging out with us, sitting here on these lives. I know some of you guys in the chats. You also traders. I've seen some of the coins you guys are sending through there. Like, I think we can dominate this thing really. So
I love that.
we got to stick together.
We got to speak it into existence. We will dominate.
Yeah, we gotta dominate.
Okay, let's see. W Jackal says, any trades now? Well, we've given a couple. There was Tomo. There is this DMX that Bruce is looking at right now. We probably missed these decent bounce areas. We were by about 5 minutes. Solana was a decent area. It's now bounced a little bit. So 20 minutes ago, guys, I think that was the prime entry. Now you're going to need to zoom in. You become a scalper after you miss these main bounce areas, and then you start looking for 15-minute setups, that sort of stuff. You start looking for breaks of trend, those type of things. Okay, I see somebody saying Cass is breaking out.
Yep, Cash just broke. Yep, Cash just bumped a little bit.
Okay, Dave, show us what you got going on there, and then guys, I'll keep looking through the chats here. I see there's people asking about Loom and STMX, so I'll start drawing up those charts while Dave is chatting, and we'll get it going. And Unfire is breaking trend on the 1 hour. Dave, I'm adding your screen now.
What's going on, guys? So I'll start off with Bitcoin. You guys can see at the Keltner channel on the 15 minutes, we went below it. Now we're starting to climb up, so I do feel like we have bottomed here, but we are in the U.S. market open or U.S. session, so sometimes they like to push it down again and come up. So we'll see what they do here. But if there is one more push down, 26,350, there is a level here that is important, a point of control. So looks like they already tapped it, but sometimes I like to tap it twice because I'm sure there's a lot of long entries happening here. With that being said, I talked yesterday about the scenario where I'd like for it to come to this region and then go back up. So that's what I am betting on, that we are going to go higher. So we nailed that shorts on Spell. Posted it on the Discord. This red line here, I drew that a few days ago on Tuesday. Did a little dance, but we made it. And so what I'm looking at now is this 618. It tapped it, and I guess I'm being a little too picky, but I took half off the board. I'd like for it to go past this pocket if we can, and then go up. So we'll see how that goes. I have not entered a long yet on spell, but I did close half of my short. So I will post an update if I do take that long.
So what is the target area for your spell entry for the long?
So I have an alert set here at 0.0005308 in the middle of this pocket here between the 618 and the 66. So as soon as I get that alert, probably going to mark it long a position there. So yeah, that would be cool. Write it up, write it down, and write it up again. Nice.
Okay,
so
nice
I'll
one,
keep
guys.
you
So
guys
that's
posted.
in the Discord. Yeah, thanks, Dave.
Yeah, I'll keep you guys posted on that. We could probably do a really nice safe stop loss once we get into this region here. But again, this is a very volatile coin. Be careful with your leverage. Don't go crazy. 50x and all that. I just took 50x. I took a long on Wild or World Coin, as they call it. My first, well, you guys saw me. I made a post on a potential short, and it played out last night. I didn't post this. You know, this coin is just a little crazy for me, but should have took the short. We landed right back down on the trend line. So if history repeats itself, you can see every time it touches the trend line, it just likes to rise up. So touch the trend. This might be a good entry, starter entry, maybe, low leverage. And then if we touch this trend line again, which would correlate to the Bitcoin scenario I just talked about, that's where I'm going to add a little bit more. And then we ride it back up to at least the 618 region. And then you guys can see this order block that's appearing on the 1 hour right here. So that would be 15% move. If you enter now, 10, 15% move would be nice. If we just close it at the 618, so let's just say it rejects right here, that's a 10% move. So I just started that long. So if you guys want to follow me in that, just be careful with your risk management.
Yeah, so I mean, we're not out of the woods yet with BTC, guys. The first bounce doesn't mean it's the only bounce. They might want to bring us down one more time. So just be prepared for that. And that's why, if you're looking for longs now, after we've had this initial bounce, you maybe want to ladder into a position in case we get that second move lower. So, the first bounce isn't always the only bounce.
And that second, or that Bitcoin level you had mentioned earlier, I think you said it's 26,150. So if we draw the measure tool where Dylan had pointed that out, it's a 1.5% move on Bitcoin. So whatever token you guys are trading, just be aware of the volatility on how it reacts to a 1% Bitcoin dump. Lena looks nice. Oh man, I should have took the long. I was considering it. But you guys can see here, I have an alert set at 0.01038 at the 618. That's what I was hoping for with that Bitcoin scenario. I was hoping for something like that, but looks like it already went. So I'm not going to enter the trade. But look at this. You guys can see. Oh yeah, and I did enter fetch. I think it's nice. I don't see this. It's held itself pretty well with what happened last night. It was completely unaffected. So with Bitcoin, with my thesis on Bitcoin going up here, nothing has changed with my analysis from yesterday. I think we are going to kind of go up to these regions here, which is at least a 10% move. So if you guys want to enter fetch, I think now is a good time. You can set a tight stop, maybe right here where you can see these candles had a hard time pushing it down. Stop loss, maybe like a 0.2225, I think would be a safe play. But you guys can see here, it's always important to pull up the Bitcoin pair Fetch is outperforming Bitcoin by 2.6%, and Luna, just a moment ago, it was at 2.5%. Now it's just 5%, so it's going. So that's what I have right now that I feel confident in. I didn't take the maker short. I talked about it, that I would update it, but it's holding itself well. Like it went through the resistance box. I had an alert set off. I was watching it. And when Spell took a 5%, 6% dump yesterday or last night, Maker did like a 0.5% dump. So that's like, it's not a shortable coin right now, in my opinion. If anything, I see more upside with Maker. So whoever was asking about that, that's kind of my 2 cents on that.
Okay, nice.
Yeah,
I see Crypto King says Fetch is going to dump. Send us your targets then.
Why?
Crypto King.
Why would it dump? Let us know. Hey man,
let us know in the comments. Yeah, I mean, again, any opinion is welcome. We draw lines on the chart, guys. You know, like send us your thoughts. We're happy to look at it for you.
Yeah, and then just some thoughts. These are not trades I'm in right now, but it was nice to see Adam with all the red yesterday or last night at USA time. It's almost like it's becoming the hedge again. It's pumping. Maybe it's just gonna keep going. And then interestingly enough, we talked about it on Tuesday, this little deviation thing that I was talking about. It played out, but man, quite a deviation it was, 14%. So
is that BLZ?
Yeah.
Yeah, okay. I've got a request for BLZ. I've drawn up a little chart for them as well.
I've been working on BLZ too and trying to channel Simon. So yeah.
Guys, okay, we'll pull out the luck algo as well on this thing.
Yeah.
Okay, one of you must pull out a BLZ chart. I mean, I've got mine too. Bruce does BLZ very well. So Bruce,
I'll pass it to you guys. Yeah.
Give us your BLZ, Bruce.
Yeah, I mean, I was looking at it and
just zoom in a little bit there for us.
Yeah. So long trend line that's been around for a while. Let me get better there. The 618's right there at an area that was strong. We get the break, you get the retest and rejection down below there. So it's clearly an area right at the 618 with the trend line below it, which is something I want to keep an eye on. So I was going like, wow, that might be interesting because you might get a reaction in this area. And then I said for yucks, because you know me, I don't use the indicators as much as Simon does, but sure not going to knock it because you get good info. And lo and behold, sitting right there is a nice hefty order block at that exact same area. And then I pulled up the other one, and also you can see that if it comes down into this area, it'll be touching right into that green cloud right there, which leads me to believe that if this thing comes down a little further, down to the, I'd call it the 0.173 area or so, you might get a decent reaction there as a bounce. I'm going to be watching for sure. What do you guys see? I'm really curious.
Let me pull up mine as well. I think they're very similar.
Yeah.
I think they're very similar.
Yeah.
So yeah, this is how I'm seeing it. If we zoom out on the daily, you can see this major reaction zone that I highlighted. It is in the Discord, guys. This was a big area. I see we missed the alarm by like 1 cent or something like that. It rejected. And now I'm watching the support area. I'm watching horizontal support.
Yep.
I'm watching a 618. And you can see it's reacting in this area. Again, you know, at one point, BLZ was respecting the 618. I think 4 or 5 big trades in a row. It just loved that 618. Then it kind of lost its way a little bit. But let's see what it does if it gets down here. That is 618 and trend. I'd expect some kind of move there.
Yep.
And this thing does know how to move. Ivan is looking at Coty. Sure, there's some of these tokens we've totally forgotten about. Aave we looked at yesterday, guys. We must look at it again. There were questions in the chat for STMX. I've prepared this chart for you. This is the 1 hour. What do I have for you? I've got a 786 bounce so far, and I've got a trend. Okay. So this is all I've got. There's not much information here. It's only been around, well, it doesn't seem to have been around much. But this is the 1 hour. let's look for a move up. Let's see if it rejects a trend. Maybe we get that double bottom situation, something along those lines. Right now, where it is now, is there a trade for me? No. And this is on the 1 hour. So, rather wait it out. Let's see if it breaks up, maybe get support there, or pull back. So yeah, right now, no trade here for me. Let's look at Loom. Somebody asked for Loom in the chat, not Zoom, Loom. Big resistance zone, guys. So, I wouldn't really want to be long right here into resistance unless you start dialing in again very low time frames and you start looking for little 15-minute flag situations, which is possible. So let's take a little look here. Okay, problems for me, obviously, big resistance, big resistance, big resistance. There it is again. Okay, let's take a look at some fibs on this time frame. So guys, this is 15-minute time frames. Remember, it's obviously not as strong as pulling a fib over a week, for example, but it does give you something to work with. So I like the 382 for a pullback. When things are super bullish, 236 you can get stuck into. But for me, my preferred ones, 618, 382, that's sort of my set ones that I watch. 618, if it ties in with horizontals, I get excited. If it ties in with horizontals, trend, and a moving average, well, I start shaking from excitement. So here's the 382. It's a little bit lonely over here. See how it plays out. Little bit of action there. So what you're looking for, guys, you want to see a trend form, or you want to see a flag. So look for something along these lines. Look for a bit of up down, up. Maybe you need that time, let it settle, and then if it's got some energy, it will reload. It will go again for you.
Mm-hmm.
Okay, mask. Mohammed asked for mask. Yes, I've done mask for you. This is mask on the daily, Mohammed. So interesting. It's broken this major trend and it's rejected off the 50-day MA. So this is big picture view. There's your 50-day MA. Nice little rejection here. Let's zoom in a little bit. Okay, and we look for after breakouts like this, you want to start looking for solid support zones. So here's a nice support area. You can see without any fibs here, you can see there will be some type of reaction here when it gets back to that level. Let's look at some fib pools. Let's pull a fib from that very low to the high. I'm looking for things to tie in. I want to see where they also pull a fib from the start of a move, for example, or the previous low. I like to find it an area where it ties in nicely so that I can get nice and excited. That's not tying in very well for me for what I'm looking for. But I do remember mask. Jacki once, I think we traded mask with Jacki, and it was nicely. So maybe we just need to give it a bit more time. Let's see here what type of trend we have. Okay, so this is a bullish trend. Obviously, I'd probably look for something like that. Look for a reaction there in that sort of region. This is the 4 hour. If you dial in, you can obviously get a different, a slightly more aggressive view. You might get a little trend in there. But bigger picture, I'd watch this area for a bounce 2.65-ish, 2.66. That sort of region, it looks like it makes the most sense. So as long as BTC is not sending us to hell, that should be a decent reaction zone there, guys. Sri wants to know about Injective. We did do Injective, Sri, and it is in the Banter Discord. If you want to check that out. There's Jacki. Jacki's here. Jacki. Yeah, Jacki, we must get you in the back end here. We'll get you in the back end, and we want to use in the next week or so. Okay, so we'll get you involved. We done near today. Leon wants near. We'll give you near. Did we, guys? It hasn't hit a zone that I like just yet. So this is me for now on Link. We had such a nice reaction off that 200-day scalper's dream. I mean, we had all these pumps with these nice supports yesterday, and they gave it all up today, and a lot of these alts settled in nice areas. For lower. So link for me, I like the 6.55, and I like the classic support buy, you know, if we get this downtrend down here, 6.43, that sort of region on link for me. So right now here, no play yet. It does respect this 50-day MA, guys. So see what happens here. You know, if we get to this area, a little wick down, that could be a decent bounce area, the 6.54 region. Abernay, let's do Arve for you. I had a Arve prepared. Look at that science playing out again. Okay, what did we say we were looking for yesterday? Okay. I love this stuff. Guys, I love these altcoins.
Yeah.
Okay.
That's the support.
So yesterday we got the breakout. We were looking for a reaction at the 200-day MA. We wanted to retest the support. And guys, this is the best. Yesterday, unfortunately, it didn't hold that support and it failed. But it's the same principle. You know, you get the breakout and you retest that support area and you want to see it hold. This is what we were looking for yesterday. So if you were chasing the candle high up, you might have been under a bit of pressure on the way back down. The ride all the way down to 62, but we got our first sort of bounce there. So now obviously we want to see this hold and make its way higher. But at least the first reaction was solid. It's you know, it's what we were planning for. So always, guys, you break a nice area. Let's look at the 618. You break a nice area. You want to see that hold as support. Sometimes you get a little wick down. But you want to see that area hold, and then buyers get comfortable with that sort of level, and then they push it up. Dave says Cape Town looks miserable. The winter won't go away yet, Dave. It's like perma winter in Cape Town. It literally doesn't go away. Maybe someone can make it stop. Abernay likes the music. Sand. Anna, yes, let's do sand as well. DYDX. Dave, do you want to take DYDX?
Yeah.
Okay, will you get DYDX ready? Bruce, if you see anything in the chat, let us know what you want to handle there.
Sure. Okay.
I'll go through a couple others while you guys set that up. Let me do sand. I haven't looked at sand in a very long time. Okay, wow. Okay, it has been a while. Okay, there's our old support for sand. I'm just pulling it across here. So this was old support. Old support turned into resistance, turned into major resistance. I mean, look at this thing. It's tried so many times. Wow. Okay, we've got a downtrend here on sand. Oh, and there was a question on XRP. Well, we need to tackle.
Yeah, I can grab XRP. I'm just looking at it.
Yeah, I'd like you to do XRP first. That would be great.
Got it.
It's 618. So yeah, that's our zone. I love a 618, guys, and it works. You get your reactions. Play these areas. You can see sand respecting it for now, but we're in a downtrend. So let's see what happens up there. You could very well get something along these lines, and you can also then just wait for that trend, wait for the trend to break. But I love these bars. You can see it was resistance, 618 pullback, support. So no reason why we won't get some type of reaction here. Let's see how this plays out in this area. Waves. Led wants to see waves. That's the war coin. Crypto King says sand. Looking for shorts. Crypto King, yes. Let's look for shorts on sand. If I was looking for a short on sand, it would be a push up to a resistance zone. So that's either 0.2946 or 0.2974 sort of regions make sense to me.
The top of the trend line looks good.
Yeah. So yeah, anywhere in those areas, guys. Jonathan, we did do Matic earlier. I touched on it briefly. Just scroll back a little bit. It is there. It did bounce off trend. It lost my main support, but had a good reaction off trend and did tie in nicely with BTC, thankfully. Abernay wants to short AVAX to 0. I agree. It just feels like it's going to 0. Dave, when you're ready, are you going to give us DYDX? Okay. I'm putting up your chart.
Okay, so DYDX, bullish, in my opinion. Got this order block down here. Every time it touches it, it wants to go higher. We have this trend line that's formed. So what I would do is, instead of entering now, if you're not in the position, wait for it to touch the trend line if you want a precision entry. So I'll even set an alert with you guys. I think 1962 is a good one.
I like this trend that it's in. DYDX has actually been very healthy considering what the market's done.
Oh yeah,
so well.
Look at that. It's just a big uptrend. So we've got this 4-hour order block, and then you've got a higher one here at the MA. But if we were to get a precision entry here at like 1962, that's a decent 7% move. Continuation could be 15-16%, and we've seen that before. For example, right here. So from down here to here, 22% move. So if history repeats itself, we'll see. Looks good though. It's bullish. I wouldn't short this thing. So
cool.
That's it for DYDX.
Crypto Banter wants to see Dave trading from his Tesla.
The only thing I can do is, well, I mean, I figured out how to bust open the internet so I can see the charts as I'm driving. I was basically just staring at the charts and then using my phone to execute.
Guys, for those of you that are new here, this trading, David won the Bybit competition. When was it, Dave? 4 months ago. He traded like a savage. He was an absolute beast. But you know what? He's a big banter fan, and you know, he used a lot of the sniper teams' support charts and things like that. But he mastered the art of psychology behind trading, and that is the most important thing, really, in my opinion. So you know, the charts and stuff helped him a little bit, but he sorted it out in his brain there. So you know, guys, if you got questions on trading psychology, drop it in here. And Dave can answer for you guys. But we've got a competition winner sitting here with us, guys. This is wild. This bit get things.
Yeah, let's good, man. Okay. We gotta do some Degen plays.
Our team. They're giving away a helicopter. Literally giving away a helicopter. Yes.
A helicopter?
And where are we gonna put it?
I promise you, they're giving away a helicopter. Then there's something else like, but this helicopter situation, I don't know. It's incredible. So.
Oh gosh.
Okay. We want to put it.
I'm going to park it in the basement. I don't know how I'm going to fly it into the basement, but we want this helicopter.
That's funny.
Cool.
Let's do it, guys. Let's get a helicopter, man.
There we go. There we go.
Mike says Dave's an inspiration. Yes, he is an inspiration, guys. He's mastered the art of trading psychology. He sweated bullets. He sat in some positions that were red, and you know, didn't panic, kept his head. And there's a lot we can learn from Dave, guys, as traders. Obviously, everyone's got their own style and how they do things. But yeah, you know, guys, pick his brain in the chat there anytime.
Yep.
Oh, I think I'm going to be going on at 6 Central.
Oh, good.
To the marathon.
Okay, so you on the 24 hours. Where do they find the link for this?
I think it's the same YouTube link we're here on right now. It's just
well, we're on both. It's in Plus, but there's 2 streams running at the same time. There's our live stream, and then there's the marathon stream. We're on both right now.
Awesome. Yes, I'll see you there if you guys got questions.
And there's Lux Algo questions here from Stanley. Yeah, he I think he said he missed the session, so you'll be able to re-watch it, guys. Lux Algo is part of our stuff. You know, we use it. We use the order blocks. You see Simon's here all the time. There should be a Lux Algo link as well in the description. You can sign up there on Lux Algo. You see, it's part of our trading strategy. We use it quite regularly to confirm things. So yeah, if you don't have it, get it out. I think there's a trial as well that you can sign up for. I think you get 30 days. So get it in the link there. We need to wrap up, as far as I understand. I know Craig's
actually, no, we've got a half an hour. If you'd like to keep going, Craig comes on in 30 minutes. Oh, actually, let me look. Actually comes on in 45 minutes.
Okay.
And with Pain and Pleasure. And then I'm on after that with a special trading guest star, it's Shawn, who's going to be a lot of fun, and I'll be on for 2 hours. And then at 3 p.m. Pacific East Coast time, so that's noon West Coast time, Mama Sniper is going to be on. That's really exciting.
Oh, guys, you don't want to miss that.
No. And then after that, Thales is on. He's one of the mentors inside Discord. Just everybody adores him. He's going to be talking about indicators that keep you in control. And then after that is Shawn, going to be doing some brilliant talk about risk management. His instructions on how to really do risk management with his spreadsheets is nothing short of brilliant. And then right after that is Degen David, who's going to show us how to win the next competition. And then right after that, Shawn and I are going to be hosting a section on investing, so long-term investing for building a portfolio. That's the rest of the 24 hours.
A little bit of streaming today, Bruce.
A little bit.
Got 3 hours from staring to the screen.
3 hours. Well, this 2 hours here and then 3 hours on my own. Yeah, it'll be fun. It's cool.
Nice. Okay, guys, I've got a request for MTL. Let me pull up MTL for you. So what I've done here at MTL, I looked for a trend. This is the short time frame, short term duration, 4 hour. You can see we had a little bounce off that trend over there. What is it going to reject at? I'm looking at this 200-week MA and 618 a little bit higher. Let's zoom into the 1 hour. Okay, so it's right now it's reclaiming this 382 area. Let's see what happens here, but it's got some work to do. It's not out of the woods there yet. Let's zoom out to 12 hours. You can see there was a lot of action going on down there back in the day. Jeez. Okay, let's see. 618, guys. I mean, guys, if you're not using the 618 in your life, look at this thing. Okay, there's a free gift again. Get it in your system. There's a million things you can use. You can use this, what do you call it, SMC. You can use the order blocks. You can use all these things. But just for my sake, make sure you get some fibs in your trading plan or your strategy. Make sure you use it just so you can see what it does for us. You can see what it does for us. So 618 bounce. Right now, you're looking at 200-week resistance. So be careful there. There's no long there. Support areas to watch: 200-day, 50-day MA, a little bit lower than that. But yeah, no actual trade setup right now for me on this guy, unless you're trading spot and things like that. You can look at it, or you're zooming in onto these 15-minute guys, chasing the breaks and stuff like that. Yeah, so nothing to report there. Bruce. Wait, Marty wants to know what's the best fib setup. Well, Morty, I just use mainly the 382, the 618, and the 786. There are other fib 236. Craig uses the 886 a lot. I know Jacki loves the 0.5, even though we argue it's not actually a fib. But yeah, for me, 382, 618, 786 is what you get from me, and those give me pretty much the best reactions that I've seen. So that's why I use them. and the higher the time frame you pull them from, the stronger they are.
Right.
And Crypto King says fibs are good. I'm relieved. So he agrees with us. Okay, so cool. Crypto King, I'm fist pumping you. That's awesome.
Yeah.
Okay. Yes. Farhad wants to see AGLD. Bruce, do you want to do XRP quickly?
Yeah, I got it. They got it set up. Sometimes these, if you remember correctly, a week ago or whenever it was, hold on, right there on the 13th, so a couple weeks ago, we had that crazy spike where XRP out of nowhere just pumped up. Double, 91%. It was just stupid. And we got excited, trying to justify it, etc. But it often throws off TA until it doesn't, because look what happened. Like, this all happened, and yet if you go back in time, XRP's been in this range right here for a long time, and it's had this slight uptrend right there, but basically it broke that, so it's kind of not valid anymore. But basically, after all that excitement, XRP found balance again, and it's right back in the range. So for a trade right now, it seems to me to be just smack in the middle of this range right there, which is kind of no man's land. So if it comes down towards the bottom of this range right over there, you'll be able to find yourself along. If it comes up to the top of the range, for now, you'll likely be able to find a short. But personally right now, all I see right now is just rejecting. Again, if you want to get really short time frame on it, you might see that it's rejecting. Let me zoom in just a bit. You might see that it's rejecting off of that trend line. But even that's kind of past, right? So after it bounced off that trend line there, you might have taken it short, but that's gone too. So personally right now, I would wait to see what it does to find a clear, solid support and resistance level, and then go from there. And that's it.
Nice.
What else, Dill? I'll zoom in. Yeah. There we go. Zoom in. So it's resistance, support in the middle. So it just seems to be kind of fibrillating back and forth there. Dylan,
Okay,
did
nice.
we lose you? Okay, there you are.
Yeah, I lost myself there for a second, but don't worry,
Okay.
I'm back. I'm alive.
Wait.
I'm looking at Arweave, and I want to do
Ooh.
AGLD.
Yeah.
Fahad's got a question on AGLD. Rodolphe, oh, thanks, bro. I had someone walk in here, so I muted them. Okay, so Bruce, I'm going to pull up my Arweave quickly.
Yeah.
This is Arweave, so we're in a downtrend. We were playing a range, rejection, 618 reaction so far. Nothing to really report. This is the 8 hour. So right now we're watching this 618. If things are going to turn bullish again, you want to see the trend break. Let's look at this trend now that we've got a low. So I would look for something along these lines. If you didn't get that 618 bounce, you want to see something along these lines for them move higher. If we lose that, well, we're still in this downtrend. This is your next reaction zone, 786, horizontal stuff going on there. And then the big one is the low to keep your eyes on. 3.82 is your low. That you should get a reaction there. So reaction zones 4, 3.82, and well, it was the 618 at 4.18. Crypto King says, looks bullish. Somebody shorted IMX here. Damon wants to know about Maker. I think Dave's covered Maker in the Discord as well, and he did cover it earlier. So yeah, let Dave remind you there where Maker is.
It's bullish. Be careful on shorting it. If you're long, hold it.
Say that again. What? Did I hear that right?
I think he said it's bullish because I'm shorting it.
Yeah. Okay.
I
think I'm like, wait a minute.
Okay, ADLD Fahad, let's deal with this thing. Okay, what do I like? 200-day MA. Look how nicely this respects this 200-day MA. So that's nice, guys. This is good information to have, because if it comes back for another visit, you could get a reaction there. So this is the daily I'm looking at currently. Let's look at 8-hour. We've got our 50-day MA talking. There's a little bit of action over there. There we got this lower region to keep our eyes on. This is a hell of a wick. I don't really like pulling fibs from massive wicks like this. I just sometimes feel like it's a false, almost a false reading. If that makes sense. Let's look at a 236. Okay, so you can see what's going on here. It's trying to break through this area. And there is some fib action here. If you pull that fib from that high over there to this low, you do have 236 action. So yeah, interesting place. Maybe if you zoom in, you could look for a flag. So you would then look for some kind of flag situation and see if you get that break up. Like today, we had flags on BTC, we had flags on loads of things that actually broke down. So, you know, just because you see a flag doesn't guarantee that it's going up, guys. So yeah, play that. But as far as I'm concerned, this is a resistance zone now to keep your eyes on. And then here's your range. So down to this 200-day, I think you'll get a nice move there. Let's look at a fib pull from this low over here to that high. And the 786 should give you a reaction. Let me clean that out. And that 786 is the middle of this range now. So if it does pull back, you could get a reaction here. And that'll tie in very nicely with this 50-day as well. Okay, so there's more reason for this 50-day to potentially hold on a pullback. So pullbacks 0.561, possible bounce there. And then 0.518 possible bounce there. And yeah, if you're more bullish on this AGLD, look for the flag, play the break, and see if you go. If it moves higher, look out for the 618 here at 0.641. Jackie says never fade Fibonomics. Never fade Fibonomics, guys. They deliver. PYR looks interesting. Okay, you guys want to cover something else there? What do you have?
Somebody asked about lever or lever. I just kind of drew something up here from what I'm seeing.
I'm adding your screen. And
So
I see H-bar and things like that too. Okay, nice.
Never heard of this token. Looked it up. Looks like it's some kind of leverage trading exchange. Maybe it's not a centralized exchange, I'm guessing, which is probably what the hype is about. 32% in the past 30 days. As far as Fibonomics go, it's just kind of figuring out where, yeah, it's like sell here to the high here, ties in with the 618 fib level here. And then you got an order block and a huge resistance block here. So looks like a good short, but I am not touching this thing because I have no idea what it is. So depending on where you're at in this trade, I mean, if you're long and you're wondering when to close it, maybe take profit one might be good. This could potentially be like an ascending triangle. So if this token is bullish, you know, maybe we'll see something like that. I'll add it to my watch list. It's interesting. So we'll see.
Crypto Kings says bearish PYR. Perp. Please look. Haiti wants to see perp.
I mean, guys, that looks terrible. I don't know that. Yeah.
Yep.
But that looks like a pump and dump.
Yeah, there was a big pump and dump situation there.
That's like hi-fi. I mean, you guys saw the hi-fi hype. It looks exactly the same. It's like, I want to join this Telegram group. Come on. What are these guys doing?
Only helps if they tell you way before. I'm yet to find that one. Any of those groups that you get into, you just get smashed.
And maybe IMX is the one that they're pumping this time. Like, we'll see if IMX is in the spotlight this week. I'll be paying attention to that. So, but yeah, that's what I have for lever.
Wow.
Cool. So, any comments on perp there? I think Hades sweating here 0.065.
And I really hope you're not in high leverage there. Like that, just maybe hope for a bounce. Like you have this order block here. So if it bounces and it gets back to your entry, get out. That's what I would say.
Okay.
I don't know if you have something to say there, Dylan, or
HNT helium.
I think HNT is dead.
Yeah. Well, they're not using. Well, it just pumped, but HNT, the helium miners, had converted to a interim token on the Solana blockchain called IoT. So it's really Solana now, the whole thing. Yeah. I got a small mining setup on that. But if for some reason HNT's bounced just now in his way, probably noticed it.
Can I give you my comments on perp? Let me give you my thoughts on perp. Perp's just bounced off a 786. Okay, you've got your reaction there. It's 0.608. So I would say if it loses this current 0.601 or that 786, if it loses that, I would look to start cutting. You know, it might dip lower and the candle can still pump up. So, you know, just to manage your risk, maybe look at starting to cut if you start losing that area, because it could mean that we are going lower on perp, and then you might be looking at 0.57 as your next area there. So yeah, it's definitely in a downtrend. You want to see it try and stabilize here at 0.60123, that sort of area.
Dylan, Chris just sent me a link, which is the other YouTube channel. I just stuck it in our private chat. You want to put it up as a banner or headline if you can?
Yes. Okay. Let's.
Thanks, Chris.
I'm going to drop the link in the chat, guys.
Yeah.
So this is the link for the 24-hour.
Yeah, I think so. Yes, that's the marathon for the guys transitioning. So that's the link to use after we end. Everything will pick up on that channel. So that'll be.
Okay, this is the link that Chris dropped for us, right, Bruce?
Yeah, that's going to be Craig. So Craig's picking up on that channel.
Okay, I'm copying and pasting this in the chat here.
Yeah, by the way, shout out to Chris, who organized the 24-hour marathon. Seriously, an amazing amount of work, herding kittens and getting us all aligned and coordinated together.
It's a lot to take on. It's a lot to take on.
Yeah.
Okay, Unibot. Let's do Unibot, guys. Let me pull that up for you. I think we looked at this Unibot situation yesterday. We're sitting on a support level. $227. There was a lot of conviction on Unibot in this office. A lot of guys like the how it's the actual project. It was making money and things like that, and there was so much hype around it. It was like that old AI narrative that went crazy. But it looks like it's died down. Unibot is apparently making money, so there is a project there. But yeah, losing levels now for me. So I think there's time to get stuck in. I don't think you need to rush this one. When it turns bullish again, you know, maybe that narrative is back. You can ride that trend. Otherwise, just, you know, play level by level here. Wait for some kind of dip. It's like it's just hanging on to this area here, guys. Just. Yeah, but this it's obviously just not the flavor of the month anymore. They were all big. Rollbit, Unibot.
Yeah, the narratives are changing.
Yep. Yep.
Gala. Dave, how are you on Gala? From what I remember, Gala is just in a range.
No, Gala got stopped out. Made a new low, guys. This is not looking good.
Okay, so Gala, time to maybe switch allegiances to gaming tokens. Yes. So guys, if you want gaming tokens, what are we looking at? Right now, I've got my eyes on PYR and I think it's Nakamoto Games. That's kind of where I go to now when I'm looking at gaming stuff. Gala, there's a lot of FUD about Gala. They're fighting. There's all sorts of things going on. When the news comes out that they have sorted out their problems, I have no doubt this thing will start pumping. One to keep it on your list, keep it on the on the back burner there. But until we get some good information out of them, I think this is just going to keep bleeding. I mean, for all we know, it's the developers or the owners that are selling these tokens. They could just be selling out slowly. We don't know. So just play it cautiously now. I mean, we've lost new levels now, guys. You've seen the other stuff pumping. GFAL, Games for a Living, that's a good one. Nakamoto Games, all these other projects, they're moving. We move to the ones that are moving.
Yeah, IMX or Mutable X is gaming too, I think.
Yep.
I know Hustlepedia was really into promoting that one.
Nia has bullish divergence on many time frames, according to Dreamy Warwick. Yes, we did look at Nia, right, guys? We did, huh?
Yes. There's a conference, I think, on there. Coming.
Yes, Nia conference in November. What are we doing with Doge? What is the situation?
I was wondering about that too.
Let's have a look. I got stopped out on Doge last night. I had a FOMO position. Sheldon is still in Doge, if anybody is wondering. His is very low leverage though, guys. So playing it differently, I had a time to stop, and I got wicked out in that story last night, unfortunately. And right now, it's just looking quite rangy.
Yeah.
I mean, we've got, it's just looking a bit rangy here. Let's see. I mean, these are support zones to watch. Let's look at this trend. We've got a trend coming down here. Yeah, we can pull that trend there. Okay, so pullbacks. There are pullbacks. These are key areas. This region here in the middle, 0.0634, that sort of area. There's a level, 0.0591. Let's look at some fibs here. Bang, 618. Okay, 618 is right in the middle here. 0.0604. Okay, tying in with some horizontals. So I'd say that's a nice area. So again, eyes on BTC, but you could get something very nice there down to the 618. Otherwise, just play the trend. When we do break the trend, you want to support on old resistance. Okay, so we break the trend. You want to see the support here, and then you can get that next move up. STG. What is STG? What's our gaming situation?
STG.
Rodolfo is giving us some gaming tokens. BYR, Naka, Dubs, DUWBZ, GFAL. GFAL was a nice one. I know Sam Price loves that GFAL.
Yeah, it's a spot only. STG Stargate Finance.
Yeah, low cap gaming stuff. No, the size of this project. That's clearly resistance there, guys. Don't like that. Probably needs a bit more time, this thing. Let's look at fibs here. 618 again. Another boring 618 bounce, guys. There it is. Okay, so yeah, DFAL, resistance, 0.0275, that's your resistance area. Support, the 618, big support. And it's going to time with this 50-day. So watch this 50-day MA. Watch the 618 over there. That looks beautiful. This somebody's saying FML. I keep saying, I think is he looking for a token, or is he saying FML? Let's check.
I think he meant flamingo token. Or F my life.
Yeah.
Are you losing a trade?
I'm not sure. Let's see. Yeah, because I can't find FML on trading view, guys.
Thing for me.
Do we do ZIL? Fahad, we used to do ZIL all the time. ZIL had a nice rejection today. Guys, my eyes are everywhere. Look at this thing. I already worked on the ZIL chart for you today. Bang.
ZIL's right on that trend.
Look where it rejected, guys. 50-day MA, horizontal trend.
Nice.
Fahad, I'm everywhere. Okay, so let's see. How do we deal with the ZIL situation? I had a very nice move today. Okay, trend is a big rejection here for now. Let's look at a support trend.
Yeah, it's respecting that a lot, it seems. I got 1, 2, 3, 4 touches. Yeah.
There we go. Yeah. Okay, so it's in this bullish trend until proven otherwise. When we lose the trend, we've got a different story. So ride that up. I'd like a break here. I want to see support in this region. It's a very strong area up there. Once we get through it, it should hold 0.0174. But yeah, the sell-off today was quite hectic because it was looking really good earlier. And it had quite a hard rejection, this 50-day. Guys, remember, 50-day MA is coming to play a lot lately. Joy says, what has she missed? Joy, you missed quite a few setups, quite a few entries. But yeah, I mean, we've probably gone through, what, 15, 20 tokens already. You can scroll back. We do have someone coming in to do timestamps and things for us soon. So you guys will be able to just jump to whatever tokens you want. That'll be happening by next week. TRB, let's do TRB. I think we did that earlier already.
We did. Go for it.
Punisher likes LBO. Let's see.
I know, yeah.
$618. Okay, so yeah, so this is what I was looking at earlier on Lido. We lost trend, guys. So when you lose that trend, the same way the bulls like to play the break of trend and the retest, when we lose a trend, when we lose an uptrend, we look for that retest of a resistance area for a possible short. So now things are starting to look a little bit bearish for us. We're seeing some of these alts are front running, losing trends. It's normally a bad sign, actually. You know, we've seen it before when we had these changes. A couple of alts started front running and then everything just came afterwards. So, you know, this is not a great sign for me. If we do get a bounce here on Lido, I'm looking for a rejection or reaction at 1.53. So yes, definitely a bounce on the cards here. You know, they don't always go down in a straight line. You sometimes get a bit of a zigzag. So, you know, there could be a bounce here, 2.5%, 3% into that 382 and trend, and then another possible rejection, which is bear country then up there until proven otherwise. There's a possible downtrend now you're going to look for as well, which is something like that, and see how it plays out.
Dylan,
yeah.
But by the way, apparently Craig is ready. I'm trying to check whether he's in the same StreamYard as us or a different one. Can you see him?
He must be in the 24-hour setup somewhere.
Okay.
If Craig's ready to roll, guys, we're going to cut short. Craig's doing a great session. He's doing trading psychology and things, I believe. So, guys, you've got to get onto this. You've got to get onto this with Craig. He's excellent at this stuff.
Amazing stuff last time. I'm excited again.
Okay, so guys, let's cut it here. Everybody, banter Discord. The charts are there. Bruce's stuff's there. Dave's stuff's there. Simon's stuff's there. My stuff's there. You find it all there. BitGet competition coming next in the next week or two. It starts.
Yep.
Join Sheldon and my team. We are a team. Me and Sheldon are going at this thing together with Bruce, David, Simon, everybody, and everyone in this chat. We want you on our team. We want to take these trades with you. The link is in the description. So get on there. Join the team. Guys, we'll be on tomorrow again. Good luck out there. Let's hope these levels hold. And just quick recap for you guys. Eyes on BTC here. For those of you that are trading off through the day, I like this 382 zone. I want to see this area hold down to 26.3. If not, mid-range, just above 26. You'll see that there's also, the fixed range profile gives us a POC, which is a point of control as well, somewhere in the center here, 26, that sort of region. So those are the areas I'm watching. Again, if BTC starts dipping a little bit into this 26.1, maybe look at dominance, see how the alts are responding, and act accordingly. If the alts are dumping, then you got to be careful. But if BTC is dropping and these alts are holding their levels, it could be a nice sign that things are going to reverse. So cool. Play it safe out there, guys. Enjoy Craig's session. You're going to love it. We'll catch you guys later.
Take care.
Take care, guys.
All right, job, Craig, whenever you're ready.
Where are all the other guys, buddy?
No, it's just you for this one. The other ones just kind of pop on and then
you should have brought me on while they were still on, Gum. Then we could have segued in and followed on from the trading.
Damn, you're right. I could have. Don't worry, I've got
Simon, Jackie.
Yo.
How's it going, buddy? How's that microphone, bud?
It's good. Everything is going well. Just, easing back into the crypto things after my month break. So, yeah.
You're looking bright and refreshed, buddy.
Thanks. How have you been?
Yeah, I'm all good. I wanted to see if I can see some comments here. I don't know what's going on. I don't know how many people are on. It's very different being on the back end without being a host, as it were. So I can't see all the action. But have we got a bunch of people here?
I can check for you quickly.
We currently have 100.
Yeah, they saw me coming and they ran away. You're right. I don't even think I can list comments here. So you're gonna have to. Are you driving the show with me there, Jackie?
I'm not driving. David's driving.
I'm driving. I wouldn't trust me. I'm a terrible driver.
We should have had some a couple of mods on at the same time. So anyway, welcome guys. I'm seeing here Rob James. How's it going, buddy? The real sniper, Brewman. Wow, I don't know if you're talking about me, but thank you for your. Let's see what else we've got here. Welcome back, Jackie. Jackie, this is you, the real sniper. They're talking about you, Jackie, not me.
No. You're only as good as your last trade, guys.
That goes for everybody, eh? Yeah, absolutely. Last time the session we did on trading psychology was really, really good. But I decided to change it up a bit. So I'm going to talk to you, Jackie, since I feel like I don't see any of the other people here. So I'm going to be as if I'm talking to you, but I'm talking to the community that's out there. But last time, I think you were with me last time, weren't you, Jackie?
I was there for a bit, yes.
And my sound is all good? Is it all happening?
Yes, you are coming across clear.
Perfect. So I love the trading psychology section, guys. I'm of the belief. I was actually talking to Jar, one of our editors today, and just saying, it is the most important aspect about trading. You can do all the TA you want, you can do all the TA training that you want, but at the end of the day, it's all about mindset. The OGs are in the house. Yes, the OGs are in the house. So at the end of the day, you get an entry into a trade and then it's all up to you. No one forces you to click the trigger to take the trade. No one forces you to click the trigger to get out of a trade. I mean, I was in a trade this morning and I was bleeding badly. I was down like $250. It came up to break even, got slightly above it, came back, dipped underneath. And then I quickly jumped. I thought, no, let me rather get out while I'm at break even. Took a small $8 knock, which is good for me. but literally it went on for $450 profit on $1,000 trade. So, you know, these things happen to all of us, guys. Doesn't matter how long you've been in the game. You know, we are always plagued with mindset issues, and trying to keep your mindset right is probably the most important aspect out there. If any of you were on the last the intro to the school cohort, I spoke about, I don't think you were there, Jackie, but I spoke about something called the 90-90-90 rule. Have you heard of it before?
No, I haven't.
90-90-90 rule. 90-90-90 rule says that 90% of traders lose 90% of their capital in the first 90 days. How's that for a stat? You know, normally I'm going and showing you the exchanges and going to actually prove to show you on the, you know, on the Forex exchanges where they have to declare the number of insolvencies. And it's always, you know, it's around 90% of traders lose their money. And you've got to look at it and you've got to say, well, you know, why do you think that you actually one of the 10%? You know, what makes you one of the 10%? The reality is we're actually part of the 90%. And people understand, and institutions understand, and whales understand what we taught, and they actually play and trade against you with our knowledge quite heavily. So what you'll find out often is if you kind of feeling, you're getting this feeling that, you know, the market's out to get you, and it literally wicks your stop loss, you know, and then goes on to profit, you know, and then you end up cursing, you're one of the 90%. You've been played by the institutions who understand exactly what you're going to be doing. And when you're experiencing max pain, they are actually entering their trades. You know, when you are actually thinking that you're flying to the moon, they're actually exiting their trades. So that's why you'll notice on the live trading sessions, we've been spending so much time on the Lux Algo indicator, guys, which for me has been an absolute game changer to try and get to understand what what the institutions are doing and how they're playing the game. And we've actually got another great indicator that's going to be coming in the coming months that helps you refine that even better. But you need to be starting to think like the institutions think and not thinking of the way retail thinks. You know, I actually read a statement the other day saying you should only be entering a trade when someone else is in max pain. I mean, how's that? You should only be entering your trade when someone else is in max pain. I saw another one guy. The guy said he was challenging a guy. He was a South African guy. He was on one of the Tom Hugo shows, and he was saying, you know, next time you take a trade where you want to enter and then you put your stop loss, try put your entry where your stop loss was. How's that for an interesting idea? And
it works.
It works. It works. It works. I think that the 10% just don't quit. Yeah, probably. That's quite an interesting comment there, Fefe. But, you know, it's interesting when they brought in this law in Europe that the Forex brokers had to actually publish the amount of losses that were coming into the market. They actually thought that their business would disappear. You know, they said if they're showing that 80% or 90% of traders lose their money, they actually thought that their businesses would all die. And the reality was businesses carried on exploding. And when they carried on exploding, they were like, well, why are these businesses exploding? And turns out it's because everyone thinks they're one of the 10%. You know, you don't ever think that you're one of the 90%. So really interesting stat there. And another, what if you can't afford Lux Algo? I'll tell you what you can do. I don't know what your name is, Jackal, W Jackal. Why don't you take out a subscription for 1 month? And then you can cancel before the end of the month. So in other words, you put in your payment and they give you 30 days free trial. But if you do that, then just go for it properly, you know. So do all the studying, look at the training videos, and at the end of the month, if it's not working for you, just cancel the subscription. It's 30 days free. And if it is working for you, because you've only got to make, I think it's $30 or something a month to pay for it, well, then carry on. So that's a good way for you to handle that. Another interesting thing I was looking at, Jackie, sorry, I'm quoting stats at you, so you got to pay attention to me this whole time while I'm on through. You know, in the old days, when I'm talking the old days, like the early 1900s and right through till 1970s, 1980s, you know, there were no charting packages like we have today with trading.
Yes.
I mean, back in the day, you know, people had to hand draw their charts, and they literally had to have phone into the exchanges to get the close price of the day. And then eventually it became those ticket machines. I don't even know what they're called, you know, telex machines. And they used to hand draw their own charts. And then if you take that stage and you progress right through into, you know, the 80s and 90s when trading became available and TA really became, you know, it was all initially people thought it was all about fundamentals. Technical analysis really only became a reality in the late 80s, 90s. You know, and then you look at where we've progressed to today, where you get a tool set like like you get on TradingView, where you've got literally thousands of indicators available to you, every possible trading strategy available to you, hundreds of YouTubes available, and everything else to learn from. The interesting thing, though, is that the statistics are exactly the same. Back in the day, there was still a 90% losing rate. And in the day today, where every bit of information is available to you, we still have a 90% losing rate. And you think about it, I mean, it doesn't sound logical, because you think, well, I don't have the tools, therefore I can't be successful. But you've got all the tools that people would only ever dream of in the past day, and yet the failure rate remains the same. So it's quite a scary statistic. And again, they then try to have a look at, well, why is it that this has never changed, even though all these tools are now available to traders? And at the end of the day, the only deduction comes down to that it's about mindset, guys. So I'm going to be pressing on that quite a bit today. And I actually I'm going to just see, I need to be able to present. So let me just see, share screen. Okay, let me just find the screen that I want to share. Share screen. So David, I need to be able to share a window. Let me just see this one. Okay, let's see what's happening here. Cool. And let's do that. But hopefully I can still see it. Why can't I see it now? I'm talking blind here, so I'm not even looking at StreamYard anymore, Jackie. I'm just looking at the presenter screen. Can you see my screen here?
I can't see your screen. It says why you were born.
Why you were born to fail at trading. I mean, how's that for a statement, Jackie? I mean, I saw this a while ago. I'd love to lay claim that I found that this is all my own thinking, but it's not. But I spend a lot of time watching other YouTubers and whatnot. And I actually came across this video. It's on a channel called ATS, very old video, probably 4 or 5 years old, where they say that you were actually born to fail at trading. Does it make sense to you, Jackie?
It does.
Hey? Let me actually see.
It really does. I mean, think about it this way. The skill that that we were supposed to be taught from Stone Age is how to barter. Yeah. Barter is trading. And not everyone wins at bartering.
There's got to be a way I can see this and us at the same time. Everyone else always shows their stop screen, present Y. I'm going to just try, because I'd love to be able to see at the same time. Stop screen. Hold on. Let me just see. Present. Share screen.
I'm just going to answer a question I see in the chat while you're busy with that. Cool. 08 Tanaka. Hi, I'm Jackie. To answer your question, I was part of the crypto school team. So I helped out everyone on the daily lives as well. You'll see me from time to time. I just took a break from crypto at this point in time. So I'm easing back into things, but you'll see me more regularly. Yeah, absolutely. Jackie, you're a star here. I'm glad to have you back. Hey, Jackie and Craig are legends. Now I can see it. Good. Now I can see. Now I can see everything. I can see us. So the statement I came across is that you were actually born to fail at trading, and I was like, nah, this is not possible. How could you be born to fail at trading? Now, how do I get to the next slide? That'll be an interesting one. Right, and it's a concept that was called pain and pleasure. And instead, we always hear about the concept of fear and greed. And then I came across this concept called pain and pleasure. And, I'm always trying to look at something slightly differently to bring to you. I mean, I'm reinforcing the same story over and over again, but just coming at it from a different angle for those of you that were here before. But the concept of pain and pleasure. And the theory originally originated from a psychologist, Sigmund Freud, for those of you that know Freudian psychology and psychological theory. And he had a belief that humans have a driving force to seek pleasure and to avoid pain. Okay, so we love having pleasure and we do everything we can to avoid pain, And he said that it actually satisfies a biological and a psychological need within us. In other words, to have pleasure and to avoid pain. And you can think about it. I mean, if you put your hand on a stove and it's going to burn you, what do? You immediately react differently. You immediately pull your hand away. Your body goes into an automatic reaction to avoid pain. If you're driving your car and someone swerves in front of you, you're not even thinking about it, but you automatically swerve the car or you hit the brakes or whatever it is to avoid pain. It's like there's something mentally that literally 50 shades of trading. Yeah, you have something mentally that literally takes over and gets your body to avoid pain. Okay, so let's actually advance with this theory here. So what I then did was I started diving into this. So humans have this innate desire for pleasure, okay? And they want immediate satisfaction. So people want to get satisfaction and they want to get it as fast as possible, especially in today's world. When you're watching all the YouTubers and you're seeing all these Instagram guys and these guys driving Lambos and Ferraris and shopping and all these fans, people are desiring this pleasure. They're desiring this lifestyle. It reinforces it in ourselves. But what does that actually do? It innately makes us to make quick decisions to get that feeling quickly. It's like a dopamine rush to your brain. You want to get into this pleasure realm inside your brain because we like this feeling in our brain of pleasure, okay? And this tends to become addictive, okay? We love this thing, and I'm sure we all love feeling pleasure. Think about when you go away on holiday. Like, you just can't wait to get on holiday, and you get on holiday, and it seems to run out, and all you want to do is that holiday just to last longer for you, because we want pleasure. We want to satisfy our pleasure, And when we're in the space, we want that feeling to last as long as possible. Pleasure. Think about this, okay? I'm talking in generics. We're going to bring this through to trading now. But the strange thing is that when you get into this pleasure state, you actually don't make decisions quickly, because you actually want everything. You want this thing. You don't want longevity of this feeling in you. You calm down, you chill, you're enjoying it. You want it to go on forever. Okay, that's the pleasure part of our brain. Okay, now let me flick over to the pain side of our brain. Okay, so there's just innately built into us that to do everything that we can do to avoid pain. Our bodies automatically do everything they can do to avoid pain, right? It's a warning system, and our body reacts. It's the same like I said to you in the car. You suddenly will swerve, you suddenly hit brakes, you do whatever it is. Like it's an automatic driving system to avoid pain in our body, and it is there, and it is designed to actually protect you. So we're born with this. Remember my original concept? We're born to fail to trade. Okay, we don't like pain. So, as I said, one of the examples was putting your hand on a hot stove. So what our mind does is it actually forces you to react quickly to stop pain. So we react very quickly when our minds are in pain or when our body is feeling pain, okay? And what else can pain do? Pain can actually create fear, okay? And fear makes us, because when you're in pain, you're getting fear. Fear leads to us making poor decisions. So the concept here, taking it a bit further, and now I'm bringing it down to trading, is why are we programmed to fail in trading? Because you're in a trade and you're in a positive position, okay? It's pleasurable. You feel good. You're feeling the pleasure, okay? What does it do? Because we want to get into pleasure, our body's wanting to get into pleasure. It causes us to FOMO into positions, okay? We want that feeling. You see the market moving. You see other traders going in there. What do? You FOMO into it because our brains automatically, innately want us to feel pleasure, okay? What can it do? It can force us to take trades too quickly. We have no patience, because we want that pleasure. And we want that feeling to go on forever. So what does it mean? When you're in a positive trade, you don't want to get out of that trade because your pleasure is now going to stop. Okay? So it stops you actually getting out of trades. Okay? We don't make decisions quickly or easily when we're in the pleasure phase of trading, this is. Yet, if we're in a negative position, okay, if our trade is in negative, immediately your body goes into, you feel pain. I'm sure all of you can relate. I don't know if there's comments on the side there, but there must be a lot of people that's feeling, when your trade goes negative, you're immediately feeling that pain, okay? But what does your mind want to do? What does your body innately want to do? It wants to get you out of pain quickly, okay? So it wants you to make rash decisions quickly. And it leaves you literally, okay, you want to get out of max pain quickly, okay? And it forces you to react quickly and also to react irrationally, okay? So even if you take a loss on a trade, you felt that pain, what do you want to do? You immediately want to get rid of that feeling of pain. You immediately take another trade. We often talk about over trading, revenge trading comes in. Why? Because I don't like to be left with that feeling of pain inside my body, or your brain doesn't want it. You want the pleasure phase of it. So you act quickly and irrationally. And what it can force us to do is either to stop out too quickly, okay, which is what happened with me today. I was in a trade. I was in a drawdown of $250 against a $1,000 position, okay. I was drawing down. Eventually came back to break even, went into profit. I started feeling the pleasure again. Immediately it came back down to break even and then into loss. I was like, okay, the next time it gets to break even, I'm out. My brain is telling me, get out of the pain. I didn't like that uncomfortable feeling of being in a $250 loss. You're thinking $250 loss. What can I do with the $250? These things play in your mind, So what do? is I react quickly and irrationally. There was nothing on my charts telling me, listen, get out now. Everything was starting to come right, but I needed to get rid of that pain feeling. So I exited my trade, basically a break even. It cost me $8 on my fees to get out of it. And it went for $400 and something, $420. It actually went into profit, you know? And then you look at it and go, damn, you know? So these are important things. Let's see. Love the mindset training. Would love more of this on the channel. That's what we're actually doing. That's what we actually have for. So you're getting this feeling from me, Jackie, about this principle of what I call pleasure when your trade is going positive for you, and pain when your trade is not working out for you. And that when you're in the pleasure phase, ironically, your brain actually slows down, doesn't want to make decisions. You don't want to actually you don't want to get out of the trade. You want it to last forever, okay? And you don't make the decisions to get out the trade at the right sort of time because you're wanting to go, and eventually it will come back to pain. I mean, it's quite an interesting concept, eh?
Definitely.
When you're in pain, okay, you want to get out of it. You're then ready to make quick decisions. You're either adding to your trades. You do everything irrationally. Add to my trades. Don't stop out quickly. Pain can actually get to a point where it actually just becomes fear, and then you just land up, which was today. I mean, Jason was sitting next to me when we were in the office, OG Jason, and he was saying, get out. And I said, Jason, I can't take a $250 loss, bud. He said, yeah, but it can get much worse. And he was right. You know, I'd let the loss run way too long. I was in this fear stage now where I just had to hope that I was going to get back to break even. And then what I do, because of that feeling, I land up making irrational decisions. So do you understand this principle of why it's so important to understand? And because, you know, ironically, the solution to what I'm presenting to you today now is there is no real solution other than actually understanding it. And understanding the feelings when you're getting into a trade as to when you're in pleasure and when you're in pain. And when you're in pleasure, to actually wake your mind up now, listen, start thinking, how am I going to get out of whatever? And when you're in a loss, to actually slow down and actually think about how you're going to exit this trade, how you're going to actually manage this position. But our mind is geared the wrong way around all the time. And that's what I say. We're actually programmed to fail at trading innately. And we never even thought that. So what I'm going to do is I'll actually flip you over to a chart. So let me come back here. And hopefully this is going to work for me. I just want to just come here.
Cool. While you're doing that, I saw a question from Fefe. He was asking, did you not have a stop loss on your trade? So
I didn't have a stop loss on my trade at that point. I'll tell you why. When I personally, it's my strategy, when I first enter into a trade, I actually watch it for a while before I start putting in my stop, you know? So I'd entered into the trade, it was hanging around, and then suddenly we had this red candle that came down, whack, and you saw that dump off on Bitcoin earlier today, you know? We just suddenly dropped down. And then I was like, oh, so yes, I should have had it. And yes, you know, although we're the OGs and you think we know it all, we all battle with the same problems. And you know what's really interesting, Jackie, in the research that I've done on psychology of trading, the problems that you have as a trader, the psychological problems that you have as a trader when you first start trading actually never leave you. You will always, you can become more aware of them, but you actually never get over them. You never overcome them. And that's why it's so important that you actually make notes, you use a trading journal, that you start identifying what are your issues so that you can actually work for it. And I mean, sorry, I'm just looking down here because I want to show you. And I should read them more often, but I'm going to show you right now. So, I mean, I've even got, when I'm at home, I've got my blackboard where I write down the things that I'm learning. But at the moment, I've got like flashcards that I've got. Okay, these are flashcards that I use. Here's my one, pain and pleasure. Okay, flashcards that I use, which are quick cards to try and remind me. Look here. What are my weaknesses? I'm always looking for reversals to trend. Okay, I'll teach you all the time. Trade the continuation of the trend. I'm one of the people that's always looking for the trend to reverse. I'm always trying to pick the top, or I'm trying to pick the bottom of the trade. So when it's going down, I'm trying to where it's going to bounce, and when it's at the top, I'm looking at where can I short the thing, rather than looking at trading with it. You know, not stopping out.
That's really good.
That one I've done significantly better on. You know. And look at the last one over there, which I've also become significantly better. But that's since writing this down here. Is patience to enter at the correct level. Okay. So these are the kind of things that I do. And I would, And I would encourage you to start working on things through your trading journal, okay, that will show you your faults, your things that you need to work on, but also the things that you do well, you know. So writing these things down, you know. This is a great concept that I learned from Tom Hogarth. Treat trading like a video game, you know. So these are all points. So I just want to show you that I actually do these things, okay. What is my trading philosophy? I want to buy strength rather than trying to short it, because this is coming from that other one, you know. Sell weakness rather than trying to long it, you know. Add aggressively to winning trades. Don't add to losing trades. Don't have mental accounting, which is what I was doing today. When I was $250 down, I'm thinking $250, that's like 4,000 Rand. Like, what can I do with 4,000 Rand? A lot.
Yes, that's a very eternal conversation.
My mental accounting comes into place where I'm like, hey, I'll just give me my $250 back, you know. I'm happy, I'll get out, which is what I did, you know. And the real test of not being the 90%, you know. So that is one of my encouragements to you. Let's see what other questions there are before I take you into the example. Over an extreme lighting, that inner mental struggle makes a perfect system. Yeah, and I think what I want you to understand, Michael, is that this is something that you never really overcome. You have to learn to manage it. And that's why trying to lead a balanced lifestyle, which I speak about all the time, in terms of trying to keep physically fit, trying to keep mentally fit, trying to keep spiritually fit. Don't look at your charts all the time. You know, don't overtrade. Make sure that you step away from the charts. Make sure that you spend time with your family. Don't be so engrossed that no one can actually have a conversation with you, you know. Look at all these things. You know, when you're waking up and first thing in the morning, you're grabbing your phone to look at the Bitcoin price, you got to know there's a little bit of a problem brewing there, you know. Be able to step back a bit. And you'll actually find, like, even looking at you now, Jackie, coming back from a murder break, you look completely fresh, you know. Looking at Sheldon today when he walked into the office from Singapore, looks completely more invigorated and refreshed. You know, the weird thing is, when you're taking these trades, I mean, there was one of the guys that, an OG guy that's one of the friends of ours, was taking loss after loss after loss. And I'd say to him, hey, you know, there's something that you're doing wrong. And he goes, no, there's nothing that I'm doing wrong. I'm like, I've almost got it. And I go, no, you are. Look at the losses that you're taking. You've got to actually stop and step back. And I did that after that WhatsApp trading competition, you know, the last one that we had with Barbet.
Yes.
I mean, I was ranking very well. I was up at number 69. I was doing really, really well. And then one Saturday afternoon, I blew, and I knew it. And when I took the trade, I knew I was blowing my very own rule. I was blowing it. Okay. I was trying to short. What was the coin that was pumping that weekend? I don't know. But the coin was pumping. And I was like, no, it's got to turn now. It's got to turn now. It's got to turn now. And I knew, and I consciously said, you're actually breaking one of your own rules. I tried to short it. I got stopped out. And I then said to myself, I know you're going to revenge trade. I'm taking a revenge trade. I'm going to short this thing again. And I shorted it again, and boom, it bombed me out again. And it dropped me right back to 1,200 or something. Those two single trades. After like 10 days of great trading, one afternoon on a Saturday, which I don't normally trade. It was only because of the competition. I don't normally trade on Saturdays and Sundays. I took two trades that I consciously knew, and it blew me out. You know, that threw me for the whole competition. What did I do at the end of that competition? I stopped my leverage trading. I took a break. I went and re-looked at all my stuff because I thought, I'm not going to let this thing happen to me again. Took a bit of a break, reassessed, and now starting again because I want to do well this time on the BitGet competition that's coming up. So, guys, I'm sure there's details about the BitGet trading competition. I like the idea of competition.
It's so true. Like, I'm in a similar boat to you there, actually. After that competition, I was doing well. I was like top 600 in that last week, and then I traded my ass off to get top 100 by the end of the competition, and I ended at 98. And just the following 2 days after that, I blew my futures account. So that was the sign. Like, take a break.
Yeah. But the thing is to be able to recognize it, you know, and then to take that break. Like, I mean, I remember we were at Gareth Soloway's offices. I was with Sheldon in Tampa, in the US, just outside of Miami. And we were at the office, and we were just having a good chat with Gareth, you know, and I asked him how long he'd been trading for. And I think he said it was like 15 years or 14 years or something that Gareth has been trading. And I said, how long did it take you before you actually became profitable? And he said he was losing for something like 8 of those 15 years. It only all came right for him in the last 5 years. Okay.
It's hectic.
Yeah, it is hectic. And that's why you come back to that 90-90-90 rule. You know, 90% of traders lose 90% of the capital in 90 days. Okay. And you've got to start taking this trading thing seriously, because, you know, you go on and you know, and the school's great and it's going to teach you all the TA that you want to learn. And yes, it is. But you come out of there thinking that you're an absolute hero. Okay. And you've got this, not realizing that it's like going into the rough sea. You know, that sea is wild out there. I don't know if you were in Cape Town last weekend, but that sea was wild in Cape Town, you know.
Yes, it was.
Spits you out, you know. There's no way you're going to survive that, you know. So understand that you need to temper down those feelings, because the last thing you want to do is wipe your account in 90 days. Because then, and I mean, we've noticed it from the people that are coming into the school. You know, we're finding that the average length that a student hangs around for after completing the school is about 3 to 4 months, which is tying in with those numbers, 90, 90, 90. Yes. You know, and it's like my mission that, guys, you need to actually make money in this thing, you know. Don't rush in, okay? You are learning something. Rather trade small amounts of money. I see there's some comments there. I've been trading a demo account, okay, as I got stopped out twice on my main account, worrying about losing more. It's a proper struggle, despite knowing this. Can you pick up that comment there from Fefe, David? It's a couple up. That one, yeah. I've been trading on a demo account as I got stopped out twice on my main account and worry about losing more. It's a proper struggle, despite knowing that stop loss hits are part of the process. Yes. Now, let me tell you my feeling about demo accounts. I don't believe that you're actually going to learn much from a demo account. Why? Because you actually don't feel the pleasure or the pain. In fact, you might feel the pleasure because you think, oh, if this was real money, but you don't actually feel the pain. So my advice to when you're starting trading is that you've got to get experience under the belt, you know. And the way that you get experience under the belt is by doing lots and lots and lots of small trades. Okay. So you come out of, let's say you come out of the school, you've got a strategy, or maybe you've worked on your own strategy. Rather take like $100, okay, and split it into $10 trades or $5 trades and try and execute at least 20 trades with your strategy before you decide that your strategy is not working. Okay. Also get used to those losses. Get used to losing $5. Get used to losing $10. Okay. Because it's not that much, or I hope it's not that much for you. Okay. And once you start getting that right, well, then you can up it. Then you can start going for $20 trades, $50 trades, $100 trades. And so you move up. I mean, we had the two Americans, I don't know if they're online here. They came to Cape Town from the States. It was Alex and Wayne. They wanted to come learning to trade, and they felt it would be better to be a ride at Banter, come and work in our offices, which anyone is welcome to do. And they arrived, and I saw them on, I think it was about day 1 or day 2. And basically, it was a guy, Wayne, and his daughter, Alex, and basically put $1,000 into each of their leveraged accounts. And here they were going to start. And I said to them, whoa, you can't start this thing with $1,000. You know, you need to be, I said, you get that money out there. I said, because the problem is that on $1,000, let's say you take your first trade, you lose $200, you lose $300. Those are meaningful numbers. What's it actually going to do? It's going to actually stop you trading because you're too scared of the loss. It's going to stop you trading, you know, and you don't want to stop trading in the beginning. You want to actually trade a lot, even if it's a $5 trade. Rather get 100 trades under your belt at $5 and $10, okay, get to understand your strategy without the fear of losing a lot of money. Understand there is school fees to be had, for sure there is, but let it be small school fees, and then you can progress your way up. And I mean, they were here for about 8 weeks, about 2 months they were actually in Cape Town. You know that guy left having paid for his entire trip with his trading by the time he left. He paid for the whole flight, all the time they were here, all their entertainment, everything was paid for by the time they left. But they started off on those small number. I've only been using $5 max for FM. Good. Thank you for sharing the experiences in a raw. Yeah, we have to.
There's another thing that I've realized. If you don't take your losses or the school fees, the ultimate pleasure that you could be having is knowing that you can make that money back. I mean, in the competition alone, the Bybit one a few weeks ago, I rinsed like $100, $200 in a week, but then I was able to make it back up. And if you're able to make it back up and get back to break even, then you know what you're doing. And that gives you the confidence to trade. It's not about making more money. It's about keeping your capital.
Yeah, no, 100%. And sorry, I know I'm referring a lot here when I'm talking around leverage trading. And I'm not in any way discounting spot trading and swing trading. But I'll tell you the way that I actually manage it, Jackie, for myself, is I actually have 3 separate exchanges that have 3 separate types of tokens. Okay. My main one's not even an exchange, it's on the ledger. Okay. On that ledger, I have got Bitcoin, I have got Ethereum, and I've got Solana. That's my long-term holding, and it's locked on a ledger so that I can't trade it. Okay.
Yes.
Good entries that I can't actually trade. Then I've got a KuCoin account, and anyone else can use anything else. That's for spot swing trading. Okay. Swing trades on spot accounts. I also have a little bit in MetaMask because I love trading some of the Degen stuff on MetaMask. But then my leveraged account is the account that I'm trying to use to pay for my bills. Okay.
Yes.
So the idea with the leverage trading account, and I'm just using this as an example of a number just so that it rounds things off for you. If you have $1,000 in your leveraged account and you take a trade and you make $100, okay, on the trade, and you do it trade for trade, you don't do it at the end of the day, trade for trade, you make $100, you take that $100 right out, okay, I remove it from Bybit and send it to a wallet on Ledger for my monthly expenses, so that I'm still left with my $1,000, okay, in my Bybit account, okay. Let's say I take the next trade, I lose $50, okay, now I'm now down to $950, okay. I now can't take any money out until I get above $1,000 again. But you have to do a trade for trade, because you find what's going to happen is that you're working on your account, and let's say you have a week like I had 10 days of a great run on the Bybit competition. Now Bybit, you can't pull the capital out in that competition. You're compounding that money the whole time. Okay.
Yes.
So you're compounding up, and then 2 trades, you nail out 10 days worth of work, successful work, in one afternoon. And that's the problem. And you guys need to understand. So use that account. Like Shawn always talks about them as being businesses. Use it as a business. Above that amount, you take it out trade for trade. Don't wait till the end of the day, because you might blow at the 3rd trade of the day. Okay. Take your money out while you've got it. Because guys, it is so important that you take the money and go and spend it on something. Whether you're going for a dinner, with the family, someone you love, whether you're buying a present for your kids, whether you're blessing someone with the money, whatever it is, have that money out so that when you actually use it, you can actually feel like this has been worthwhile. I think it's such an important thing. We don't go out and spend the money. We keep thinking, I've got to compound. And if you have got this idea, look, I've got let's say $100 account, and I want to build it up to $1,000, and I've got $100 account, and let's just say I make $20 on a trade. Okay, put $10 into compound, but take 10 out, so that you are compounding a little bit, but you're still taking money out that you can go and spend that money on something. Respect your capital. Abinay, I'm seeing some good comments from you there on the side while I'm talking. I don't know if there's other good comments here before I carry on. Jackie.
I think you're nailing it, Craig. I think people are blowing up, like mushroom clouds of flames going out of their head, man. It's honestly so true. Like, if I hadn't done the same thing, taking out my wins as I was getting them, I would have been stuck with a 0 balance futures account now and nothing to restart.
Yeah, absolutely.
But that's a whole other game. So
if
you get into that habit, you're good.
Okay, so there's a comment a little bit up, David, from Johnilio. I don't know how you say it. Johnny J. Low, something like that. Also recognize when the market is in a tough place. Absolutely, guys. There's times when there's not to trade. If you know that we're going into a major news event like an FOMC, if you're going into non-farm payroll first Friday of every month in the US, and you're going into risky times, stand back. I've generally got a rule that if we have a big pump or a big dump, okay, I actually, for 24 hours, I stand back. I don't do anything. Why? Because there's risky times. What we're doing is risky already. Don't be more risky in this thing. Why add risk on top of risk? Understand what we're doing is risky, guys. So stand back from it. Yeah, you see there's Susie Rowland. Okay, thanks for being honest, Susie. Started with 1K down to 200 and then stopped. Stop taking trades. Absolutely. That's the best one thing you can do is to stop. How do you manage emotions when you just created a bigger account? Start small, make profit, and then slowly put more money in. That's correct. So Don't go in when you're new with a big amount. Don't think, listen, I've got this thing. Rather prove to yourself, I can double $100 account and step in with $1,000 or $10,000. I mean, on these live trading sessions a couple of months ago, I mean, we had that one lady that's, she came on and she spoke on the live trading where she started off with £50,000. It was the bull market. She took the £50,000 up to £200,000, and now she was down to like, I don't know, it was £2,000 or £3,000. And suddenly, ouch. People, and we had a guy coming into the office also. We have people coming all the time that have a lot of money, but the only time they wake up is when they've lost 90 or 95% of their capital. Guys, you don't do that. If you've lost 5 or 10% of your capital, you're doing something wrong. All right, respect your capital. My wife is calling for dinner. Yeah, my wife's also WhatsApping me about dinner. She's going, we're ordering. Everyone is starving. Okay, thanks. Okay. Trading long on red days. Absolutely. Trade with a trend, guys. Tom Hogarth. Go and have a look at Tom Hogarth, London 2019. Tom Hogarth, Hougard. Someone can post it in the comments if you want. Just go and watch a video like that. You know that you've got to stand back. Mark Douglas, Trading the Zone, one of the best narratives ever written on trading psychology, Manifesto, The Art of Thinking the System. Okay, I've not read those two. Over trading and revenge trading are a bad drug, 100%. You lose any form of reasoning. Absolutely. If you've taken 2 or 3 knocks, I think Jason's got a rule: if you've taken more than 2, you stop, Joe?
In a day.
Yeah. If Jason takes 2 knocks in a day, he steps out. He doesn't trade for the rest of the day. Be careful. And taking the profits, the same thing, because you think you've got this market. Don't ever think you've got this market, guys. If you make money, it was a blessing. It doesn't mean that you're a superstar. It doesn't mean anything. If you lose money, it doesn't mean you're an idiot. It doesn't mean anything else. The market went against you. You can never predict the market. That's one of the things that really grinds me when I sit and watch I'm always sitting on the back end of Sheldon's show, and you get this, what I call them, the salties. The guys that lose money, they come out, oh, you told us to take this, and yesterday you were saying long, and today you're saying short. But that's the reality of the day. What is the market offering you on that day? Look at it on that day. I mean, Jay and I were saying, just a week ago, you were able to make these 8 to 10% moves on trades. Then suddenly from 2 days ago, now you've got to be looking at 3% moves. Okay, that's all you're going to get out of the market. Accept that 3% is what I'm going to get. And be happy with that. And if you're not happy with that, step out. TA is easy comparison to trading psychology. Yeah.
There's a question from Good Luck Iro.
Yeah, what's he saying?
He's saying, how do I know when big financial institutions are influencing the market?
Good luck. Let me tell you, they're influencing this market the whole time right now. With crypto being an unregulated market, and they know that there's a large amount of newbies and degens, for want of another word, in the market. They know and they understand the psychology that you're going through, and that's why you're seeing. I mean, I was talking about it, I think, yesterday on Sheldon's show. We're seeing these random pop of coins. Yesterday there was that coin MC. I don't even know what MC is, but I mean, this coin MC went for the freaking moon yesterday. I don't know what happened to it today, but I mean, it literally went for the moon, and then everyone thinks, okay, this is where it is. But they literally, I call it the popcorn effect. They're pumping this coin today, this coin tomorrow, this coin the next day. Pepe's the in thing today. A week later, it's gone. So guys, be careful. Don't ignore the FOMO. Don't feel this FOMO rush that you need to rush into it. A lot of trading is bot trading. Yes, I agree. But I honestly think you can beat it. Mornay Vessels, they're saying that Tom Hogarth and Mark Douglas gave me my aha moment. I'd love to know what that is, Mornay. But yeah, for me, I have to say those 2 gentlemen are absolutely incredible.
Ruben was asking if you could get Tom Hogarth for AMA.
I've tried. I've written to Tom Hogarth, and I will get Tom Hogarth. I will definitely get him here. That's for sure. I see Oyati Tatanka's asking how long have Jason and I known each other. We look like best friends. We became best friends through crypto. Yeah, we started off. There he's sitting next to me. So we started. We got scammed out of a lot of money, myself and Jason, out of, a substantial amount of money, millions.
Life-changing money, people.
It's like some people committed suicide over the scams that we got scammed in, literally, from literally millions of dollars to waking up penniless one day, or realizing I was penniless one day. Yeah, it was a big wake up call. And then we actually set on the mission to start teaching people. We started off with a small Zoom call in the mornings where we had like 5 people, which eventually became 50, which went into the hundreds, eventually it got into the thousands. And guess what? That's how we sit at Crypto Banter today, because of finding Sheldon and Sheldon getting in there. So how's that, eh? Yep, you got it right there, Bo. You got it right. My cousin knows him. Brewman, who's that? He knows me. Who's that? How long have you been trading for? Since I got into Bitcoin in 2016 when Bitcoin was $600. And so everyone says, wow, that'd be amazing to get Bitcoin at $600. Yes, other than we got scammed out of it all. So there we go. Right, let's get back to this example that I wanted to use. So let me just figure out how I now share this one. You'll keep an eye on the... Right, I think that's this way here. Tell me you can see this on the chart. Why is it not showing here? There we go.
It's busy loading. We can see.
All right, I'm going to have to play it out, and when I play it out, I won't be on the screen. But basically, this is a token called WorldCoin. It was just an example that I found, and what I've done is I've pulled the replay back, if you understand what I mean. So I've scrolled it back so that I can play it forward with you. But I was just looking at this basic setup. I didn't put any moving averages on or anything like that over there. But what you can see is on the bottom over here, and I used a typical example of let's say the way that Dylan and we all work with Fibonacci's. You know, if you take from the bottom and you go to the top and you look at a Fib retracement, we often talk about you know, the 618 being a great level to buy in at. Okay. So what I did was you've got the 618 line here, and I've actually drawn a blue line over here, which I've called the pleasure and the pain line. Okay, so let's just say we're sitting at this point in the market. Okay, I've set my orders in that I want to actually get in on the 618. You know, that's the place that I want to actually enter in on the trade. I wanted to just show you kind of how it works out. So can you still see the screen, Jackie?
Yes, we can.
Okay, so you can see the 618 line. You can see my pleasure side over here, my pain side here. What am I meaning by that? So we're watching a chart play out over, okay? And I've put this thing at 0.5 speed on a 15-minute candle. So it actually plays out quite slowly. So let's see. Hopefully you're going to play for me. Okay, can you see the candles playing out?
Yes, we can.
Okay, I'm going to just... Okay, so this trade is now playing out, okay? We've got our order set. Maybe I should get the speed up to 1 times. Let me just put it at 1. Okay, so we're watching this trade play through. Okay, suddenly, boom. Okay, the trade hits. Okay, we're in our trade. Now, what I'm saying to you is that the minute you enter into your trade, okay, which is at this level over here, immediately this line becomes your pleasure and your pain line. Okay, anything below this level over here, you are experiencing pain, and anything above this line over here, you're experiencing pleasure. So let's just say you'd entered that trade over there, and I don't know what you'd have done with the stop loss, but let's just say you put it in and you thought, well, I'm going to stop. I'm just going to lift the screen up a little bit. I'm going to put my stop loss, let's just say at around, let's just say you decide I'm not going to take a loss lower than this level over here. Okay, I'm going to just change the color of this. It's going to make it orange as an example. Actually, let me make it red. So we know that was my stop loss. Let's just see what happens. So at the minute you enter your trade, okay, it's the first candle, you're feeling all good, you're thinking, okay, but as soon as your trade dips down, you start feeling pain, okay? As soon as it comes up, you get into this pleasure phase. But once you're over here is when you really, really start struggling with your decisions, you know? You're starting like, you can feel the emotions. Look at that. Suddenly that I'm actually in a losing trade, all right? And in these phases over here is the phases in which, firstly, if you set your stop loss there, you would have been stopped out. Perhaps you'd set your stop loss down, you know, on that level over there, this level over here, you'd also be stopped out. But you're faced with all these very, very confronting decisions when you're feeling in the pain thing. And what I'm wanting you to understand is that the next time you enter a trade, literally draw your entry line onto your chart. I draw mine in a green, so I always know my entry line is a green on the chart. Okay, so and then understand when you're below your entry, understand that you are in this pain phase, and that you need to actually slow down, relook at things properly. Was my analysis correct? If it wasn't correct, get out as quickly as you can. If it was correct, hang on to it together to see what happens. But I hope even just by watching this basic trade play out, that you actually can feel the pain of being in a negative trade, because look how long it actually sits down in this pain threshold. Okay, all this time you're sitting in pain, wondering, what do I actually do? What do I actually do? What do I actually do in this trade? Do I get out now? Do I take my loss now? All of a sudden we get a wick above the pleasure line. Okay, feeling okay, pleasure's back, and suddenly your trade can break up into the pleasure side, and you get these different dopamine levels. So what I'm wanting you to understand is that make sure that your entries are good, okay? As good as you can possibly get your entries. No FOMOing into entries, okay? Get your entries as good as that you can so that your pain part does not last that long, okay? And then obviously, hopefully, your trade is then going to get into the pleasurable part, okay? Where you can actually start making money on the trade, okay? And suddenly you get into this pleasure phase where, wow, I'm actually now starting to make money. But then you face it with the different decisions. Where do I get out of this trade? What do I actually do? So what I'm wanting to stress with you guys, let me come back to where we are. Let me stop the sharing, is to actually draw a line like that on your chart and understand the phase that you're in, understand the emotions. I think by drawing that line, you're going to think, okay, I'm in pain. Be careful. Stop making quick decisions. Stop making irrational decisions. Okay, I'm in pain. Am I going to get out of pain, or do I need to actually cut this pain quickly by getting out the trade? Don't get into that level where you really start bleeding and then you get into real fear, and you've actually got to, as I always say, Lena, praying, can I just get back to break even to get myself to get myself out of the position? That are into a trade, yes, possibly 2 or 3 entries into a trade. Just stick to a 1% account risk position. Yeah, 1% is probably a little bit too static, but yes, look at around. So look at your entry so that you can try. That's what I try and do, is to have that 1% as a stop loss. Right. What else have we got here in terms of comments? Because I'm basically finished showing you what I wanted to show you. Can you tell us Sheldon's story from your point of view? Oh, you made it. The video will come out about that, but you've seen the story. The story is absolutely correct. That into a trade. Greed is a strong emotion. Greed is a very strong emotion, guys. And I really would encourage you guys to spend as much time as you can watching trading psychology videos. Tom Hogarth's got a bunch of them. There really is a lot of them. As an example visual. Do you run a trading group in Cape Town, or do you just help people? No, we just help people now. Brewman, you're the guy that says you know me. I think you said you know me. No, people just come to our offices and we help them, and if we have a bit of time. But the 4:15 live trading event, guys, is really the place to try and get good trades. Dev's saying there, thank you for the real talk instead of sitting there bragging about your gains and successes. Yeah. No. You and Jacki are telling us the truth behind it. Yes, absolutely. How do beginners avoid or manage the 90-90 principle? That's exactly what I said. So good luck. The way that you actually do it is you need to start trading with a small amount of money and take small trades. So don't go in thinking, okay, this is going to get me to retire, buy my dream home, pay off my car, pay off my debt, whatever. Take $100, and when you can double $100, then maybe you can say, okay, let me try $200. Because in the smaller numbers, you don't feel the pain so much. You can accept the loss, a $5 loss or a $10 loss, although you don't want to get a whole string of them again. Stop. Get that right. Because once you're making that psychologically, as I said to Jason today, just by changing my leverage from 10% to 12.5%, okay, because these moves are smaller, so I up my leverage. Suddenly the losses are a lot bigger than what you remember. Just that from a 10x to 12.5x, makes it a lot more difficult. So you've got to get used to actually moving up. Jacki, guess who's back? Oh, he's saying you back.
No, just one of our old friends at Banter is in the chat. So just welcome.
Who's that?
Wes. He was one of the mods.
Chris. Was that him?
Hey, Chris is also here. Nice.
Yeah, he's here. Right. Are there any other questions, guys? No, who got? You spelling it right, Brewman? Yeah. So who got the?
No, he's saying his cousin knows Hogarth.
His cousin knows Hogarth. Get hold of me, Brew. Brewman, get hold of me. Where did he go? Yeah, I was a dumbass in the beginning. Did big trading first, big mistake. Yeah, guys, we kind of get convinced that you've got this. You must remember that you jumping into, as I say, dangerous seas. You think it's all good, you think it's all fine, and you get inside and suddenly realize there's whales and sharks and everything else that's nasty in the water, that you didn't quite think that were there. They're there, Was he's a legend? Was he not on the back end over here? David, who's up next after me, buddy?
We have Bruce coming up, I believe. Yep, we got Bruce doing a Q&A.
Is he here?
He is not yet. He should be joining about 10 minutes.
Okay, well, let's answer some questions for 10 minutes because then I've got to go and join my wife for dinner. He's moaning at me. But guys, it's so important, again, as I said to you, is to actually take some of your winnings and actually go and spend them on whatever. It doesn't matter what it is. Spend the money so that you can actually feel like you've got something. Just the other day, I said to Jay, I've got this little, in South Africa, I've got, because my house is in Joburg, and then we're working obviously in Cape Town, and for about a year and a bit in Cape Town, I didn't have a car. I was just using Uber and a little electric scooter. Then I decided that I wanted to get a little car here. And there was literally, as I say, you only need one huge trade a year to make things. But you'll remember, Jackie, was those VV checks NFTs, And I literally, because it asked me, why are you driving a little Susie Swift, And I say to them, that car cost me $40. I mean, what do you mean it cost you $40? It cost me $40 because it was, the story.
That was brilliant.
Yeah, because there was 2 NFTs. They cost me $20 each. Okay, $20 each, and I sold them for, in South African rand, 100,000 rand each. So those two NFTs bought that Suzuki Swift cash, brand new out the box. And so when everyone looks at me, well, when they're driving their fancy cars, why are you driving this? I go, it only cost me $40, my friend. You'll be on a few. Oh yeah, I need you there, Bruce. Special guest Nick Shawn. Is Nick on with you, Bruce? Wow, guys, if you want to watch now Nick Shawn, he also is such an inspirational trader. You've got to listen to Nick Shawn. He's so good on psychology as well. Traditionally, he's in the stock market type trader. Bruce, no, I've got to go to dinner, but I really, really, really want to.
He's making you feel the FOMO.
Yeah, no, I really appreciate his style. He's such a simple trader, and he's got this mindset right. And the part I was actually going to use it earlier, and I hopefully he picks up on this. And Bruce, that you're listening to me now. But you can do all the TA that you want, and you say when the coin drops into the zone, okay, I'm going to be buying or I'm going to be selling, and you'll hear Nick Shawn what he's going to say. He says, I know what it's going to do, and that's what I really like about it. We don't know what it's going to do. People look at some of the traders out there, where they look at Shawn or they look at Dylan or they look at any of these big guys in the world and think that you should have all the answers and think that you should get all the trading right. No one will ever get it 100% right, guys. It does not work that way. Okay. What, as Nick Shawn says, so it gets into my zone. He says, I don't know what it's going to do. It's like a gamble. It's 50-50. It's like red or black in the casino. So what do I want to do? All I want to do is lose less than I win. As long as I'm losing less than I'm winning, overall I'm winning. And he talks about it. He's got a video, Nick Shawn, hopefully he'll put it up there, about what I learned after 8 years of trading. And have a look at what he actually, and listen to what he says about it, because guys, it's all about the psychology side of it. So Bruce, if you can come on, and if he's here, I'd love to actually.
Wait, what? Are you reading that comment by Banter Bubbly? Apparently, no. Bruce trained under Nick. What?
Yes. Yeah, he did. Yes. He did. He did. Yeah, that's how we make. Because I said to Sheldon, we've got to get Nick on your show. I love this guy. He's just appears to be such a cool dude. I haven't actually met him yet. VV checks. That's you writing there, Crypto Jackie. Or VV checks.
Yes. People are asking what the collection was.
Oh yeah, VV checks. I'd rather have small, consistent wins, but seeing others mega wins bashes the confidence. It does bash the confidence a bit, because people always brag about the big wins. And guys, I always look about it. I look on groups and people claiming they made this 1,000% and 500% and all this nonsense. I go, yeah, but you guys never post your losses. We always see the wins. On any trading groups that I post my wins and I post my losses. Because otherwise you're not being real, and you're causing other people to fumble, and you're making them not feel good enough. As I always say, if you look at Tom Hogarth, they studied a set of 3 traders that set out to retire as multi-dollar millionaires. and they actually did do that. When they analyzed the trades, their win rate out of every 10 trades was only 3 out of 10 trades were winners. Okay, 7 out of 10 were losers. How did they retire as millionaires? Because they stopped out quickly. Okay, on the ones that didn't work, stopped out quickly, took a knock. So when the winners came, they rode those winners. Is it possible for a beginner to depend solely on crypto after a year of trading? That really depends on you. Good luck. Is it possible? Yes, it's possible, but there's a big caveat to this. You need to be putting in the work. It doesn't just happen.
Yes.
You really have to be putting in the work. Bruce, how are you going, buddy?
Hey there. How are you?
I'm
It's
good.
the man with the glasses. Bruce is too bright for me these days. He doesn't stop to say hi,
Hi. we do what we do. What are you gonna do?
Oh,
Yeah,
go through, bro.
100%.
Keep going.
I forgot that you're having Nick Shawn on.
Yeah, it was your suggestion.
I know it was my suggestion. I just didn't know it was now.
You said to me like a couple weeks ago, says, hey, because we were trying to get Nick set up with Sheldon for his show, and you said, hey, why don't you bring him on to the marathon? I went, wow, great idea. So I'm excited. Thank you.
Well,
Bruce took profit on your trade.
Yeah, exactly. Hey, when Craig says to do something, I do it. Simple as that.
Listen, we both OGs, so we help each other.
Yeah.
Is he here, or is he on the back room already, or not?
I'm chatting with him on the back end. He's going to come in about 20 minutes, which is when this time slot starts.
So, Bruce, can I ask you a favor? Can I leave you and Jackie to chat some more around mindset? Because I've got a wife that's sitting at a restaurant waiting for me to come and eat. And because I originally, when I booked the schedule, I said, yes, I'll do 4 p.m., not thinking it was 4 p.m. UTC time.
Got it.
Which is like 6 p.m. in my time. And I'm like, okay, and I'm in trouble.
This 24-hour banter school, crypto school is the bane of all our existence, right? You guys are South Africa. We got Europe. We got West Coast, California. We have East Coast. We have somewhere in the middle with Degen David. I mean, it's like, I don't know if I'm coming or going most of the time.
I'm just picking up that comment on the side there from Mikhail786. You can have 100 good days, but one day to lose it all. So, is such an important, that's such an important thing. And that's why, Bruce, I was stressing earlier, when you make money, get it out the exchange and go and buy something. Like I bought that car. I bought that car for 2 NFTs that cost me $40. And those the NFTs are still good, but they're not a new car good. You know what I mean? They're not that much money anymore. Had I not sold those 2, I'd still be sitting with the NFTs, and I still have a bunch of them, by the way, that I should have sold at the same time when I bought the car. But you look at it now and you go, what an idiot I was. Why did I just not sell the whole freaking lot? When they were 2.65 ETH each.
I was very taken with what you were saying. I've been listening in the background for the whole talk. It's like, it's so true, because we also program ourselves. I hope Nick will dig into this, but he has a couple lectures where he talks about the fact that trading really ends up at the end of the day being about the chemicals released in our brain, the dopamine, the serotonin, which is the pleasure and play.
Exactly what I was talking about. Exactly what I was talking about.
Oh, yeah. And it's so true. And how we have to program that. It's the same mechanisms that why do we eat? Why do we like certain foods? Why do we like certain, lovers or whatever? All that stuff gets deeply programmed into us. And if we can take some consciousness of that, it allows us to start programming in success patterns by repeating them over and over and over again. And you thought about making sure you take money out on a winning trade to basically program your subconscious that, hey, this works, I can do it.
Yeah.
Which is huge.
So, Bruce, I'm going to leave you, and I just again want to thank you. You're a true inspiration. You're a true blessing. You're a true servant leader to everybody. You give up so much of your time, and I certainly appreciate it, and I hope the community does, because truly you're amazing, buddy.
Thank you.
And I want to pick up the recording of this, and I want to watch. I want to see how it goes with your session, because man, I think it's going to be great.
Well, it's going to be a couple of sessions. So we got Nick, and I hope he just stays on and just does Q&A with all the people on the stream with us. But then I've got a session where we'll just do question and answer from the students on just basic trading and stuff like that. And then later on in the day, we're going to switch gears into, I think it's the last session. Shaun and I are going to talk about remembering the fact that although most of us are into trading, that the real win is going to come through the investing side of our portfolio. The big
100%.
long-term
There's no
wins.
question about that. There's
Yep.
no question about that. Yeah.
Yep. So have
Excellent,
a great
guys.
dinner,
Have a good
brother.
night. Thanks for having me.
Peace.
Thanks, Craig. It was
Off
fun as always.
for some ramen noodles. Cheers, guys.
Oh,
enjoy. Oh,
you're speaking
making
my
my
language
day.
there.
Oh, all right. So we've got like 15 minutes before Nick gets here, unless he
Yeah, I
finds
actually wanted
this
to
earlier.
mention something there quickly, if you don't mind.
Yeah, go.
So many of you don't know this, but you know what Craig was saying about how people only post their wins in chats. So
Mhm.
obviously, a lot of people do that just to show that they were correct on their trades. There's nothing wrong with that as long as you're not rubbing it in other people's face, saying, "I told you so.
Yes.
You should have gotten the
Yeah.
trade." There's a difference between being cocky and just showing that you trusted your TA.
Yeah.
Dylan and I actually have this agreement. Like, if we make a decision where we both don't agree on a trade, we enter the same trade and we say, okay, if you win, you win. If I win, I win. But when we come to the loss, we shake hands and we say, good trade, man. You did it.
Yeah.
And that's the sort of agreement you should have with other traders in the community, right?
Yeah. And you know, it's funny because I'm in a couple of trading groups with people that I've gotten to know. Hold on, I'm switching ears on this thing. Hang on one sec. I was wondering, why are my ears feeling weird? And it's because I had my headphones in backwards.
Yes.
That's better. Woo. No, yeah. And, I mean, that's also why we keep a journal. I mean, straight up is that, you know, yeah, we take school and yeah, we take a couple weeks of classes and you see the videos and that's like kindergarten, elementary school, nursery school, right? You learned the alphabet, right? That doesn't make you a great reader. That doesn't make you a literature expert. This is going to take time. I mean, straight up, guys, and you got to be okay with that. Like, if you wanted to learn to fly an airplane, how long would it take you to do ground school, and then take your lessons, and then
you
finally
still
get
did
your
do
pilot's
20,000 hours of flight time.
Yeah, like it took me when I got my instrument license. It took a year before they would let me fly on instruments. I my private license, but instruments. I've been playing guitar for years. I mean, I'm just starting to feel like I kind of know what I'm doing. And then I compare myself to the guys I've been playing for 20 years. And it's like, oh, you know. So just know that you're, you know, the basic skills of drawing lines and squigglies and stuff like that. That's easy, right? But learning the analysis, learning to see the trends, learning to definitely watch what's going on in the place where you make all the decisions, like Craig was talking about for the last hour. That stuff, to go from a person who can play guitar to a person who's a really good musician, is years of work. And the only thing I can say is it's going to be hard. It's going to be frustrating. But, and here's the important part, it's worth it. Right? At the end of the day, I can't think of anything more worthwhile going through all that agony and stress and pain and self-doubt and stuff like that. Because when you come out the other end, you now have control of your ability to make money, whether it's in crypto, Forex, stock market, because they're all the same. Yeah. You're so right, Jackie. I love that.
Definitely. Well, I just want to say, Archidor thinks you look more intelligent with glasses on, so I think I'll join the party. You know, like, let's just.
Oh, look at you! I always wear glasses. What are you talking about?
Yeah.
But I just went to the eye doctor day before yesterday, so I'm going to get some new ones because apparently I'm still blind.
Yeah, no, it happens. You know, if you don't keep the eyes in check, then things like this happen. You were actually touching on a really good subject there about being in something in a year. So we had a question from someone in the chat saying, can they be a good trader after a year's worth of trading? So then Craig's response to this question was, it obviously depends on how well you dive into it and how well you look at the trading and how well you're doing in the teaching thereof to yourself, the learning, the studying. And to give you perspective, I've been in crypto for 4 years, but I've only started trading last year when Sniper School launched. So if you take that into account, I'm in trading now for 8 months. I wouldn't say I'm the best trader, but I would say that I have a good win rate. So if you use that as an example, I think so. If you can put in the time, you can teach yourself and you can do all the things that you need to understand the concepts, the trends, the things that you need to make the trade, then yes, a year is good enough. 6 months even. I mean, listen to Sheldon. Sheldon says it all the time. It took him 6 months to go from Joburg to Cape Town and actually win decent trades that set him up in his journey to this new life.
It's an interesting question, and I would change your question a little bit. It's not whether you can be a great trader in a year. It's that, are you a better trader today than you were yesterday? And are you doing things that'll make it so that you're a better trader tomorrow? There's no silver bullet. I mean, straight up, guys. I mean, I love that we get to talk really frankly on this thing, but I see new people, they get going, and this is going to come back to your previous point about the show-off tiles, but I see people that get going and they get, okay, I can draw my squiggly line there, and I can get my squiggly line there, and oh boy, I can take my first, 50-cent trade, and oh, I'm so nervous, and all that. And then they see someone point up a tile where someone got like 9,245% at 345x leverage, and it deflates them, right?
Yes.
Oh my God, I can never do that. They're so much smarter than me, and you go through this range of emotions. Whereas you don't realize that person who put up that tile bragging it was a 50-cent trade, and if they got stopped out, they lost 10 cents. I mean, and in their 4,000% profit, they made $1.50. Until you learn how to read what's really going on behind the scenes, you don't realize that it's emotionally manipulated you, which is why I loved your comment about the fact when people do that to show off. I find it disheartening, right? Because that's not the purpose of that. But really, I mean, here's the only thing that matters. You take a bunch of trades today, and you win some and you lose some. If you lose some, you basically go, okay, did I do anything wrong? And FYI, most of the time you probably didn't. Sometimes the market just went, right? Like yesterday, I took, what trade did I enter? I entered, what was the one we were all doing together? Hello. We did Cass. Oh, yeah. We all jumped into Cass. Beautiful setup, right? And then we say, hey, be careful of the FOMC meeting, and but Cass is looking good. And Paul got up there and talked, and like everything else, Cass went doink and got stopped out. Was it a bad trade? No, the setup was perfectly fine. And sometimes the market just said, sorry, Charlie, we're going in a different direction, right? So you analyze it to see whether there was something you could have improved, right? And what you're looking for in your trading journal are, if you're doing something consistently that's getting you stopped out, that's something to evaluate so you can improve it. Even worse is if you have a big win, it'll go to your head and you'll think you're godlike trader, right? And now you're arrogant and you go, oh boy, I'm really good at this. I'm going to bet the farm on this next trade. And that's how you get wrecked. I see this over and over again, right? New people finally get their first bit of confidence. Confidence turns to being cocky, and cocky turns to being broke. Breathe little by little every day. Get 1% better every day. A little bit here tomorrow. A little, listening to Jacki, listening to Craig, or listening to Dylan. You go, oh, that's interesting, right? And then little by little, you will develop confidence in your perceptions, and then you go from there, guys.
Definitely. I think you're on the money, Bruce.
Yep.
Just looking at what Etienne says. Etienne says, same year, Jacki, I just don't have the win rate as good as yours. Look, it's not even about being having a good win rate compared to someone else. I mean, we aren't taking the same trades all the time. My 5 out of 10 wins, but they're all like 1% wins versus your 1 out of 10 wins, but you won a 30% trade. You're the better trader then.
Yep. Hang on. I'm just making sure that Nick has the right. Yep, he's got the right link. So let me just copy it again.
Cool.
And
you know what they
paste it
say about
again.
too many chefs in the kitchen, hey Bruce?
Yeah.
So
I
I'm gonna
know.
hop off as soon as
No,
Nick pops up.
stick around until we'll just hang out and talk until Nick gets here.
Yeah, no,
You don't
definitely.
mind?
I just mean when that happens.
Yeah. That's fine. That's fine. You can say hi and then do your thing. Yeah, I'm just waiting for him. I'm in the back end of Discord with him, in his Discord, waiting for him to decide to show up. And I'm assuming I'll be able to see what's going on down below because I've never managed this StreamYard thing.
So if he pops up, you'll see his video feed.
Yeah, he'll get here when he gets here. So, questions from you guys. What do you got? Because, say, for me, the reason we do this, like, I'm pretty confident in my trading, and Jackie is, and Craig for sure, and Dylan, all that. But the reason we do school, it's kind of a pay it forward thing. Like, when Nick comes on up here, I'll give a little bit of an introduction, but he basically bitch slapped me around Forex for a while and really taught me. I don't know, tell the story because a little bit, but I mean, I got in. I wanted to trade. This is years and years ago, and I looked at all the different courses that were out there, and for trading in foreign exchange, Forex, and I saw Nick's and I watched his videos and I said, yeah, I kind of like the guy. He's no BS and he's definitely very transparent in everything he does. So I took his course and joined the community that he has, and he'll talk about it, I hope, because it's pretty darn special. But I was doing okay, right? I could break even a little, I make a little money. It was definitely wasn't getting to where I needed to go, or at least my expectations. So I booked a one-on-one appointment with him, and he asked what I was doing, and he realized that after me trading for this well over a year already, that I was spending a lot of time on Discord watching all the other traders. Oh, this person is taking that trade. Oh, that looks like a great setup. Oh, Nick just showed this trade up on YouTube. Oh, I was assuming everybody was smarter than me, right? I didn't have confidence in what I would see on the charts. So and this is a funny story, he effectively kicked me off. He said, okay, no YouTube, no Discord, no Twitter, get out of here. You sit in front of the charts, you take your own trades, and until you have confidence in the setups that you see with your own eyes, get out. And he goes, I feel unloved. Nobody loves me anymore. It was like really funny. I was like, oh, to cry. I was like, oh my God, I'm such a failure. He's just really being sweet to me, but he's basically telling me to get out of Dodge. I don't want to embarrass him. I mean, I had all these emotions, but he was right. And I took a couple of weeks and just did what he told me to do. And all of a sudden I went, oh, that's weird. That trade worked. Oh, that's weird. That trade's better. And I realized that the charts are the same for everybody. The little green and red squiggly lines are exactly the same for everybody. Our perceptions and our pattern matching abilities in our brain is very, very different for every one of us. So I was able to develop that series of things that worked more for me, and started trusting in that. And that was a huge transition. And God, I owe this guy so much for being willing to be hard on me like that to guide me. But yeah, it's amazing. It's all up here. So what are the questions you guys have? Tough love. Yeah, that's right. It's tough love. That's absolutely the deal. Sheldon goes through the Sheldon, here's the thing. Sheldon goes through the basics, right? And that's exactly what they are. It's kindergarten, it's ABC. The question is, are you now willing to do the next work, right? Are you willing to dig in and start practicing every day and analyzing what you do, et cetera, et cetera, et cetera, et cetera. So you're totally right about that. What else? What are the questions
the way
here,
you
Jackie?
get good at something is obsessing about it. Like the reason I became a graphic designer wasn't because I was creative. I didn't have any art subjects in high school. I became a graphic designer because I was proficient at Photoshop by the age of 15.
Wow. Wow.
Yes. And that was many hours of YouTube videos and doing tutorials and things like that. So doing things like that, that is how you get better. I did see a question here. It was from Etienne. I would appreciate hearing appreciate another hearing on the cross leverage trade and how you build your position over some time. I blew my Bybit account during the competition trying.
Yeah. Do you want to take that one, the cross leverage, or you want me to do it?
Go for it, Bruce.
All right. So cross leverage enters you into danger Will Robinson land. Very powerful, because what you effectively get to do is add your unrealized profits onto a trade and increase your leverage, with the objective being to build up a larger position size. And that's the goal, right? Straight up in this market, it's a pain in the backside. Now, hold on a second. I'm gonna do something so I can show you guys. Give me a sec. I'm still waiting for Nick. I don't see him yet back here. I hope he's plugging in and coming on. Where are you? But until he gets here, let me do this for a sec. Or waiting. All right. So hold on one sec, guys. That's not what I want. I want demo. What did I just do? Hang on one second. Sorry, I did something silly. Give me a sec.
Bruce is just hiding the good wallets quickly.
Yeah, go for it. Yeah. Oh no. I'm just pulling up a demo mode on XC. So. Right,
hey Joy, while Bruce is busy, you're asking how many hours did you put in? What were you referring to?
Yeah. I mean, in a nutshell, what you're doing is, let me just bring up, actually, I'll just draw it on a regular chart. So, present, screen, which screen?
Oh, she was asking how many hours does it take you to become profitable?
Until you do. How long?
It varies.
I don't mean to be giving facetious answers, but how long did it take me before I became proficient in playing major scales and minor scales on the guitar? You guys all know I'm a musician. That's my thing, right?
Yes.
I don't know. Keep the only thing I'd say is keep doing it until you are, right? If it takes you, stop. Okay, again, we're being real blunt. Stop comparing yourself to anyone else. Don't do it. Don't do it. You're not me. I'm not you. You might be slow to pick things up and then blow right by me 15 minutes later. Just don't do it. If you want to get good at it, do what it takes you to get good out of it, whether it takes you a day, a week, a month, a year, or two. Just do it.
There is an answer to.
Go ahead.
You want to finish your train of thought and then I'll finish?
No, I was going to say, every time you compare yourself to someone else, you're going to feel bad. Because you're not going to pick the guy who's slower than you. You're going to pick the person who's looks like they got so much talent and, oh my God, I'll never be as good as them. And that's BS. What one person can do, another can learn to do. You just got to go through the steps, whether it takes you a minute or a year. Why does it matter?
Definitely. I actually have an answer to this that doesn't require you comparing yourself to someone. So think of it this way. If you've done anything else in life, like you've started a new hobby, how long does it take you to learn a hobby and get good at that hobby? The time that it usually takes you to get good at that hobby is the time it should take you to get good at trading if you spent the same amount of time on trading as you do your hobby. I'm speaking from experience because essentially that's what happened with me in Photoshop. and trading. It was a similar time zone. I just realized, oh, not time zone, time frame, and I just realized that after Bruce spoke.
Yeah. Yeah. I mean, this is the idea of trading. I mean, unless your idea is you want to get in, learn a couple quick tricks, make some money, and then go away and do something else, at which point I think you're in the wrong place. But if the idea of this is that you learn a skill, a talent that is going to last you for a long, long time, doesn't really matter. I'm gonna share stuff I rarely share. I'm retired. I retired about 10 years ago from a corporate career. I'm in the process of, within the next year or two, basically hitting the road and living around the world. Now, tell me, what other career can you have where I can live anywhere I want? Right? Annie, who's on the Banter show, she travels and trades, right? And it's like, yeah. Do I really care if it takes me a year or two or three? Not really. But yeah. Okay. So cross leverage. So can you guys see my screen here? So I'm ignore the chart for a second. But the idea of leverage is that you can start off on a position. Let's say you decide to enter, here for yucks. Okay, you're going to take a long, right? You've identified some level, right, like right there, that you say, oh yeah, that's a cool level. I'm gonna get over there, and here's the objective, right? And so your price comes down, and it retests it. Boom, you enter the trade, and you put in $100 position. Okay, now you're rarely ever going to hear me talk about leverage. Why? Because I think leverage is the most misunderstood thing we ever talk about in crypto. It's abused. It's misunderstood. All leverage is a mechanism in order to build a position size that both gets you to the right level of profitability you want and minimizes keeps risk within the tolerances that you've set, right? So $100 trade, 1x at $100 is the same as 10x of $10. It's the same thing, because your stop out will lose you the same amount and your profit taking will take the same amount of profit. So leverage, don't get all wrapped up in leverage. We'll talk about how to, maybe in the next session after Nick, we'll talk about how to figure good ways to maximize leverage while still minimizing risk. But it's the way most people talk about it is BS in my book. So here's what you do. This is a good way to use it. So you come in, you take a trade, it's going on up. And let's say you did a $100 trade, and it pumps on up, and it gets a nice retracement right there, and it's starting to pump back up again. All right. Now, this Sheldon teaches us, right? So come over here. You got yourself a trend line. It's right in the trend line. Maybe you draw your fib, and $50 says this is at the 382 or the whatever number it is. Who cares? But you're seeing that it's basically breaking a wedge that is a continuation, right? So now you're saying, hey, I really believe that this thing's going to go up further, and you've banked an extra, let's call it $10 profit in unrealized profit. What you can do is you can now add onto this trade, right through Mexi. You just open a new trade. You can increase the leverage if you want, so that maybe that you're using the leftover profit, but you're adding another $100. We'll show you how to calculate that later. And then what you do is that let's say you did a $100 trade and you're adding another $100 position here. What'll happen is your average entry will move to right in the middle, right? If you do a $200 trade, it'll probably move to 2/3 the way up. But your goal is to get it that your average entry, which will happen as soon as you take that trade, is below your new entry point. So now you can move your new stop loss still below that entry point, so your trade is still safe. Okay, I'm going to repeat that because this is the trick. You got to be careful of that. You want to wait till it's high enough up there that the additional position size you enter into the trade is at the point that your average position, right, whether it's going to be 2/3 the way up, 3/4 the way up, halfway up, you've got to do the calculation, is below your new entry, right? And that you're able to put your stop above your average entry and below the actual entry right there. See that? So now if price tanks and you hit get stopped out of there, you're not going to make a big profit, but at least you will exit that trade with a little bit of profit instead of a loss. That's how you prevent yourself from getting wrecked. The problem with this strategy is that it requires a trend lasts more than 6 seconds, right? Like right now, Jacki, how long would you say trends last? An hour to a day?
Depending on the time frame, your hour trends generally last for like a day, max 2.
Yeah. I mean, I'm going to show you just the full transparency. The last time I did one of those trades was on Solana back. I mean, I just haven't seen trends last long enough to make it worthwhile. Come on, go away. Right? The last time I did this was, hang on, I'm going to go to the 3 days so I can see it. Come back. There it is. Got it. I got it. All right. I did that here. This is the trade I took. That was the last time. This was back in June, right? This is the last time I was able to compound a trade. I got in. I do continuation trades, so I didn't try and get in there. That was my dollar cost averaging level, but I waited for it to break up. I entered the trade right there, right? And then I waited for this pump, waited for that retrace to there. Boom, took that one. I compounded and added on, and then I did it again here, right? So this started as a $500 position, and by the time I was done, turned into a $15,000 position, right? At which point I think I got out right about there. I missed that last little thing, but hit a place that I said to take my profit, took it and run. So that's how you do it. I have not seen an opportunity like that since. Just me. I mean, I'm sure there have been, but the trend has to last long enough to make it so that you can enter it and still get your position sizing and stop losses in place that don't put you in additional risk. So I hope that answers that question. Spot, yeah, my spot bag. Did you use? Yeah, I do not on the spot bags. I'm not using leverage. They're just straight old ordinary. When price is low, I buy more. So I bought Solana at 12.11, and then it pumped up, and then it came down and hit 13.62 right there. So I bought a little bit more, and that's what I do in all my spot bags. So I know a lot of people going, "Oh my God, Solana's going to drop again," and if it does, I'll be excited because I get to buy more. What else? Yeah. You've got to come up with the strategy for spot investing. And by the way, the last session today that I'm doing with Shaun is all going to be about how to design a portfolio and how to make entrances and protect yourself, et cetera, et cetera, et cetera. So I'm excited to do that one. I don't know where Nick is, by the way. I'm on a back end with him, and I sent him a bunch of info. So I'm hoping you got the time right, but I'll tell you what, we'll just keep going. And Jacki, don't feel like you got to stick on. If you want to, I would love to have you hang out together. But don't feel obligated if you don't. And then hopefully Nick will show up as soon as he can. So
I don't mind sticking around. I just might need to hop off soon. My wife is arriving at the airport and I need to go collect her.
Yeah. Do your thing, brother. I mean, this is all about the students, right? So like I was saying before I got into my long-winded story, most of us, Jacki, myself, all the other mods, mentors, etc., we do this because it's kind of a paid-forward thing for us, right? I mean, Nick and Sheldon and Craig and Dylan and Jason and all the other the mods and mentors, they really helped me, right? I've been trading Forex and I came into crypto and they just gave to me, right? And then in Discord we got Carolyn and Sunshine. I mean, these people just wrapped their arms around me and made me feel loved and confident and all that. And I just feel so grateful.
She's lurking somewhere in the chat.
Oh, well, really? Hi, love. But I just feel such gratitude to these people that really were there for me. And this is simply my way of paying it forward, right? Because I hope I can offer at least a little bit of what was given to me so that you guys can do it, right? Because I really firmly believe with all my heart that if this idiot can figure this stuff out and have a good run at it, that I'm absolutely positive that all you guys can do it. All right, what do we got?
Yeah, Wes is your family, Bruce.
Yeah, thank you. Yeah, thanks, Waz. Love you too. Welcome on board, by the way, brother. Good to see you back. What else we got?
Oh, that's brilliant.
I know. Okay, you guys crack me up. Do I use a ledger? No, actually. I can tell you a funny story. You guys know that KuCoin just started requiring KYC, and which meant that us American users basically were kicked out again, feeling very unloved in this crypto world. But it's not crypto's fault. It's our lovely government just giving them a hard time, which they'll get over it. I mean, it's this. I'm an older guy, and I was running a internet company back before internet was in its heyday. So I had a startup in the 2001, late 90s. And this was back in the day when Amazon was a failing bookstore and everybody thought eBay was a crock of whatever. And Bill Gates was saying, this internet, nobody's going to use it. I mean, it's kind of cute and nice, but maybe businesses, but who's going to use the internet? And why would everybody want a computer in their house? I mean, everybody was doom and glooming it. Tell me if that sounds familiar. Right? I mean, look at all the FUD that's out there with crypto, right? Everybody's going, crypto's gonna die. Crypto's this. I mean, this is the exact same crap I heard about the internet back in 2000, 2001 timeframe. But look at it now. I mean, how many of you could have imagined that we would have things like Zoom that basically helped us survive COVID, right? Everything went on Zoom. How many imagined that I literally do all my shopping on Amazon, or, and that I flash my phone to pay for things, right? I mean, we didn't know what we didn't know. But for a couple of years there, man, but in the early days, if you had a ponytail and could program 5 lines of BASIC, you were getting $1 million to start your internet company, and 99% of them died. Out of that death was rebirth. And that rebirth is what we've grown to. I mean, give me a break. Here we are, a whole bunch of us sitting on an internet thing, talking about trading, which we do on the internet. This has become something none of us imagined. Twitter or X or whatever. Who would have thought that would be a thing? YouTube. What? I mean, and what you've got to imagine is the fact that crypto, blockchain, is reinventing that world and adding a whole new dimension to it. It's just going to take some time. But what I was talking about, the reason I came up to that is that, KuCoin got blocked in the States. So I had to then rejigger. I had to take all the stuff that was in my wallets and basically connect it all up to Kraken, which is I'm KYC'd in the United States for. And a couple of stuff was easy to transfer. Then I realized that most of my stuff was on the Ethereum blockchain and was going to cost me about $500 to transfer my stuff from my wallet to where I wanted it to be on the Ethereum blockchain. And it was complicated, and I'm pretty good at this stuff. And I realized that, we're just not there yet. So what I literally did is I sold everything, all my long-term bags, and I basically divided it into 2 chains. One was the TRX chain, Tron, and then the other half was the Solana chain. I made 2 transfers of everything, right, at $1 each, right, and then just in the process of buying things back in again, which tells me that a lot of this technology that we all get into isn't ready for prime time yet, right? Remember back in the internet days when you had to type in order to get to a website, you had to type in 1092.129.372/whack. I mean, that's what we had to do. My mother would never do that. Nowadays, she clicks on a link and she goes to where she wants to go. Crypto will get there, right? But we're such a baby industry, so new, and that's what's exciting. Yeah, and Brown said, "You may not mock all you want, but everything is being seized from you. They can pry it from my dead cold hands." What else we got? What other questions you got about crypto? Guys, trading questions. I'm a trader, right? So throw in some trading questions. We can look at charts.
Do any of you use Sheldon's RSI trading in brackets 4 hour sell above 90 and buy under 10 on spot to build your pot of gold, which you can then use to fund your leverage account?
Yep.
If so, which coins do you recommend?
Oh yeah, baby.
This is the age-old question.
This is a wonderful strategy for long-term trading. Hold on, let me bring this up. Watch this. This is really cool. So he teaches this with BTC pairs, right? It's kind of the thing, and he trades it on the weekly because that's when you get really clear signals. All right, can you see this?
Yes, we can.
Yeah. So on the weekly, on the really high time frame, so right, you take a look at right here, right over there. This is, by the way, this is Cosmos Atom versus Bitcoin, right? So interesting, you're trading this. Usually we trade a token against a fixed asset like the dollar, right? So it's Bitcoin against a dollar or Solana against a dollar. So the USDT theoretically is stable, or USDC is stable. Wink, wink. Hopefully it stays that way. And then we're watching the price of the other asset. When you start trading, the idea of this is that you're trading Atom against Bitcoin. So both of them are moving. You have two moving objects, which is close to the foreign exchange where you'd be trading euro against the US dollar or Japan against the euro, etc. So you have two moving objects. But here's what Sheldon teaches on the weekly time frame. So theoretically, I would be in Bitcoin over here, right? Because Atom is strong against it, but Atom is sort of peaking out and coming down, right? And I'm sorry, Bitcoin. So the relative strength between Bitcoin and Atom is Atom at this point is getting weaker and weaker and weaker. It's Bitcoin territory. Now, we don't worry in this scenario about the overall price rates going up and down because your objective is not to turn it into dollars. Your objective is to end up owning more Bitcoin. And this is a way of compounding that. So what happens is on this strategy at the point where the RSI crosses at the bottom right over there, okay, and it breaks the trend, that basically means now that Atom is growing faster than Bitcoin. So you convert all your Bitcoin to Atom, you track it up, track it up, track it up, track it up, track it up. And at the point there, once again, you get across, in the 95% percentile, and it crosses the trend line. You are now entering territory where Bitcoin is stronger. So you now are able to take your Atom and you buy more Bitcoin than you had before, right? So whatever percentage differences is, hold on, I can tell you, you will end up buying 145% more Bitcoin than you had before, right? Check that out. That's what happened in that move. Now, this move, by the way, this particular move took 105 days, right? This is nothing you do, like short-term trading. So now you're in Bitcoin because Bitcoin is growing or stronger than Atom, and it comes down. And at some point right about here, look at this. It kind of just happened, right? See how you can barely see it, but look how that it crossed the trend line and it broke the the stochastic RSI down in the low 20 percentile. Actually, that's, I don't even know whether it is, can't read it, 3 percentile. So now you take your Bitcoin and you buy Atom and work, and you stick with Atom until it does the same thing. And this could last for 3 to 6 to 9 months for this trend to continue. So that's how you use the stochastic RSI on high time frames in conjunction with a trend line to accumulate more Bitcoin over years. Boy, that was long-winded. Wow, I'm exhausted. All right, what do we got, Jackie? What do we got?
I think everyone is just enjoying the conversation. I'm not seeing very much questions coming through in the chat, unless people are just shy. You know, it's okay. It's just Bruce. It's just myself. We don't bite unless, you know, market makes us a little upset. Then we go bite each other and just shout at each other somewhere else. But we try to be civil at all times. Don't worry, guys.
Yep. Yeah. I don't bite. I bark. Not often. All right. So what's the first? Hold on. Let's see. Yep.
Okay. Good luck. Iwu has been asking this 2 or 3 times now since Craig has been on, but I don't think he's getting the answer that he's looking for. Please give me, in brackets, a beginner, your Godfather 100% advice or a principle on how to be a successful trader.
Okay. What you do is you follow the squiggly yellow lines.
I just typical coach.
I just look at my chart and go like, what did I do? What the hell are they talking about? Oh my God, that's funny. Actually, I know what I was talking about. I'll come back to your question in a second. I was talking with the fact that people, and we're going to cover the very last session is going to be long-term investing. You know, we see a little pump, and typical nonsense FUD is everyone goes, "Oh, we missed it. We're too late to get into it," you know, and all that crazy. Let me try and get rid of it. Hold on, let me get rid of this stuff so I can focus. Give me 1 sec. We get all wrapped up in. There we go. Brush.
Is that where that panel is? I've been looking for that forever.
Oh, bottom right, way bottom right.
Nice.
Right there. Yeah. I mean, I don't know how I live without that. It took me forever to find it. So here's the thing: is that, you know, we're going right back to Craig, and this is, I'm going to lead into your answer on how to become a successful trader. Now, let me answer that first, and then I'm going to do this. Successful trader. It's like, how do I become a successful anything, right? The first thing you do is decide you want to do it, right? Do you want to become a successful trader? And if the answer is yes, I'd like to learn this skill, learn this profession, learn this whatever you see it as, then you go, okay, how am I going to learn it? And am I willing to put the time and energy into becoming really good at it? Hold on, I got to turn my fan on here. Hang on. 1 second, sorry. There we go. And step 1 in that is straight up find a good teacher, right? You can figure this out on your own and you'll bang your head against the wall, or you can go, who's already figured this thing out and is willing to teach me, right? Simple. Sheldon.
That's the
right?
best
in my
advice
case
ever.
back. In my case, back years ago, I searched around and said, I want to get good at this. Gosh, I want to be like that bald-headed guy, Nick. And so I joined for his course. And then when I was switching over to crypto, which I actually did with Nick, and he really supported me in that. And we actually trade crypto together, which we'll get into probably when he's up online. Is then get guidance, right? So you sign up for the course, and you make sure you really pay attention to the basics, because the basics will hound you in this thing. You never get away from them. right? There's no shortcuts, no whatever. You got to get the basics strong. And hold on, Nick is typing to me now. And then get a coach, because it's you're just because you learned ABCs doesn't mean you can read well yet. So you then get a coach who's gonna start to work with you, and that's what the community inside Discord is, right? So we have this amazing community in Discord, where your current cohort, your current class is all going through these lessons together. You've got alumni that are in there that have been with us for ages. You've got a host of hold on a second, hang on. Hold on, another 1.5 hours. Hang on a second, I'm chatting with Nick. His sister went to the emergency room. So hang on a sec. 11. Perfect. Okay. We rescheduled. Excellent. Nick is going to be on in 30 minutes. He had an emergency he had to take care of. He's a sweet guy. He had to take care of his sister and get her to take care of her. Anyway, all good. Nick will be here in 30 minutes. Where was I? Oh, so you get the basics, you take your school, and then you join a community of people that can support you. We've got squad members inside Discord. We got moderators that are there that have been with us for a long time. We've got hold on. We're chatting on the back end in one sec. We got a bunch of mentors. We got Sheldon and Mama. So we got a whole bunch of people. Our job is to support you as you bang your head against the wall. You tried this, you tried that, you're frustrated with this works, that doesn't work. To slowly start honing you into becoming day in, day out a little bit better trader. There's no rocket science to it, right? Just practice, be consistent, be honest with yourself. When things work, when things don't work. Sheldon says most important thing you can do is keep a trading journal. He didn't write that down and it's part of the course and reiterate it over and over again just because it sounds cool to say. It's what he does. Mama Sniper on the workshop yesterday, whenever it was, Tuesday, Wednesday, it's all blending together. She brought up her own trading journal. This is someone who's an amazing trader. She's got her trading journal. Why? Because we're always learning, always be learning, always be growing. And that's the only advice I can give you. Jackie, what would you say?
It's very much a let's control how hard you hit your head space, right?
Yeah.
So
yeah.
Imagine you're flying full speed and you crash into the wall, right? What would soften your blow if from hitting that wall? Us putting a bucket between your head and the wall would shorten the amount of impact between you hitting your head on the wall, right? So that's essentially what we're doing.
You make me snort. I love that. Yeah, I mean, here and on those lines. Thank you for saying that, because on those lines, be kind to yourself, guys. I mean, seriously, this can get addictive. How do I know? I tend to have an addictive personality, and man, when I get into this stuff, I go crazy. So I've created a couple of hints for myself. Hint number one is if I start to notice I have to clean my screen from nose prints too often, that means I'm trading too much, right? I mean, straight up, if you're doing this, right, step back. If your wife, daughter, mother, father, whatever, son say, I haven't seen you in 6 weeks. If you haven't seen the sun in a couple of days, take a breath, because this thing lives and dies with perspective and balance. And like Jackie said, if you're banging your head against the wall, and Jackie, you're a great example of this, right? You had a couple bad days in there and you said, hey, I'm just going to step back, man. I'm just going to take a chill, get my equilibrium together, I admire that. And we all have to do it.
Yes.
I mean,
it's been a month now. Like, realistically, I was like, hey, how long have I been off of crypto? It's been like let's just go look at the calendar quickly. And I'm like, the competition was a month ago, bro.
Yeah, why not? Why not? Okay, what do we got? Hold on. Matthias says, I'm always have the same problem. I'm gonna bring this one up because I like it. I've always had the problem. I'm afraid to start placing an order because I always think it's the wrong timing. It's a little bit of a blocker. Oh yeah, baby. Dude. Yeah, all the time. Jackie, what would you say to that? And I'll jump in.
There's one way across this or past this is to place the trade and get blocked anyway. You need to realize why you're getting blocked. If you don't have that data in your journal, you won't know why you're getting blocked.
Yep.
So placing the trade and getting blocked opens up the thinking as to how you should see things or how you should see where the entry should be, right?
Yep. Back to psychology, back to the fear, right? Pleasure and pain, right? Again, I did it, and here's the thing: it's never going to go away. Sorry if I'm Matthias, if I'm bursting some kind of bubble, but that will never go away. It comes down to your self-awareness that's happening. I'll give you an example. This morning, right before we did the live, I saw this setup on Solana, right? Right. Yesterday, we had that, we had the big pump before, everybody's running up, and man, at the FOMC, this thing just died, and everybody's going like, "Oh my God, it's crashing!" And I saw the setup saying, "Wait a minute, this thing is hitting exactly what I want. It's on the 618, right? I got in on that candle right there, right at the bottom, right into the trend line. It was about to break through the trend line. It's bouncing off support. So this is a trade setup that I like. It's a continuation trade off of an existing trend line. I mean, this has got all the pieces of a good trade that I like. I mean, look at this. Bounce off a trend line, bounce off a trend line, bounce off a trend line at support, bounce off a trend line at 618 in support. I mean, this to me says, yeah, let's go. And I sat there for a couple of minutes, kind of having that same feeling that you're talking about, Matthias. No kidding. I mean, if you think you're going to get over it, you're wrong. But I was able to talk to myself, right? Going, hey, Bruce, oh, wow, you're being afraid, right? That's cool, right? It was right at that green candle, right at the bottom of the candle, right there. Hold on, I'll zoom in so you can see it. Hold on, I'm going to do the 15-minute because that's why I entered the trade. Okay, you can see it now, right? It was at that right candle right there. And I had the same reaction, right? Oh my gosh, what if this thing goes down? What if Bitcoin continues to drop? And I started this dialogue in my head of all the things that could go wrong. Nothing wrong with, by the way, taking an opposing point of view. That's to help avoid confirmation bias, which is something that Craig talked about last time. That was brilliant. But I said, is this thing at my setup, right? Yes. Is it 618? Yes. Is it on support? Yes. Is it bouncing off the trend line? Yes. So my rules said, take the damn trade, right? It's simple as that. And then I basically, what I do to control the fear is I then set a stop loss that says, if I'm wrong, which I am all the time, right? Nick is going to hopefully talk about that because the fact is, we're taking an educated guess, but the market's going to do what the market's going to do. I mean, if somebody goes on and sends something horrible about on Twitter, Elon Musk or whatever, this thing could just tumble. I put protection in place, right? It's like safe sex, right? Like a little protection right there so that if it tumbles, I can get out safe. Wow, I didn't mean to carry that analogy that far, but I apologize. But here's the thing. That's what your stop loss is there for, right? And you set your own rules for the stop. Mine goes personally in a place where if my trade idea is wrong, I want out on a small loss. And then you jump. I have never gotten to overcome that. Maybe people do. Maybe after been trading for 20 years, it affects you less. But it's just a real emotion because we don't like pain. Remember that lecture that Craig was giving earlier? Pain and pleasure. We don't like pain. We try to avoid it. So if you notice you're avoiding taking a risk you want to take because you're feeling pain, or but you're fearing pain, be conscious of it, right? You'll get it. You'll get it. Great question, brother. Great question. And if it's really stopping you, reduce your position size. If you're doing $100 trade, do a $10 trade. Just reduce it to the point where that emotion isn't quite so dominant. And then once you start to get the track record, you go, oh, even though I got that emotion a little bit, my profit and loss track record week over week is improving. And now you can ratchet up from $10 trade to a $20 trade to a $50 trade to whatever you're comfortable with. You're basically manipulating your emotions by doing that, but it's what works.
Definitely so.
Yay, Mateus. Yay, I'm glad. Thanks, brother. David's buffer method. Here's the thing. David, hold that for David. David comes on in a couple hours, and I don't want to try and explain how he does this. It's kind of a variation of what's called grid trading, where you're adding on to a trade in order to lower your average entry price. It's brilliant. It's not my thing, so I don't want to try and explain what he's so damn good at. So Dave comes on in a couple hours. Definitely ask him because he's so good.
I can give you a TLDR summary if you're interested.
Yeah, go for it. Yeah.
I need to watch David. Obviously, he's the master at it. So think about the things that we're all trying to teach here. We each bring a different thing to the table, right? But at the end of the day, everyone has found a pattern, and that pattern is what works for them, right? So David's pattern, which he calls the buffer technique, is that he's noticed in the current market, tokens won't move more than 10% without making a retracement before that. If it does move more than 10%, there's no way that it will move 20%, right? So if it does get to the 10% mark, he's got another order set there to then execute just before that 10% hits, right? Because the theory that he's done with the backtesting is that once a token's moved 10%, it's going to move in the opposite direction. And that is what his backtesting has told him. So if you guys followed Nick right in the beginning, the first setup of the YouTube live, he spoke about backtesting your strategy. So this is something that David did and found the pattern of 10% for the moves to the downside. More for the downside because his setup works better for long trades. That's just generally how it is, right? Because longs will generally go longer than short trades would. Short trades generally, if you fall off step, but it will work either way. But it's more biased towards longs. That's just my opinion from what I've seen. So let's say that the token does move down 10%, and then you find yourself you're about to be liquidated or stopped out of your trade, right? So instead of getting stopped out or liquidated, he adds the same size trade at that 10% mark, or literally like at 9.8% on that stop loss area, right? So then he's now averaged the price of the entry down into like just above the first stop loss. I would say probably to around about 5 to 6% of the first trade, right? 5 to 6% down on the first trade because he's added the same position size. So then with that new average price, he then works it off another 10% lower from where he entered on the second entry, right? So now he's got a new 10% stop loss and an average entry, which is a little bit higher. So he's still going to be in the negative, but when it goes up, it's easier for him to get back into profit because the average entry has moved down.
Right. There are a lot of that. Thank you for explaining that. You do that so well. There are a lot of strategies for how to handle that. There's David's buffer strategy. There are hedging strategies. They're not basic. So for those of you asking about it, if you're a newbie trader, if you've only been trading a little bit, stick to the basics for a while. And then once you've got your arms around that and you feel strong and confident and comfortable, then you can start adding hedging strategies and buffering strategies to add that extra 5 or 10% to your total profit and loss. But make sure you're ready for it, because they are confusing, and I don't want you getting overwhelmed. Cool. Alan Paul said, Bruce, please tell me, will you ever trade the leverage tokens on spot instead of using leverage in derivatives? No. Two different worlds for me. I have two basic accounts. I have my trading account, and my trading account is designed to throw off money into my long-term account, right? So for example, let's say I'm trading a certain set of tokens. At the end of the month, I'll take my profits from that that are above my, let's say, certain amount. Let's say I start with a certain amount X, and I make profit. I'll take the profit and I'll stick that into my spot account, where we will have it available to buy long-term tokens in preparation for the bull market. So trading to me is short-term, whether that's a scalp of a couple minutes or a day trade for a couple of days. I haven't did swing trading because the market doesn't give much for that. But once we enter into bull market, my trades are less longer and they'll look more like swing trades or whatever. But honest to gosh, my goal is to be sitting on a beach with a drink with an umbrella in it, making money hand over fist, right? I don't want to be working. Right? And much as I love trading and love hanging with you guys, this is work, right? I got lights on, I got a studio, I'm indoors, I'm staring at charts, getting up early, getting on shows. Yeah, really, honest to gosh, I want to be sitting on a beach, drinking a whatever, and watching the ocean, right? Meanwhile, in the back end, I've got this investment portfolio that's growing like crazy. Fidelity I think about 20 years ago, Fidelity did a study of every trader, every investor, everybody that ever had an account with them. And they classified them: swing traders, day traders, hedge funds, professional traders, amateurs, whatever. And there was one class of people, some of you have heard this story before. There was one class of trader investor that outdid everybody in the history of Fidelity. Can you guys guess what it was? Which group of traders? Leverage hedge funds. Oops. Type it in comment. Investors, yeah. Come on, give me some other guesses. I'm really curious to see what you guys come up with. What kind of trader out-earns everybody else? According to Fidelity. DCAers, good guess. Hodlers, great. Oyate Tatanaka got it. That's right. They found that dead people who had accounts on Fidelity, who died and the account just stayed dormant, out-earned everybody else by a factor of something. Long-term, the markets are going to go up. Right now, we're buying cheap. To come back to the question, I trade on leverage on the futures exchange, and I take my profits, and then I keep on building a bigger and bigger long-term portfolio, so that when the bull market happens, whether it's next week, next month, next year, 2 years from now, I honestly don't care. It's going to happen when it happens. That thing does that, and I get to go sit on the beach with my drink and my guitar. Oh yeah, I gotta have my guitar. So cool. What else? Dead investors, I love you. Doge Toshi. By the way, Doge Toshi, I saw your name earlier, and I'm wondering whether you've got an identity crisis. You're Doge and Satoshi. It's like, I was wondering about you. You crack me up. I love it. I love the names, by the way. You guys are great. So what else you guys want? Someone wants render. Hedgers do great. Yeah, I mean, everybody does great. I'm not going to knock it. I mean, this market's a tough one, but But Matthew's with me on that lifestyle. You bet, brother. You bet. You pair trade on Bitcoin with Mexi? Yes, in their spot exchange. Lisa, hang on, let me show that question. Lisa's asking, can you pair trade with Bitcoin or Mexi on spot? They don't have it on the perpetual side, but that's where you want to do it anyway. Remember, you don't want to hold a leverage trade for 9 months. It's just not, it's not feasible. On spot, there are no fees. On most exchanges right now, there are barely any fees. So that's where I would do it. But yeah, totally do it. And yes, spot wallet. That's right.
Waz is opening up a can of worms over here, Bruce.
What's that?
He's opening up a can of worms in this chat.
Who?
He's just saying Casper. So.
Oh, Waz.
Information about it?
Oh,
You
bite
want
me,
TA on
bite
it?
me, bite me. Yeah, I did it this morning. Bite me. Hey, straight up. We did this morning, and you're not going to catch Dylan trading this with a 10-foot pole. But straight up, I got stopped out on yesterday because of the FOMC. Like I think, what was it, yesterday? Was it here? I forget what it was. I think here. I swore this was going to go long, and I entered a long right over there, and the FOMC happened, and that candle happened, and now it's come right back down to support again. Straight up, 618 right there. Strong support right there. Broke the trend line and came and retested it. I don't know what you're looking at, brother, but I would vote to take it. I mean, to me, this looks perfectly reasonable, right? Something in that range. Yeah. I don't know how much you're going to hit resist. Hang on a second. Let me think twice. Here's what I like and what I don't like about the trade. I don't like it on the 1 hour yet because you've got strong resistance right above, which means your risk reward ratio right now is only 2 to 1. So I'd be a little cautious of that. But if you think it's going to break there and head back to that high over there, now your risk reward is reasonable. Let me see if I can find a better place for my stop.
So I don't know
What do you see, brother?
how well this works, but I think the reason why this token just doesn't work for TA a lot of the times is because it's a mining token. You can mine it.
Really? Okay.
So
I've gotten a couple good trades on it, but you're not consistent.
I'm referring to that consistency like we get with other tokens.
Yeah. So if you want to look for a long in this thing, and this is, I'm not going to take it because it's not my thing, but if price broke the trend line there, I did that over there, but ignore it. If this comes back and thoroughly retests right over there, that region over there, you could potentially look for long. Not my thing, but that's what I see right now.
Okay. Cliff Troy just shared some news there on Cass. He's saying Bitmain mining conference tomorrow in Hong Kong. Cass speaker will be there on Saturday.
Really? Okay. Cool. I hope somebody can okay, hold on. Nick is joining. I hope somebody can report back to us and let us know how that goes. Nick is here. All right. So guys, Nick's in the waiting room right now. I'm going to bring him up in 2 seconds. I just want to Craig did a little introduction before. Nick is the person that taught me to trade when I was trading on foreign exchange. He's got an amazing course, an amazing presence on YouTube. He took me from being an idiot who could barely figure out how to light a candlestick with a match to doing okay on Forex, and he kind of whooped my head into shape. And I got to tell you, I owe so much about everything that I'm doing now to how he's guided me over the last couple of years. So, Dave, can you bring Nick up to the front here, or do I need to do that? I don't know how to do it. Add to stage. There we go. Nick.
Oh, Bruce.
hear?
Hey, man. Yeah.
Hey, so glad. I got to tell you, earlier you probably missed it. I thought you were online. Craig gave an incredible endorsement to you about an hour ago. Just really excited for you to be here. So I know he's watching on the back end, and I'm just really excited to have you here. I mean, you have, you took me when I was a baby on this thing and guided me and bitch slapped me around a little bit, and really helped me, go from not knowing what the hell I was doing to actually manage to get by in this stuff. So you've gotten a little bit of a reputation in the crypto world because people have been watching your recent YouTubes, and I would love if you could just start by just kind of hold on. Let me stop screen sharing so I can see you. There we go. I would love it if you could just take a few minutes, kind of introduce your background, talk a little about your trading style. If you present whatever screen you want to present, we'll leave it off screen and I'll bring it up whenever you're ready. But just talk about your background, your style, and then we'll have lots and lots of questions, I'm sure. Just do your thing.
Okay, cool. Yeah.
Sorry, guys. I just want to say, have a good show. I'm about to hop off. My wife has just arrived at the airport.
Thanks, Jackie. Appreciate you.
Bye.
Sweet. Yeah. No, so my background, I'll save you all the whole fucking long story. It's not that important. I'm just some bald guy who trades. As far as my trading approach, so I have been preaching from the mountaintops and screaming and shouting for like the past few years about what I believe the most important things to focus on in trading are for most people, which in my very humble opinion, not financial advice, is to keep things simple and control risk. And that's all I do. So with me, my charts are so boring and plain that sometimes I cannot even be bothered to actually draw the support resistance zone, because all I use is support resistance, but I only use the clearest ones. And whenever price gets there, I just simply set alerts at these zones. When price gets there, I look to see if price looks like it's going to bounce there, as long as there's no crazy news event. And as long as Bruce isn't dumping like a $69 million position on Bitcoin and causing a market crash, then I'll typically just get in at a support resistance zone. If it breaks, I lose a little bit of money. And if it bounces, I make a little bit more than I lose on average over an extended period of time. And that's all I've been doing for like I've been trading 8 years, and I've been doing that specific thing for a little over 5 years. And that's it. That's everything, Bruce.
We're done. Okay, cool.
Yep. That's it.
Cool. Do you have a chart you can bring up so you kind of show a little bit of that? And
yeah, I have a chart. Let me close out my tab here. I've got your OnlyFans for you, Bruce, pulled up as your first subscriber, which that's how you make your real money. And and you probably
talk about that. You promised me you weren't going to talk about that. Come on, man.
You guys think Bruce is an amazing crypto trader, which I mean, he is a god, a god in the flesh. But he actually makes all his money from his OnlyFans subscription, where he trades his naked charts live in OnlyFans every day.
We talk about naked trading. I mean, give me a break, right?
Exactly. All right, so I'm going to click share screen here. That's what I do?
Yep. Yeah, and then you then select which you want to share, and then I'll push it up. Or David push up. There we go. Add to stage. There we go. All yours.
All right, so we're going to go over a really complicated trade I took here on Tesla today. Tesla came into this support resistance zone, and I bought. All right, that's the whole analysis, guys. Thanks for joining the call. We're done here. Yeah, that's it. I'll click through a few of these so y'all can kind of see exactly what I'm doing. Like Amazon today, I bought a $100,000 position here in Amazon. And why did I buy this $100,000 position? Why did I FOMO into Amazon right here about $100,000 worth this morning at 8:39 a.m. this morning? Why did I buy? Price came to a support zone. What's my plan if it keeps going against me? It'll go against me another, looks like 3.5%. I'll buy again. Support resistance zones only bounce roughly 50% of the time. The reason is because price just goes up or down. So regardless of whatever arbitrary zone that you draw on the chart, price is literally just going to either bounce or is going to break. From my experience, it is a 50-50. That is literally it. And so if it doesn't bounce at one zone, it's likely to bounce at the next one or the next one or the next one. So it gives you a way of controlling risk. A lot of you guys know what Bruce uses. Bruce essentially uses a slightly modified version of support resistance and trend. So, Bruce, you'll use trend lines, correct?
Yep. Well, I use it just as a trigger.
Okay,
But my 99% of my setup is support and resistance, and then I'll use the trend line as a trigger to take the trade.
Yeah, so it's the same thing. And Bruce gets into trades where he has good risk reward off the bat. So he's out very quickly if it starts to go the other way and fuck up. And he'll hold to his final targets, which are generally much, much more than whatever his average losses are. Whatever you all are trading, keep in mind you only make money if you make a little bit more on your winners on average than you lose on your losers on average. So if you can get into a trading system where you're winning half the time and losing half the time, but on the wins you make like $60 and on the losses you lose like $40. Congratulations, my friends. You have a profitable trading system. Barely. And you could do that with support or resistance. You can do that with super, super basic stuff. In fact, there's two crypto trades I'll show you I took. These are actual trades that I took. I'm using, Bruce turned me on to MEXC, that platform, which is really good. So here's where I added to my Bitcoin long position. It broke above this support resistance zone, came back, tested, I bought, and it pushed up. As soon as it pushed up to this higher high, I started tugging back. I thought it was going to go further, but I liquidated some out to USD Tether after it failed to bounce right here. Lo and behold, it comes back and drops. Same on Pepe. I was trading Pepe. Have you heard of Pepe, Bruce?
I laugh at Pepe, but it's really popular.
Cool. Well, I'm all net short positions.
Yeah.
Yeah. So this thing on Pepe. So there was a zone right here. When price broke through these lows, I thought it was going to keep going. So when it had tugged back, it didn't really come all the way into the zone, but when it had tugged back and then started going down, I ended up getting short on this on margin on the Pepe futures. And then when it made a lower low, then it looked like the move was over. I closed this one. And this was the same thing based around support resistance. So that's pretty much it. It's just like little stupid horizontal support resistance zones. And then when price gets there, I buy if it's a support, I sell if it's resistance. The only other caveat here I'm going to put is there's nuance to this. There are subtleties. There are subjective, arbitrary, discretionary decisions that you will make as a trader as you get more experience seeing what works and what doesn't. And this helps you decide, oh shit, yes, price is at support, but should I trade the bounce of this support zone? Why do I feel like this support's going to break? You only get that intuition as a result of all your applied experience that accumulates throughout your trading journey. And Bruce will be the first to tell you that too.
Yep. I mean, it's so true. I mean, I remember, I think I told this story before where, I took your course and I was trading and I was in the groups with you and it was okay. And I had a session with you and you kind of asked about how I was trading and you realized that I was thinking everybody else was smarter than me. I was copying your trades. I was copying this person's trades in Discord, and you basically kicked me out. You went, go away, go out of Discord, learn to trust yourself so that you can develop that intuition. And I thought you just didn't love me anymore and you were embarrassed by me, but but it was right. I mean, I had to learn to trust my own setups, and I really appreciate that you taught me that. But it was a hard lesson.
Yeah, it was a video of me I posted on YouTube back in 2020 of me just walking around my house ranting about how everyone is so busy on social media measuring each other's what and saying, oh, Nick traded that. How can I duplicate that? And this person traded that. And this person uses a moving average. Let me trade that. Like all this stuff, all that really matters. Here's the only thing that really matters. You go to the charts. I think if you keep things simple and you control risk, you get the basis of a framework for a system down. That way you can start building your experience, start building, okay, when this and this happens, this usually happens next. How do I participate in that with controlled risk? How do I capitalize on that trading opportunity in such a way where I can make a little bit more than I lose long term? All you do is just keep doing this over and over and over and over and over. And after a while, you have so much data and applied experience that you can use to then have the wisdom to say, here's what's best when I could do. It's best if I trade support and resistance and maybe not this smart money, order block, liquidity, bank manipulation, institutional order flow, Wagyu beef, bullish Kobe steak, medium rare candlestick strategy, because all that could get very complicating, out of control insanely quickly. So that's why I keep things simple and control risk. Bruce has been a testament to that as well as I'm sure a lot of you guys.
Yeah. And it's funny because for so long, I was absolutely certain that there was some secret that you kept to yourself. And oops, was I wrong about that one? It really is that simple, right? You have a setup that works for you, and you make sure you control your risk. So if you lose a little, and you win more. And week over week after week, that's profitable, right?
Yep, that's correct. That's
Yeah.
it.
Yeah, I swore there was a silver bullet. Some indicator you weren't showing me, whatever. No, but there isn't. No secret sauce, no silver bullet.
Yeah, dude, back in
good.
It's practice and experience and all that stuff. Dude, back in 2016, towards the end of the year, I was convinced, 100% convinced, all of Forex trading was a scam. And that everybody who claimed to be making money was full of shit. And that even my friends who were making money, who I would see them, they would be live trading. People like one guy was Justin Sayani at that time. He was working for iMarkets Live. I mean, the dude, I hung out with him one time. He showed me his trading account, and it was a live account. He had made, I think, like $12,000 that week, and I just could not believe it. I thought everything was a scam. I thought there was some sort of secret that the banks or institutions didn't want us to know. I realized, no, it was just me overcomplicating things. I was not doing the most basic things. I was literally acting like I was retarded because I was not even doing the most basic things, in my opinion, such as like track what you're doing. In the notes section on my phone, which I still have, I have the original notes section from back in 2017. When I started tracking my trades at the beginning of that year and switched to demo instead of live trading like an idiot, I switched to demo, started tracking the reasons for my trades, why I was entering, the before screenshot, the after screenshot, and then a simple sentence, an explanation of what I did and what happened, and then reviewing that after every week. Within a couple short months, I was profitable. And then I switched to a live account towards the end of that, later that year, like towards the end of the summer. Started trading on that with $1,500. I would grow the 1,500 to like 2K or 3K, internal transfer the profits, start over, grow a little bit more, start over and over. I made 62K throughout the rest of that year, from the summer to the end of the year. Made back everything I lost, which was $8,000 plus some profits. And all that simply mattered was me doing some simple stuff to focus around, not changing the strategy every 2 trades, not changing the strategy every week. And then focusing on that, and then just making that one trading approach better while tracking the results. So keep a simple trading system, figure out a way to control risk based on what makes sense to you and what your risk tolerance is, and then do more of what works and less of what doesn't over time as you gather data and experience.
Yep. We just pushed your YouTube into the chat. I think they're gonna put your Twitter account up there. Is that the best way to follow you, Nick? Is on YouTube?
Okay, I don't have a Twitter account, so something's up right there.
Oh, I love you.
Yeah.
I didn't know that, and that's the happiest thing I've heard all day.
Yeah, just my YouTube channel. That is my real YouTube channel. But there's this one fake Twitter account. You can pay for verification on Twitter, and our boy, who we love very much, Mr. Musk, currently has it to where you do not have to do any type of identity verification. You can just create an account. I can call myself Crypto Bruce and put a picture of Bruce's face, and then go and then pay for Twitter verification. It'll look like Bruce's official paid verified Twitter account. So that's what people were doing of me on Twitter. I had this one guy threaten to call the New York State Attorney General to sue me for quote unquote scamming. And I had to send him all of our back office data of us like sending that takedown request to Twitter. So yeah, don't message me on any platform because you will not receive a response from me. I don't respond to anyone. I don't even check social media. I barely check the YouTube comments. Just follow my shit on YouTube. It's all for free.
Yep. I love it. And so funny because yesterday Sheldon reached out to me on Instagram asking how my trading was going.
Oh my gosh, dude.
Which is like, fine. Gee, let's see. Which trade are you asking about that we did this morning together? It was funny.
Yeah, they'll be like, hello, Bruce. Have you heard about crypto investment? And you're like, dude, we're in the same group chat together. What are you talking about?
I know. It was crazy. We live in. It's funny because we were talking about internet. I mean, the stuff that makes it so that here you are from your home and me from my home, and people from South Africa and all over the world being in this thing together, this internet is pretty damn awesome. The fact that we can pull up charts on TradingView and Mexi on the internet is amazing. I mean, it gives us immense power, but the downside to it is such a pain in the ass. It's like, God help us. Hey
Yeah.
guys, so here's the thing is if you got questions for Nick, that's why he's here. So just type them into the chat and we'll bring them up. And this we're here for you, right? You this might surprise you, but Nick actually knows his shit, and I'm getting okay at it now. So this is all about you, questions you have about your trading, how you can grow, how you can eventually become better than us, which would be awesome. So ask lots of questions.
Well, I'm going to take the first question. The first question up here is 618 Squad asks, so is BTC going down? And my response is BTC is 100% going down or up.
Yep. Yeah. I mean, price does one of three things, right?
Yeah, up, down, or if everybody stops trading indefinitely, it just goes sideways. There's no price change.
Yep.
But you know, in the non-fantasy world that most of us live in, especially crypto, well, except for Bitcoin right now, but especially crypto with all the volatility, with all these altcoins and shit coins, you'd be hard pressed to find one that just stays going sideways forever. It's either going to be a quick rip up or a very fantastic dip down.
Yep.
Because YOLO, right?
Yep.
Or what is it? HODL.
HODL. HODL. Yeah, I think the term HODL is gone from the vernacular. I think people realize how much we got screwed by that hold on things forever mindset. But yeah. May it die a vapid death. Okay, Lennox is asking, hold on, I'll bring it up. Lennox is asking, what's the best way not to use an indicator and be profitable?
All right, Lennox, here's how you do it. You go to your trading view chart, you go to the part where it says indicators, and you click X. Then you just look at price.
Yep.
All I do is the only things I'll use I'm not kidding. Like when I say I literally don't use it. Like this is my actual trading view layout that I trade from every single day.
Cool.
The only tools I use, look at this. Look how there's almost nothing on my chart ever. I use these little horizontal gray stupid box things to draw zones. And then I use the path tool on TradingView to just draw what I think is going to happen. So when you go and click through my charts, like I'll draw like this thing I thought GU is going to go up this morning. I've been right so far. It is going up. USD JPY, right? So I could draw what I think is going to happen. I'm like, okay, support, then I'll buy, and then maybe another support down here as well, the next zone. And then that's all I use. Literally, there's nothing else. So if you want to learn how to not trade with indicators, you just go to your indicators list and just delete them from your chart, and then just use something simpler. And here's the thing, guys. I'm not against indicators. What I am against, what I'm vehemently against, is complexity. Complexity is the beast. It's the animal that murders any sort of consistency and predictability and sustainability you could possibly have in your trading. In my very humble opinion, doing this for the past 8 years. That is why I scream from my high-rise building here in downtown Fort Worth, Texas, that people should, in my opinion, keep things simple and control risk instead of keeping things really complicated and having no clue what their risk is per trade. You're just like, hey, Bruce, like I traded a dollar lot on a $100 account, and you just like facepalm. You're like, oh god, this guy. So keep things simple and control risk. You don't have to use any. You don't really have to use anything. I don't even draw the zones on my chart most of the time. I just draw the arrow because the zone's so clear. Why am I going to take the extra 3 seconds of my life to draw the zone? I don't have time to do stuff like that. That's my answer.
Yeah, that's funny because I just remembered a question that came before you were on. Someone asked, is like, what indicator do you use to identify liquidity? And I didn't get a chance to answer it. So if you're on, you might not like my sarcastic answer, but the indicator I would suggest you use is your eyes. You can see it, right? I mean, you can see when you get this big old wick, some price jumps down, wicks right back up. That sitting in that area where that wick was a whole lot of long orders. It was just sitting there. And then if it comes back in there, is a decent chance that it's going to get bought up again. You can see most of this stuff with your eyes. And in the beginning, and for the newbie traders, you can draw the lines, you draw the box, you draw the trends. Because that helps you see them better. right? But it doesn't change where they are. Literally, Nick has been trading so long successfully that he can see them naked on the, I do my naked thing out over there, but he does the naked charts. He can literally see where liquidity is, where it's likely to bounce, where it's likely to reject. But we have to put in these boxes and lines and stuff to help us see them better. But those are just crutches, and you need to know that. So, cool. Susie is asking, what's the first thing you look for when selecting a chart to trade, Nick?
Susie, just for you, girl, I'm going to show my entire trading strategy right here. You don't have to buy my $3,000 program. You guys are going to learn it all right here today. We're going to go to some random chart here. Let's go to GBP CAD. All right. Pay attention, y'all. This is very complicated. I go to the chart. I look and where current market price is, and I look for the next clearest zone above and below price. So a GBP CAD here. I'm on the 1 hour here. You can use 1 hour, 4 hour. It doesn't matter. It's all the same chart. You just viewing it different time frames. I'm going to the 4 hour. I'm trying to find the next zone below price. There's not really any clear zones below price in my opinion. So I'm probably just going to like draw these lows right here. And it's probably it's really far back, but so whatever. That's this one. Then what I'll do is I'll set an alert at the next clearest zone above price and an alert at the next clearest zone below price. And I'll just wait for price to get to one of these zones. And guess what? I don't even have to watch the chart because I'll get a notification to the TradingView app on my phone if price gets to a zone. Now, for these specific ones, I wouldn't actually take these trades. This trend looks like it's like there's some nuance, right? There's some experience and subtleties. This trend looks like if we get back up to here, we've already bounced at this zone before, so those typically don't work out as well, so I'll take that. We've also already bounced here as support. You'll also notice that the first break and retest of this zone already worked. I typically don't take the second, third, fourth, fifth, sixth tests of the zone. The first fresh ones are the best because there's the most, like Bruce says, there's the most liquidity, there's the most orders, there's the most participation there the first time price gets to a zone. So with that break and retest already played out, and the price already came to this support zone down here, and it already bounced. So I wouldn't be taking any of these. I would wait for the next zones. If you're looking at actual trades I'm literally waiting for right now, we'll click through my charts and we'll see. USD JPY, I'm looking to buy right here if price gets to this zone. I've got an alert there. AUD CAD, I've got an alert just lower here at this. You'll see I don't even draw the support zones half the time because of how obvious they are. That's the previous low. We had a nice big bounce last time we were there. I've got an alert sitting there. If price gets there, I think we might bounce and go up, so I'll probably be taking a long if the context is correct. Euro JPY, as you see, I didn't even have to draw the zone because it's so obvious, but like there's the zone. If price gets down here, I'll probably be buying. I'll probably have a stop below and then a target above, and then I'll manage the trade if it looks like it's just going to break the zone or go sideways. And if it bounces, which it does half the time, it'll just be an easy profit target. So that's it. I just go to the chart, look at current market price, and I draw the next clearest zone above price and below price. And that is it. I set the alerts there. Once price gets there, I usually enter a trade in most cases immediately when it gets there, unless there's some crazy news event or Bruce is just selling off all of his crypto holdings and causing a market crash. I'll generally just enter immediately. And that's it. That's the whole system. That's the There you go.
Yeah. Question on stop, where do you put stops? How do you manage that, etc.? And a term that anyone who's ever worked with me inside school and knows that I attributed to you, you can talk about fuckery.
Fuckery. So what's the question?
How do you set up your stops and protect your risk?
Oh yeah, so
on a trade like that.
Yeah, so I'll just put them on the other side of the support resistance zone. That's it. That's the whole answer. Another thing I want to point out here is support and resistance has no predictive power whatsoever. So a lot of you are probably thinking like, well, time out. Why do Nick and Bruce use support and resistance? And that's a great question, my young students, my young Padawans. Bring your whole family and we're going to have a whole conversation about this. The simple answer is support and resistance is only useful as a way of controlling risk. It gives you a way of saying if price gets here and I buy and it bounces, I can make this much profit. But if it breaks, then I can lose this much loss. So it allows you to give a way of giving parameters for controlling risk. Otherwise, you could just enter anywhere with any position size And then what do you do? Like if it goes against you, how do you know when to close? Support resistance gives you a clear way of saying, here's the area I think it'll bounce at. And if it breaks above that area or below that area, I will close at a small loss. And if it bounces, I'll make a little bit more if I profit. And if it does bounce, and it's just 50-50, you don't need more than a 50-50 win rate to make money. You just have to make a little bit more than you win versus what you lose. So that's how I set my stops. So just in the other side of the support resistance zones. And oftentimes I close earlier before it even reaches the stop loss, because I've developed that experience that says, look, if it's breaking or going sideways at the zone, it's probably not going to work out. It's probably better to exit here. So my losses on average are significantly smaller than my wins whenever I'm getting on a crazy win streak. That's how I set stops and control risk.
Sweet. Question, and I guess is coming back to this also, is how do you determine how wide this support zone is?
Yeah, pretty much. I go to Bruce's charts that he shares, and then I just look at what he's doing, and I just kind of copy that and do the same thing on my chart. So how to determine zone width? I just extend it to where most of the candle bodies are closing, all the way out to where the farthest wick was pinned into the zone. So it's like, like some people, I see people doing all sorts of stuff, which, it's fine. Everybody's learning. Everybody starts out, but a real simplified example, like, so this up here, you'll see some people will draw the zone right here, and they'll say, these were just liquidity spikes. These were just the market makers and the banks spiking past the zone. But it's like, it's just, nothing's clear. Like price isn't perfect, so it's unrealistic to happen. And then some people will draw the zone all the way up here and then wait for the most extreme area. I just encapsulate everything. I say, okay, let's encapsulate like that high right there, all these highs up here, and let's extend it all the way up to those, and then set the alert halfway into the zone. This means that you're not entering like really low in the zone, so you're not getting a shitty entry, but you're also not trying to wait for the second coming of Jesus Christ all the way up right there at the tip top of the zone and entering and praying that you get to your entry. Otherwise, you'll miss a lot of trades. I find setting the alert about halfway through the zone tends to serve me well. Sometimes you'll get zones that are a lot more clear. For example, right here, the only leakage past this zone is like that low there and this one over here. The rest of it's pretty nicely defined, right? We've encapsulated like that low, all of these lows. This break and retest that was resistance twice, broke back above, support. This is a pretty clear zone, and it's wide enough to where you're not being unrealistic with your expectations about where the zone is. All this is just there's just clusters of orders right here of people that may be likely to buy whenever it gets there. I don't smother my trades. I don't try to use shit like this where it's like that. People use like a super tiny zone. I do it to where the candle bodies start all the way up to the wicks. That's how I draw the zones.
Really cool. Let's see, what do we got? Directly below. Yep, we talked about that. Someone's asking, do you trade commodities and stuff like that too? Or do you just trade Forex mostly and then some crypto and some stocks?
I am not authorized by the U.S. government to answer this question. No, just play. Yeah, so commodities. No, I trade equity. So I trade U.S. stocks. Just so Amazon, Tesla, Apple, Nvidia, AMD, Microsoft. I trade those. But yeah, so it's just mainly crypto. Most of my crypto is just long-term holdings. A little bit of margin trading on Mexi, and then FX is my bread and butter. That leads us into the next question by Brewman. Why Forex? I think it's just because I have the most experience with it. It's where I started. It's been my bread and butter for all these years. It's kind of like the very supportive parent who supported you for everything, and you don't want to abandon that parent. That's like the same way with FX. I know it the most. I know it the best. I'm really good with it for some reason, so I just focus on that. But I do trade stocks and FX. I make an extra like 20, 30K a month just from stocks alone, and I trade that part-time like a degenerate. So yeah.
Yeah, and it's funny. You'll find out what works for you. Like I started in Forex and then was using crypto to transfer money from my bank to the Forex exchanges. And I found myself making a lot of money on the transfers because Bitcoin was skyrocketing. So I started dabbling in it. And for whatever reason, which I never understood, I started trading better on crypto. And, the rest is history.
Question, what time frames do you prefer to trade?
Typically, I'll look at the daily just to get a reference, see if we're near any major lows or highs. So like major support resistance zones, because you don't want to ignore that. In my opinion, there's a lot of volume traded. There's a lot of people making big decisions with a lot of volume and money at major daily support resistance zones, just from what I've seen. So I go to the daily and I check maybe like once every other day just to see like, all right, are we near any major areas? Because if we are, regardless of whether price is trending upwards on the 1 hour, if it's at a major daily resistance, that's a big enough area where the trend might end. So it's just good to keep that in mind. So I'll start on the daily. I'll check 4 hour. Most of my trading is usually done on like the 1 hour.
Yep. Wayne is asking, Nick, can you please talk a bit about position sizing, risk, leveraging? How do you calculate all that stuff? How do you kind of get your arms around it?
Yeah, Wayne, yeah, a lot to talk about, right? I'll try to condense it all in here to like maybe 15 seconds. So position sizing. It's one of those things where it's like you can calculate it with a position size calculator, and that's what I do. Risk percentage per trade, I think that's what you mean. When it comes to risk percentage per trade, I don't do it that way. I risk money per trade. So I have like all my trading capital, right? And then I put a small amount of it into a trading account. I kiss it goodbye and say if I blow it, it's cool. And I'll just use the high leverage, which is the third thing you said to talk about. I'll just use the high leverage you can get with Forex brokers to just risk whatever dollar amount I want per trade. If you know your metrics and your statistics for trades, you don't need to have a $100,000 trading account and then risk 1%, which is 1K per trade. You could just put 10K into a trading account and then risk 1K per trade. And unless you have a 10 trade losing streak, you're probably not going to blow the account. So if you know your stats, you know your metrics, you know your average win per trade, loss per trade, your average consecutive losing streak, which for me is sometimes maybe it goes up to 3 to 4 trades sometimes. If you know your stats, you could just use high leverage, which brokers I use offer 1 to 500 leverage. I use that 1 to 500 leverage. I figure out the dollar amount I want to risk per trade, which for right now it's anywhere from 5K to 10K per trade on FX. If I'm wrong, I usually lose maybe 5K, 10K worse. If I'm right, I make usually 10K at least, if not a little bit more if I've added to the trade. So that's me talking about position sizing, risk percentage, and leveraging.
Yep. And there's for those that don't know, Forex versus crypto. In Forex, you're trading the actual movement of the money, like the Japanese yen versus the dollar, is tiny, tiny, tiny. So it's the leverage that enables you to profit off a tiny little change. In crypto, like in Bitcoin, you might have $1,000 move. So that's why you leverage is a tool to help you get to that position size that gets the profit you want, but never risking more than you are willing to risk on a trade. So yeah, and I do that too. I have a fixed dollar that I just simply not going to risk more than that on each trade. So yeah, I'm with you. What else? People are asking about uranium, Nick.
Yeah, let's go mine some.
Let's go mine some
uranium. Yeah.
Okay. Here's a really important one. Really, really important one, Nick. You can see it on the screen. This one's down to the real meat of the thing.
Yeah. Okay. Finally, we're getting some actual, real, decent questions in here. I was getting kind of worried about you guys. So the products I use to keep my dome so silky smooth. So I use Dove. I use Dove foaming body wash, and that allows me to get all the oil out of it. And so once I get out of the shower and all the oil's off of it, I buff it. I have like this power buffer thing that I buff my head with, and then it gets so bright and shiny that literally my greatness inspires people that walk by me at the coffee shop here in downtown, and they automatically become better Forex traders when they weren't even traders to begin with, just because they walk past my shiny head of truth and justice. And so that's a great question. Thank you for asking.
I love it. Sorry, snorting in your face. Say, you did a series early on that really impacted me, and Craig, who you've had a chance to meet and chat with online, also did one that's very similar. His session was on pain and pleasure, and you talked a lot for a while about dopamine and serotonin and sort of that this whole thing really resides in, how these chemicals are manipulating our brain in decision making, and that really got to me. I was wondering if you could talk about that for a couple of seconds, because I found that stuff pretty amazing.
Okay, what's the specific question?
Question is the psychology of trading. right? You went through a period where you're equating into the release of dopamine and serotonin in the brain, and you got into that for a while. But really, the psychology of trading, combination of fear and greed and all that stuff really tends to dominate young traders until they get comfortable with it. So I was wondering if you could take a couple seconds and talk about how do you teach people or guide people to start to not be controlled by those emotions.
Okay, sweet. So I'm going to condense this down to what I believe the most important part of trading psychology is, which is the discussion of fear. So when it comes to the discussion of fear, you make very weird decisions whenever you are operating under a emotionally charged, fearful state of mind. So to cultivate a mental environment in which you are making decisions that most people would call logical and rational, grounded in evidence and your experience of what you know works and what you know doesn't work, instead of fear, you objectively make better decisions in life and of course trading decisions as well. So we have to figure out, how can you actually operate from a mindset where you're not panicked the fuck out every time you look at a chart and you get on and then all these emotions are welling up in you and you lost 500 yesterday and you're down 200 today. You're scared about what you're going to do. What if you lose all your capital? You're operating from a place of fear. You can't think normally. You can't think rationally. And you also sure as hell cannot accept risks in the way that you could if you're thinking from a very cool, calm as a cucumber, level-headed mindset. The best way I usually teach this, I teach this in the full program, which we have 4 hours of lecture content at the beginning of my $3,000 program, which you should not buy because you can learn everything for free on my YouTube channel. So don't buy anything from me. But I literally spend 4 hours in the first portion of my course just teaching people about how to cultivate a mental environment which is conducive to profitable trading. I simply suggest meditation, a simple 5-minute meditation session, sitting still, getting the damn phone away from you, not looking at your charts or anything, closing your eyes, focusing on your breath for just 5 minutes, right? This is not like, it's not that crazy. You don't have to be a hero here. You can go 3, 4, 5 minutes. This allows you to come to the present moment, and then it allows you to make better decisions because the fear and everything else will erode away if you are able to focus on the present moment and not thoughts about the future or thoughts about the past. You get anxious when you think about thoughts about the future. You get depressed when you think about thoughts about the past. More important to be in the present moment because that's all you can really control. Now, how to practically do this? That's the problem, right? You're trading off of fear. How to practically do this? Start with a demo account. Just get experience. Approach a demo account not as I need to be right or wrong or I need this to work in a given arbitrary amount of time. Approach it as an experiment. Have fun with it. Focus on one simple thing. Maybe it's trend lines. Maybe it's moving averages. Maybe it's support resistance. Maybe it's literally straight up degenerate fucking gambling. Whatever the hell it is, focus on one thing at a time. It's just that one thing. And it's like you're throwing darts at a dartboard and just seeing what hits near the bullseye. After you do this for a couple months, you'll start to get together what works and what doesn't work. You'll find your strengths and your weaknesses. And then as you do that stuff, you begin to develop, okay, when this happens, I'm usually better off if I don't take that trade. But when this happens over here, these are good trades. So these are trades I should take. Your experience starts to develop. Once you get profitable in demo, you get profitable without all these emotions. You can then switch to a small live account. In my humble opinion, not financial advice. You do whatever the hell you want and consult a financial services provider before doing this. But then, in my opinion, you could start a small live account and then trade small because you are still not going to be emotional if it's a minuscule dollar amount. If you make like $5,000 a month from your job, but you're only trading a $100 live account, if you win or lose a trade, it's an extra $5 maybe. So you're not really going to be too jarred mentally of losing $5 or making $5. So it allows you to still trade without emotions. And it allows you to trade based on evidence and what you have in your data that shows that works and what doesn't work. And also your experience comes into play. After you do good on a small live account, slowly start transitioning up into a little bit more dollar amounts, maybe a 1K account, then a 3K account, 5K account, and then you slowly build this up over time. This shit I've done for 8 years. Okay, it took me 2 years to get profitable. And I wasn't even really making like that much money. I was making like a couple grand a month. So I was happy for that. That was great. But you do it through this slow iterative process of slowly becoming better over time. And you can start that by on a demo account, small live account, and then a bigger live account gradually as you continue to maintain profitability. This way, the emotions and the fear don't creep into anything. That's how I suggest going about it.
Right. So if somebody starts finding themselves kind of overwhelmed with that, then it might be a good idea just to step back, shrink the trade size down until that emotion's not controlling them anymore, and then build it back up again.
I'd honestly just use demo until profitable for a couple months in demo. That's honestly what I would do.
Cool.
I think it's very dumb to trade on a live account if you have not even shown you can be profitable in demo with no emotions.
Right. Cool. Cool. What is this? Cold showers pump dopamine 2.5 times the amount cocaine does. Yeah. Okay. Cool.
So
Cold showers, meditation.
I do cold plunges every single day. I keep my bathtub full of water and it sits at around 70 degrees Fahrenheit. So about 21 degrees Celsius. And then before I jump in, I just dump my whole freezer tray of ice into it. That lowers the temperature to around like 61, 62 degrees Fahrenheit. And I literally, I'll take a shower just to rinse off. Then I'll cold plunge. And it's not like 45 degrees or 50
Really?
degrees. But yeah, but it's like 60 to 62 degrees, which is still cold enough to kind of jar you. I won't go into detail for the sake of this call, but y'all go and look into cold plunges and cold shower benefits. I do it every single day. So y'all go
Really?
look that up. Yes, every
Wow.
day. Yeah.
I'm gonna do that because that sounds great.
Mhm.
I had no clue. Cool. Guys, what else we got? Cold showers, dopamine, truth and justice. Okay. What other questions you have for the man here? I hope you all definitely we put the his YouTube channel up in the chat. I'm sure David will do it again. But definitely follow what Nick is doing. I watch it just. Oh, thanks, David. I literally go on every day and get my dose on top of what we do in inside his group. What else we got for Nick? So do you do you just trade any token in crypto, or do you just kind of grab whatever it seems to be highlighting? Like I know you said you were trading Pepe, which I laughed at. You just sort of take a look at.
Most of my stuff is long-term holding, so most of it
Yeah.
sits in a Ledger cold wallet, and it's just the
Yeah.
majors. So I have Bitcoin, I have Ethereum, and then I do have a chunk of algo, an undisclosed
Really?
amount of undisclosed amount of Algorand. Yeah, and I don't know anything on the back end that suggests that Algorand should be popping up anytime soon at all. So, but yeah, I do have a sizable chunk of Algorand. So yeah.
Cool. And what the Bremen's asking, back to kind of the basic questions we started with, is what do you track in your journal? What
Okay. Very, 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 very simple, right? This is something y'all can start today. It is zero pain in the ass. It costs you no intelligence at all. And it's very straightforward. And it's something that I've been teaching clients this way for a couple months now because we switched over. You can use a Google Docs spreadsheet. You can use a Microsoft Excel. You can do all this shit. Here's the way I suggest doing it. This is an example that I give for this. Start a Discord server. Okay. Very complicated, right? It takes about 5 seconds. Start a Discord server where you're the only member. And then just in the chat, just post the before trade of the trade that you got into. And then post the after screenshot of the trade once it's complete. So there's a trading view link of what it looked like the moment you entered. And then a trading view link of what it looked like after you close, right? This is not my trading journal. This is just a thing that I made for the sake of showing people how to track their trades in this. So put a before screenshot, put an after screenshot, and then take like 30 seconds to just write one sentence about why you took the trade and what happened. And that is it. That's all you have to do. It takes almost no time. It'll probably add an extra 30 seconds to your whole trading plan. And then this way, it allows you at the end of every week, you sit back, you grab a nice cigar and a cup of coffee or whatever your thing is, and you just scroll through your Discord server and you can see in real time the date, time, trading view screenshot, what the trade looked like when you entered it, what the trade looked like when you exited it, and then a simple explanation of like, I took this trade, it was a break and retest of a support resistance zone. When price failed to bounce it and started going sideways, I closed at break even. That's it.
By
That's
the
all
way,
you do.
we're looking at your chart. We're not looking at Discord. Were you trying to show Discord?
Oh shit! Yeah, I was trying to.
Just got there's right above that tab, but you have to or share that screen separately.
Yeah.
There you go.
Yeah.
Sorry.
Yeah. There we go. Discord. Okay. It's this right here. So, like
coming up,
something like that.
There we go.
Yeah. So here's a Discord. Right. You just start a Discord server. everything I said, that was simple enough. You guys probably wouldn't even need to see this.
Yeah, that's really cool.
Start your Discord server, put the before screenshot, put the after screenshot. Again, this is just an example that I did to like show people how to set up the Discord server, and then a simple explanation. It takes, like I said, it takes 30 seconds additional for each trade, which if you're going to each trade, you're figuring out your reasons for it, you're doing your analysis, it's not that complicated of a thing to do. If you're not tracking your trades, you're screwing yourself long term because you're not keeping any track of what you're doing to see what's working and what's not working. If you have no clue whatsoever, you're going to the chart every day and you're just spinning around on your wheels, not really making any progress in one direction. You're just kind of hoping that everything works out. Track your trades. It takes almost no time.
Thank you. That's actually, I've never seen that. That is really cool. I love that. And for everybody, you just do what works, right? I mean, the idea is not to do it like Nick does or anyone else does it. It's that every week you can look at what you've done and identify areas where you think you need to get better, right? It's not that hard. What else, guys? Do you? They're asking about hedging. I know you've at times done hedging in Forex. Can you talk a little bit about that?
Yeah, hedging essentially just pauses the P&L. So say like you get into a buy, and then so in cryptos, I don't know how you do it there in cryptos, Peritech.
Same.
Sorry,
Same. Yeah.
Yeah, but in FX trading, at least the FX brokers that are not United States regulated brokers, because you can't use hedging in the US on regulated brokers. But if you're doing it with a degenerate, unregulated FX broker, they allow you to be in a buy and a sell at the same time on one asset. So hedging is just essentially a way of pausing. It's like hitting the pause button on your drawdown. If you get into a trade, it goes into like $100 loss and you hedge. So let's say you're in a buy for one standard lot, goes against you, then you sell for one standard lot. No matter which way price moves, you're locked in at that loss. The idea is then to wait until price moves to an area where you believe that you're confident you know what the next likely outcome will be. Then you essentially just manage that hedge in such a way to position yourself net long or net short at that next zone. Now, do I currently do this anymore? No, I don't. I just close the trades now and book the loss into my closed P&L, and then I just wait for the next zone like I would anyway, and I just start the position again. So you don't need to do it. It's just, for me, it worked really well. I used it for like a year, and it worked great. But after realizing it was like the same shit, like if I just closed the trade, and then it just, instead of booking the loss in my open P&L, it just books it in my closed P&L, and it's just like simpler. So I was like, I guess I'll just go back to using stop losses again.
Yep. Yep. I went through the same experience, and a couple times I still find it really useful. Like if I want to get in on a trade and it really is on that precipice, and then I want the confirmation. But I find myself as I'm getting older just erring more towards simplicity. Oh, hold on, this one's for me. Hang on, Tomo trade moving up. You probably noticed in our Discord that I often post Tomo trades. I've gotten a kind of strange reputation in crypto land here for that. That I'm somehow, Tomo and I talk to each other. But yes, Tomo is doing very well from the trade we called this morning. Let's see, what else? What else? Yeah, wow, Nick makes everything simple. Someone's asking you about stuff like order blocks and etc. And there is a propensity for a lot of people to look for more complicated solutions and not knocking them at all. If they work for you, they work for you. But you've really chosen a very, very simple path. And personally, me too. Have you had experience trying, fancy indicators and stuff like that, and why you chose to go back to simple? Or have you just always just stuck with the simple support and resistance kind of scenario? What are your thoughts?
I've experimented with many things. I experimented with like RSI, divergence, Bollinger Bands, trend lines, moving averages. It sounds so hilarious saying now, but I experimented with it in an attempt to try to improve and optimize my already working trading system. What I found is that price still just goes up or down, and no level of analysis, in my opinion, is going to get you that much better of a win rate. then on
Mhm.
average 50-50. So instead of focusing on being right, I instead just shifted all 100% of my focus onto risk control. The only reason I'm profitable is not because I'm a good trader. I fucking suck at trading. I'm only right half the time, sometimes even less. The only reason I'm profitable is because I simply make a little bit more than I lose over an extended period of time, over a large enough data set of trades. That is it. So whether you do 10 hours looking at a damn chart, doing all this crazy shit, trying to figure out if it's going to go up or down, it's still objectively just going to go up or down. Instead of spending like 10 hours doing that, you can spend 10 seconds drawing a stupid zone, setting an alert, and then when price gets to the resistance, sell with the stop loss above and a target below, and you get the same outcome. It still just goes up or down, except now you've got an extra 9 hours and 59 minutes to yourself. So yeah.
I'm totally with you on that. I literally, I went through the. I think we all go through it, right? We all get into trading and we get okay at it, and then we keep looking for external stuff to fix us. And I sure went through a lot of that, and eventually came to the point where, something outside me isn't going to fix me. I just have to fix me, and life got simple again. So I, totally down for that. What else? Hey Nick, check this one out. And Nick should be on the banter team. Hint, hint, hint. We're working on a setup so that Nick can be a guest on one of Sheldon's up and coming shows now that he's back from Singapore. So keep your eyes open for that, because that's going to be an awful lot of fun. We talked about risk management. Yes, we would love to have you part of banter. Love you. Let's see what else. Do you ever use limit orders? It's an interesting question.
No.
Yep. It was easy. Yeah. It's funny because I get asked that a lot too. Go ahead.
Yeah, it's funny, because I know you don't really use it too much. The reason I don't is because I prefer to set alerts on TradingView. Then when price gets to a zone, like 90% of the time, I'm going to enter it right there. However, I do like to observe price action, the context, whether or not there's a crazy news event that's going on. If there's a lot of crazy momentum candles running through the zone, looks like it's going to break. I like to look at the context and the nuance and what price action is doing whenever it gets there. Therefore, I prefer to just manually execute trades because it's safer for me and I have more profitable outcomes. That's why I don't just do black and white. All right, limit order every time. Like otherwise, I'd have like 15 million limit orders all over my charts. Instead, I focus on price action and context.
Yeah. I don't do them at all. Actually, I take that back. 99% of the time I don't do them. I did one the other day and then I forgot about it. I totally forgot that order was there. Yep. Oops. Yeah, we're not going to talk about that one. Okay, we're just going to pretend that never happened. Not going to talk about me being stupid. Anyway, I don't like them because when I'm getting close to ending a trade, I like to zoom in a little closer and just sort of see, like you said, what the candle's doing, to get as nice an entrance as I can. But cool. Okay, here's a question for you. I love your thoughts on this. This is interesting because, especially in crypto, there's a lot of stuff in crypto of talking about market makers and exchanges, stop hunting and liquidity hunting and trying to stop us out and all that stuff, that there's like somebody out there maliciously trying to hurt you. And I personally, I've just always thought that that's just, there's buyers and there's sellers, and whoever's got more of those in the markets determining the price, no matter who they are. But this question is, doesn't high leverage attract market makers and stop less liquidity? Do you have any thoughts on that?
I don't know. I don't know. What the fuck does market makers mean? I don't understand. Like, it's all orders. So whether there's a lot of orders or a little bit of orders, liquidity is just people placing buys and sells. Like, it's just, it goes up or down. It is what it is. I wouldn't read too far into it. I don't think there's this like crew of people manipulating everything to try to hit your retail trading $50 stop loss. Like, retail traders make up less than 5% of Forex market volume. And I'm not sure if stocks and crypto works the same way, but I do know for a fact FX trading 5% or less of volume is made up by retail traders like me. So it's just like, in my opinion, it's not worth worrying about.
Yep. Yeah. And frankly, I think it's the same in crypto. I mean, the only real difference between crypto, the charts are the charts, but between crypto and Forex is the fact that crypto has a total market cap of about $1 trillion, and Forex trades between $5 and $7 trillion a day. That's the big difference. I mean, it's just such a huge market compared to our cute little baby here. And do you manually set your take profit, or do you do it by watching it and kind of intuiting it where a good place to get out is?
Yeah, so that depends. Like sometimes I'll set the take profit in. Other times I will just set an alert where the profit target would be. And if price gets to that alert, I'll watch to see if there's huge candles as it gets there to where it looks like it's going to keep stampeding further. And then if that's the case, I'll generally hold on to it and let it continue to run and just kind of sit back. Then when price action kind of slows down, the candles start getting smaller and start going sideways, then I'll liquidate there. If it gets to the profit target and I got there nice and steady state and it's looking like that'll be the area where it might stop or whatever, then I'll close right there manually. Sometimes I'll put a take profit order in if I'm going to sleep overnight. And so say the trade's like halfway to the profit target, right? So I'll just manage. I'll put a break even stop loss, set the profit target in, like program it in. And then if it goes and hits the target, cool. And if it comes back to break even, cool. So it depends on the context.
Yep. Yep. Now, do you, when you're in a trade and you're building a position, at what point, this is me asking, and sort of what is your strategy for moving your stop in above to break even or just above in order to lower your risk? Do you do that?
I do that, but it has to make sense depending on what the market structure is. A lot of people I see just saying, all right, I'm adding here and moving stop to break even. And I'm like, what if price comes back and hits your break even? Would that invalidate your trading idea? And they're like, well, no. And I'm like, well, then does it make sense? Do your actions align with what your belief about the outcome is? And they're like, no. And I'm like, all right, well, let's figure it out. A very simple way to do it would be like, all right, price comes to this resistance, it breaks above, comes back and tests the support. So you think, okay, sweet, I'm gonna buy at support, then stop below, target above. Lambos, we're all gonna get Lambos after this trade's over. Then price starts moving into profit. And so some people will do something like this. They'll add up here. And then you move your stop to break even. And now your stop loss for this trade, if it's the same distance and the same lot size, is at the zone. Well, what happens if price just comes back to touch the zone again? Like it could simply just be testing the zone again before having another move up. But what's going to happen to you? You're going to take a loss on that trade and then a break even on that trade. And then it's going to go up and you're going to feel sad inside. You know what this feels like, Bruce?
Yes.
Yeah. So that wouldn't make sense. So what would be a better way to do this? A better contextualized way to do this would be, if you're going to add, make sure that you can protect your position. Yes. But add after it makes sense. If it pushes up higher to here, then it pulls back and then it makes a higher low right there. And you think that the next move is going to be up. Well, then that would make more sense to maybe like add a position here. Then you can put this to break even and then have this stop loss down below that zone. This would make more sense because it's unlikely to crack that previous low and that previous low if it's going to continue up. So it just kind of depends on what the system is. Just make sure that you wouldn't feel like a complete idiot if it comes back to take your position out at break even. If you're going to be adding to a trade and then protecting subsequent positions and previous positions.
Yep. And that's really something that, again, comes from experience, is recognize the patterns that it's reached a point, it's retraced. And so if it does come back down, it means the market's moved in a different direction and it really is invalid anyway. So yeah, 100%. That makes a lot of sense. Lambo. Syed says Lambo. Well, this is an interesting question. How much time do you trade on an average day?
Okay,
for your
so
happy work-life balance?
For me, I'm on charts 4 to 5 hours a day, but there's a caveat here. That's only because I run a trading group. I'm a trading guru. I sell courses. I sell memberships. I have a trading group. So I have to be on because I've got all my clients like, hey, Nick, what do you think of my trade? And I'm like, Frank, it looks good. And he's like, thank you. And I do that 5 hours a day. So it's like, it's one of those things where, like, if I only traded and I did not run a group and I didn't make videos about trading all this shit, I'd probably spend about maybe an hour per day on charts, maybe a little bit more or less. Because, like, you guys gotta understand, when I'm clicking through charts, I can tell within a few seconds whether or not there's a setup. And most of my analysis is done at the beginning of the week because I just draw the major zones and set alerts. Then I just sit back and chill and wait and go smoke a cigar. Like, I don't spend all day looking at charts. And so then if I'm clicking through it and I can see there's a setup, then I know, okay, this looks like it's about to set up. So I'll put a little trading view flag on it there in my watch list to, like, keep an eye on it. Come back, check a few hours later. But it's not like it takes, once you get experience doing it, it doesn't take much time. It's just, you know what you're looking for. You know what your criteria is for entry. You already know how you're going to manage it. You already know what the risk is. You already know how to calculate the sizing. It's the same mundane thing over and over and over. And it's really fucking boring, which is probably a big reason I actually run my trading group, because I think I would go insane if I just sat here at these damn charts and traded all day.
I love it. I love it. We are coming towards the end of our allotted time. Is there anything you'd like to say to all these crypto degens that are hanging out with us? Something thoughtful, something whatever, where to find you. Everybody's been just absolutely loving your perspective.
Yeah. Here's what I'll say. You don't need Nick Shawn. You don't need Crypto School Marathon. You don't need any of this stuff on YouTube. I'm going to leave you guys with the same advice that I left with Bruce back in 2020, 3 years ago. This non-financial advice that I'm about to give you guys is the same non-financial advice that I gave Bruce. We'll call it a suggestion back in 2020, 3 years ago. And it's what helped Bruce get profitable, more or less. Yeah?
Mm-hmm. Yep.
Yeah. Okay. Here's what it is. Stop looking at what everyone else is doing. Focus on something very, very simple, a simple, predictable way to get yourself into trades. Support resistance works fine. Price gets to a support zone, buy. Price gets to a resistance zone, sell. Once you've defined something very simple, like trading around support resistance or whatever, find a way to control risk. Be very clear, like, if price breaks the zone, at what point will I exit the trade in loss, and how much loss will that be? And this involves calculating the appropriate position size. You can do that in crypto, you can do that in FX, you can do that in stocks. You can figure out what your risk is before you ever take the trade. If you keep things simple and control risk and focus on you for days, weeks, even months, that is where you're going to see the most progress, is by focusing on what you're doing, not getting on the internet and trying to copy what everyone else is doing. You simply make money trading if you make a little bit more than you lose over an extended period of time. Keep things simple, control risk, and focus on you. And don't worry about anyone else. All you have to do is find something that works for you. And when you find that, that'll work for a lifetime. That's my suggestion.
Yep. That is so true. And it's amazing, because that is the whole rationale for why Sheldon created the Sniper School, is that, Sheldon, and coming up next is Mama Sniper. I'm really thrilled is going to be here. But the goal, they're already trading successfully. They're already doing very, very well, like you, Nick. But the goal is that people don't copy Sheldon. They don't copy Nick. They don't copy Mama Sniper, that they become self-confident, aware, able to do it all themselves, traders. And that's why the whole school was put together. So I really appreciate that you ended with that, Nick. Really appreciate it. Thanks so very much for being here with us. This was something I've looked forward to for a very, very long time, is sharing, my past, my love of trading through your eyes, and getting to share how much I appreciate what you've given to me with this wonderful crypto family. And I will see you in the other side soon. Thanks, brother.
Absolutely, brother. You guys have a great rest of the day.
All right, we will. And next, where this is, I'm really excited by this. I'm excited. So you guys all know of Mama Sniper, Dani, from the workshops. But very early on, she doesn't know this, so this is going to be new to her ears. I watched you and Sheldon doing a show, and there was something about the way you were trading theta that got into my head. And one day during an AMA, someone suggested this strange token Tomo that I'd never heard of before. And it was like it yelled my name. And I've been trading it ever since. And it's been amazing, because I got to know it and it became part of my daily routine. And it's done very well. And I got to tell you, Mama, Dani, thank you for turning me on to that, for just that whole idea of getting into it. You've been an inspiration for me, and I know that people are going to have a blast hanging with you for the next hour. So everybody, Mama Sniper.
Oh, thank you very much, Bruce. Really, really appreciate it. And I mean, hats off to you as well. You've put so much effort in and you're so amazing. The community loves you. We appreciate you. We appreciate you so much as well.
Thanks so much. Have a great one, everybody. Pay close attention to what's coming next.
Okay, let's get into it. So everybody, it's lovely to be here with you. You know, what I love about this community is that we're all like-minded people. We all have the same dreams. We all want freedom. We all want that plan B. We all want to know where we're going next. We all, we just want to learn. You want to improve your life. We all have a story. You know, everybody is listening to Sheldon's story and my story and everybody's story, but we know every single one of you in the community and every single one of you that's with us every single day, you all have a story too. And I think that's what makes this so real, is that we know everybody has a story. Everybody has had a struggle. Nobody is more special, or nobody is less fortunate, or nobody's whatever. Everybody's had their own struggles. And I think that's what we just love about this community, and what we love about being here every day, is that we are with like-minded people. We are with people, we just want to help ourselves, and we want to get out of this rut. We want to have our freedom. We want to get out of the system. We want to be able to control our lives for any job losses, for any pandemics that come our way again, for retirement, for just improving our lives, being debt-free, buying houses, whatever it is that we want. And this is the place to be. You know, we were the right people at the right time, at the right place. And there's no better place that anybody could be right now. And, you know, it's like we get a lot of questions and we get a lot of queries from people about how do they handle people in their lives that are so against crypto and the negativity and gaslighting and everything that is going on. And we're going to have those people in our lives. But look around you. Yes, maybe friends and family don't agree with where you're at, or they just not looking into it, but we have got the best community, the most profitable community in the world. And I mean, Crypto Banter and all the hosts are absolutely amazing. All the staff are absolutely amazing. The school teams are absolutely amazing. Everybody you've met today is absolutely amazing. And there's just so much out there. And you know what, if I can just share some little bit of inspiration with you guys as well. My business, I battled during lockdown. Crypto became my plan B. I've become free from crypto, and we want every single one of you to follow suit and to you know, become the same. It is a choice. It is how much work you want to put into it. It is how you want to perceive it, how you want to see it, how much FUD you want to listen to. You know, people that have been in this industry for a while, you already know, you're already getting it. I call it crypto emotional maturity. Doesn't mean you're immature from, you know, as an adult or from a childhood side, but it's called a crypto maturity. I was a crypto baby 2-3 years ago, and I mean, I went through the worst possible, but you get over that at some point. So if any of you are brand new and in it at the moment, just hang in there. Don't worry. You get through it. That maturity grows. Just don't expect people to do things for you. Learn for yourself. Make your own decisions, your own strategies. We can only teach you so much. We can only share so much of our experiences with you. The rest is your decisions and your choice, because it's your mind. It's how you perceive the data that we all give you. So just make sure that you make notes, but then don't just wait for people to give you calls or to tell you what to buy. Go and find out why. Go and look on the charts. That's one reason why I traded Theta, because I studied Theta. Yes, it started off as a revenge trade with T-Fuel and Theta when I was still emotionally crypto immature. And I just decided, you know, stuff this. I'm going to go back and I'm going to go and study Theta's history. And I went and I drew trend line after trend line after trend line, not on what was happening daily, but in the past. I went back like 6 months to 8 months worth of data on a lower time frame. And I went and I pulled Fibonacci lines. I went and I drew trend lines, support and resistances. And I studied the way it moved. I studied its dance. I studied the emotion cycle of theta and all the whales behind theta and how they think. And that is why I became comfortable trading theta. Yes, I do trade other tokens. It's not that I just trade theta. And theta has been very boring the last couple of weeks, so I have been trading a few other tokens in the meantime. But my alerts are set on theta, and it's still my token, and I'm accumulating it for the long term as well. But just put some work in, put some homework in, do it for yourself. Show up for yourself. You're not here to do it with anybody else or for anybody else. This is purely for you. So just put the work and effort and the time into it. That is how we got to where we got. We spent hours and hours and hours as a team. Craig, Jason, myself, Sheldon, Rudo, Lee. We had other team members as well. We worked together as a community. We taught each other. We were there to tell each other off. Did you set your stop loss? Have you done what you're supposed to do? No, I don't agree with you. I'm shorting, you longing. Why? Let's see yours. We learn from each other. We don't judge each other. We learn from each other. We realize that we all make mistakes. And you need to realize that you're going to make mistakes too, and people around you are going to make mistakes as well. So anyway, thank you to being here, and obviously for showing up for yourself. For the guys, I see some guys have been 15 hours straight. Well done. You're investing in yourself. So it's absolutely amazing. Today, I want to try and put you in my brain a little bit. I hope I'm not going to confuse a lot of people because I'm going to go into a few little items. I just want to put you in a bit of a day of my thinking and how I see things and my strategy. Obviously, you need to create your own. It's not about copying me, or it's about taking and seeing what works for you. What I do is right for me. Sheldon and I, we trade very similar, but we do differ in a few little things. Craig and I also, we trade very similar, but we do things a bit differently. So does Jay, so does everybody. And it's just because we found out what it is that we like to use, what tools we like to use, what tokens we like to trade, what time frame we like to trade. So it's all different. So you can learn from people's strategies, but it might not suit your lifestyle. So just take the data and put it and make it your own. Put it into your own and actually see what actually works for you there. So I think today, if I'm going to give you a bit of my perspective on Bitcoin, I'm going to have a look at Bitcoin a little bit, dig into Bitcoin, just show you what my feelings are on Bitcoin. We can go into a bit of my trading routine, how I look at trades, when I decide to trade, some tools that help me, yes, trend line, support resistance, Fibonacci, but I also look at waves, and I look at ABC retracements. I look at a few extra things. I want to discuss a bit of my long-term plan with you, what my plan is for the long term, portfolio ideas, what decisions do I make on what tokens to buy, obviously, especially for my long-term holds, and goal, and hopefully just give you some motivation towards the end. And then we just take it from there, and we'll see where it goes and see what comes up as we're going along. So just to chat in general, let me just see here. It's not allowing me to share screen. Is somebody in the back there that can help me?
It says present. You just need to click that and then click screen.
Oh, there we go. Present and then share screen. Okay. All right. Thanks so much.
Yep.
So generally, I will have a look on a daily basis, and it doesn't matter what token I want to trade. I will always go look at Bitcoin first. That's just my go-to. I don't trade Bitcoin, but we do know that Bitcoin is a deciding factor in the markets, obviously, especially if you have a look at what dominance is doing. But generally, tokens do if Bitcoin's going to go down, tokens will react. If Bitcoin's going to go up, the token will react. If it's going sideways, tokens generally go up. But if Bitcoin's going to fall hard, or we know Bitcoin's going to have a nice big retrace, we do know that the altcoins are going to go down as well. So, and yeah, does it happen 100% of the time? No. I mean, there's so many factors in the market that can change TA. I mean, TA is TA, and it generally plays out. But sometimes you will have a token that overreacts and has a little 12-year-old tantrum and shoots past the 618 retracement, or shoots past the support because it threw a tantrum while Bitcoin was coming down a bit, or because you had a bigger whale busy selling out at that point. It does happen. That's why we have stop losses in place. And so TA generally is correct, and it generally does work out. But obviously, there are other factors that we need to take into consideration when these types of things happen. So I'll always look at Bitcoin first. I'll chart Bitcoin. I also like to zoom out. There's a good saying that when in doubt, zoom out. Sometimes when you're on a smaller time frame, it just, you don't see the bigger picture. You're seeing the in the now, and you actually don't know that it's got a target that it needs to get to, either higher or lower on a higher time frame. So I like to zoom out first, look at a high time frame, draw all my trend lines and supports on a higher time frame. Then I start zooming down into the smaller time frames. At least I've got my line set on a higher time frame, and I know that that could be a possible target. Then I can start planning my trades on a smaller time frame, and it depends on how much time I have in the day. I think one of the things that confuses people a lot is time frames. What time frame do you trade on? You say you're charting on a 1 hour, but I see you on a 5 minute or a 15 minute. Yeah, that comes with experience. So time frames, it all depends on how much time you have. Sometimes if I know I've got a busy week full of meetings and stuff, I will trade the 1 hour, 4 hour chart, depending on how it looks like. If I've got a couple of days where I'm sitting at home and I can trade, I'll trade a 15-minute chart or an hour chart. If it's a longer term trade where, you know what, I've got a lot of things happening this month, so I literally only want to do 1 or 2 trades this month, I'll trade an 8-hour chart or a 12-hour chart. So it really, really, really does differ to your lifestyle and how you want to do it. And sometimes we'll chart a 1 hour and we'll be trading on a 1 hour and a 4 hour, but we will use a 5 minute and 15-minute chart just to get the perfect entry, because we look for patterns. So you will actually, it doesn't mean you're trading a 5 minute or 15 minute, you'll just use a smaller time frame to get that exact entry point. And that's why when I want to talk to Nana about waves, I think that will make a little bit more sense. So I like to look at the bigger picture first. So I think let's share screen. Okay. That one there. Share. Okay. Everybody see my screen, right? Yeah. Okay. So obviously I look at Bitcoin first. So let's actually start off with Bitcoin. So while I'm busy going through Bitcoin, and I'll show you what I look for in a bit, I'm actually just going to give you a bit of an assessment on Bitcoin as well. So like I said, I like to zoom out. So daily, 3-day, 8-hour, whatever the case is. Actually, while we're here, I want to get, let's just get this up as well. Let's copy that, and I want to put it here on the screen. Okay, so we've got the emotional market cycle as well here that we can have a look at. Okay, so when we zoom out, now we look. So I look and I say, okay, you know, have we reached our targets? What is our possibilities with Bitcoin? And, you know, do I still see more downside? If we are going down, what do we expect? Or if we're going up, what to expect? So we can see Bitcoin already came back down to test this areas over here. So we know that is, it's actually a support. Support we make green, because that is an area below that it could possibly bounce off, and that it has bounced off. I am still not ruling out this one over here. I still do think we've got a possibility of coming back down to the 13, down to the 12. I'm 50-50 at this stage because I do know that generally you have to go and fill the liquidity gap, and there is a bit of a liquidity gap over here. So the chances of it coming down there is still very open to me. But I am not going to sit and say that it is going to go down there, and I'm going to wait and I'm going to hold on to all of my cash and wait for it to go down there. And the whole reason behind that is that I remember in the last bull market, everybody was saying, it's still going to go down, it's still going to go down, it's still going to go down, it's still going to go down. And we waited and we waited and we waited, and we never got in right at the bottom of the bull market. We got in a lot higher up when we realized it ain't coming down. So for me, I would rather want to be more prepared and dollar cost average in. I already started dollar cost averaging in when we reached this first point over here. I started buying into my long-term portfolio. So I've already started dollar costing average in from this point over here, but I've obviously have kept some cash. So if we do come back down to here, which obviously this emotional psychology cheat sheet is showing us. Okay, it is showing us that it comes back down, bounces, goes back up, and then forms a downward trend, which is possibly what obviously could be happening there down to that area there before we start going up again. That's a possibility. It definitely is a possibility. But I just don't want to sit in the same position that I did in the last bull market. And I'm like, no, and I listen to everybody. And I just say, no, okay, you know what? I'm going to wait and buy in all here. So every drop that happens, I'm dollar cost averaging in, especially on the altcoins. When the altcoins drop, I buy. I dollar cost average in, but I'm going to talk a bit now about my trading, my portfolio, and how I take money and how I split it across everything. But I'm already buying my bags, because what if we have already hit the bottom and we're starting an upward trend at the moment? There's always that possibility. We not, TA says, yes, we should come down here, but in the last bull market, we learned that isn't always the case. So just keep in mind that this could be a possibility. Now I want to go back down. Okay, so let's just quickly draw trend lines here. Now we know we've been in a downward trend line. So I've been drawing my trend line from here, and I'm going to tell you now why. Okay, let's just go like that. Okay, down to that one over there. Okay, so this is the top for me. This was a top that we had in the last bull market. 65K was where we were expecting Bitcoin to go to. And we did. We had a big impact there. We had a big drop. We started going up again. But for me, this little fake out that came up above here, for me, shows that this was retail. This wasn't institutions buying. Institutions were already selling here and waiting for the bottom here to buy. But retail, new people coming in, pushed the price up, but a lot of people bought here on the top. A lot of the retail bought on the top here. And these are the people that got wrecked. And obviously what happened, the market came tumbling down when everybody else decided, no, they're going to sell out now as well. So I take this as a fake out. So if I have a look, we've got 3 touches on my trend line. We've got a touch there. We've got a touch there. We've got a touch there where I try to break through. We have broken through that trend line now. So could this just be a retest of the breakout where we currently are now? It is a possibility. It is a scenario. But one thing that another scenario that I have on Bitcoin is I don't know how many people that are on here now understand Elliott waves and ABC retracements. I'm a big believer in Elliott waves and ABC retracements. I think they work hand in hand with Fibonacci. So I generally use the Elliott waves along with the ABC retracements. Sometimes you have an a longer 5 ABC retracement, but generally you'll have an ABC retracement. And if that is playing out, this is exactly what I'm seeing here. And let me draw. So here you have one wave, two wave, third wave. Then you have an A, B, C retracement. Okay, that's how generally a lot of waves work. And I'll show you some, I'll try to find some samples now in another token just to show you how you actually got to have a trained eye to try and find the ABC retracement. This one's quite clean and quite nice. But if you go back and you go look on other charts, it's like, I don't see it. I don't see these ABC retracements. But an ABC, a three wave up and an ABC retracement down happens on every single time frame. So what I mean by that, and I'm going to draw you little diagrams just to explain a little bit more because I don't want to confuse anybody, is I'm on a 3-day chart at the moment. Okay. So there's a 1 wave, a 2 wave, a 3 wave on the 3-day. But if I have a look in this first wave that formed over here, we had a 1 wave, a 2 wave, a 3 wave, an A, B, C retracement. So that is probably a 3 wave up and an ABC retracement on a smaller time frame, on maybe an 8-hour chart. So if we go to an 8-hour chart, let's zoom in and have a look at that and see. So, sorry, let's go now to the 8-hour. Let's find that wave. Here's that wave. This is that wave we were looking at on the 3-day. And there you can clearly see 1 wave, 2 wave, 3 wave up, A, B, C retracement. 1 wave up, 2 wave up, 3 wave up, A, B, C. But sometimes you do have the extra, it's if you have a look in here, you'll see here, you've got an ABC retracement, and then you've got an Elio triple combo, which is a WXYXZ retracement, which happens there as well. And here you have 1, 2, 3 up and ABC retracement down. So inside every single time frame, you have 3 waves up, ABC's down, 3 waves up, ABC's down. So I just want to draw it out for you just so that you can understand. I'm just going to come over here to a blank space at the moment. So say on a higher time frame, if we're looking at a daily or a 3-day or whichever the case may be, you have a movement, a pattern. Okay. Generally, this comes down to a 618 retracement. Generally. So you'll draw Fibonacci from there to there. So this would probably retrace down to that area over there. Then we'll start the second wave. We'll break up, make a higher high, break out on the top. Okay. Turn around, come back down, and retest this break point over here. Okay. And generally would also probably be a 618 retracement down to there. Then you'll have a third wave going up, making a higher high, coming back down, and retesting the break out of this point as well, probably also to the 618. Okay. On your third one, now you start your ABC retracement. So your A normally comes back down to the neckline. Your B retracement forms up to a 618 level. So you'll draw your 618 from the top down, because your B will go to a 618 level. Let me just draw that for you over there. We'll go to a 618 level. And then what will happen is you have your A, your B, and then your C retracement is generally the same length as your A. So your A and your C is the same length. So you measure how long this one is. If you go back up to the 618, then you measure down like that. Okay, so that's how a general wave cycle looks in Elio waves. Okay, I just want to get rid of that. So you have a 1, 2, 3 wave up and A, B, C down. Now on a higher time frame, this is one big wave on a higher time frame. And generally this 1, 2, 3 up, A, B, C down, from the top there to the top there, will finish at a 618 retracement. Okay, obviously I'm drawing here, so I've overdrawn, but generally this whole entire wave will finish off at a 618 retracement. So I'm just just trying to give you some more tools to understand how the market moves. Because you will go in, and this is exactly how when Sheldon teaches you about trend lines. Because you draw your trend line like that. You draw your trend line. So it bounces, it bounces, it bounces. It breaks below, comes back up to retest it, and goes back down again. And depending on what time frame you're on, you're either going to start another wave up, 1, 2, 3, trend line down, break out, you buy, or you're starting a downward trend, obviously depending on what time frame you're on. Because a lot of people get confused as, but the market's going up and I see it's going up, but why is it coming down? The reason why it's coming down is because on a higher time frame, it's doing an ABC retracement. So this is why I will go to a high time frame and I'll work my way down. I see which stochastic RSIs, even if I want to trade a 1 hour, I see which stochastic RSI is coming down. So if I want to trade a 1 hour today, my 1 hour's at the bottom, but I see the 3-day stochastic is coming down. I know I'm not going to make a higher high because the 3 days coming down. So my trade that I'm going to take is a lot smaller and a lot tighter. Because yes, we're going to go up, but I'm not going to make a higher high on the 1 hour because I know the 3 days coming down, and the 3 day has had its 3-wave up and it's now doing an ABC retracement down. So it's just about understanding what's happening on other time frames. So that's exactly why I zoom out first. When in doubt, zoom out. Because sometimes when you're too zoomed in, you actually don't know what's actually going on a higher time frame. Every time frame affects another time frame as to what happens. That is why you've got to work out where is the next resistance on that time frame. Because if a higher time frame is doing an ABC retracement and needs to come back down, you're going to be rejected at that resistance area. So take your profits rather at the resistance area and wait and trade to see what the next is. That's why don't be greedy. If you're at a resistance, take profits. If you've hit your target, take that. So what I wanted to show you here is, so now this is an 8-hour chart, right? So we have 3 waves up and we have an ABC retracement down. In this wave over here, you'll have 4-hour, 1, 2, 3, ABC. 1 wave, 2 wave, 3 wave, ABC down. 1 wave, 2 wave, 3 wave, ABC down. Okay. Then now we're going the opposite direction. So that will be your ABC down, ABC, 1, 2, 3 down. So that would be a 4-hour in there. But then in this 4-hour, you've got a 1 hour. 1, 2, 3, ABC. 1, 2, 3, ABC. 1, 2, 3, ABC. And then you have your big ABC retracement down because you had 3 waves up. Then in that 1 hour, you'll have a 15-minute little 3 waves up. That's why you're always seeing these little waves up and down. And if you go back onto the charts and just everything works in your 3 waves up ABC, 3 waves up ABC, 3 waves up ABC. And the smaller time frame will have that, even down to your 1 minute. Then this little wave over here will have 3 tiny little waves in it in an ABC retracement. Then that little wave over there will have 3 little waves up in an ABC retracement. And so exactly what you're seeing over here, all this little up and down choppiness. On a bigger picture, we can see 3 clear, distinctive waves. On a smaller time frame, we can see 3 distinctive waves, up and down, 3 waves, up and down. But if you zoom in and you go deeper in, there's more little waves in there. There's 3 more waves, ABCs, 3 little more waves, ABCs. So every single time frame works the same. So this, if I have a look at Bitcoin now on the higher time frame, what is my expectancies here? If that is playing out, if that scenario is playing out, Bitcoin and the ABC retracement is playing out. Let's quickly go. I just want to clean that all up. So if that is the case on Bitcoin, That means we've done we've done 1, 2, 3. So we're expecting an ABC retracement now, right? So we're expecting A, B, C retracement on Bitcoin right now. That's what I'm expecting. Okay. Now the decision is, have we made our B retracement or have we not made the B retracement yet? So the B retracement is this mini little up that we're going to go here. So if we're doing an ABC retracement, it means we're not going to make a higher high because we're doing an ABC retracement. Fibonacci, this is where Fibonacci comes in. So we can pull a Fibonacci now on this wave from the top down to the bottom. Okay, and we can see Bitcoin got rejected at the 382 level. Generally, we would say it would go up to the 618 level. So if we are going to, because let's have a look here. We've done, I could still do it because there's a wave, second wave. We could still have a little third wave up, coming up to the 618 retracement. So and obviously to retest the bottom of this resistance over here, we could come up to the 618 for our B. So this is our A, B, and then our C retracement. So remember, your C retracement is the same length as your A retracement over here. And I'll show you another little fib tool, how you can work that out. Quite amazing. This is where your head and shoulders forms as well. You know, every time everyone's like, head and shoulders is forming, head and shoulders. A head and shoulder pattern is purely your third wave and your ABC retracement is what forms a head and shoulder. Okay, so your second wave forms the left shoulder, your third wave forms the head, and your B retracement on an ABC retracement forms your right-hand side shoulder. So you will always see head and shoulder patterns playing out on a 1, 2, 3 wave ABC retracement. You'll see the head and shoulders patterns that play out on most time frames. They don't just happen. A lot of people are like, how do head and shoulder pattern how do they actually formulate on a chart? It's purely because of the ABC retracements and the Elio wave patterns that forms your head and shoulders. Yes, we can be rejected here, and from the 382. 382 is a very popular level on Bitcoin. And the reason why I'm saying it could, because if I draw a trend line from the top down there, you can see we've had 3 touches, 1 touch, 2 touch, 3 touch. So we could get rejected here and go back and go down. But if we break this trend line, I wouldn't get too excited and think, oh, Bitcoin's going to go up now. No, I just feel it's going to go up to the 618 level. It's going to, so this is where I'll watch as well. If I'm in a trade and I see Bitcoin's hit its targets, I'll also, if I'm in profit, I'll take my profit. Because what happens if my token, if Bitcoin decides to dump? There's big sell orders at that 618 level. So it's exactly the saying that Craig says, take your profits before somebody else does. Any profits is good profits. So I will check Bitcoin, and if I'm still in my trade and my token hasn't hit its target, but Bitcoin has hit its target, I'll either put a very tight stop loss, move my stop loss up, or if I'm in good profits, you know what, I'll take it and be grateful for what I've received for the day and move on and wait to see the next move and do the next trade. So Bitcoin, obviously, if we do break this trend line, I just feel it's going to come up to this area over here to form the right shoulder. And then we've got another leg down. Okay. How far down do I think, how far do I think it's going to go down? So currently with the market that we're in, I do still have, there is still this 12K. Do I think it's going to go down there now? Maybe not. I trade Bitcoin today and I chart what the charts are giving me today, and I trade what the charts are giving me today. There's a lot of speculation. We're at the bottom. Everyone's going up. There's a lot of speculation. We can still go down to 12. There's no right or wrong. Anybody can be right. All right. So let's trade what the charts give us today. What we do know, all right, is that your A and your C is the same length. So I can get a pretty good zone on Bitcoin as to where I would expect a bounce and a proper support that we would need to hold. Okay. And if you use this trend baseline fib extension over here, this measures 100% retracement. So what it will do is if I use this trend base fib, it'll measure the length of this over here, and it will measure 100% move down for me. So it's giving me the same length as this move on a downward scale. So if I go on that one and I push and I go from the top to the bottom, and say now the 382 or where we bounced off here was the bottom, and I put the top of my fib to that area. Okay, I'm looking for the 100% retracement, which is this number 1 over here. So I'll go and I will draw a line over there. I'm just going to make it purple for now, or something lighter, just so we can have a distinction of which lines I'm drawing now. So there's my 100% retracement if we've hit the top already. Okay. If we break through here and we go to the 618, all I do is I move this fib up to that area over there. Just see, it was a little bit more down. It was there. I drew my line there, and I draw, there's the 100% retracement over there. Okay, let's get rid of this. Now I know this is my target zone for Bitcoin to come down to. So the next check I can do, so wave 1, wave 2, wave 3, A, B, C retracement should end up in this zone somewhere here. If this is the top of my B zone, it'll land up down here. If we're going to go up to the top there, so I've got a zone here. So another way I can check to see is, remember, even though there's 3 waves in an ABC, this is one whole entire wave. So what do we do when we have one whole entire wave? We pull a Fibonacci of the whole entire wave. So let's have a look and see. Let's pull from the bottom to the top. And guess where our 618 retracement on that wave is sitting? Right on this 22 line over here. So there's my third confirmation that on this whole entire wave, this is my 618. My ABC retracement is giving me this zone over here. So that is how I would assess, that's how I assess Bitcoin. And then I would take this knowledge and then I would go and do exactly the same TA that I've done on Bitcoin, and I'll go do it on my token as well. So I hope that makes sense and it hasn't confused too many people. Don't worry if you don't get it now. Just take the data that I've given you and go back on history and go and test it. And it generally always plays out and works out in the same favor, in the same type of tone on many tokens itself. Then what I do, I'm like, okay, so now I want to know, okay, so if Bitcoin's going to go up to this area over here, I'll obviously look at taking a short from the top there. Now I'll go to a smaller time frame, and I'm just using Bitcoin as an example now, but I would generally do this on altcoins because I don't trade Bitcoin, but I do chart Bitcoin. So now I will obviously have a look here, and I'll see, okay, what is now? So now on a higher time frame, because now all my lines are still in from a higher time frame. So I know that this is my range. This is my range that I can take shorter time frame trades in. I now know where my maximum most ceiling should be, and I know where my floor is probably going to be. So I'll obviously watch this trend line over here. We can even go, I can see my stochastics are at the bottom. Okay. So let's zoom in and get a closer look. Okay, we can even go down to 1 hour to make it more sufficient. Okay, now I know, okay. Let me draw a trend line here. If we break this trend line to the upside, I know I'm going to take short-term trades. I'm going to take a short-term trade, and I'm going to then, if we break above that, I'm going to draw my trend line and ride it up. And hopefully, I'll be able to ride a trade all the way up to this line over here. But now I've got my higher time frame zone in here. So I know if Bitcoin does decide to go up and start making waves going up, I know that this is a danger zone on a higher time frame, not on my 1 hour. 1 hour looks great, it's going up, but on my higher time frame, this is a danger zone. So I know that I must rather, there will probably be a hard rejection there, and I know to get out and rather wait. For me to say that a head and shoulders isn't playing out, Bitcoin would have to make a higher high. Bitcoin would have to break through here and make a higher high. Then this head and shoulders gets invalidated. But until that invalidation happens, I'm still sticking to my guns, because that is the general TA pattern that plays out. And that is obviously then what I'm sticking to. Okay. So I think that's enough on Bitcoin. I'm running out of time. I've got 20 minutes left. And I still want to share some of my altcoin and portfolio ideas with you guys. Let's stop sharing and let's come back in that. Okay. So let's see, I hope that was some good milk. Okay. Not too many questions or not too many I'm lost or anything like that. Makes sense. Thanks, Bobby. Okay, how can we find wave one? It always confuses, it does, but I promise you your eye catches it after a while. Just keep on looking for it, keep on pushing, keep on looking, and you'll find it. I also battled in the beginning, but just go back on history. Choose a token, go back to the last bull market, and go to all the different times. Even a 1 minute, even a 1 minute chart has got your 3 waves up, ABC down, 3 waves up, ABC down. And then obviously it reverses, because when your higher time frame has finished its ABC up, it's 3 waves up and it's doing an ABC down, your 1 minute is now going to go 3 waves down, ABC up, 3 waves down, ABC up, 3 waves down. And that's just, if you can get that pattern in your mind and in your head, you'll start understanding what makes the market go up, what makes the market go down, what creates the support, what creates resistance. It's those waves. It's all the waves that form all your supports and your resistances. It's all a story. It's all linked, and it's all emotional. Fibonacci, everything. It's all emotional. Everybody uses the same tools, and that's why the market reacts at those places. So then, obviously, once I've looked at Bitcoin and I says Bitcoin, then I go and I choose my altcoin, and I go and I chart altcoin exactly the same way. Also, just through experience, I've learned a few things that if Bitcoin's going to have a 1% move, altcoins are going to have around a 3 to 4% move. So I'll look at my support and resistances, and I'll measure double the amount of where Bitcoin's is. So if Bitcoin's got a support coming up or resistance coming up, I'll go and measure a double amount on altcoins. I know Theta loves to retrace to 618 on smaller time frames and 786 on higher time frames. But how do I know that? Because I went and I did my homework. I went and I did my research. So it's just about going and doing that with something that you like and something that obviously resonates with you. And yeah, it becomes a lot easier the more you do it. And that's the one big advice I've got for everybody. It's just practice, 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 practice. It really, really makes perfect. Okay, so let me have a look on my notes here and see what else I've got here for you guys. Okay, I think I want to go into, okay, so waves up. We've already done waves up. Okay, so I think let's get into let me go into my portfolio and what my plan is. What is my long-term plan? So for me, one thing I saw in the last bull market was holding tokens really, really, really gives you good returns. Yes, so does trading. But we tend to make a lot more mistakes the more we trade. So you got to try and balance, and you got to try and have different types of portfolios. Long-term holding portfolio, your trading portfolio, mid-term portfolios. In the last bull market, I mean, we saw some tokens, like some portfolios, we were from like 10 to a 60x just by holding. not even trading it, just by holding it. Did we sell it all at the top? No, we didn't. I think it's that where that whole greed sets in, and so it's going to go up, and then we listen to the FUD, and we listen to everybody. It's going to go to 100, it's going to go to 150, and we're like, woohoo, yay, you know. And we listen to all the noise, and we didn't listen to our TA, and we didn't listen. We listened to everything that happens around us, and I think it's just, what is your plan in the next bull market? Don't listen. There's a very famous saying that if people are saying crypto is going to zero, sell all your crypto, go da 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 da, that is a time that you buy. If everybody is saying, if your brothers and sisters and everybody is phoning you and telling you, buy Bitcoin, that's the time to sell, because that's when retail steps in, and that's when the institutions take advantage of retail. So, you know, you can see a lot of growth. So what is my long-term plan? So I trade when I can trade, whether it's every day, every second day, every third day. Depends on how busy our schedule is, depends on if we busy prepping for school, whatever it is that we're doing. We're also busy with a whole lot of other things behind the scenes on Sniper. So I take a trade. I take my trades, I split the money. I make sure that at least 30% to 40% of my trade. So if I make $100, call it, I make sure $30, $40 goes into my spot. I buy tokens, and I dollar cost average in on tokens. I just keep on buying, and I keep on buying, because we're still in a perfect area to buy. Yes, we can buy cheaper, but that's why I'm keeping on trading. As I'm trading and trading and trading, I'm keeping money aside. So at least 30 to 40%, at least 30 to 40% of the profits that I make, I put into my spot. Then 30% I hold cash in case there's a big dump in the market and I need to buy. And then the other 30% I actually bring out as into South African rands, purely because you have to reward yourself. If you're trading and you're making money, it's got to go towards something. You've got to, even if it's a bill or a debt or a pair of shoes that you've wanted, or just something, just always reward yourself with a good trade. Take money out, because sometimes what happens, you just keep on putting it in, you land up losing it, and then you land up with not having what you want. You start feeling that it's not rewarding, and it's good to reward yourself. It just makes your trading a lot better. And obviously patience. So it's dollar cost averaging in, holding. I'm going to go through a list of tokens that I've been, my picks that I've been dollar cost averaging into. Not expect immediate results. Understand that it could go into the red, but if it does go into the red, I dollar cost average in some more, because that's why I'm holding extra dollars to buy more, and it obviously brings my my buying price down. This isn't my day-to-day trading. This I'm talking about my long-term portfolio. And the reason why I want to talk about long-term portfolio for you, because that is what is going to make you free. That is, you've got a possibility in the next bull market, whether it takes a year or 2 years or 5 years or 10 years, you've got a chance to taking that money, depending on what projects and how you've distributed it and how you've done it. But you do have a chance of 10, 20, 30. We saw some tokens go up to 60, 80x. So it all just depends on what happens. So it is life-changing money. And it's about not being tempted to use that money for trading. It's about putting it away in a portfolio and actually holding it and watching it grow. And we saw how our portfolio grew in the last bull market. And it was really, really, really an eye-opener for us and changed our lives. And that's how we got into the situations that we are in now. Just give it time to actually grow. One of my worst case scenarios that ever happened to me was, I will show you on a chart. Was T-Fuel. So T-Fuel is a utility token to Theta. Okay. I bought, and I'm going to share some of my low caps with you as well. I bought T-Fuel over here. I bought it at 0.008. Yeah, down here. I bought it in October of 2020. I bought it 0.008 cents. I sold it at 3 cents. So we went up to this point over here, and I sold it. And I thought 4x my money, 5x my money. I thought this was great. I think I put like $3,000 or $4,000 into it. Great. I turned my $3,000 or $4,000 into $12,000. That's great. After I sold, look what happened to this token. This is probably why I really went and studied Theta afterwards, because Theta and T-Fuel, they work very similar with each other. T-Fuel did do a bit more percentages than Theta. T-Fuel is the utility token for Theta. It's the same project. But this here would have potentially given me, turned my $3,000 into $300,000. It's roughly about $240,000 it would have turned into if I had just held and just left it, but I didn't. So, I mean, I've learned from my mistakes, and it's okay. I've learned from it. The market will always be there. There's another bull market coming. Will I make the same mistakes again? No, I won't. I know now what to expect from a lot of these tokens. I know what it can do. And also getting out at the tops, not being greedy and not listening to the FUD. So if you start seeing a token doing that and just like blow off top like that, start selling off. You don't have to sell everything off. Just sell 10%, 10%, 10%, 10% as it goes up, and just slowly get out. So as your dollar cost averaging in down at the bottom here, it's about dollar cost averaging out at the top. So if I also, I mean, if I have a look at my, a bit of my portfolio, some of my portfolio, I do go into low cap tokens. Yes, they are very risky, but I want to show you what they did for me in the last bull market. Let's see which one it is. I've got quite a few. I had under 10-cent tokens that I did. Okay, those were research. Okay, let's go to the cheap tokens. I'll show you these ones. So majority of these are held. So yes, they are more risky, but I bought around 20 to 30 low cap tokens. I put roughly between $200 and $500 into each low cap. Some of them are just, it depends on how much money I made in my trading. Remember, I take from my trading and I won't go take my own money and go buy low caps. I'll take $100 from my trading profits and I'll start buying these low caps, and whichever the case may be. So for instance, Seller was one of them that I bought. And if you have a look at this accumulation, and this is exactly what we're seeing now. If you see tokens accumulating like this sideways, this is where you want to buy, because the longer the accumulation, the bigger the pump when it comes. And it was February 21. Let me just see the dates here. February. Here we go. February 21 is where I bought. I bought about 20 low caps. And if we go into all of these, I guarantee you, they all look the same and they all popped at exactly the same time. So I bought about 20 to 30 of them here, just over here, just before this big run had. Okay. And look at what these tokens did after that in the bull market. From there to there, 24x. Okay, PBX is a new project. I never had PBX in the last bull market. It's a new project that only launched last year, but I'm accumulating this one for the next bull market. It just looks good to me. Oh, because look at this accumulation. Does it look familiar? Look what that looks like. Let's go back to Seller again. I want to show you. Let's squash it down. Look at that accumulation. Look what happened. Look at it now. Look at that accumulation. it pops. Same with PBX. These are small caps. It's accumulating. So I'm just buying any opportunity. If it drops, I'm buying. If it drops, I'm buying. OMI, this is one of Craig's tokens. Exactly the same. It's accumulating. Wink, this one in the last bull market made us look at that accumulation. Accumulate, 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 pop. Accumulate, 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 pop. So for me, yes, this is a big part of it. It is very risky. But I only use tokens from, I only buy small caps from exchanges. I don't buy the small risky ones from like a Uniswap, Sushi Swaps and all of that. I just don't have the time to sit and baby those trades. So I generally go to Binance. I'll look at Binance. I'll look at their market, or KuCoin or BitGet or Bybit or whichever it is. Let's see if I can show you a quick example. Exchange. Let's go to Binance, and I'll only buy small caps off of a let's see, it doesn't want to give me the market. Let's see if we can get another one quickly. Let's get exchanges. I know OKX will allow us to let's go exchange. Let's open up a new tab there. Okay, let's have a look. Markets. Okay, let's have a look. Spot. All you do, this one doesn't do it. Okay, but anyway, if you go onto the other one, you just click on the price on the top here, and it changes and it gives it to you all in price order. So it'll give you all your cheapest tokens first. So you just go click on the price over here. Let's see that. Oh, there we go. Oh no, that's the change. Okay, so all you do is you click on price on if you go to any of the other exchanges. I just don't want to log in here now, and it will change the price from cheapest to most expensive. And I will then take.
Dani, just real quick.
Yes.
Your screen is still on the. I think it's one of your trades. It's Tether.
Okay, let's go back to here. Let's close that one. Okay, let's present. Okay, share screen, share screen. Okay, there we go. So you click on price. So whichever exchange you're in, if you just click on the price, it will sort the price from lowest to highest for you. If you click on it again, it changes it from the highest price to the lowest price. So I will then take the cheapest tokens that are there. I'll go to CoinGecko. I'll go and look at their website. I'll go and I'll have a look at, do they have a project behind them? I'll go and have a look at their tokenomics. I'll go and have a look at their roadmap. I'll go look at their roadmaps and see what have they got planned to improve this project. So I don't just buy any low caps. I have taken chances on a few, you know, when someone tells you about it, I'll put $50 or $20 in there. But when I'm talking low caps, I also take, the reason why I take them from the exchanges is because I know the exchanges have done their homework. They're not going to just put any tokens on their exchanges. So it's a bit more reputable company by taking the small caps from the actual exchanges. So for me, that is a little bit less risky for me, and they can give you some really, really, really great returns. My small cap portfolio in the last, my cheap, and what I mean by cheap tokens is I look for everything that's 0.0001 cents. That's like really, really cheap. It's got a good project behind it. They've got a good roadmap. Their tokenomics are great. And they've got a good reputation. And I just buy millions of tokens, and I've got one portfolio where I'm sitting with millions and millions and millions and millions and millions of token, and I'm just holding those. In the last bull market, that portfolio is 60x for me. Out of the 2030, it was, if I'm mistaken, it's about 27 altogether. Out of all of those, 4 companies folded. So 4 of them didn't make it, but the profits I made on the balance, that's why I spread them over. It was actually a project I ran. I wasn't meant to buy so many, but I actually, because we were in a training and we were training people, I said, I will take the knock. I'm going to run this project. And I landed up 60xing that, the small cap project, even though 4 of the companies closed. But like I said, I only put $300 in each one of them. So the gain was much more than the actual loss. So tokens that I'm looking obviously at buying, I'm going to be about 2 to 3 more minutes. I'm going to get through the rest because I know there's somebody else coming up next after me. I've got different categories that I'm looking at. I just want to say I've made some notes of you of what I've been holding. So I've got some top picks that are my tokens: Theta and T-Fuel, VET, VTHO. VTHO is a utility for VET. The utility tokens normally do very well. And there's quite, Neo's got their own one as well. So there's quite a few of those. And I built categories. I've actually got little, even my MetaMask wallet where I store the tokens, I build little wallets with categories in it. One of the newest ones that I'm busy looking at is AI. AI, definitely, I do feel it's a bit more longer term. It's not a short-term hold. But I think AI tokens, Filecoin, all those different ones that are associated with AI is definitely a must hold. So I'm trading for my long term. That's my retirement. I want to retire in a couple of years, and my long term is going to help me get there. Also, Rune, Sol, Render. There's a few small ones that I'm very bullish on. Naka, they are they're newer projects, so they could be risky as well. But Naka, it's a Japanese gaming platform, and they love their game, so that thing does well. PBX, Scallop, and then I've got different categories, and you can get these categories from CoinGecko. If you go to CoinGecko and you just click on the different categories, it gives you all the list of tokens underneath those categories. But for instance, like your swaps, Sushi Swap, Uniswap, Moonbeam, Radium, all the tokens that are used on the swapping exchanges. In a bull market, everybody uses that, and those tokens fly. So I've got my swaps, different tokens from swaps. Then I've got my exchange tokens. Every single exchange has got a token. KCS is for KuCoin, BNB is for Binance, Gate.io have got theirs, OKX have got a token. Every single exchange have got their own token. So I'll hold a bit of those as well, because in a bull market, if the exchange survives, obviously everybody uses the exchange and their token value go up. I've got my low caps, but that's literally not even more than 10% of my portfolio. It's probably about 5% of my portfolio. And then, yeah, it's just all the different categories and see what works for you. I like to have a bit of a variety, but I sort it out. It's like Sheldon calls businesses. I have my different businesses on my trading, and I've got my different businesses on my portfolio that I like to obviously hold. Use the resources that you have. I mean, most exchanges have got details about these projects. You've got CoinGecko, you've got CoinMarketCap. It's so easy to find the right tokens and to hold. And yeah, so I think to leave you off, thank you for listening to me. I hope I've added some value for you today, or you've learned something from me today. But just plan your strategy, stick to your plan as well. It's the same with your trading. Plan your trade and trade your plan. Make this next bull market worthwhile. It was worthwhile for us. It changed our lives. Don't waste this opportunity that's coming up. Get your knowledge now. Get to know what it is that you want to do now. What is your strategy? What is your plan? Just get a plan together. whether you have $100 to start with, whether you've got $50 to start with, whether you got $1,000 to start with, or you got $100,000 to start with, if you plan it correctly and you've got a great strategy, you will be able to turn that into something. And then you'll be able to take that and turn that into something. But just start. Don't feel that if you've only got $50. When I started training, I literally took $2 and I turned it into $29. And it wasn't just because I had $29, and that's in a week. And that was just me trying to learn how to trade, because I wanted to understand the market, but I didn't want to lose all my money. So I took $2 and in 1 week, I turned $2 into $29. So it's just about starting with something. So don't waste this opportunity. You want to be able to learn how to trade and know how to trade before the bull market starts. When the bull market starts, it happens so quickly. So a lot of people are, I'm so tired of this bear market. Shawn and I had the same discussion the other day. He's like, I'm tired of this market. And he's like, whatever. And I'm like, I'm grateful that we still have this market, because it's giving me more opportunity and chance to buy more, to hodl more, and to stack more. So I'm embracing and I'm enjoying this market we're in at the moment. And if we do drop, great, because I am trading to put dollars aside and to still buy for my spot. So I still want to prep for this next bull market. Take this time, learn what you can, don't lose this opportunity. Understand that emotions are real. If you can learn to control your emotion, you've already won. Emotions is probably the most hardest thing that you can get through in this in the crypto space. But you must remember, 20% of trading is your practicals. The other 80% is your mentality and your psychology. Is other 80% of actual trading. And I mean, if you can grasp that concept and you can get your rules, your risk management, and all of that into play, you'll be fine. And just knowing what it is that you want. If you get wrecked, learn from it. Don't get sad. Learn from it. Move on. Learn the lesson. One thing you need to understand, that knowledge is more powerful than the actual money that you make, because the knowledge is what's going to make you rich for the rest of your life. You can make money quickly, but you can lose it quickly. But if you have the knowledge, you've got the power to be rich for the rest of your life. And that's what you want. You want stability. You want this for the rest of your life, so that you can just be and live your life for the rest of your life. I had many sleepless nights. I've been liquidated. I've sold too early. I've sold too late. I've never set stop losses. Stress, wanted to give up, been there, done that. We all have. We're all human. We've all gone through those emotions. You're not alone. Everything you've been going through, we've all been there. You'll get past it. You will just become knowledgeable. I mean, I sleep at night now. I'm more peaceful with my trading. I'm loving my trading. Now I'm enjoying it because I've learned my lessons the hard way. We never had anybody to teach us. We had to learn the hard way. So just learn your lessons. And it's very simple. Use your money to make money, to do what you want to do, and to pay your things. Don't use your money. Make that money work for you. If you're making money while you're sleeping, you're successful. If you can take the money that you have now, you use that to make money, to pay you what you need to pay, and you're still sitting with your capital, that is what's going to make you successful. And just use that mentality and grow with that mentality. Calm the mind. If you feel revengeful, walk away. If you feel confused, don't take the trade. If it doesn't feel right, don't do it. If you feel greedy, go back to your rules and your journal. We're human, we're emotional. And then the last thing I want to leave with you guys is just feed your mind with good stuff. Good books, good movies, documentaries about how people became rich. When Sheldon, between the age of 19 and 21, Sheldon refused to read a book if it didn't teach him a lesson. He refused to watch a movie if it didn't teach him a lesson. It had to be real life stories. And Sheldon watched documentaries on how to become a millionaire. He watched documentaries, he read books, he went and bought all the books. And that's what he did for 2 years. He just read books and he got his mindset right. So just do that. Documentaries, mindset, books, all the right stuff. And just think bigger. And you will succeed. You'll grow, you'll succeed. Keep on keeping on. Practice makes perfect. And you'll get your breakthrough. Anything's possible. Just believe in yourself. And I'm going to leave you there.
Hi.
Great stuff. I don't know how I'm going to continue. I'm panicking right now. Thank you very much, Mama Sniper. You have been wonderful. Great advice. This is more or less what I say to my lives as well. How to be, cautious with emotions, and that they need to keep the journal. That the journal is their friend. Stop loss is the best mate, the best friend that they can have, because stop loss is going to save money from you and also give you another opportunity to get into another trade as soon as possible.
Definitely.
And we all learn. I'm still learning from you as well.
Oh, of course. And guess what? I still learn. You know, I still learn every day. We're still learning things every single day. I think we're just in a great industry, and you know what? I love the growth. I love the growth this industry offers us. It just gives us that freedom and that space to be and do and learn more. So it's absolutely amazing.
This is great. How do you feel the markets are going to move? And I mean, personally, how is going to impact your life from now on? I know that your previous bull market had a great impact. And how do you see yourself and your family on the next move? Because people don't see it because they haven't felt it yet. So how is it from the inside? Like, you had a good, successful first bull run. How do you feel now towards the second one?
Oh, I'm so excited. I'm so excited because when you've felt that before and you've been there and you've done it, and I'm just so excited for everybody around us as well, especially the people that haven't experienced it yet. I'm excited for them to experience it, and like I said, I've Sheldon already knows this. Next 2 to 3 years, I want to retire. And let's hope the bull market comes in that time so I can retire. And it's not just retire, I'll still trade, I'll still be a part of everything. But, we take money, I use money to make money. When we want to go on holidays, I use trade, we pay for our holidays. I'm busy trading at the moment. I'm buying it to buy a new car. I've got my journal that I'm keeping with my pictures of my car. And by the end of the year, even if it's Jan, February, maybe it's a Christmas present, I don't know, but I'm trading for my new car. I don't just take out of my portfolio and go and buy a new car. I trade for it. I work for it and I trade and I make the money to go buy my new car. The next bull market, I want to get the house. I want to buy another house. I want to, and this is why I'm so excited. Because why? Because it's possible. You can. It gives you that, but it depends on how much you're going to put in now and how much effort you're going to put in now and how much you're going to save and put away now. How much work are you going to put in to try and trade to put it away? You know what? If someone's starting out now, don't worry. There's going to be plenty more bull markets, plenty more bull runs. There's going to be, it's going to always be there. The market's going to always be there. That's one thing. You wake up tomorrow morning, the market's there. If you ever fail trade, go to sleep. The market's always there. It doesn't sleep. It'll always be there. There'll always be another trade. So it's just so exciting. Crypto is my plan A and my plan B. And it's just, I just love the fact that if I want to go and travel, I can take my laptop with me and I can still trade and I can still do what I need to do. So I am very, very excited about the next bull market coming. Yes, does it make trading easier? Yes, it does. It definitely makes trading easier. It's a different type of trading than the current market. The moves are a lot bigger. I mean, last bull market, we saw Bitcoin would do $5,000 up in 2 days and $3,000 down in a 12-hour period. We're not seeing those big moves at the moment. At the moment, Bitcoin's moving $1,000 here, $1,000 there. In a bull market, because it moves so quickly, you got big ups and big downs. So it's different trading, but it definitely does give you more long opportunities and long trading opportunities.
Great stuff. So people, you heard now from Mama Sniper that, we as the beginners, so to say, we're not professional today, yeah. So we are the beginners. We don't have that kind of, let's say, dreams. Yeah, we're just trying to learn and we're trying to make some money now. We still don't believe it. right? So we are in this disbelief, and we have this anxiety. Can I make it? Can I make some money out of it? So you've seen now that a person like Mama Sniper, that after a successful bull run, now you see that the dreams have been magnified. And now you see that the targets now she can talk about more easier, talking about buying a new house or buying a car. And she concluded by saying that, trading it is possible and it's easier now. So you see, guys, it's not always like, we need to take it step by step. First thing, you need to put a small goal. Don't go straight for the big goal. Go for the small goal first. Why? Because if you can succeed on your first goal, then it will be easier for you to reach goal number 2 and then goal number 3. If you put a one big goal, which is like very hard to get to, if you're going to fail, you're going to count these and you're going to turn it towards yourself and say, listen, I can't do it. I can't even reach my first goal. Well, the mentality behind this is you need to put, small goals that you can reach. Yeah. So you need to put goals that you can reach with your hand. Before you run, you need to walk. So make sure that you put little things. And then later on, like Mama Sniper said, you can have bigger dreams and it will be easy for you to do it. It's we need to keep it simple, low profile, stay grounded, and this is the way you can survive and progress slowly. I mean, you heard it from Mama Sniper.
100%. I mean, my goals in the last bull market were completely different, a lot smaller. But because I achieved those goals now in the last bull market, now I can move to the bigger goals in this next bull market. I earned it.
Exactly. Of course, that's the point.
No,
That's
definitely.
the point. Great stuff. Thank you
Yeah.
very much for sharing this with me for the few minutes.
I see there's a question from Killer Crypto Jakes. If I can just quickly answer that, it's
Yes,
on
please.
the screen. Please answer. If you say hold in portfolio, that means taking it out of futures trade and keep it in spot account for the next run. It doesn't matter where you're taking it from. So obviously, yes, spot is is for holding, or a wallet is for holding. I generally put my holding, the ones that I don't want to touch, I put into wallets on ledgers. It can't be touched. I don't see it. I can check on those trades once a month if I have to, or whichever the case may be. Wherever you're feeding the money from to buy the tokens, it's completely your strategy and your trading style. If you know how to leverage trade and you're experienced in leverage trading and you want to do it from a leverage trade, low risk leverage trade, then that is how you're going to make the money. If you want to rather do spot trades where you buy and sell in spot and then take the profits from your spot trading and buy long term, you can also do that. There's also margin trading, which is a bit smaller, which is 3x's. But it all depends on how experienced you are and how far you want to go. It doesn't mean you have to leverage trade to be able to save money and to build in. You can do spot trading. Yes, it takes you a little bit longer, but you know what? You got less risk of losing your money. So you got to weigh up the odds as to how you want to do it. Leverage trading is great. I do leverage trading, but I got burnt and I studied and I've learned and I've understood my risk management and I've got my rules in place. And that is why I do leverage trading. If you're in the same position, feel free to do leverage trading. If you feel you're ready, and then take the profits from there and then save it. But if you feel you're not ready, don't be pressurized into leverage trading. You don't have to. You can take trades in spot. I've got plenty of friends who take trades in spot and they buy and they sell in spot and they take their profits from that spot and they build a long-term portfolio in the back end somewhere else. So yes, it does not mean you have to leverage trade.
It's true. It's true. Everybody needs to remember that leverage in futures basically is very attractive kind of market, because everyone thinks that they can leverage the position, and that means automatically in the brain it means they can make a lot of money quicker. Well, this is a little catch here. You need to be careful about this, because it's very attractive doesn't mean it's very easy to deal with. And if you don't have the rules and you don't have the conditions and you don't have the strategy and you don't have the risk management, which is number one, the risk management is the one that is going to make you successful. If you don't have this in play, you're going to be, burning down in futures and leverage. So people need to be very, very careful with futures. If you don't understand yet, how to use the tools on TradingView, on the exchange and stuff like that, it's better to do a demo trade in either in spot, either in margin. But be careful before you enter. You need to understand that you need to be very strict, because you can get away with spot, right? If it goes like the price goes down minus 20%, you haven't lost your money. It's just your worth has been going down by 20%. However, in futures, you're going to lose that, because it's counting towards negative to you. So it's taking your money from your wallet. So you need to be careful. Sport is, it takes longer. It only goes in one direction, right? It only goes up. So you have to wait for the up moves, but you don't lose your money. It's going to be like you're losing time with spot. You don't lose your money. You don't lose your positions, right? You're holding a token. You own that token in a bracket. For you to own 100% of your tokens, you need to move them to your wallet. But until then, let's say that you own them, you don't lose it. Unless the profit goes down. Maybe you bought something that is high risk and the profit goes off and you lose it, but that's a different story. I'm talking about now like the majors like ETH and Bitcoin. So they only go down in value, but you need to wait a little bit for the time to come and the value will go up again. So you only lost time. In futures, it's not about time, it's about money. You put your position there, you borrow money, you leverage it, and then you have it's a high risk, and that means the risk that you're taking is you losing your positions, and you don't own any tokens as well. It's a big difference, right? So take it easy with futures, people, and that's what we're here. That's why we do the school, and that's why we teach you all the ways and the strategies, the journals, the risk management. We're here as a team to help you out. We do the AMAs. Mama Snapper is doing lives and AMAs and teaching you guys. Sheldon does that. Run does that. Run is giving you the information. Kyle does that. We have a huge, big team here. Dylan, Jason, Bruce, Cows, everyone, every single of them are here for you. So take it, easy. You are still in the beginning. The market hasn't moved yet. So you're still early. Take the time and grab the information that you can, practice, put it down in practice and in demo accounts. Use it for you to become emotionless, because you need to battle. The first battle that you put down in the market is your emotions. And demo trading, it's okay for you to understand the environment, and you need to, let's say, tick the box. I understand how this environment works. After that, then you have to deal with emotions. Since you put down a real money into a trade, your heart will start beating very fast, because you need to protect that capital that you put down there. So you need to take step by step, and it's very, very crucial that you don't rush yourself into things that you don't understand and you don't know. Right? Take your time. We're here. What else?
100%.
Any other good advice for these people?
Don't be so hard on yourself. We beat ourselves up every day when we make mistakes, and it can actually lead to depression. It can lead to anger. It can lead to making stupid mistakes. I've heard some horrible stories of people losing money, and then they'll go and sell their cars or their whatever to trade and stuff like that. Don't do any of that. You know what? Just start from whatever you have and work your way up. It'll still be worth it. It'll still accumulate. It'll still whatever. And if you're not ready to trade, don't trade with all your money. If you feel that you're feeling scared to trade, number one, if you're feeling scared to trade, you're doing something wrong. You're either on a high leverage, or you are trading shouldn't be scary. So try to figure out, why are you scared, and rather just trade with $2. If you really want to learn something, just take $2 and use that as your school fees and trade with that. That's exactly what I did. And I was so chuffed when I turned $2 into $29 in 1 week. But guess what? I lost and I went down to about $9 because I'm still learning. But that's what happens. And I think people just they think it's too easy. They make money once and they feel, oh, that feels good. I'm going to do it again. I'm going to go all in now. Just don't make those silly, simple little mistakes. Learn from everybody. Listen to what everyone's saying. We're not here to say do it because we like you have to do it. We've taken the bullets for you. We've been there. We're talking from experience, and it's just about just listen and learn and do it the easy way. You don't have to do it the hard way, like everybody else does. But yeah, just don't be so hard on yourselves. Don't make silly mistakes. Rethink things before you do it. If you're having a bad day at trading, turn off your computer, go have some fun with your family. You know, at one stage when we started trading, we would have all of us sitting at the dinner table with our laptops, every single one of us. Myself, Sheldon, the hubby, the everything. We all got our laptops and we're having dinner at the table because why? We're all in trades and we're all watching and it's all this and it's all that. And, you know, you get to a point where it's like, this isn't healthy for us, you know, like, can we turn our laptops off and have dinner and have a normal family dinner? Because my whole family trades now. So sometimes it's ridiculous. And it's just about, you know what, walking away from when you have a bad trade. Not trying to get in a revenge trade. Market will always be there. Just remind yourself and put stuff on your wall. Remember, visualization, everything in front of you is going to help you get through it. Having a rule in your head is not going to be there when the market takes you on an emotional roller coaster. You're not going to think of those rules and, oh, I'm not supposed to do that. But if you have it on your wall, on a poster, where you can blatantly see it, it will just remind you every single time. So if you keep on making the same mistake over and you've got this rule that you don't ignore all the time, for instance, like setting a stop loss, which a lot of people just decide they know they need to do it, but they decide they're not going to do it. Put it on your wall. Make sure. Discipline. Just be disciplined. And sometimes you got to lose really, really hard before that discipline comes in. But it doesn't have to be that way. Just make that decision. Be wise. Make wise decisions. And just put it up there. It doesn't always work out. And it's not as easy as it sounds. If trading crypto was easy, everybody would be doing it and everybody would be rich. The market is designed to take money from you, not give you money. The market is designed to take you on an emotional roller coaster. The whales want to buy the cheapest. They don't want you to come in and buy and then they've got to buy at expensive. So it's designed to drive you insane and to take from you. You need to learn how to not let that happen to you. And you need to learn emotionally to think straight and to not allow your emotions to take over and for that to happen. So just learn. If you can learn that, if you can conquer your emotions, and you can have your set of rules and you can have your journal so that you can go back and see on your history where you're going wrong, you will be okay. Love you all. Proud of you all for being here and for showing up. I think it's amazing. You're showing up for yourself. So well done to absolutely everybody.
Well done to everyone. Yeah.
It's amazing. This is your first step in it, so it's absolutely great. We were all in your shoes. You're gonna be where we are, and I cannot wait to hear your guys' success stories, especially at the end of the next bull market. And like Sheldon always says, we're all going to meet on an island somewhere one day. So who knows? We'll all get to all fly into an island somewhere and go have a nice island vacay. Bye, everybody.
Bye.
Thanks so
Good
much.
night. Thank you very much. Thank you very much.
Okay, bye.
Bye. So, guys, so how do I continue now? Right, great stuff. We all love Mama Sniper. She's been amazing, right? And you can see where where Sheldon took all of these nice character, right? He has a great mum. That's simple as that. So I know you've been here all day, haven't you? Well done. I mean, big respect to you that you've been here since the first minute that we started live, and no, here we are. Right, okay. Now, my time here for you guys is to try to find ways how to see the charts and trying to move that panic and FOMO and FAT out of your system. It's exactly, I'm going to start, taking what Mama Sniper told us, right? We need to fight emotions. Seriously, this is the number one enemy, right? Number one enemy that it's gonna you need to fight with, and it happens, within inside. So that's why it's a tough enemy, because it's within you, right? And that is emotions. Now, don't go very, hard on yourself. Why do I have emotions? We all have emotions. It's human, right? And the first instinct that comes out is the survival instinct. So when you have your money into the market, you're trying to protect it, right? It's yours. It's money that it was very hard for you to make, and now that you put it into the market and sort of it's out of your control now, and you are a bit worried, and that is very, very natural, right? So what can we do? What can I do for you, right, to ease that emotion out of the system? So I said, okay, we need to find some indicators that can help my fellow snipers here, my fellow people here. So let me do, if I can share my screen, and I hope you can see it in a few seconds. It should be coming up with the help of the admins. We'll let the screen share coming up. Giving more time to the admins to press the button. So I'm drinking the water. No, didn't work. Where are the admins? Right. Anyway, but while the screen's going to come up in any second, the idea behind it is you need to zoom out a little bit, because sometimes we are focusing where the move is, right? And Mama Sniper gave a little bit hint. When the bull market is happening, right, the market moves really fast. So you're going to see big candles, big moves, right? So you automatically going to zoom out anyway for you to catch up all the price action. Now that we are in a very slow, thank you. It is, you see, it's working, magic. So now that that we are, let's say, in a very small moving market, it's like dead, boring right now. Yeah, so you don't have large moves. So what do we do? For us intend to see what's going on here, what I do, I zoom in and I zoom in and I zoom in and I'm trying to stretch everything. And then you say, oh, now I can see the candles, right? So we need to do the opposite. We need to zoom out now and say, okay, I see the price action. By the way, here's a little note that today's morning, the morning slot that I had earlier today at the beginning, everybody was questioning, how do we see the market today? And I said, guys, you know what? I'm going to mark it, and I'm going to say we're going to go down. So this is another area that I marked as well. And I said, breaking that line and with the body, that means it wants to go further down. And maybe it wants to go back to the ranges, the usual range that we used to see Bitcoin for a very, very long time. So let's jump out this morning show, but let's go back now and let's zoom out a little bit. Let's go to 3 day, right? Why not? Let's go to 3 days and have a look what is going on to Bitcoin. Now, 3 days, you'll see more action as in time, right? So you see the down wave, and then you see the up wave and some corrections on this way. Okay. All right. Let's say that you see that kind of chart, and then you don't know how you're going to proceed. how are you going to read this? Is it like bullish? Is it bearish? Will it go up? Will it go down? What do I do? My TA is not accurate yet. It's not working. I need some help, right? So what kind of help do you want? Well, obviously, you don't want to call your friends left, right, center and ask them for help as a second opinion or advice. You need an indicator, not one, few of them. But let's use the MAs. I like the MAs. Now, I use two MAs, the 50 and the 200. The 50 is the fast one, which is the gold, and the 200 is the purple, which is a slow. Now, my settings on my AMA on the time frame is stuck on 3 days. So no matter what time frame I'm using up there, that AMA is always going to show me on the 3 day. And I said, okay. So let's have a look. Why 3 days, guys? Why 3 days and not daily? Nothing wrong with the daily. But 3 days has less noise, meaning it will give you more less frequent triggers or indications, so to say, right? It's an indicator, so it indicates. It doesn't trigger anything. So what do we see here? We see that we have a bullish, let's say, structure indication that we have the fast one crossing over and above the slow one, right? We call that the golden cross. Now, golden cross is a very, very bullish scenario. But before I will explain what's going on with the bullish, that scenario, that golden cross, let's see when was the last time that we've seen again on the 3 day MA golden cross. So I need to go further back, and here it is. Here we have the last golden cross back here, and that is all the way back in July 2019, right? So here we are, 2019. Let's do a small observation. Look like a little people are laughing, guys. I know, you know, we're family. You know, this is what we do. We Google around. We always have fun, guys. We always. You need to have fun with, you know, while you're doing charting as well, right? You need to be serious while you're trading, but you need to have some fun to loosen up a little bit, right? Because if you get too serious about it, then you're afraid of speaking out. So always having some fun there. Right. So let's do some observation. What do we see? We see after that golden cross that we had, we see Bitcoin trying to correct itself, right? It had a nice push to the up, and then it's doing some correction to the down, right? And what do we see? We see that it lost the first MA. It went under, it went close to the 200, trying to push one more time. It didn't succeed. It went straight down to the 200, tried one more time. It got broken, and you can see it retested as well. It did some correction up there, and then finally it went under again. And this time it broke the 50 MA, the 200 MA. It broke that support trend line that comes all the way back since February 2019, and it target at let's say another major support trend line. Now that support trend line that I have there, it comes all the way back to 2011, right? If I zoom in here and stretch all the charts here, you can see that I picked it up from another breakout, right? So we got another breakout all the way back to 2011. And after that, I was trying to find multiple touches and points that will make sense. For instance, it had some rejection here, came down, trying to break a second time. It didn't manage to go. Third time, came back, retested. So I got like a virtual line here and said, okay, so that trend line has to come through these levels. Next, if you keep on following, you have the same thing again, right? It came down, rejected, came down, rejected again, support, rejections, and stuff like that. So, okay, my trend has to come through here. So I got this major trend line. It's like my super Atlas, right? I call it Atlas. It's like my major support trend line that, is supporting, Bitcoin for a very long time. So I call it Atlas. I gave it the name of Atlas. So I said, okay, you know what? After that nice bullish golden cross, I observed that Bitcoin dropped down, broke the MAs, and it touched the second trend line. And I said, okay, enough of this time here. Let's go and observe now the current status. Let's see, what's going on now. And let's have a look. And let's go back to our recent price action. And what do we see? Let's have a look. We have the golden cross. Okay, I can see that. I can see that already Bitcoin is going down. Okay, that reminds me of something. That rings a bell. And then we lost the first MA. Okay, that rings a bell as well. Also, we lost the second MA, the 200 MA. Okay, and then we lost the trend line. I have a trend line that comes all the way back from the, let's say, Christmas of this year, which is basically the 15K area. And since then, it's become my trend line. And that trend line almost is being backed up by my dynamic AMA 50 is acting like a support. I said, okay, so I got the golden cross. I see Bitcoin going down. I see Bitcoin breaking the first MA. I see Bitcoin breaking the second MA, and I see Bitcoin breaking the trend line. Okay. How convenient. And maybe, right, he has ticked all the boxes. It's repeating exactly what he did before, only that now that we're left to go down to the second trend line. That's the first trend line. That's my second trend line, right? So I wonder if Bitcoin's going to do even the last, let's say, move. Is it going to repeat the history again? We don't know. We're going to see it, right? But however, since it lost that trend line, it did try to come up again, right? It did try to come up. See that week? It tried to come up, reclaim the 200, trying to touch the 50, and failed. That happened exactly back in 2015. So you see, we see a pattern going on here. Okay, what else do I need to look at? We've seen the 200 and the 50 MA. What else we can use? Okay, let's bring another tool from our drawer. That is our beloved Fibonacci. Let's bring that Fibonacci on the last wave. That's the last impulse wave. Now, this is a new down direction, but it's still ongoing, so we cannot use the Fibonacci there. So let's use the Fibonacci on the last complete wave. And let's see what we can see. Let's observe a little bit. All right. Okay. What do we see? You know that I marked here that little box there, the buy zone. Well, that buy zone, basically, it's inside my golden zone. So, okay, I see a golden zone. Right. So if Bitcoin goes, which it did all the way up here, and if Bitcoin wants to come down here, is it really bearish? If I zoom out, no, it's not bearish, isn't it? So if Bitcoin wants to come down to 21, 20, 19K, we are still bullish because that will be a very nice and very healthy retracement. So if I see now Bitcoin moving down from 27, 26K, which is currently sitting 26,580, and if it wants to go down, it's just a healthy retracement, right? Now, what we've been observing for the past few days is rejecting on the 38, right? We can see that it came down, right? Let me grab the tool. It came down and is bouncing on the 38. It tried to come up to that trend line, It failed to reclaim it. It didn't manage to go above, right? So we can call this a retest, can we? We can. And then maybe it wants to come down again. Now, is it going to break the 38? Maybe, maybe not. Maybe it's going to bounce again from the 38. We don't know. Remember, the 38 level, right? 038 or the 38%. You do need to remember that can be a level of a bounce when things are very bullish, right? But again, you don't need to, feel any FOMO that you missed it or it's not bouncing it yet. Sometimes it's going to bounce a little bit, come up, trying to test that trend line, and then maybe later on we'll do a full retracement. So yet the full retracement hasn't been occurred yet. Only we see some restrictions on the 38. Maybe later on we'll manage to break it. And is it possible now that that level can be broken? Yes, we have some evidence. What kind of evidence do we have? We have this large, nice, beautiful wick that went under the 38 and also under the major supported resistance level, right? And that supported resistance level comes from way, way back. And look at that. I have lots of rejections there. I have a support there, resistance there, and support there. So that level, that horizontal level, right, it's crucial. So if I got a wick under it, maybe there is some indication that wants to revisit that area again. Now, this is a 3-day. If I go to the daily, you can see that we have some bodies. Not a lot, right? But we got some bodies under that support and resistance lines. It's a very strong, support line there. Okay, let's do a little bit now observation. When's the last time it came down and touched the support? You can see how much it bounced. Very strong support indeed. When it came back to these levels, again, what do you see? A smaller move and a rejection. So now what I'm thinking that maybe on the next time when it's going to come down, maybe it's going to be easier to go through because there's not a lot of resistance anymore, right? Because if there was a very strong resistance, what kind of price action would you expect? A big move to the up. We haven't seen that yet, right? So zoom out a little bit, use the MAs, use the Fibonacci, and then you get a better picture and better understanding, right? What else can we use? We can use the stochastic RSI. Let's use the stochastic RSI. SRSI, on my favorites, here it is, stochastic RSI. Let me close the other indicators. I'm going to go through all of them. They're up there for you, and we're going to see them all together. I had the stochastic RSI, beg your pardon. Let me move my stochastic RSI to my current time frame. And what do we have now? Interesting. I am on the daily, and I have stochastic RSI on 94, the slow one, and 86 on the fast one, and we had a cross. Okay, so on the daily, stochastic RSI is telling me that it's on the overbought area. So maybe, according to the past data, so maybe we should be looking for shorts, right? Okay, let's move to the weekly. Let's have a look on the weekly. Okay, weekly, different time frame, different data range for the stochastic RSI to calculate, right? Don't get confused and say, oh, I got different values now. What's going on? Is stochastic RSI broken? No, it's not broken. It's giving you different values according to the data that we asked to calculate. So now we ask the stochastic RSI to calculate on the weekly. Okay, so the daily, it means it can reset in a day. On the weekly, it's going to reset in a week. So it's going to take like more weeks to reset like full cycle. But every week we'll update the values. That's what I want. That's what I want to mean by resetting. So the values will be reset on the indicator every week. So now we have a cross and pointing towards up. So maybe in the next weeks, maybe Bitcoin would try to push the up, right? Why? Because it's very at the bottom of the oversold area. So maybe Bitcoin will have a better days to the up. We're going to see that later on. What if we're going to the monthly? That means you expand now the indicator, and that will get values month by month, right? So for the next few months, maybe we're going to see some down action monthly wise, right? You're looking on the larger scale now. And currently what we have a cross, right, happening to the downside. However, today is the 21st of September. So these values have not been confirmed yet. These values here have been confirmed because it's based on the previous month. And let me zoom in a little bit for you to see. But these two, let's say, points are not fixed yet. They're going to be fixed or printed, if you want to call it, right, by the end of this month. So come back on the 1st of October and have a look what this indicator is telling you. Now, let's do a little bit observation. People will ask me now, is like stochastic monthly stochastic RSI like good to look at? I mean, is it accurate? Do I have false signals? Is that too late? Well, let's have a look. When the last time we had a cross above the 90, that was nearly the top of the market. So let's have a look a bit before that. We had the cross to the up, right? So let's stretch up a little bit and have a look at this. When we had the cross and going up, this is when we had the move to the upside. Maybe that was phase one of the bull market, came down, did a shakeout, you see, it touched that second trend line, did a market shakeout, and then pushed to the second phase, which is a real bull market, right? So you can see now, even before that, every time that you have a cross, either above 90 or below 10, you can see movements of the market. And you can see that was the top and went down. That was the bottom and it went up, right? Now, if I pull this a bit further down, so you can see around these levels here, when we got the cross, it was the top and came down, right? It tried to push another more time, but it didn't go that far, didn't it? So it just went down. And now, before Christmas, it was the time that the stochastic RSI was at the very bottom. So you knew, right, that stochastic RSI spent a lot of time being at the bottom for the Bitcoin, right? Since we got the cross, this is when you start moving in January, right? So now maybe we are at this point that for the next few months, as a monthly candle, maybe we want to go down. And if it does that, it will, by the time it comes down, it will be the time that it will come down and go into the golden zone and maybe break a little bit below under that trend line and then retest. So basically, they're going to do the market shakeout. They're going to shake out all the high leverage traders, and they're going to throw out the gamblers out of the market, and then trying to make the market healthy, and then move forward. Right? This is how the markets operate, and that's a nice indicator. I can bring another indicator as well. Don't worry. I mean, don't get afraid because it's the monthly one. The monthly one will calm you down, and you can have a look and say, listen, stochastic RSI is at the very bottom or is at the very top. I need to understand what's going on, right? let's bring another indicator. Let's close that and let's bring up ASO. ASO stands for average sentiment oscillator, right? I like that as well because let me put a line here on the 50 and I explain why I do that. I'll put let's put a little bit thicker for you so you can see it. White or orange, it doesn't matter. And coordinates 50, right in the middle. Now I want you to focus. I'm going to maximize that a little bit so you can see it. I want you to focus now on the top half. Ignore the bottom. I'll tell you why. It's like a painting. You know, have you seen the paintings that they have like mountains and a lake or a sea, and you have reflections of the mountains on the sea? This is exactly what happens here as well. So anything below the yellow line is the reflection of the above image. So ignore the bottom side. Let's play a little bit with the upper levels, right? Now, blue. Let me go into the settings so you can see what's going on. It has two styles, blue and red. Now I can put for this example green, the first plot, and I'll stick to the red as the second plot. And these colors for you to understand, green it means goes up, red it means it goes down. Okay, right. How do we use this kind of indicator? Where do we pay attention? Into two areas. The first area is the first parameter is who is above that line, the green. Okay, when the green is above that line, that means we are in an uptrend. Very clear, right? It's not a rocket science. Everyone can see that, Thales. You know, when it's red, it's going down. Yeah, okay. When it's green, it's going up, right? Okay. You didn't really need a big explanation about that. However, there's a little trick here. What we like to focus is, let me mark it up with a line. Let's say this is the top, right? This is the top. I want to make sure that what's going to happen after that top, this is the peak, right? When you see after the peak that is dipping towards down, that indicates, right, it's the top of the move. There's no more to the up. So let's mark with vertical line and we can mark exactly the top. So I mark the peak and when you start turning around, and on the Bitcoin we can see that was the top, right? And then start moving down. I said, okay, good. I'll move that away. The second peak that we had is right next to it, and it's telling us that it's trying to push to the up, but it never came close as the first peak. Said, okay, you know what? We're losing steam. So what do we see on the price action? That Bitcoin tried to push one more time after that little correction there, but it did not manage to go that far away. And what do I mean by this? Look at the previous high. It's all the way down here. Have a look at this new high. You can see a huge distance from this level to this level, right? Momentum, steam. From this high to this high, very close to each other, right? So we're losing steam. So since it's dipping down, what Bitcoin is doing, it's going down too. On the other side now, when we have the red coming up to the top, right? And I mark the peak, let's say the very top. When we see that it's turning around, that indicates that is the end of the bottom, right? And that was the bottom there. That was the bottom here. And after that, it starts turning towards down and Bitcoin start to move up, right? This is on, again, on a monthly chart. The second thing that we like to see on this indicator is when we have the crossings, right? When you get the crossing, basically, it's just turning around the market. So, you know, this is, let's say, the sellers, like they're trying to push the market down. They run out the steam, they're going down. And here we got the X, the exchange. It's like turning hands, right? Now the buyers are in control, right? And that indicator is telling me now on a monthly basis that now they're trying to push, you know, the market to the up. And it makes a little bit sense now that, you know, it came all the way up to 32, it came down and buzzed on 38, and maybe it wants to try and push up to that, you know, that trend line. So now I got a bigger picture for me to understand and to not panic. I said, okay, I brought my Fibonacci. I found that it's rejecting the 38. I know that I have the golden zone down here. No problem. I got that indicator now telling me that maybe it wants to push up. What's the name of the indicator? ASO. Let me bring that up for you. ASO is the average sentiment oscillator, right? It's free. You can use it. It's not premium. You can have it with the, you know, it's part of the indicators that you can have it with the, even with the free versions. If I'm mistaken, please let me know. But the last time I've checked, I think it was there. ASO, it is available. It is not available on the exchanges. Like if you go to BitGet or Bybit, maybe you will not find it there, right? But if you come to TradingView, you will find it, right? So this is the way to read that, you know, oscillator. Every time that is going up, it's telling you that they are in control. So the buyers are in control. The green is up, so the buyers are in control. When you got the peak and turning around, that is the point that you understand, yeah, you reach the top of the up move or the bottom of the down move, depends on the color. Hello, sir. How are you? You good? I can't hear you. You're muted.
Yeah, how are you, Thales, legend?
I'm good, legend. How are you? I'm trying to make people more relaxed and zoom out a little bit and use other indicators so they can see a little bit the long term. So, because among us, we have people, I believe, that they're not very good with day trading, maybe. And they have, you know, they find it very hard to understand futures and leverage, and they cannot make a lot of money now. So that's another opportunity to move out a little bit, zoom out a little bit, and use other indicators so they can give them a little bit the insight. If they cannot make it with a TA and they don't know if it's going to bounce or not, or it's going to continue up or continue down, an oscillator will give them, you know, a direction.
Yeah.
Another indicator, if you don't mind, we can have a look. Let's say even the RSI, our old favorite RSI, the simple RSI, and I'm going to remove the AMA average that it has in it. Now, let's have a really quick look at it, right? Still on the monthly, I haven't changed the time frame. I need to observe a little bit, you know, what the RSI is doing. And I said, okay, hold on a minute. You know what? Since the beginning of this time, RSI really, it did not go below 44. So let me put a horizontal line there at coordinates 44, right? Or 45, it's up to you. But 44, I found that number, it was when the RSI touched that line and then shift to the up, right? So what happened when RSI touched that 44 and shifted to the up? Let's have a look. We have a touch on the 44 here, right? And that was the bottom, right? It touched the 44 and then it started moving to the up. Since it started turning to the up, we have Bitcoin moving to the up. That's interesting. So okay, cool. Let's see a bit later in another instance. Let's have a look. When was the next time that it touched the 44? Around these areas. Okay, you can see my cursor is here. So when RSI touched the 44, again, it was the bottom of the market, right? Since it's turned around from the level 44, we got the move to the up. Okay, maybe it's a coincidence. Second time. Let's have a look a bit later, right? Let's have a look a bit later. Let's zoom down a little bit. Now, let me delete that. When it came again very close and even below to that 44 levels, it's the first time they went below 44. What do we get? The bottom of the market again. And then you start moving to the up. So what Bitcoin did is start moving to the up. So that's another little, indicator that will calm your nerves down a little bit, right? So you don't need to panic. You don't need to FOMO. You have these big boys here telling you on the monthly basis that, listen, just wait. Just wait until I calm down. If I calm down there, just get ready for you to get in. Now, if you don't want to get into futures, no problem. Use that in spot. And every time you're going to do just fine. So we've seen the MAs, we've seen the Fibonacci, right? We've seen the ASO, and we've seen the stochastic RSI, and we've seen the RSI as well. So there are plenty of indicators out there that you can use, but you need to understand how they work. And since you understand how they work, then it will be easy for you to read them, and that will take you, your anxiety out of your system. And that's what we want, right? And a lot of people are going to ask me, why do I have this yellow golden target box up there? What does it represent? So, okay, I'll tell you. I took all the way on the last move to the down, right? I'm on the monthly now. This is an up wave, which is not finished yet. It's ongoing. It's in progress. So I cannot measure it. I can measure the last wave. Okay, let's measure the last wave. I take the very high and I go all the way down to the very bottom of that 14K. What do we see? The future gold zone, right? So when and if price is going to come down, it's bouncing already from here, and when if it's going to be ready, it's going to come to that golden zone. And guess what? Lots of traders, lots of waves, maybe they would like to sell, and maybe we'll see a reaction coming down. That will be a healthy price movement. And that's why maybe you heard a lot of people talking about the 48. Why they're talking about the 48? Because it's the golden zone. So I'm going to wrap up here, guys. This is roughly what I said in the morning as well, but I wanted to be on the this kind of time zone as well for the rest of the people. So, guys, you don't need to panic. You don't need to feel FOMO. You don't need to feel bad, right? All we need is a little bit of patience. Good morning to New Zealand. Good morning. And you just need to have a little patience when the right times comes for you. It's exactly the example that I used this morning about you being on the bus stop and waiting for the bus to come. It's just that simple. You're waiting on the bus stop, you're waiting for the bus. Now, if the bus is moving, there's no point you chasing behind the bus because there's no way you're getting in, right? If you miss the bus, it's okay. You just wait for the bus stop. At the bus stop, you're going to wait there for the next bus to come. So the bus, the route is going to be constant there, and every 45 minutes, every half an hour, the bus will come. So it's always about timing for you to get on the right bus on the right time. That's it. Don't chase it before, don't chase it afterwards. It's pointless. You're going to get wrecked, and that will lead to anxiety. That will lead to more fear that you don't know when to enter a trade. and that will mess up your psychology. And then you're going to start doubting your strategy. You're going to doubting your TA, and then you're going to lose more money. Zoom out a little bit, use some indicators on the larger time frames, and you can see the picture. Now, obviously, inside in the monthly, you're going to have multiple waves. You're going to have the weekly waves, the daily waves, and the 4-hour waves, right? More noise, more frequent, higher frequency. You know, it's a higher frequency. But sometimes you need to zoom out a little bit, and this is the way to do it. And just with that, I'm going to close my sharing. I hope that I help, you know, help you guys. If you got any more questions, please, you know, shoot them up before I pass to Shauno. It's already 9 minutes past my hour. We're all, you know, excited for Shauno. What are you going to talk about today, Shauno?
Thales, thank you. Today I'm just going to be going. I'm going to be going through a little bit on risk management, which is so important, and position sizing.
That's great. I mean, risk management is the #1 key for your success. It's the one and only key. It's the master key, right? It will open all doors for you guys. So, you know, risk management, I have, you know, plenty of times spoke about risk management, but Shauno, he's the master. He will. I have a question. Why you're so damn good, Thales? I don't know. Am I that good? Lovely guys. I'm gonna leave it to Shauno. You are all in a very, very safe hands. Thank you very, very much. I'll see you later on other MAs. Please don't hesitate to find us and contact us in Discord. Remember, we do not DM anyone, right? We do not offer other kind of services, not different exchanges, not different strategies. We don't take your money. Yeah, we don't trade for you. We don't do signal calls and stuff like that, bumping times and stuff like that. No, we don't do that, right? So be careful. If you see something like that, go in on Discord and tag me and I'll sort it out. Okay, guys? Much love. Please give a big welcome to Mr. Shauno. He's going to bring you the big alpha. Have a lovely one. Have a good one.
Thank you so much, Thales. You know, when I first got on, you said you're just trying to help people relax with the indicators and stuff. And my first thought was, you know, I've been listening to you for the last hour while I have my morning coffee, and just listening to your voice is relaxing, dude.
It's that time of the night. It's already midnight for me as well. Yeah, you need to be calm. We have to be calm. Yeah.
Yeah. Fantastic.
Great stuff. Thank you very much.
Awesome. Thank you so much.
Good. See you later, guys. Bye-bye. Thank you very much. You too. Thank you.
Thank you. Hey, guys. Need to follow that one, eh? How is everybody doing? I know we're all in very different time zones. When I know it's late for Chaos. He's been here for hours and hours. Banter Bubbly said, hey, Shauno, we meet again. I've had 4 hours sleep. It's 7 a.m. for me here in Australia. I think there's a few people here that have been up the whole since the beginning, you know. And I know David's one of them. He's our guru with the doing all the background stuff for us. And there's a lot of people that have put a lot of effort into this. Wow, everybody, just such a great effort. And, you know, we're learning all the time, and we're going through, we're making notes, and we hope to bring you this sort of alpha once a month, you know, and we go through it and we get better every time. So it's so excited to be here and so privileged to be part. Here we go. Banter Bubbly just said she's been here over 21 hours now. Wow. Go girl. That's incredible. Yeah. So all again, as Chaos said, all again in 4 weeks. And yeah, looking forward to it. Cool. So I have got just a little presentation. It's not very long. I have put my screen up for you guys. It will be up in a minute if David or Chaos can help me out there. There we go. Fantastic. Right. So what I'd really like to cover today and is just a little bit of risk management. It is so important, and hopefully through this, it's not a very long presentation. There's not a lot to go through. We're going to have plenty time. We're going to have plenty of time afterwards if you guys want to ask questions and that sort of thing. All right. But a couple of years ago, my brother and I got together and we were testing out ChatGPT for the first time, and we asked ChatGPT, what are the top 3 qualities of a successful trader? I'm going to show you the answer in a minute, and it actually gave us 10 very, very valid ones, but we got those. I'm going to cover why risk management is so important. I'll give you a couple of techniques on how to stay in the game. All right. So we're going to go through this, and these top 3 qualities, as per ChatGPT at the time, were number 1, experience, number 2, risk management, and number 3, discipline. Now, we can't teach you experience. We can't teach you discipline. That is 100% up to you. Only you can hit the buy button. Only you can hit the sell button. But you also can't gain experience without good risk management and discipline, right? You have to stay in the game. And with so many people, and look, we're in our 8th cohort now with Sniper School, and every cohort we get people within the first week they've blown their accounts. We get people who've, a month after Sniper School, they get overconfidence. They break their rules, so they're not doing the risk management. They forget not doing the discipline. They forget their risk management, and they blow their account. And for some people, it's taken months to save up enough to actually start this journey, or they've worked so hard. And I think Dani was on before when Mama Sniper said, she was so proud to build a $2 account into $29, and she ended up going back down to $9, I think. So risk management and discipline is important. Okay, now things people don't realize with percentages. If you can manage your risk and you actually can stick to, say, a 2% loss on any given trade, you only need the next trade to give you 2.05% to actually get back to break even, right? So if you're on a $100 account and you've down to $98, you only need to make 2.05% of that $98. And keeping this, and it's okay to lose a few trades in a row. We all do. We all lose some trades. But if you have these streaks, you have these hot weeks, and you have these very not so hot weeks, and hot months. And even the best traders the absolute best traders will have, out of a calendar year, they'll have 3 negative months, and maybe 1 break-even month, and some of them even more. But the idea is that those positive months far outweigh the losses that you make. And you would have heard it 1,000 times. Lose quick, lose small, win big, and add to your winners. Right? And when you start looking at these percentages, you can see how important this is. If you're down to 75%, or if you're down, 25% on your account, that means on a $100 account, you're now sitting on $75. And to get back just to where you started, to your break even, you need to make 33% of that. Right? And these numbers start looking more and more scary as you go down. If you've blown half your account, it means you're down from $100, you're down to $50. You now have $50 to get back to your 100. You have to 2x it. You need a 100% profit just to get back to your break even. And when you go look at this, if you're down to $10, you need to 9x just to get to break even. All right. And this is why that risk management is so important. All right. With proper risk management, this table over here shows you what will happen if you start with a $100 account and you risk only 1% of that account. Right? Only 1% risk as a stop loss on every single trade. You can actually lose 100 trades in a row and still have almost $37 left to keep going. Now, I do question, excuse me, if you give me one moment. Right. You got to realize that if you started with a $100 account and you're learning and you're down to $80, your 1% of an $80 account is not a dollar anymore. 1% of an $80 account is 80 cents. Okay, so you need to adjust your risk according to what's left in your account. Remember those 3 top qualities of a successful trader. Experience is number 1. You cannot stay in the game and gain experience without actually this tool here, this risk management, and without the discipline to stick to your plan. Okay, so let's have a look. Working in this table, what I did was I did 100 trades, right? And the outcome of these were decided by flipping a coin, heads or tails. And starting with a $100 account and sticking to a very key 1 to 3 risk reward. And Matthias has asked, I don't understand the calculation of risk management on the slide, but it's damn horrible. Okay. With regards calculations, I'll go through some stuff with you. But by sticking to a very strict, by actually using a very strict set of rules and going, you know what, this is my stop loss, only 1%. If it gets to that, I'm out. And by not trying to chase these pumps of 10, 15, 20%, by actually just focusing on my winning trades, I want 3%, I want to bank it, right? This first 3 trades were losses here. And yeah, got me down to $97. But after 2 wins, I was up at 102 already. And just going through and keeping my 1% stop loss and my 3% win rate, not being greedy, at the end of this this little experiment, I'd actually had only 48 wins and 52 losses. But because I stuck to that 1 to 3 ratio, the end result was $254. So in 10 trades, that's a 2.5x, and that's 2.5x your account lose or winning less than half your trades, right? You can actually, with this ratio of 1 to 3, you can win 3 out of 10 trades and still be ahead in this market if you use proper risk management and you use discipline to and follow your plan and your rules. Okay, I will pop a copy of these in this chat as soon as I'm done. Right after this, we have some other people. David's coming up, I think, next, but when he starts, I will actually pop some of these slides in as a picture, a JPEG. So stick around. Cool. All right. So these are the tools I use to stay in the game. And when I use these tools I learned in sniper school, the short position and the long position tool, there's essentially just 2 numbers I look at, right? The first one is deciding whether this trade is worth the risk, is going to be my ratio. And a 1 to 3 ratio. So if this number here actually says 4.13, it means it's a 1 to 4.13. If it says 2.4, it's a 1 to 2.4 risk reward. All right. And the other number, and the most important, which determines my position size, is that percentage of the stop loss, regardless of whether it's a long, right, up here, or whether it's a short. So the ratio is determining whether my risk is worth taking the risk for this trade, and my percentage of my stop loss guides me in my position size, right? I'm going to show you what I do. Position size is so important. Okay. Hang on. I'm going to go down to this. Hang on. Okay. Position size is so important, and position size is what determines how much you're going to lose in a trade. If you take a $100 position size of any token, and that moves, and you bet the wrong way, and it moves 10%. Paul asked, "What is a coin? What is a coin flip?" Paul, what I did on that previous slide, I actually flipped the coin to decide whether I'm going long or short on support resistance, and I only won 48 out of 52. But don't do that. It was a simulated experiment to see how when I was trying to work out what risk reward ratio I needed. Okay. Getting back to the position size. If you have a $100 position and that drops to $90, it loses 10%. It is a 10% change, or a $10 change. Sorry, a $10 change. Regardless if you were in a 1x trade with spot, or if you're in a 2x trade on, with $50, a 25x trade $25 trade at 4x. All of these trades here, right? That margin amount you put in there and the leverage that you use doesn't affect how much dollars you're going to lose. What affects how much dollars you're losing is your position size. And in every single one of these, if you lose 1% of this trade and your stop loss is hit, you're going to lose $1. And that second number that I was told you about, that risk reward, and we can look at it again. This one here, that risk reward ratio is going to determine how much you make if this trade is a success. Okay, so that's why it's important. And what that risk reward ratio means is that for every $1 that you risk, you're going to make, and if you lose, you're going to make that risk reward ratio. So in the case of the slide here, for every dollar I risked on this trade, I would make $4.13 if it was a successful trade. Right? If I happened to risk $2 on that, I would make $8.26. So, and what I'm trying to demonstrate here is it's not leverage. And you see people going, ooh, brave person, 10x. Okay. If you were on a cross-margin account and you had a trade like this and you happened to put $1 at 100x and you got stopped out on that, you're still going to be stopped out because it's cross-margin. You're going to lose the other stuff in your account. And it may have been a 100x trade, but that 100x trade, if it was stopped out, you would still lose $1. Oh, it's on a $100 trade. Okay. I hope this makes sense. Banter Bubbly asked if I need a coffee. Sorry, Brewman. Yes, I do need a coffee, actually. Right. I hope you guys understand this. Once again, position size liquidates accounts. Definitely not your leverage that you're using. Now, how can we use this to our advantage? If I'm starting out and I have $100, now what we often find is, Bitcoin will start running and Ethereum will follow, and then Cardano, and quite often you will find that there's, there may be 3, 4, 5 tokens that are ready to enter a trade. And with only $100, which one do you choose? And generally it's the one I always used to choose the one that's going to stop me out for some reason. But by understanding that your position size is what determines how much you're going to lose and not the leverage. Okay. What you can do is you take, let's say you're looking at something like Bitcoin, and in Bitcoin you've got a really tight stop loss. It's a nice stable coin. It's only 0.5%, and you are on a $100 account. You could take your account balance, and if you bet the whole $100, you're only going to lose 50 cents. And this would allow you, to take a $200 position size. And if you get stopped out on a $200 position size, you're only going to lose $1, which is 1% of your $100 account. All right. So if you remember that table from the previous slide on it's not the leverage, this $200 position, you could take your whole $100 account and do it at 2x. You could take a $50, half of your account, and do it at 4x. It's still a $200 position with half a with 0.5% stop loss. If you get stopped out, you're going to lose $1. You may be looking at a couple other trades here. You've got some higher risk tokens like Doge, for argument's sake, where the moves are a lot larger percentages, and your wicks are a lot longer. And you may look at it and go, the only realistic stop loss I have is 5% movement on this particular token. But if I win this trade and it goes to that next level, it's a 25% gain. The risk reward here is 1 to 5. Okay, is it worth taking it? To me, that 1 to 5 risk is worth it. But how do I limit this to just 1% of my account if there's a 5% stop loss? So my $100 account over here, I divide that by that percentage, 5%, and that gives me my position size maximum is $20. And it doesn't matter if that $20, I put $20 at 1x on it, or if I put $5 at 4x on it. Okay. It's going to, if I get stopped out of this, I'm only going to lose $1. So following this process, you can see, I mean, here's a phantom trade, 2%. Your maximum position size is $50 because you're once again, and forgive me if I'm repeating this, it's so important to understand these, okay? Your entire account divided by that percentage that was in your little long tool or short tool is going to give you your position size for a 1%. If you decide you want to risk 2% of your account, all you have to do is double this, but there's no need for it. Now, by using this leverage in this way, I now have 6 trades open here. Each individual trade, my stop loss is $1 on each individual trade, which is 1% of my $100 account. So because I'm able to use that leverage, I might only have a $100 account, but I have $378 of open trades at the moment. And each one of them, each individual trade has a $1 risk. And because of my risk reward ratios, if I won or was successful in all of these trades, my profit would be $24. Okay. So let's say, all right, I get 50% here and I lose 3 of these. So I've lost $3. I'm minus $3 on my stop losses, but I win 3. So on average, I am plus $12 on my profit. So what's my total profit for this for today? $9, which is still a 9% of my account. And I've done that by only risking that 1% per trade. Yes, you can use leverage to do this, and you can use it as a tool to give you more buying power without taking on extra risk. It will allow you to be in $300, $400 worth of trades on a $100 account. Okay. And you will need to adjust these as you go along. So once again, if you've built your account up to say $725 in this example, and you say divide that by half, it's going to give you $1,400. Or in the case of the Doge, that divide by 5, 725 divided by 5 is $145. That's your maximum position size. It works exactly the same. In each one of these trades here, my total risk per trade is $7.25, which is 1% of my account value. Okay? And if they all work out, I'm looking at a fantastic return here. I hope you guys understand this. Don't be scared of leverage. You know, and people say, how can I ever get to $1,000 with only 100? The answer to that is being slow, being methodical, and practicing this really good risk management. All right. This tile here, you've probably all seen. If you've done sniper school, you've done this. You've seen this. Okay. And it is Sheldon's roadmap to whatever business it is, whether it's the purpose in this example he used by a car. Okay. You want to turn $100 into 250 or 1,000 into 2,500. You can follow these little steps. But the important thing here is this here, this amount and these steps are your gold account. And this, on this account, you need to, when you're trading, whether it's spot or leverage or whatever, on this account where you only ever risk 1% per trade, right? And you're going to see, and up next, we actually have Degen David coming up, I believe. I hope he's still on the schedule. And what David did, he was the winner of our buy bet competition that we had a couple of months ago. And he actually took $400 to $130,000 in a few months. And can you do that? Yes. And the important thing, and it's totally possible, but not without certain amounts of risk. And David had been trading for a couple of years already. He had experience. He understood the markets. And he's going to come up next and he's going to show you some strategies that he used in achieving those sort of results. But you cannot get those results with a certain amount of risk. So this plan, this roadmap here, and splitting these into sort of using businesses and that sort of thing. The whole idea here, when you're trying to get from this 1,000 to 2,000, you're using a safe risk management plan. And when you build that 1,000 to say 1,100 or 1,200, you can actually take 100 of this. This gold account never drops down below $1,000. You can take 100 of this and you can use that on leverage in a separate account. It's very easy to set up a sub account that's not connected. And you can use some of the strategies that we've been taught in the school, like the increasing your margin to increase your position size. You can put that whole $100 at a 10x if you want, or the whole probability. I'm not saying possibility, but the probability, particularly if you're just learning and it's the first time you do this, the probability is this leverage account and margin account, you're going to blow it at least once. Okay, that is part of the curve. It's part of our school fees. It's part of the costs of your education. But this system here, you're actually taking house money and you're taking profits from that little gold account, and you can use them at higher risk, right? It's okay if you're going to risk off that $200 profit that you're using. It's okay to risk $50 of it, and you are probably going to blow it, but you can top it up, or you can refund it with profits once you've made more profits, and you try the system again. And don't start with $200. Start with $20. Okay. So start with $20, and practice these techniques that you're going to learn from the other ones with the higher risk. But these sub accounts that have that leverage and that margin have a single purpose. The single purpose is to get you to the next step. And if you've used one of these and you've made a win, and you get, including the two accounts, you get to that 2,000, or then your next step, whatever your next step is, maybe from $100 to $200, whatever your next step is, empty that account, you put it into your little pot of gold, and then you work on the following step. And when you start that little bit of money, you use that whole account. You never risk more than that 1%. And I've showed you the calculations for it. And then as part of one of your tools to get to the step 2 or 3, which is the 4,000, you can risk more. That's fine. All right. So Bossarama is asking, he finds it, what he finds difficult is how to adjust his risk. Okay. Well, Jackie, what's the difference between leverage and margin? Can you stick around 2 hours? I did a segment last night for me on margin trading, and I'm going to be repeating it in 2 hours with Bruce. I'm excited to be working with Bruce on stage. I love working with Bruce. In about 2 hours' time after David's there, and I will break down the difference between leverage and margin. All right. So Farafin says that's exactly how he manages his risk. Bruman said not that quick. He must be talking about the 400 or to 130,000. So 1,200. Actually, I think he started recording it on about 1,400, to be honest. But he did realize that while he was yeah, it is crazy. He did realize that I think I've heard him say in one of the interviews that he'd actually started with a lower amount and hadn't actually registered for the competition yet. But his official competition results was about 1,400 to about 100K. And you can certainly do that. If you tried that with your whole account, you're probably going to blow it, and you'll be working hard and saving and then starting again. Whereas if you use this risk management strategy and as you become more confident and you start making profits and you start and you start becoming a profitable trader, you can decide you want to up this 1% to 2% or 2.5%. I know Chris has a very strict policy. He will risk 2.5% on any individual trade, and that's fine for him. He's already proved to himself. He's got the experience. He's proved to himself as a profitable trader, right? And he's comfortable with that. You need to go back and have a look at this. And if you're starting in trading, the probability is you're going to lose sometimes 10 trades in a row. And what was our whole goal here was to gain experience and to stay in the game. Okay. Eagle said you missed the first 2 hours. Can I repeat that? Eagle, I think there will be a recording of this. So you can go back and chat. But essentially, for me, this is the strategy I use, particularly when starting, and I do use a slightly higher risk. So Farah has asked, and let's get some questions. I'm done. It was only a short sort of thing. I think the most important takeaway from this is, and I'm going to answer this 5% each week question. The most important takeaway from this is risk management. You've got to be able to stay in the game. And yes, greater risk is fine, but do it with profits. And secure that by putting it into a sub account or a separate trading account. Okay. So you can absolutely, if you're on if you're starting with $1,000 account and you've got $100, you can definitely exponentially increase that. You can turn that in 30 trades using Chris's method, which is he went through last night. You can actually turn that $100 into 100,000 in 30 trades. All right. You're going to fail many times, probably. Do it with your profits, and keep your gold account solid and risk, essentially not risk free, but limit the risk and look after your gold. That's your number one. What was said in one of the previous streams. Number one risk of trading, protect your capital. Oh, number one, sorry, rule. Your number two rule of trading is protect your capital. Your number three rule of trading, protect your capital. Okay. So there are strategies out there, but don't use your whole account. David, so good to see you.
Hey, what's going on, man?
I'm good, and you, mate?
Good.
Fantastic. I don't know how much of this you saw.
Oh man, I was scrambling. I had to picked up my daughter, and then she wanted to go to the football game, and she's hungry. Scrambled to McDonald's, dropped her off, rushed over. So I literally just got here. But
it was easy for me. I rolled out of bed. I had 2 coffees while listening to Thales, and then I jumped on. So it's been my morning.
There you go.
Yeah, no, welcome, bro. Welcome. I think there's a lot of people very excited to hear your strategies and the stuff that you used in the competition, and what an incredible story as well.
Thank you. Appreciate it.
Cool. I don't know. Let's see if there's any other questions. David, are you happy to start earlier? Do you want to get cracking, or you want to chat for a bit?
I'm cool with whatever. I was rushing here because I thought I was going to be late. So 9 minutes early.
Absolutely.
And I'm here to just go with the flow.
Fantastic. Cool. Why don't you tell us a little bit, for those that don't know you yet, David? Tell us a little bit. How long have you been trading? And what your experience was. How did you get into it?
100%. So got started in crypto in 2017. A good friend of mine told me about Bitcoin, and I was very skeptical about it. It was like 6,000 at the time, and me being nosy about the situation, I found myself checking the Bitcoin price every day, maybe 2 times a day. And you hear all the stories, and Bitcoin's going to crash, and asked a lot of my colleagues about it. And, a lot of successful people I knew were very skeptical and just very negative about crypto. And so, it's funny because these guys were like real estate gurus, multimillionaires, and they were very negative about it. But, here's one of my good friends that, he had a little $80,000 portfolio, told me he started off with like 6,000. And so I saw Bitcoin go from 6,000 to 10,000 to 12,000, 14,000, and I'm like, what is going on here? This is not a scam then. Like, what is going on? So anyways, I remember calling him, and I was like, dude, what's going on? How's your account now? And he's like, dude, it's over 1 million. I'm like, dude, you got to show me what to do.
Yeah.
So I remember setting up a meeting with him, and he was, showing me his portfolio and just kind of going over like Ethereum and Bitcoin and XRP and stellar lumens, and whenever this pumps, I sell half, and I was just like trying to catch up. And I remember putting in like $20,000 is like all I had left, and I'm just expecting it to double, triple, whatever. And I bought the top. I remember he was telling me, "Man, be careful. I don't know what's going to happen." And I basically went from 20,000 down to 5,000. And I remember he was kind of giving me the scoop, like, "Hey, man, download Twitter, like follow everybody that I'm following." And so I'm following all these people, going through all the and every single time I saw somebody post about a token, "Hey, this token's going to the moon." I'm like selling what I had to jump into that token to then watch it like go lower. And I'm like, "What the heck?" Then I see a new one. And that's kind of how my 20,000 shrunk down to 5,000. Just kind of hopping from coin to coin to coin. And then at that point, that's where I was like, some of the guys that I was following, I don't know if you guys remember somebody named CryptoGat. It was a guy I followed back in the days, had his Telegram group, and he was talking about leverage trading. And I remember messaging him privately, and I'm like, "Hey, I'm in the United States. How do I leverage trade?" And he's like, "Look, man, I can't tell you. Just you're going to need a VPN." So I dove into VPNs, and then my first leverage exchange was BitMEX. Yeah, it was BitMEX. So I remember sending $500, and then I didn't understand how it worked. I was just like, "Oh, cool, 2x leverage, 5x. Let me try 50." So my first trade was a 50x leverage, and like within 2 minutes, my account got wiped. I was like, "Where's my money? What the heck?" So I put another $500 in. Got wiped again. I was like, "Dude, how does this leverage thing work?" I'm watching the tutorial videos, and I'm like, "Oh shoot, I shouldn't use 50x." So it was kind of like a painful beginning trying to figure out leverage trading.
School fees.
Yeah, it's pretty much school fees.
Yeah.
And because I heard the theory, oh, well, if Bitcoin goes down, you can short it, you can make money while it's going down. And so I wanted to jump on that opportunity. So there was I was going on YouTube. It was like late one night. I was on YouTube, and I was down to my last $1,000, I think. Just kind of in like, well, maybe this crypto stuff isn't for me. Really doubting myself. So this guy's in Crypto Face, and he was like live streaming. He was showing his position, and it was when the Bitcoin Cash forked into Bitcoin SV and some other Bitcoin Cash thing. I forgot what it was called. And so I'm like, "Oh shoot, short Bitcoin Cash now." Okay, cool. So I shorted it, and I remember joining his Discord that same day, and I didn't really understand the leverage, but I think I was like 30x or something crazy. But I remember seeing that 500 turn into like 6,000 in 30 minutes.
Yeah.
And that's where I got hooked. I was like, "Holy crap, this is possible." And my stupid self was like, I would like fully close the position and then reopen it at 30x, right? So that's kind of, obviously that's stupid because it could bounce. And that's exactly what happened. It bounced and I got liquidated. And it was a terrible feeling. But at the same time, I was like, maybe this is it. Like, there's something here, right? If it happened, if that happened for me, I could do it again. And I just started to have all these thoughts like, I got to figure it out. So
fantastic.
So from there,
I think this is part of what I've just been through with everybody over the last sort of 45 minutes was yes, definitely you can do these strategies, but it's not a possibility, it's a probability you're going to liquidate your account more than once. And that's why it's so important to protect your capital and your gold and have a goal and take profits from that and put it into a sub account. And then you use that to do these strategies on that higher risk. But you've got your gold account that you can actually regenerate it every time you blow it. until that one where you go from that 500 to 6K or to 30K, you know, then take the money out. Take the money out. But, you know, I don't know anyone who hasn't blown an account before. I have many times. And
we all do. It's part of it's part of this world. You guys will experience that, and you know, at first it's going to feel like, you know, obviously if you're gambling your whole money, because that's what we're doing. It's kind of like we're kind of like in this casino that we're kind of the house. Like we have we have the charts, we have the Fibonacci, like we have the advantage. And it's funny because every time somebody wants me to go hang out with them at the casino, I don't want to play. I hate casinos now when you have crypto. So like I'll play slot machines or something, but I'm sitting there looking at my phone in some kind of trade. That's where I'm focused on. But yeah, no, you know, you guys will go through your losses and you guys will learn from those experiences, and then you guys will get better, and you'll find what works for you. And that's what took me a long time. It's like, how do I find something that actually works for me? And it wasn't until I found Crypto Banter and signing up for Sniper School that kind of gave me that discipline.
Yeah, fantastic.
Yeah.
Superb. So you want to tell us? What's your plan now to kind of go through and show us the strategy you used?
Yeah.
Yeah.
So let's see if I can share my screen here.
Cool. What Jackie just said, he blew $2,000 in 5 minutes and was physically sick.
So how did you do that? I'm curious to know. You know, what was your leverage? And I think being brand new, you guys will find, you know, seeing these big X, you know, 10X, 25X, 35X, and you see some of these people post their P&Ls, 35X leverage, and it's like, you know, 100% profits. And then you think, okay, well, I should do 35X leverage. But I can tell you guys, being brand new, you don't need to go that high. You're gonna get wrecked. Even for me, you know, I feel like 15X is my max. And you have to be very picky. Or for me, I'm very picky whenever I'm using that kind of leverage. So there's still a lot I don't know in the trading world, like cross margin. I heard Sheldon knows how to do cross, and you like take your profits and put it in, and compounding. Like I have no clue how that works. You know, so I'm still learning every single day. But you know, what I found that worked for me was isolated and using lower leverage and the buffer strategy, right? Because there was many times as I was getting liquidated, I was like, man, if I would have just had another position there, like I would have never got blown out, and you know, I would have made that much more profit. And that's kind of like where I kind of discovered that strategy. And you know, I use that strategy to grow my account, you know, the Mexi account that I talked about. And I use that for the competition. And it doesn't always work. You know, it doesn't always work. You know, there's some situations where it helps you get out of a position that's bad. And it allows you to preserve a majority of your capital. Crazy story, but before the competition started, I had multiple positions open. I think I was an AVAX, Doge. I remember Miles was talking about Doge is going to go up, and everyone's talking about Doge, and I will never touch Doge again, FYI. It just it doesn't work for me. But I did the buffer strategy on Doge, and it, you know, like it doubled my position, and it just kept going lower. And I'm like, dude, what the heck? Like, what's going on here? So I literally cut the position at a big loss. And then I had a couple other positions. I'm trying to remember what tokens, maybe Solana or something like that. But I basically cut out all those positions, and I was solely in AVAX. And I basically buffered into AVAX, and then I added margin. And at the same time, I was like, you know, looking at my sources, where's Bitcoin, what's going on? And I remember sitting at a negative position, huge position, like negative position for, man, I think it was like a day and a half. And it, Bitcoin did its thing, it reversed. And I remember my negative 50% big size went all the way to like negative 15, and I cut it. I got out. Like I preserved it. Yes. And that was like one of those, moments where it was like, man, if it wasn't for this strategy, I would have like been completely blown out. If I would have just held on to all those positions, I would have been liquidated on Doge and all this crazy stuff. So this is like advanced talk. And maybe you guys will, as you go through your journeys, you guys will experience something like that. But I would say that was, an example of how that strategy helped me preserve some capital. So number one, helps you preserve capital if you find yourself in the wrong side of the coin. But I showed you guys, or if some of you guys may have watched the video I came out with that I made with Joao. But one of my most successful positions was that render position. And so I buffered into the render position, was negative 30% or something at one point. But then I looked the next day and it was up 200%. And then by the time I went to Miami to meet Crypto Banter, that position was like at 300% or something ridiculous. And then I remember everybody was like blown away, like, dude, oh my God. And, it was a cool experience, but, there's risks that I took to get into that position, and it paid off. So just like what you were saying, like it's important to have risk management, but there will be that one moment where and that's where you can kind of increase your size, and you can kind of essentially like, hey, I'm betting the farm here. And that comes with experience, that comes with time, and it comes with your like intuition. Like you just know that's how it's going to go.
David, can I just answer a quick question here? Jakes has asked, Killer Crypto Jakes has asked about 3 times. He says he opened identical positions on 2 different exchanges, and the settings were the same. And his trade, it was a 20x, and his trade on Mexi was $1.09, and Mexi made it $20 and Binance made it $1.09. Jakes, on 20x, I can tell you your settings were not the same. And there'll be a drop-down box where you enter your position size. And in that drop-down box, you usually have the option of putting in your total amount, including the margin, or your total amount, excluding the margin. So your settings would have been different on the 2 exchanges on the amount you put in. And sometimes, like on some tokens, they actually have the option to choose the number of tokens, like you can actually enter the number of Bitcoin instead of a dollar amount. And they have 3 options on that. But to answer your question, if you hit those drop-down boxes, that's what would have been the difference between those 2. Okay. Cool. Sorry, David. He's asked like 3 times and it's been up on screen.
It kind of gears me off into a thought just on that topic, is that every exchange is different. So my experience is that if you do like 10x leverage on Bybit and then 10x leverage on Mexi, same token, Bybit's not actually 10x. Like if it goes the wrong way, it's almost like you get liquidated at 8%, where it's supposed to be 10. And if you look at Mexi, it's legitimately 10. Like if it goes, if you're 10x leverage in the position, or the coin goes negative 10, then you would get liquidated. Where on Bybit, if it goes to negative 8, you're liquidated. So I hate Bybit for that. There was many times where I was like, dude, what? Like, it just made no sense. So be careful out there when you guys open like a position, and whatever your leverage is, 5x, so 5x leverage is safe, right? Because the majority of these higher cap altcoins, for them to experience a 20% swing, that would be a Gary Gensler event or something like that. We call it the Gary Gensler candle. But we got tokens like Wilder and like Spell and like these crazy 20, 30, 40, like Hi-Fi on freaking Saturday, like 100%. Like, you guys just gotta, you'll find your senses with the right leverage, like 2x, 3x, 5x. And my best advice to you guys is don't get greedy. These exchanges are designed to take your money. And Mexi, one of the things that I don't really care for is that if you open up a new token, they automatically start you off at 20x, and that's by design. They have these promotions like, hey, we have this competition, 20x leverage on hi-fi, this and that. If you win, you can get a little bonus, but you're going to get wrecked.
Share in 75,000 USDT.
Yeah.
And they split it between the people that have traded the tokens that they had the special on. It's like, yeah, they just trying to lure you in.
Exactly. So understand the rules, understand the exchange, understand what you have, and just like what you're saying, use proper risk management. You know, if you're brand new, use 1% of your account, because you're gonna have losses, and ultimately, being brand new, your goal is to gain experience. The more experience you get, the more confident you're gonna feel, because you will hit a stride. You will hit, like, there'll be a moment in your trading career where it's like, man, I'm getting so many of them right. And then that's kind of like, okay, now I'm going to go in with like 2% risk, 5% risk.
Yeah.
You know, whatever you can afford to lose. And then, you know, there's a saying, don't risk what you can't afford to lose.
Absolutely.
So, and I see it all the time. You know, we're doing these live sessions and there's people like spamming the same token, XRP, please, I'm negative. And I can sense, because I've been there before, you know, the guy probably put everything, his whole stack in, and he's probably 20x, and, you know, that's like his last of his money. And you guys can't be in that position. You do not want to be trading with a negative stress emotion. You have to be clear-minded and just trade the charts.
Absolutely. Yeah,
so
100%.
Yeah.
I've got a tile that I took off Bybit of one time. I'd had such a good run. It was back in 2019 or 2020, I think, on an Ethereum trade, and I was just so convinced it's going to bounce here, it's going to bounce here, it's going to bounce. And I've actually got this tile printed out on my wall, and my P&L for that particular trade was minus 1,208%. And it's a reminder there, because I was certain, you know, I didn't know risk management then. I didn't know, you know, and as you said, you liquidate accounts, but it's up there and it's there to remind me just to be sensible and to actually trade the chart and don't trade hope. Hope is not a strategy.
It's not.
No.
Yep. These market makers are hoping that you're thinking on hope.
Yeah.
Yeah. So, no, I mean, we all have our stories. Yeah, I mean, I remember, you know, this was like 2.5 years before Crypto Banter, but I turned like 1,500. It was XRP only. So, you know, back before I found Banter and all that stuff, I would just trade one token only. And I remember I took 1,500. I think it was like $1,500 worth of XRP, 15x leverage, and it was that time when XRP went from 30 cents all the way, I think, to $1. I don't know if you remember that. So I remember like taking massive profits. I remember showing off to my friends, oh my God, 400%, check this out. Like, I turned 1,500 into 20,000. And then I remember closing half the position, sending it to another exchange, and then starting a short position. And it was probably like a month of doing, you know, just trading strictly XRP, that at one point my account was 100,000. And it felt amazing. I remember telling my dad, bragging about it. And then, you know, not having the right proper risk management, and same thing like you, feeling confident. I remember following certain groups, and then this one guy I really respected. I don't know if you guys remember Crypto Kite, who's from Crypto Face, was in this group, and he posted a chart of XRP, you know, and I'm like, oh my God, XRP, what's going on? What does he think? And he's like, I'm opening a position here. This looks great. We're bottomed out. And I went heavy there. And and that was when the SEC went after XRP. And XRP went all the way down to 8 cents. And it was like,
almost overnight. I think it would lost 92% or something like that. It was brutal.
It was brutal, and that's why I don't trade XRP anymore. But those are, I went through those experiences, and I could have sat there and got depressed and say, I'm giving up. This is not for me. And I'm sure a lot of people do that. But for me, I was very resilient, and I was like, got to figure it out mentality. Like I said in the interview with Sheldon, like, people figure this out. Like, how come I can't figure this out? Like, I'm going to figure this out. And being a trader, brand new, like, you got to have that mentality. I'm going to figure it out. But don't try to figure it out by losing all your money, right? Practice with just small size, practice and find your flow. And I promise you guys, with due time, you will find your flow. So, and that's what's awesome about this community. We're here to help you guys. We're here to guide you guys, give you guys setups. But where I came from, I was just relying on other people. I didn't chart anything. I remember meeting, Crypto Banter out there, and I was even telling him, like, dude, I'm not even that much of a TA guy. Like, I'm following the charts on Discord, which I came to find out it was Dylan. So got really cool with him, and I was just like blown away. Like, dude, it's your charts. And it was funny when I met Dylan. He's like, bro, I can't even believe people use it. Like, I thought nobody's looking at these charts. Like, I was like, why am I even doing this? I'm like, dude, you're the reason. You're the reason, man. Like, no, keep it going. Add some more. But being more involved, it's forcing me to become a better trader and like drawing the Fibonacci's correctly. And so for me, this is a new experience, being out here transferring my knowledge and my feelings and my thoughts to the masses, and just being very, very picky and particular, because I want to be able to give the best value and the best setups, and it's forcing me to become a better trader, which I'm grateful for. So even someone like me, of where I'm at, I'm still growing, I'm still learning. And you should always have that mentality. Never have the mentality that you know it all and you got to figure it out, because you're always going to learn.
Yeah, absolutely. I see somebody actually, Master Trader asked, do you ever take breaks from trading after negative losses like that? Or is it best to keep going?
Yeah, no, yeah, you have to take a break. If you take a loss, you have to punish yourself. And that's the thing about trading. It's like the casino, there's people that just keep pulling money out, and going to the blackjack table, or going to the craps table, and they lose, and they pull money out, They're like, dude, I'm bankrupt. Don't be that guy. Like, take a loss, take a break.
You
Punish
have
yourself.
to, what happens is when you've had a big loss or a big win, it's always best to take a break, because you get this emotion happening, this emotion of I'm bulletproof, or this emotion of I have to make this back. And trading has to be done emotionless. You have to look at the chart and assess it based on exactly what it is. And if you don't take a break, those emotions, whether they're negative or positive, they kind of hide the warning signs from you. They hide you don't see all the chart info, because you're thinking, you get in this, if you've just had a big loss, you're panicking. You go, I need to make $5,000. Where am I going to find it? And you'll enter trades without noticing the warnings why you should not enter this trade right now. And it's the same if you've had 3 or 4 big wins. It's so easy to give it all back, because you're so bulletproof. You're going, yep, I've just done 5 successful trades, 20x, 20-30% on each one. I'm bulletproof now, and you're going to place another one with higher risk than usual, bigger position than usual, and that's the one that's going to take your money.
That's exactly true. And whenever I took losses, or back before Banter and my success, if I got liquidated and I took a loss, I took, there were times where I took 2 weeks off, and I would still look at the charts. I would still look at Bitcoin. I would still see, different tokens, and I would be like, man, I would long right here. Like, I would still be in my mind, like, if I was trading, I would go long here, or I would go short here. So I was still trying to keep up with like my intuition with trading. and then I would see an opportunity, right? I would see a massive, death candle or something like that, and it had already been like a week and a half, 2 week break, and I'm like, okay, let's go again, and I would go.
Yeah,
So
fantastic.
definitely, if you guys take losses, don't try to make it back. You don't want to be in this revenge mindset because you are acting on emotion. You can't, like, if you start to feel this emotion, stop what you're doing. Like, just go research tokens, go research spot, go watch the crypto banter shows. Like, there's just so much out there in crypto. It's not just leverage trading, as addicting as it may be. But then once you feel at peace with yourself and you kind of understand, you've practiced in your mind, or maybe you just put a little bit in, like $10, right? Like maybe you normally trade $1,000, like just put $10 in. You still want to have the fun, or you want that that dopamine hit or whatever, or you see the P&L, or you want to practice. Like, hey, do it, but don't risk your pot of gold. I saw somebody put a comment on the bottom left there. Protect your pot of gold.
Yeah, absolutely. You need that pot of gold to keep going.
And you need it, right? Because again, right now, this is exciting, guys. Like, you guys are here right now, and we're in a bear market. When the bull comes, like, the audience is going to magnify by 10 times, 100 times, and all of these people are going to be trying to figure it out. And you guys are going to be that much more ahead of the curve. You guys will already have the experience. You'll already have learned how to not be emotional about your trades, and you will make that much more money in the bull run. And some of you guys will get lucky and be able to live off that, or maybe even retire off that, right? Crypto, there's a lot of potential.
I think that's all of our hopes.
Yeah, find the next Pepe, put $1,000 in.
So we do have a question. What's your strategy? How many coins? David's actually, we're 20 minutes into his hour. David, did you have a screen you wanted to show, or anything prepared, or did you want to explain your buffer strategy? I've got to jump for half the hour. I'm back on in 40 minutes with Bruce.
Okay, cool.
But I do have to run and get some stuff sorted for my day quickly.
No, go ahead. I'm trying to see where I can see this chat, or maybe I can just go on my phone and read the chat and just answer it. Let me see here.
David, on StreamYard, there's a little button on the right that says comments. Click that and it should all be there.
Yeah, thanks.
Okay.
There's the other David. Thank you, legend.
Yep.
Thank you, David. Okay. Well, no, thanks for your time and collaborating with me a little bit there.
Oh, no, my pleasure. Absolute pleasure.
Cool.
Fantastic.
Take it from here.
Thank you. See, have a good one. And I'll be back, as I said, in 40 minutes. I just need to get some work stuff sorted for the day. And then when I'm done with Bruce, I got to rush off to work. So, yeah.
Okay. All right, Shaun.
All righty. See you guys.
Okay. Present, share screen. What's going on, guys? So I will read the questions and just kind of freestyle. See if I can just add one golden nugget for you guys, or something that's going to help you. I would say that's the goal here. Is the Freon in your minis? What? Is the Freon? Oh, neon in your mini split? I don't understand. You're talking about the Bitcoin light thing? Okay. Let's see. What's the question here? How many coins you hold? Look to create liquidity. Yeah. So let me just kind of give you guys some perspective. Okay. So I'm going to freestyle here. I don't see any questions yet. I will just kind of go for a few minutes here and then check the questions, or maybe better yet, see if I can split this off here. Share, present. I don't know how to do this. I suck at this. StreamYard streams. Okay, here we go.
I can assist you if you need it.
Okay. No, I was just trying to make sure I can see the questions as I'm going through here. So as I'm explaining stuff, I don't want somebody to miss. Okay. Yeah.
All
So
right,
let's talk about it. Let's talk about indicators. So what are my indicators? So I've got the moving average, the daily. I've got multiple moving averages, but the only one that I really use is the one that Dylan told me to focus on, which is the 200 day, right? So like we were talking about that spell, and typically there's a reaction, some kind of reaction in this moving average here. So by the way, I didn't know anything about moving averages before like Crypto Banter introduced that to me. Volume, I have volume here, but I don't really use it. I use Heiken-Ashi candles. That's just kind of a habit. And it kind of helps me with trend reversals and things like that. One that I use a lot is the Keltner channels. You guys have seen me talk about that with Bitcoin. And then I've got Luxalgo, right? And then I learned from Annie the market session, so I'll use this sometimes, but I've kind of already know when the sessions are. Like Asia opens in an hour and a half, 7 p.m. my time. So then every time it's 7 p.m., like all these reset to zero. And so that's when I know the session starts. So right now we're in a time where the markets are closed, and usually there's a couple of whales that are trying to manipulate some of these tokens. I'll notice. And that's the thing, guys, work on your watch list. Like you can see I have a lot of things on my watch list. I'm constantly adding. This is watch list 2, right? So this is kind of my next phase. Watch list 1 was before as I met Banter and stuff like that. But watch list 2 is something that, just kind of the new tokens, identifying new setups, what's in, what's popular now, what's not popular anymore, getting rid of, just kind of cleaning up here. And then I have color coding, right? So I have red here. This kind of helps me for just, S&P 500, the Dixie, like this is just kind of market, market things for the market. I have Bitcoin, that's the main thing that I take a look at. And then at the top, I kind of move them up as far as tokens I'm looking at, like the next setups, right? If there's a token that there's no setup, I'll drag it down and I'll move it down here, and I'm not really paying attention to it. And then I've got some spot tokens here that I've heard about, adding some spot bags. And then these are like tokens that in the live session, people are like, hey, what about this token? What about this token? And, just kind of adding it and charting it. And that's kind of how I found Spell, right? Somebody said, hey, what about Spell? And then I busted open Spell and I started charting it from scratch, and been making some amazing calls on Spell. So number 1, get organized with your watch list. And for indicators, I just keep it super simple. I've had mentors of mine tell me before, like, just keep things simple. Like if you complicate stuff for yourself, you're going to get confused, and confused people do nothing, right? So I have the RSI, pay attention to the RSI. And then I used to have a lot of time frames here. You can see 5, 6, 10, 12, 20. I mean, I used to have all of these time frames. And I remember when I took sniper school, Sheldon's like, these are the time frames that I use. So I condensed it down to the daily, the 12 to 8. I've got the weekly, but I usually use the daily, the 12 to 8 to 4, the 1 to 15. And then for scalping, or like I love watching the 1 minute candle. I know that probably sounds ridiculous, but the 1 minute candle has helped me a lot in certain scalp situations. 3 minutes is kind of like condensing down the 1 minute. And then Crypto Lifer says the 7 minute. Learned it from, I think he said he learned it from somebody. So I added it. I use it here sometimes. But there's another indicator that I tried using. It was like a divergence indicator, but I really don't like to use divergences. I rarely ever use divergences for my decision-making process, because a divergence can always be extended. So you may think, hey, this is that divergence, let's go short, and then you get wrecked. It's the divergence is like being extended. So I don't use divergences. What I found is mostly the Fibonacci's and the order blocks, which took me a little bit of time to figure out, but now the order blocks, I love it. And then Simon taught me how to use the other Lux Algo. Yesterday, I set the settings, I sensitivity. I didn't know any of this stuff. Like, right, you see this box here, 12. Change the sensitivity to 12. And then he said, hey, just use these three. So I've kind of just memorized this in the pattern. I don't really know what they do, but bottom right, middle left, top right. So I'm still learning this. And I use Lux Algo as more of like the last check off. I don't use it as a primary, like this is my, this is why I'm going to go long or short, right? I don't use it as a primary because I've seen it fail, right? And not every indicator is reliable. But yeah, so let's talk about buffer strategy for a quick second here, right? So I was talking about, if you guys watched on the live session, Blue Zell, this would be a good example. Where is she at? Here. Right. So I talked about this deviation, and I considered, I had an order at 19,950, just a random, and I rarely ever do preset orders, but I had a preset order at 19,950, or yeah, 19,950. So let's mark this real quick. 19,950. I had an order right here, and I thought I caught the top, right? I think it wicked right here. Thought I got the top. I was like at 25% profits, and I was like, okay, this is the deviation. I'm right. Like I thought it was. You can see where this red line is, right? I drew it, and I thought this was it, right? But the deviation continued, and I considered it, right? But you guys probably recall in the live session, I said, man, I got stopped out of break even, Dylan. Like, and that's something I would encourage you guys to do. If you're well into profits, set your stop loss at break even at least, or set your stop loss like in profits, right? So where you're like, if you get stopped out, at least you make 10%, right? You have some capital, and it's important to do that, right? Because if you were short right here, so I'm gonna just do this, guys. The red, I'm gonna change this to red for a short, right? A short right here. This is where I was, and if you get stopped out, right, you have your capital, or if you stopped out in profits, right? So let's just go down here, like 1%, right? So 10x leverage, for example, you would have made 10% of whatever your capital was in your specific position. But the beauty is that if you get stopped out in profits, or you get stopped out in break even, and this thing goes higher, well, then now, like if you're paying attention to the charts, and obviously you're going to need to like stare at the charts, like the 1 minute, the 3 minute, and look for some kind of like reaction. And then that's where you could like re-enter, right? You could have re-entered right here, but I wasn't watching Brazil. I wasn't paying attention. I was in some other trades, and I got stopped out, and I'm like, you know what? And that's the rule for myself. If I got stopped out, I was wrong, I'm out. Like, I'm not going to sit there and keep trying and be the hero and like 4 times, 5 times loss. And then boom, I'm like, dude, what the heck? Make a rule for yourself. If you lose a specific, you're trading some kind of token, and you might be in some kind of stride, right? You might be getting it right. You're getting it right. You went long, you got it right. You went short, you got it right. You got it right. And then boom, you got it wrong. You're like, oh no, I can't believe I'm wrong. And you start getting into this ego thing, and you're like, let me try again. And you're wrong. And like, you're trying to prove to yourself, like in your ego, like, don't do that. I did it before, and you get wrecked. Don't do that. But as far as buffer strategy goes, right? So 19,950. So how this works is that, if you guys are using Bybit, don't use the buffer strategy, because you can, but you're going to need to use like smaller leverage. And even brand new, I recommend you guys just using small leverage straight up. Like, there's no reason to go crazy 10x. I know you guys may see some people, they're showing P&Ls with 50x. Don't fall for that, because you will get wrecked. It's your 50x leverage, guys. If you went short 50x leverage on Blazell right here, you would have been liquidated right here. Right here, you would have been liquidated. Like, if you're 5x leverage, you're negative 10%. Okay, so let's take a look at how big this swing was to the top. 7.64, right? So typically I'll do like 8.5x leverage, and then I'll have like a buffer right before liquidation. So if my, when you start a position, it'll tell you the average entry, it will tell you the fair price, and it will tell you your liquidation price, right? And on Mexi, you can actually click this little button and it'll copy it, and then you can post that for, so you don't have to sit there and stare and like mistype or something like that. But so for example, let's just do this. 10x leverage will just keep the math simple. So if you went 10x leverage, so on Bybit, for example, if you went 10x leverage, your liquidation would probably be like right here. Like it makes no sense. Like it's not even 10x leverage. But on Mexi, they're fair, right? So 10x leverage, your liquidation would probably be 21,954. So let's mark that. 21,954. And so what I do is I'll take this red line and I'll change it to yellow. That's kind of like my warning, right? That's like my safety net. And this buffer strategy works if you know where this token is going to kind of reverse, right? You don't know exactly, you just know there's some kind of pullback, there's some kind of reversal. That's why I posted the cast trade, because it's like cast doesn't respect any Fibonacci's. It does its own thing, and it's like trying to find the precision entry. It's like a waste of time. So that's why I was like, I'm just going to buffer into this thing. So essentially, you would have another order right here. So let's put this order as another sell. Okay. So for example, if you had $100 right here, okay, we can see the 100, and you had another position here. This is how it would work. $100 order just sitting there waiting as a limit order. Okay. What happens is, the brush. Okay. So what happens is you have a position here, it's going up, you're 10x leverage, you're staring at a negative 80% position, freaking out, right? Before the buffer strategy, I'd be like, dude, I'm 80%, I'm out. And that's typically my thing too. Like if I'm buffering in and it's not working, like I learned this from another guy, I think his name was Oracle, the crypto Oracle, but don't get liquidated. Just at least cut and like have something, right? So usually 20% is my like, okay, I'm just getting the F out of this thing, dude. It's not gonna work. But what happens is when it hits your order, your new entry automatically gets moved up, right? So let's just take a look at the center. Let's just ballpark it. So now your average entry automatically moves here, and your new liquidation moves here. Does that make sense? But now this position is combined. There's now a $200 position, and this goes away. Okay. So what you can do now, like that's why I'm saying 5x leverage is like hard to get liquidated, because it would need to swing 20% to hit your buffer, meaning it would need to swing 40% to completely liquidate you. What are the chances of a token going 40%? Not very much, right? Tokens like Hi-Fi, for example, some of these ridiculous token Rune, like some of these crazy tokens that we see, there's always like one or two oddballs every weekend. Like it looks like Immutable X might be the next one for this weekend. I don't know. But it was Rune, and then it was Blazell, and then it was Hi-Fi. When the competition started for Bybit, it was YGG. And these tokens, you got to just like, I would recommend if you're new, just don't mess with those tokens. But moving on here, right? If it hit here, now this is your new average entry. And so how I basically, compounded my accounts and stuff like that is that you would see the reversal. So what happens here is that you have a bigger position and you're at a better entry. So whenever it comes down the way that we knew it was going to go, because remember, it's a game of probabilities. It's not always going to go the way you think it's going to go. Because again, Blazell could have did some crazy thing like this, and you got to just pay attention and get the heck out. But this, where chart is, looks like a deviation. We talked about why did I think this is a deviation? Like, what's the logic? Let's look at the macro. We're at the 8 hour. We're looking at the channel, right? This doesn't make any sense. Why is it going so high? And now it's back inside, right? It was a fake out. So I was betting on that. And, I was considering adding a buffer on Blizzell, but I got stopped on a break even and I was too focused on spell. And that's the thing, right? You don't want to be in 10, 15, 20 different trades. Like find the 2 or 3 or 4 or 5 and get good at it and identify the levels. Like that's what I did before I met Banter and all those guys. Like Phantom was one of my favorites. Solana was one of my favorites. AVAX was one of them. Yeah, there's a couple more. I remember trading Rune. Yeah, Rune was another good one. I remember writing that up like 110 to like 150, like tons of profit on Rune, right? So that's the thing that Sheldon taught me in the training with the school is that like, because I used to just do one token. I used to just only Ethereum. That was it. Like I didn't know about altcoins, USDT, like only Ethereum or only XRP. And yeah, there's some people that are good. Like they're just good at trading that one token. But if you get it wrong one time, like, man, you get wrecked, right? So it's good to diversify. That's what I learned is that diversifying into multiple different tokens, like Sheldon says, you have your soldiers, you have your AVAX army, you have your Solana army, you have your render army, right? They're going to go out there and they're going to freaking make tons of profits, but they're like kamikaze. They're going to die. They're going to suicide, right? You're going to lose all the profits very quickly. So you'll learn to identify which ones are high risk, more volatile, which ones are safe, right? Like Atom, back before the whole SEC crash, Atom was like my safe haven. Like I had a huge leverage position in Atom because I just knew that it was not going to liquidate me. Like it wasn't going to move. It was just constantly doing these 1 or 2% moves every day, going up, going up, going up. So it was like a safe play. So you guys will find what tokens that, you'll find a rhythm with whatever tokens you're in. But back to the buffer strategy, that's where it makes sense, right? So if you want to play super, super safe, right? Like 7x leverage, for example, it would need to go 14% to liquidate you, right? So if you're 7x leverage, your liquidation would be like right here, 25,004, right? So that means if you're 7x leverage, the chances of it pumping 14% is not very high compared to 10%. And what I noticed trading over all these years is when you see like a 5% Bitcoin dump, 3% Bitcoin dump, right? These altcoins dump 10%, usually, right? And when we're in this kind of market, seeing the 10% Bitcoin pumps and the 10% Bitcoin dumps, they're not very common, right? So with that being said, Bitcoin going up 5% or going down 5%, usually the max I'll see is like a 10% dump on an altcoin. And you'll see like these market makers do a heavy, heavy wick of 10% in reverse. So that's where I kind of discovered the buffer strategy because I just kept seeing red death candles and like immediately going back up or me getting liquidated and it completely reversing after getting liquidated. It's like, dude, oh my God, like why? It's like they almost knew my position was there. They almost knew that I was going to get liquidated there. So that's kind of how I came up with the buffer strategy as well. So, if you had a buffer here at 24,995, that means your new liquidation would be, let's do this trend line. Let's make a poll here. Yeah. So then your new liquidation would be here. So like if Blizzell, if you were 7x leverage, you started the position and let me see, yeah. It went here. So let me just erase this yellow line. So your position would now be moved up here, but now this would turn into 400, for example. So you can actually double buffer, which is smart. And then your new liquidation would be right here. Yeah. So that's kind of where I came up with it. Like it prevents yourself from getting liquidated and it prevents yourself from freaking out from negative P&L. Now, if the buffer never hits, great. Like cancel these out, and then now you can go start a new position. And that's how I started off with my Mexi account. Is that I remember, I took the course, I took Sheldon's course at Sniper School, and then I started a Phantom position, and it was 1,400. I started with 1,400. I put 700 in the Phantom position, 15x, right? So, and then I had a buffer position on my Phantom, 15x leverage, meaning it's like essentially I'm like 7.5x leverage because I had a buffer there, right? So if it hit my buffer and it went all the way down, it's almost like everything I had combined there was a 7x position. But no, my first position was 15x and it skyrocketed. And I remember my Phantom position was like at 200%. So I'm like, heck yeah. So I closed half of it. I had some profits from there. And then my buffer, I canceled that order. And then I set my Phantom position at break even. So if there was a Gary Gensler candle, like my position would have been safe. Yeah, I would have lost my profits, but at least I have my capital. And then I used, the order that I canceled, that was a previous buffer to go start like a Solana position or go start an AVAX position, if that makes sense. So let me take a look at these comments here. $100x. Yeah, I don't know how you guys do that. The day when BTC dump and you have some alts that stand up against BTC. Yeah, like Adam. That's what I noticed with this dump that happened last night. Like Fetch held itself pretty well. Now it's kind of going down, but Adam and Fetch, they're kind of holding themselves. But you guys will notice tokens that are unaffected and just add them to your watch list and watch it. Gary Gensler candle, if you guys remember, there was like a 25% dip on all altcoins that happened because Gary Gensler sued Coinbase and he sued Binance, like all at the same time. It was a coordinated attack. And so all these exchanges like Robinhood sold all their altcoins because it was security or whatever the heck. But yeah, so anyways, guys, like this is advanced strategy. Like this is advanced stuff, like what I'm teaching you guys. Like, I'm not saying you're brand new, go do the buffer strategy. Like, no, this is for, I would say experienced traders that are more, they're doing the precision entries, but they're getting stopped. You're getting stopped out all the time. You're kind of getting annoyed by these stops, and you want to use a little bit more higher leverage. Because again, some of these calls that I set up here, I try to keep it in the 2 to 3% stop loss range. Because if you are 7x and it hits your stop loss, well, you're only going to lose 20% of your position, right? So if you have a $200 position, you're going to lose $60 or no, $40. But that's the thing that happened to me a lot is I kept getting stopped and stopped and stopped and stopped. And stops are important, right? But if you're looking at a position that is like, man, I feel like this is the bottom, like this has got this room for higher here, and you know for a fact it's going to go the way you think it's going to go, that's where buffering kind of plays an important role, right? And in every strategy, there's going to be risk, right? I'm not saying buffer strategy is amazing and it's the only strategy. Like I only use it sometimes. So hopefully that was helpful on that. How many winning and losing trades did it take? Man, I don't really know the number. Like I didn't pay attention to the statistics. But there was quite a few trades that like if they didn't move, I cut it. Or like I remember in the beginning I was in a lot of atom positions. It would pump like 15%. I'd close it. Like I wasn't getting greedy. I wasn't like sitting there waiting for huge P&L before getting out. So I would take, I'd split up multiple positions. This one would pump, I'd get out, or like one of them would go a little negative, and then I would take some profits from my other one and then kind of add more to the negative position because I knew it was going to go up. And then basically that position combined, and then it went the way it was supposed to go. And I remember doing that for a little bit there with Phantom. So I remember Phantom in the competition. I was watching. It was I was watching the charts. I was watching the show. It seemed very bearish, and I took a short on Phantom. I went all in. Right, I did a Degen play and doubled my account in one move. And then from there, I was being more conservative, kind of splitting up into 4 different positions and so on and so forth. And then Fefe was really the ticket that got me tons of P&L, because at that point I had 2x my account, 3x my account. So I was already like, had good size capital to mess with. And I remember doing 5x on Pepe, right? And so I did 5x on Pepe. I started to short because it was just like this ridiculous red candle. And I, the way, through my experience, I saw the rejection on Pepe. So let me see if I can even pull that up. Where is he at? I know I got it here. Here we go. Yeah, I think this is where I started the short. No, maybe it was Bybit. Hold on, guys. So I know I had a Pepe chart that had a bunch of red lines in it. Maybe this was it. Finance and Lexi. Gosh, I don't know where the heck it went, guys. Man, it's probably this one. I don't know what happened to this. Or maybe I hid them. Yeah, I'll answer that question here in a second. So, basically, guys, I was playing a Pepe up and down. Like, I noticed this crazy rejection, and I started to short position. And what happened was, every time it came, so it would come down, I would shave some profits right here. I'd probably close like 30%. And then when it bounced, I added more. So then I basically had my same position size again, and then boom, wrote it down. And I just kept adding more, writing it down, and compounding. And this is in May, right? So, yeah, this was in May. Yeah. So I think it was right here. Like I was like 1,500% of the competition at this point. And then I had my stop loss like somewhere right here, and I got stopped out of Pepe, and that was it for me. I'm like, I made a lot off Pepe. I'm out. And then that's where I went long on Gala, and then that's when I met Rand. I caught the bottom of Gala at that time. And that's when Sheldon was like, bro, just stop trading. Like, you're already at the top. Like, just chill. Like, you're already, like, you don't need to be doing any more trades. And I was foaming at the mouth. I'm like, dude, what's the next trade? Like, check this out, Sheldon. And he's like, no, bro, like, you're good. Just chill. So that's how I won the competition. And then towards the end of the competition, the second place tried to pull a move, and then he basically blew himself out. He was coming for me, and he blew himself out. So that's how it was. Okay, so let's talk about high Kanashia candles, right? So maybe, for example, let's just use Bitcoin for an example. Let me pull a different Bitcoin chart. Okay, so here I have a clean chart. So I learned this from CryptoFace. Like, everything I'm teaching you guys, it's all like I'm just passing down things that I've learned from other people, watching other people, being in different groups. None of this is like, I mean, I'm sure there's like some kind of buffer strategy, or I think Bruce told me that there's a name for it. Like, he learned it from some other trader. But that was like the only thing that I kind of had self-discovery on. But if you guys can see here, When it's red, it stays red. Like it kind of gives you the sense of like, okay, we're in a down market, and you're kind of looking for that first green one for the reversal. So if none of this existed here, the first green candle is kind of like the sense of, okay, maybe we've bottomed out here, right? Or if you go to regular candles, it's just so random. Like, so for me, the Heikinashi candles just kind of helps me identify bottoms and tops. And I've just gotten used to it. And I just kind of leave it like that. I'm not saying it's the right way, or there's probably a better way. It's just kind of part of me now. And I just have a Heikinashi all the time. But it really helps me with these Keltner channels, right? So let's talk about this. I talk about this all the time, but this is something else that I learned. So typically, right, and this helps me with trading. And if you guys are paying attention, like this is the part you need to pay attention to, because this is like what saved my ass so many times. So it doesn't happen all the time, okay? I've been wrecked before trying it, right? But it's just, it gives you a sense of when it tops out. So every single time that you can see here, right, it's piercing above the Keltner channel, and this only on the 15 minutes. Don't do a Keltner on any other time frame. It's only on the 15 minutes. But every time it pierces up and you see that first red candle, that's usually like, okay, we've topped out here. Okay. When this happens, this is where I'm looking at altcoins. That I'm immediately, so like if none of these other candles existed starting at Monday, you know, whatever, this second red candle right here, none of this existed yet. What I'm doing is I'm looking at altcoins that are freaking super highly pumped, right? For example, like Spell, right? Maybe this is the time. This is just an example, right? So I'm looking at altcoins because there's more volatility and there's more chance to make more money, because Bitcoin does these little 1%, you know, 1% move, or what was this right here? 2.5% move, right? It's cute, right? If you're 10x leverage, 25%, cool. If you're 5x leverage, what, 10%, cool, right? Nothing wrong with that. But you'll see these altcoins that have pumped ridiculous amounts. Like, look, Immutable X right now, 20%. What is going on here? Right? So Keltner channels do not work on altcoins. Don't say, oh my God, like it may look like it, but don't rely on that. So that goes the same for if it's on the downside, right? So you can see here, if we zoom in, when it went down here and it pierced below the blue Keltner channel, right? So when it pierces out, that first green candle, it's kind of like, okay, this is bottomed out. So then I'll go to the altcoin and I'll look at what's at support. I'll look at what's at the 382, the 618. And if it's in an area that makes sense with the Fibonacci on this, whatever altcoin I'm looking at, I'll go long. Because if we have bottomed out here and Bitcoin's going to have, you know, a 1 or 2% move here, well, that altcoin's probably going to pump like 5 or 6 or 7%, right? So whatever your leverage is or whatever your risk management is, you'll make that much more profit. But this is also a cue to close your position, right? So you can see here, it kind of throughout this day here, it has another pump, pierces out the Keltner channel. Well, whatever position you're in, get out, because Bitcoin's going to reverse, and guess what? That altcoin's probably going to dump as well. So that's why, like, if you guys saw my interview with Sheldon, I'm always like, hey, I'm always paying attention to what Bitcoin's doing. I'm always like, you got to know the pulse of Bitcoin. You got to know the heartbeat of Bitcoin. And you may not know what Bitcoin's going to do next. So that's where you're cautious, right? Like I told you guys, what was it yesterday? I was cautious. Like we had the FOMC meeting. Like I've seen it so many times where the announcements, whatever, and there's a big candle and then it reverses. And it's just like, you don't want to be the guy that tries to get it right twice. Like just wait. And then whatever that first initial move is, then short that, right? Or, you know, if it's a big pump, short it. And you know, especially if it's out of the Keltner channel, or if it's a big dip, long it. So I think at the live session, we were right here, right? It was one of the first things I pulled up. We were like right here. I think we were starting to see the green, but that's where I was telling Dylan, I'm like, yeah, I think we've bottomed here. Let's look for some altcoin longs. And that's why I went to Wilder and I was like, well, dude, I'm long in this thing, right? So it's crazy because, oh man, I love Fibonacci. Maybe I can show you guys this. So I didn't take the short on this token, but I saw the short. That's what pisses me off. Like, okay, so Fibonacci. So I took it from the top. This is cool, right? I went to the very bottom, and then I used the 6-6, not the 2-3-6, right? And what was cool is that there was an order block right here at the 618. Yeah, there was an order block right here. It disappeared, but last night, I'll even show you guys the picture. It was in our private group in WhatsApp. But I was telling the guys, like, I had a drawing here, but it was basically a short. And I woke up this morning and I was like, dude, oh my God, it played to the T. Like I should have took the short. But what was crazy is that last night I was paying attention to this. This was last night, my time. But it had this stupid 5% move. Like it went past the 618. So it was like, dude, what is this doing? Like it's not respecting the 618. And sometimes that's what market makers do. They know that we're doing the Fibs and Fibonacci's. Like, believe me, these whales and sharks, they know that there's chartists out there. There's chartists that are watching levels and stuff like that. So you gotta think like a little bit of a market maker too. If I was a market maker, how would I screw these guys over? So saw this big pump and I was considering building a short here, but you know, this coin is very volatile. I don't know what's behind it, like what's going on, why is it so like bullish. I found out today why it's so bullish. So if you guys don't know, WorldCoin, the guy behind it is the same guy, or he's an advocate or a supporter. I don't know. Like he's in the project, same guy that made ChatGPT. So that's the big hype here, right, with the WorldCoin. But this morning, we were like right here, and I was like, man, I should enter WorldCoin. They call it wild, but I was like, man, I should enter here because if you guys pay attention, the last time it touched the trend line, it just kept going up, right? And then boom, wipes the longs out, right? The market makers, you know, these exchanges don't want people in these big positions for it to keep going up, and then you know they have to pay those guys out. So what do? They wipe them out. It touches the trend line, and that's what's awesome about trend lines. Always draw a trend line where you can. It touched the trend line, and it started this little climb, and so now we're well into profits. I talked to Jason. Jason's expecting a target of like $1.82 or $2 from where we're at. So I added a little bit more here. Sometimes that's, you know, when a token's taken off and you're, you know, 60-70% in profits, add 20% more to your position, right? Because you don't want to, you know, if you know for a fact it's going to go up, you're confident, right? Add some more to the position so you can make some more money or increase your leverage, however you wanted to do it. But now, you know, this is the drawing that I drew on the live session. And you know, I was expecting Bitcoin to go a little bit lower. It didn't do it. It touched it, but I was expecting Bitcoin to do something like this first, but it didn't. So we didn't get. And if it did that, then that's where that precision entry would have happened on WorldCoin. But a little bit of a sneaky long, but we're in, right? So just my 2 cents there.
Hey, brother.
What's up?
How's it going? I've been watching for the last hour, just soaking all the goodies up.
Cool. Yeah. No, I was just kind of getting lost into the explanation.
You know, it's amazing how we do that, right? I mean, we live and breathe this stuff, and we can just go. I mean, it's like so easy just to go on and on because we're excited about it. And I just absolutely adore how enthusiastic you are and all the perceptions you have about excuse me, how a token will move and change. I mean, I just love it. It's almost like you've got some sort of psychic connection to these things. I love that.
Yeah, I think it's maybe I've just been doing this for so long that I pay attention to all the little nuances and all the little details and all the little moves and what a little move here, what does it do to the other ones and stuff. Keltner channel, guys, right here.
Yeah.
Partner. It's free.
Yep. It's a really good way of seeing whether something's over. It's funny because you're combining the Heikanashi and the Keltner channel, and that's like you don't need moving averages because they basically incorporate that into the channel, and your Heikanashi kind of, because it's smoothing all the candles out. It's almost like it's got, you can see with the size of the candles growing and shrinking, and Heikanashi, it's almost like you've got a moving average built into it. It's brilliant.
Yeah, exactly. Yeah. It just kind of one day, and it just every little detail, every indicator, everything that I've learned, it's just like I've internalized it, and it's like second nature to me. And then I just move on to the next one, and then I add it. So like Lux Algo, added it, now I'm using it, right? And you guys will kind of find your thing too. Like there's no right or wrong way. There's hundreds of indicators out there. I've heard so many different things that work for different people. Like Kyle Dupes, like the guy's using so many crazy indicators I don't even know. Like I was even asking him, hey, you mind doing a one-on-one session with me? And I'd like to know about your indicators. But definitely you guys will find the set amount of indicators that work for you.
Yep. But that's the key. You got to find the ones that work for you, because every one of our brains is slightly different. But once you find the ones that work for you, just rock and roll.
Yeah. So, I mean, over time, some of the things that I give here, and, if you guys incorporate it and it works for you, like, hey, that's a win. That's really why I'm here, is if I can get back and pay it forward, that makes me feel good, right? Because when you have a portfolio and you're kind of already made it, it's kind of like money's just a tool. Like what's after that? What is, when you have the things, like what's after that? Like, and for me, giving back and feeling good and like helping people, like, that's what's kind of driving me here with you guys now. So
totally, so true. And you can feel it when you're talking, that you're not. I mean, you don't need to trade. You don't need to teach, because you can trade and make your money and all, et cetera, et cetera. But this is something I'm feeling like with Shawn and all the other people that are really chipping in here, is that so much has been given to us. People helped us, supported us, took us under their wing, corrected us when we were kind of going amiss, supported us when we were having a bad day. And that for all of us, because we're all volunteers, this is a kind of a paying it forward thing, isn't it?
It is, yeah. And this is just the beginning. Like what excites me is where we're going to go in the future. Like this is where we're at in the bear market. I can't even imagine what this is going to be in the bull market. And you guys are all in the beginning, right? So something to be excited about, no matter where your portfolio is at. Be happy with where you're at. Be grateful that you have this knowledge and education, because if I found this a few years ago, like I would have just been that much more ahead of the game. So no matter where you guys are at, like just be grateful for what you have, and you'll get more of that, right? So
I love it, man. Totally love it.
Thank you. I don't know if there's any other questions here. I know my time's up.
That's okay. We're this is our last leg. So Shawn and I are going to close it down after 24 hours of whatever this was, but it sure has been fun. So yeah, if you got more questions.
Somebody asked me about like my spot, like, hey, what's your top tokens? There's a general rule, guys, like half of my portfolio is in Bitcoin. Like you don't want everything into altcoins, because you get stuck holding the wrong bag. You're going to get wrecked, right? So, but yeah, I've posted some of the spot tokens I'm in, like Terra, Cetus. I was looking into Kuji. I have a cast position. I've got some Ethereum. Made a bad play and I got into Mong.
Got into what?
Mong. Back, it was like a couple months ago, and
okay, never heard of that one, but go ahead.
Took a huge loss. Yeah, like everybody's talking about Mong coin. It was like one of this influencer.
Oh yeah.
Man, I lost a lot on that one. But we take wins, we take losses, and you just learn from every loss. And we're in crypto, guys. Like one magical moment, you never know. You 100x. There's all kinds of tokens that will 100x in the bull market. You just got to be around for that, right? So
that's exactly.
Oh, one last question. And then I'll pass it to you guys. SFP, swing failure pattern. I wasn't awake for this, but this is an example of a swing failure pattern. You guys see that?
Yep.
It forced its way down and boom, crazy reaction. Let's look at it on the shorter time frames. So in a 3 minute, right, forced its way down, touched the 618, and immediately got pushed back up. That's kind of like your cue, guys. Like, watch for the buyback, right? And then they sent it. So usually a SFP will be, and that's what I was looking for on Bitcoin earlier today. All right. Oops. That's what I was looking for here. You see that drawing? That's what I was looking for. I was looking for an SFP, but this was the SFP actually. We saw it in front of our faces. It forced its way down. It was at a level, and that's why it's important to market these levels. And it couldn't pierce through that level. It literally kissed it, and boom, right back
So
up.
a question about this is: do you enter rather than place you see it start to reject, or do you wait for its first retest after
Wait
an
for
SFP?
wait for the reclaim. So for example, if this was like a level,
Mm-hmm.
you don't want to be like, oh, it's SFP. Like if you see something like this, oh, it's the SFP. No, because then it could do this.
Yeah.
And then you're like, oh my God, I'm negative. Well, what the heck? You want to wait for the reclaim, right? So what is the reclaim? Reclaim will look like this. It gets back into the level, typically bounces, and then that's your entry.
Got it. Yep.
So if you guys are new to SFPs, I recommend practicing with small position, right? Don't do something crazy. And then when you land it, right? Because again, guys, the cryptocurrency market is a 24/7 casino. Like there will be opportunities all the time. Don't think I have to do this. Like this must be it. Like practice. Wait, see an SFP, make a small position, long it. If you were right, write it down. Hey, I was right. There's an SFP that happened here on Bitcoin at this time, and I was right. Boom. Pat yourself on the back. I got it right. And see if you can do it again. And see if you can do it again. And then you'll be like, okay, I got it. I can trade SFPs now. Because it is kind of like an intuition type of it's like you got to be a sniper. Like you see the enemy, boom, I'm going to take the shot right now. It really is a sniper kind of move. So hopefully that was helpful, guys.
It's amazing. Thank you so much. I got to tell you, my favorite part of the day is before you and I go on the live in the morning, yakking with you a little bit.
Yeah, man. We're like, what are we talking about today? What is the alpha?
No, we talked about today. Who's less awake in the morning?
Yes. I was like, how are you doing, man? Because I couldn't do it.
I got my coffee. I'm ready. So,
yeah. For me, coffee doesn't work. I have to do these clean energy drinks with no sugar.
Well, I'm on that now. I got my smoothie now. So
there you go. Cool, guys. Well, I know there's a lot more questions and stuff like that. Feel free to message me on Twitter or in the live sessions. I'm sure at some point I'll get these questions answered to you guys. And more importantly, if you guys took one nugget that could help you guys in the next week for your trading journey, I think my job's done here. So.
Thanks, brother. Really appreciate it.
All right, guys. I'm gonna pick up my daughter now. So
have fun. Thanks.
See you guys.
Thanks.
Thank you, David.
Yay! All right, brother. You and I were gonna clean house today, and I'm excited for this one because we talk about trading so much, and yet every one of us really knows that the long-term real upside for all of us is going to be an investment. Right, in building a portfolio. And it's funny because my personal goal is to be sitting on a beach while my portfolio is making money and I don't have to work at trading, right? So this to me, I love it. I'm obsessed about it, but I can't wait till I don't have to do it anymore, right? And that all comes down to having a portfolio that's growing when you're, on the beach, right?
Absolutely.
So I'm going to be here to help you, Shauno. Rock and roll, though.
Yeah, thanks. Look, Bruce and I have talked about this quite a bit, and I have done this segment previously on the stream, but I've, you know, we were thinking earlier this week that I've never done it in the American time zone, and you know, so I'm excited to do this and share this with you guys.
Yep.
And yeah, we go on from there. Fantastic.
Let's rock and roll, brother.
So I'm going to get my screen up.
Okay.
Let's see.
Present. And then I'll put it up on stage if you want.
All right.
There you go.
Once again. Okay. So we are a little bit short on time. Well, not short on time. We've got about 45 minutes left. Yeah. And so I'm going to go through it, but please, Bruce will stop me. He'll be reading messages. I'll be reading messages. You guys got any questions? Then we'll take them from there. Banter Bubbly is still here. Hey,
I don't believe you. I don't believe you. She's amazing. She's done 24 hours.
Yep.
You rock.
Fantastic.
I love it.
So, a couple of things, and those that have watched any of the of the workshops and been through sniper school, you know, Sheldon does talk about using or trading pairs, and we get a lot of questions about how do I understand? Hang on, I'm not sure. What do I buy? When do I buy? How does it work? So I'm going to try and explain it as best as I can. I'm going to explain to you the difference between spot trading and derivatives or futures trading, and then margin trading. And I did actually have a question, what's the difference between derivatives and margins in my last session I did about 2 hours ago. Cool. So I'm going to go through that and teach you what the process is. Alrighty. Fantastic. Now, anyone here who's done a trade before, and this is called kind of like demystifying pairs trading. You know, we see Sheldon who's given an example of the Atom Ethereum chart and how he's used it or you could have used it doing a couple of trades a year and actually increasing the number of Ethereum you had. And people don't necessarily understand, but how does it, you know, what does it mean? If you've made any trade, you recognize these: Bitcoin, USDT, Ethereum, Cardano, XRP, Fefe, USDT. The way these tickers are put on your somebody else's screen has come up.
Oh, I meant that. Sorry, that should be yours. Hold on, I didn't mean to bring it up. Hang on.
That's all right.
Sorry, that was my fault. I was just getting one ready in case you wanted to be back. Good.
Okay. So if you've traded any one of these, you have traded a pair, and the way they list them, whether it's on the TradingView charts on the exchange, is the same way. Your first ticker here, what we say ticker is the symbol, is your base asset. And the second one is your quote asset, right? So going through that and just understanding you have actually traded a pair before, we can look at how do we do it, right? The general idea of trading, you want to buy low, sell higher, or you want to sell high and buy lower if you're shorting. So we're looking to essentially buy in these green sort of circles on the way up, and selling or shorting in the red circles on the way down. And that's the standard. Well, it doesn't matter what chart you're looking at. And in this case, if you're hitting buy in the green, you are purchasing your base token, Bitcoin or Ethereum. And how do you pay for it? You pay for it with the quotes token, USDT. And when you sell, you're giving back, or you're selling your Bitcoin or your Ethereum to somebody else, and they are paying you in USDT. Okay. So when we look at the mystery of all the pairs trading, the only difference here, if you're looking at an XRP, an XRP Bitcoin chart, when you hit buy, you're purchasing XRP, but you're paying for it with Bitcoin. And when you're selling, you're giving your XRP to somebody else and they have to pay you in Bitcoin, right? Same with Ethereum BTC chart. When you're buying, you're purchasing the Ethereum and you're paying for it with USD, with Bitcoin. So, you know, you kind of get the idea. These tickers, and what happens when you buy and when you sell, what you have to pay for, what you're giving up, what you're getting back, right? So it's not a mystery. And all you need to do to determine these sort of levels is, once again, you're going to your chart and you're bringing up that pair on your trading view and you're buying lower and selling higher, or you're selling higher and buying lower. Okay. Now, you've probably, this little chart with a yellow background on the left here, you've probably all seen this, and this is what's happened the last 3 bull runs and is likely, or the big probabilities is going to happen the same again, is when this bull run takes off, you find it's led by the big daddy. It's led by Bitcoin. Okay. And people put money into Bitcoin. They start making profits. You have this massive run. And at some point, they're going to start taking those profits. And people are funny like this. They can't sit with cash in their pocket. They have to spend it. But in crypto and trading, what they tend to do is they take these profits from Bitcoin and they put it into the larger caps like Ethereum, Cardano, Atom, and those sort of, and those go up in price. And then it filters down. They take profits from that and they focus on the mid caps, and then eventually they'll take those profits and they will be looking at these low cap 1000x type gems with some of their profit. So in this process, if you're sitting in cash at the moment and you've started DCing, to follow this cycle through this bull run, you're going to be opening or looking at whether it's your Bitcoin or Ethereum chart with USDT, because you've got USDT in your wallet, and you're going to be hitting a buy, right? And what's going to happen is you're going to give up that USDT and you're going to end up with Bitcoin. And as the cycle progresses and you're watching that chart and you see it's come down, it's hit a resistance, the RSI is oversold, you've got your trend line, it's breaking that trend, right? That's the point where you're going to start looking at all the charts that have Bitcoin as their quote asset. And you may be going into Ethereum, but once again, you're going to be buying. And all you're doing is you are buying for a second time, but you're essentially swapping your Bitcoin for the Ethereum. And the cycle continues, and you see the dominance dropping of the total two, and you see money start moving into these mid cap and lower cap alts. And once again, you're going to buy, because you're now looking at all the pairs that have that Ethereum as their quote asset, and you buy again. And at some point at the top of the market, you're going to hit a sell and convert back to USDT. And that's one thing, you do need to take profits at some point. David actually brought up the spell token, and I went, I did notice it. I've had some alerts that have come through. And I actually sold spell in the last bull run at 2.8 cents. It is currently sitting I had a nice bag. I had a nice 3 or 4x on it. It's currently sitting not at 2.8 cents, but at 0.05 cents, even after this most recent pump. You know, it's down 98% from where I sold it. Now I've got a lot of bags that I didn't sell, and we all got these little success stories, but we all have these bags of coins or tokens that we bought at the top and during that last bull. And, you know, we do believe in these projects, and we do believe that they're going to come back. And that's why we're still holding them. But the fact of the matter, if you bought one Bitcoin at 55,000 and you put it in a wallet and you just left it there, then regardless of what the price goes to, if it goes down to 15K again, if it goes up to 60K or 100K, at the end of the day, you've still got one Bitcoin, right? Now, what you can do with that is you can sell it at those little red levels when you're expecting a drop, and you can buy it. And I'm going to show you in the next slide sort of how you can actually build your number of Bitcoins without taking extra money out of your pocket, right? And to go through this, we do need to understand the difference between spot trading and futures or derivatives trading. It's very important you understand this. With spot trading, when you're on the spot exchange, you're actually purchasing that token, and that token becomes yours. It may be still on the exchange in your personal wallet, but because it's your token, you can actually choose exactly what you want to do with it. All right? You can sell it. You can transfer it into, put it in storage in your own wallet and just hold on to it. In a lot of cases, you can actually lend it out and get staking rewards, get interest essentially on your money or on your token. And, you know, by providing liquidity in some liquidity pools. Now, one of the big disadvantages of spot trading is you cannot actually set a take profit or a stop loss until you own that token, because you can't sell something you haven't got yet. So as a general rule, if you were using spot trading just to build dollars for your future to buy more Bitcoin, and you set yourself, okay, here's a buy order, I think it's going to bounce here. You set yourself a buy order, and you go to sleep, and you wake an hour later, that token hits your price, the exchange does the buy for you, fantastic, but you were asleep, and you were unable to set a take profit or a stop loss on that. Okay, now that's okay if you plan on holding it for long term, fantastic, you got it at your price. But if you're trying to build your portfolio in this market, it's not necessarily the best way to go. And the advantage that derivatives or futures give you is futures is a speculation on a change in price. It's purely a contract between yourself and the exchange. And you can actually say, and because it's just a contract and a piece of software essentially, or you're able to set your buy price, your stop loss, your take profit, all at the same time. All right, you don't have to own that token in order to settle that stuff, and you can have a look at a chart and set up an order with a buy price and a take profit and a stop loss and go to sleep. And you can wake up in the morning and something's happened overnight and it's wicked to wherever your order was. It's picked that up and it's come, gone the other way. It's hit your take profit. And you can wake up and go, oh, wow, I just made 3 3.5% while I was sleeping. So that's the big advantage of futures. And the other advantage of it is you are able to leverage what your bet is. Okay. So with the futures trading, they allow you, okay, if I want to take a $100 position size, I can put it at 1x and put down $100 and say, I think this is going to go up, you know, and if that token doesn't go up, if that token drops 10%, that position size is going to also drop to $90 and you're going to lose $10. And regardless of whether you're have a $25 margin at 4x or a $10 at 10x, your position size is still the same. And any move in the market is going to give you, dollar-wise, a 3% move on a $100 position size, you're going to make or lose $3. That's the pure fact of it.
Can I interrupt for half a second?
Absolutely.
Because I for everybody that's listening, I want you to like tattoo what Shauno just said into your forehead. I'm not kidding, because we both observe in Discord people becoming obsessed with leverage and misunderstanding that it's simply a tool to be able to build a position size that maximizes the cash you have while still controlling risk. It's not a be all end all at all. So focusing, I took a 50x leverage or a 200x leverage or stuff like that, that says nothing about the level of risk you incurred or the profit you actually made. The only metric that really matters is position size. And the way Shawn was describing it is like, please just tattoo it somewhere on your body because it's brilliant. Thank you. Anyway, I just wanted to say that.
No, absolutely. Absolutely. Okay. Let's move on. So, as I mentioned before, if you bought just call it one token, or even say 10 tokens or 11 tokens at some point in the past, and you're sitting with that 11 tokens in a wallet, and regardless of what that token does, whether the price goes up or the price goes down, your asset is essentially that 11 tokens. Okay. And in 2 years' time, it's still going to be 11 tokens. But by and this is what brought the whole idea to me, is I had these 50 odd bags or more of tokens that I bought at the top. They're down massively, and they're still the same number of tokens we had. And one of the lessons that I picked up very quickly in sniper school was give every dollar in your account a purpose. Make it work for you. And like Bruce said, you want to be sitting on the beach, sipping cocktails or smoothies, and you want your portfolio working for you. That is the goal. So in this example, instead of just leaving those, let's say I bought these tokens here I had $100 as an example, and I'm down at $9 here. I bought 11 tokens, right? Instead of just putting them in that wallet, what I want to do is I'm going to follow them and on the chart, and they're going to get to a point where, you know what, I'm up quite nicely. So I'm going to sell them here because I do expect a projection. And I now am sitting, I don't have my 11 tokens anymore, but I've got this asset. My asset now is $121. I've made a $21 profit. Fantastic. And you keep watching it, and you see this your token come down back into its support level, and you take the step. You buy them back. And because you had that asset of $121, you're now able to buy 13.4 tokens. So without actually taking any money out of your pocket, all right, you've actually increased the number of tokens you have. And when you look at initially, my initial investment was $100. I only got 11 tokens for it, but I now have 13.4 tokens. And that brings that brings my average buy price down to under $9. Okay. Now, most of the time in spot, if we make a wrong call here in this green box and we set our stop loss, what we're doing is, yep, you know what? It's going against where I thought, and it's probably going to keep going down. So you're going to sell those 11 tokens as your stop loss, and you're going to be sitting on $93.50, and that is now your asset is your $93. Yeah, you've had a $6.50 loss. That's all right. If this comes down to $6, you're going to get 15 tokens for that. Now you've got 15 instead of the 11 you bought up here and underwater. All right. And just keep that in the back of your mind as we go through this. Now, once you and I'm asking everybody, don't even attempt this until you've achieved 2 goals. Your first goal is to be profitable in spot trading. Mm-hmm. All right. You cannot move if you are not profitable, if you're losing money in spot trading and you decide, oh, let's try derivatives or margin, whatever X you use is going to just magnify your losses by that amount. If you're profitable, it is a valuable tool, yes, but don't try margin or futures until you are profitable in spot trading. Okay. Once you've done that, your next goal is going to be playing with a bit of margin and futures trading and understanding what leverage does to your total account value. Understanding just exactly what an X means to you. 2X, 3X. How much are you actually risking? Now, with margin trading, and this is now the difference between margin trading and derivatives trading or futures. With margin trading, you are still buying and selling the actual token. And the way margin trading works, if you think of it, you want to buy a house and you have $50,000 in your account. This is your deposit you've been saving up. And you can go to your bank or your lender and you say to him, I want to buy this house. It's $500,000. This is my deposit, $50,000. Would you loan me the money? And if you have a good credit rating, they go, yeah, no problem. And in that situation, you now have an asset. Your asset is your house. And you have a liability. Your liability is the $450,000 you borrowed. And regardless of what happens in that market, if we go through another GFC like 2008 and the value of that house drops to $400,000, you still have your asset, the house. You still have your liability, the $450,000 that you owe the bank. And margin trading works in exactly that same way. When you use margin trading, you're borrowing something from the exchange and you end up with an asset, but a liability you have to pay back. Now, think again on that house. If the value of it goes to $700,000, you still have the house. You still have a liability of $450,000, regardless of how much that house is valued at. You still have that $450,000 liability. Now, margin is going to work the same way, and I'm going to show you this. With margin trading, what you can actually do is you can take that little bag of tokens that you had, and you say you start with that 13.4 tokens you've been practicing with in spot trading, on spotting the supports where it's going to bounce and the resistance where it's going to withdraw or retrace. You can actually borrow in that green circle. You could actually borrow $117 from the exchange, and you can buy another 13 tokens in this green circle, right? So you now have an asset. You own that 26.4 tokens. You've got the 13 you bought with the borrowed money, and you've got your original 13.4. And regardless of what happens with that tokens, if they go up, if they go down, regardless of what happens, at some point you have to pay back your liability, your $117, just like you have to pay back your bank. Doesn't matter what, they don't care whether your house price goes up or down. You have to pay back your $450,000 mortgage. And this works exactly the same way. You will have that liability. And as this trade progresses, the price may go up to $10. You still have to, regardless of what it does, you get to the red circle, you still have to pay back that $117. Now, with that margin, you can decide here, okay, we've hit a resistance here. What are we going to do? I know, I'm going to sell, I'm going to pay back my loan. But because the price has gone up, I only have to sell 10.7 tokens to get $117. So I'll sell those 10.7 tokens. I will pay back the exchange their $117. And I'm now sitting with 15.7 tokens. I've made 2.3 tokens in profit. Okay. My average buy price has also come down because my initial investment was $100. And I started with those 11 tokens. $100 divided by that 15.7, it's bringing my average price way down. Now, in a situation like this, and this is where you need to be on top of it with margin trading, you need to be comfortable. You have to work out what your risk is, okay? And at some point, if this trade has gone in the wrong direction, you've got it wrong, at some point you still need to pay back that $117. So just like spot trading, you know what? I'm going to pay it back now, but I have to sell 13.8 to get that 117. So you do that, you're now left with your 12.6 tokens, and that's fine. For me personally, those bags would have been in tokens anyway. And I'm using this to build it because I don't know when this bull run is going to start. And I've had them for a couple of years anyway. I do want to be in tokens. So in this case, I only sell what I need to repay my loan. Right? I've had a 0.8 token loss. It's okay. I still started with 10. I've still got 12.6 left in my case. All right. Let's look at what happens in a short position. You can still use those 15.7 tokens you've got left as collateral. And you can borrow tokens from the exchange. And you may be sitting here at this $11 mark and you go, yep, I'm actually going to borrow an extra 15 tokens from my exchange, and I'm going to sell all of them. So I now sell 30.7 tokens, and my balance sheet now looks like this. I've got a $337 asset sitting there. It's mine. But I also have this liability. I have to give the exchange back 15 tokens at some point, regardless of whether these tokens go up or whether they come down, right? And if I got my trade right, I got the direction right, down here, I still have my asset is still $337. My liability is still 15 tokens. And we find out, we get down to this green circle, we decide, okay, I think it's going to bounce here. I'll take that $337. I'll buy as many tokens as I can. Right? And in this case, I managed to get 37 tokens for that. And I'll repay the liability to the exchange. I repay my 15 tokens. Right? And I'm left with 22 tokens in my wallet. So I've now made a 6.3 token profit. Now I'm sitting on 22 tokens, and my initial capital I inserted in this was $100, and I bought 11 tokens. I'm now sitting on 22 tokens. My average buy price, because I haven't taken any more cash out of my pocket, my average buy price is 22 tokens at $100. It's $4.50, or and it hasn't sold at $4.50 since before the previous bull run. So this is just a technique to take those idle bags that you have sitting, right, and give them a purpose. Now, personally, what I've done is I used to have 50 and everything's down. So I've been swapping some of those useless purpose bags because I cannot monitor 50 tokens. But I can manage on a longer time frame, on a daily sort of time frame, a 3-day time frame. I can keep an eye on 6 or 7 of them. So I would rather grow 6 or 7 tokens than have 50 of them sitting in idle bags, because those 6 or 7 now have a purpose. Every dollar in my account has a purpose. Okay. Does this make sense, Bruce?
Massive sense, brother. Makes a lot of sense. I mean, what you're describing is that there are a lot of, within crypto, there are a lot of techniques for accelerating the
absolutely
the revenue we can make both on spot and in futures, and each of them, of course, carries with it additional risk, right? You never can. A smart trader always says, "Okay, I can do this, but boy, that's adding risk over in this corner." On margin, for example, on spot, you owe that money back. So if Bitcoin wakes up angry one day and takes a dump, you could be in the red until that price comes back on up again. And that if it gets to a certain point, the exchange can call your margin and say, "Okay, your loan's overextended, give us our money back." But if you planned it out well and bought at the correct levels, it basically allows you to accelerate your earnings. Same thing with the token to token thing. I just love the way you explained that, because in crypto, most of the time we're trading, like on the stock market, against a token or an asset against a stable coin. Dollars, USDT, USGC. We'll pretend they're stable, okay? We've all been through times where they weren't, but for they equal $1 for the most part. So we used to trade in that. So we only are trading one moving object, and the value of that you described of trading a token, an alt against Bitcoin or against Ethereum, is the fact that, hold on 1 second, I'm gonna bomb. Hold on, I'm closing that. Goodbye. That you can long-term leverage the difference of growth between Bitcoin and an alt, so that at the end of the day, it's not that you're making more dollars, but you're ending up at the end of the day with more Bitcoin than if you'd simply bought it and held it.
Yeah.
And that's brilliant. That's just brilliant.
Absolutely. So I'll just go back here very quickly. So in this case, you'll notice my stop loss, as I said, and I want to be in these tokens. I was in these tokens to start. I want to be them in them when this bull run takes off. And so my stop loss here, because the purpose of this strategy I'm using is to build, have more tokens. I want to be in tokens. I don't want to be sitting in cash, waiting for a time to buy when everything's up 40, 50, 60%, you know. So in this case, yes, my stop loss would be, okay, my trade's gone against me. I'm going to sell these tokens here and, you know, repay whatever liabilities I have. But it's a case of I want to be in tokens, and that's the purpose of these bags. All right. So as a quick summary, with spot trading, when prices are going up, okay, you're actually accumulating dollars. You own a token, price goes up. When you sell them, you've got dollars. If you've sold them at the top and they're on the way down, you can accumulate tokens when the market comes down.
Right.
All right.
Would you like me to show how Sheldon
leverage
actually does those trades on the weekly?
Yeah, give me 1 second, Bruce. I'm just going
go for
to
it.
finish this quickly. So leverage trading is a very good tool because you can actually make dollars regardless of whether it's going up or down. All right. So we're all using that to make more dollars to buy more Bitcoin. But with margin and using the strategy I've just showed you now, you can actually be making, instead of dollars in one direction and tokens in the other direction like spot trading, you can actually be making tokens in both directions. And that's the power of it. Okay?
Absolutely. That's great.
Take it away, Bruce.
Oh yeah. Okay. So this is really just filling in one blank on your explanation of the mathematics and why trading back and forth between an altcoin and Bitcoin or Ethereum is which are more stable than the alts. And Sheldon actually teaches a methodology for it. First, this is a long-term strategy. This is not day trading or scalping. This is something that he describes by using the weekly chart. So this is the atom cosmos on the weekly chart. And what he did is he basically says, and I think this is spot on, is that there are two triggers, both of which have to happen in order to trade. So let's say, for example, you started over here, right? So you're holding a lot of Cosmos, as Cosmos is the token you're trading against your quote tone, which is Bitcoin, right? So right now the market's coming down. You're holding Atom. Atom is expensive, so you can buy. You take your Atom and you sell it into Bitcoin. You buy Bitcoin with your Atom, and what you do is you track it with a trend line, and you track it with the stochastic RSI. Now, two things have to happen. So doesn't matter whether the price is going up or down, but during this period of time, Bitcoin is doing better than Atom. And that's the key to this whole thing. So even if price is going down, Atom is going down faster than Bitcoin, right? And then it's going to reverse. And the idea at the end of the day is to own Bitcoin. So watch this. So you bought some Bitcoin with your Atom right over there, and you track it down. And if you'll notice that at some point, first your RSI will cross over there down under the 10% level. At some point also, you'll notice that it breaks the trend line, right? And this means that at that moment in time, Atom is a stronger token than Bitcoin. So what you do is you take your Bitcoin, however many Bitcoin you got, you simply buy Atom with all that Bitcoin and you ride it back up. And what happens is that but there's a bull run. This could take 2 months, 3 months, sometimes 6, 9 months for that to happen. But what happens is over this time, the value of your Atom compared to Bitcoin will have come up somewhere around 140%. Okay. So at whatever point, right, and I think this was 3 or 4 months on this particular chart. This was about 4 months, right around 4 months. So at the whatever point it happens, you simply buy 140% more Bitcoin. Again, the trigger is that your stochastic RSI crosses at the top, right? And I'm sorry, back here. Yeah, so cross to the top over there, but you don't do it yet until it breaks the trend line, and you're able to buy 140% of the Bitcoin you made before. In other words, you now own 40% more Bitcoin than when you started this thing. And what you do is you then track it down, right? And at whatever point the stochastic crosses down here, which it's already done, and crosses the trend line, which is already done, you take your Bitcoin, right? It doesn't matter what it's worth, because compared to Atom, it's worth a lot more than the Atom you previously had. You simply at this point buy Atom with your Bitcoin, and then what you do is you ride it back up again, and you do this. You farm this thing over and over again, and at some point when prices are up, you will end up with significantly more Bitcoin than you would have had if you had just simply bought it and held it. And that's the strategy. It's very simple. It's slow. It doesn't take staring at charts every day. You could check on this once a week, once every couple of weeks, and be perfectly fine. So for those that don't have a lot of time to trade, this is a great strategy to use to build up a bigger and bigger bag. So that's how you do what we just showed you.
Absolutely.
So cool. That's great. So we're coming to the end of this thing. We got just a couple more minutes before we're done. Any last questions for us on what we've been talking about, or anything else? Let's see. What do you got?
I saw somebody, hang on, Michelle actually said, I didn't know you could trade with the stop loss on the spot.
You want to show about that?
I don't have a chart up. I've just got my presentation there, but absolutely, you can set a conditional sell order or a trigger order as a stop loss, and end up in that. But you can only set it once you've bought the token or once you own the token in spot trading.
And it's still on the exchange, because remember, on spot, you own that thing. So if you buy a Bitcoin, you own the Bitcoin. So you can put in a stop limit order, a conditional order. But if you take that token off that exchange and put it in a wallet, that whole thing becomes invalid. So yeah, it's if you're going to be using stops in spot, it's very difficult to set both a stop loss and to take profit. The reason being because those orders conflict with each other. So, for example, if you have a Bitcoin and then you put a stop loss in and to take profit, and it hits your take profit, what happens to that stop limit, right? It becomes an invalid order that's sitting in the system. So most exchanges have, or not most, but some exchanges have a function called OCO. One cancels the other. And if your exchange has that, you can set these two cells, and actually two cells, because that's what they are. And if one of them, and they're linked together, so if one of them triggers, the other order goes out, goes away. So that's how you do it in spot. It's much easier to do in futures, because the whole thing is a single contract. Time to buy. Yeah. Ruben says time to buy. I love it. But you know, let me just show one thing that your perspective is more true than you can imagine. I mean, just from the big perspective, guys, you know, we get all wrapped up as traders in the little move over here and the little move over there, and we tend to get, you know, all excited and, oh my God, I've missed the pump and all that stuff. I mean, I'm just going to show you Solana, which is my biggest long-term investment. I mean, take a look at this chart, right? It's on the weekly chart. I mean, you can see it. We're nowhere. I mean, all these pumps that everybody gets all whacked out over, from the weekly perspective, from the big perspective, it's nothing. We've done nothing, right? And as someone, I don't know how long have you been in crypto, Shaun?
Since
When did you get in?
2017.
Yeah, so you were
So-
actually back in the good old days.
So I'll tell you I'll tell you a quick little story, and this is something for everyone to watch out for. Okay. I got interested in crypto and I started buying when Bitcoin was sub 5K. And at that time in Australia, it was very, very difficult to get cryptocurrency into fiat, into Australian dollars. And I answered an ad for, first of all, a bot style auto trading thing. I inquired about it on Facebook, and I essentially what I did was I went, yeah, okay, I'll give it a go. And I transferred a small, like 5% of my holdings onto this exchange. And I actually started trading, and they were giving a couple signals. It wasn't what it should be, but I was making money. It was my first foray into leverage, using a little bit of leverage and margin. And I actually built that account up quite nicely. And then they were pressuring me to add some more funds. And I said, I'm not doing that till I've checked my exit strategy. So he said, all right, place a withdrawal. So I did a withdrawal, and they did deposit fiat into my bank account. And it was only a small amount. It was about $40. So I checked the platform. I checked my exit strategy. I did that. I went, okay. I then transferred another 90% of what I had to start trading with. And I went to log in one day, and I got the error 404 website does not exist. And at the end of it, I figured out, or after some research, I found out that essentially this was purely, it wasn't an exchange, it was purely a website that was using a demo trading or paper trading program. When I followed the blockchain track, I found that it had gone into this account and been moved out like within 12 hours to somewhere else. And the funds that I deposited were just entered in by somebody, whoever was in that program just entered in there. Okay. And so I lost 95% of what I had. It was about a Bitcoin's worth at the time, which for then was a lot of money for me. And that totally scared me off trading. And I didn't trade I didn't even open that for about 18 months. And then in 2009, I started, when things started picking up again and there was hype and it was in the news, I went, ooh, just like typical retail. As soon as it's in the news, they all want to FOMO in at 60K. I went and opened that little wallet, and the 5% that was originally left that in that wallet was about $200 more than my initial investment. And that just made me go, wow, the potential of this. Crazy. I need to catch this next time.
Yeah.
And that's
really crazy.
Yeah.
Oh, that's great. So, but you said something that it has happened and is going to happen. I just want to end with this, is that, what happens is that, down over here, right, this is where, when, only people like Shawn had heard of Bitcoin back in 2017 and were interested. I didn't hear about it back then, that's for sure. I didn't hear about it until I was trading Forex, and crypto was a way of getting money from my bank into my Forex exchanges with low fees, and it would happen quickly. So I started buying Bitcoin and then trading. So basically, using it as a transfer mechanism at about 10 grand, at about 40 grand, up around, oh gosh, I'll come to the Bitcoin chart, sorry. Up around here, I started saying, hey, something's happening. So I started trading here. I started buying crypto because it was so much hype. You get on the show, crypto's going to go to the moon, it's going to go to 100,000, and stuff like that. And then, of course, what happened is we crashed, and then we came up and we crashed again. But what you got to understand is what's actually happening. for those of you that got into crypto late and bought your first Bitcoin in the 40, 50, even 60,000 range, who was selling you the Bitcoin, right? And it was the people that bought it down over here that when everybody was scared to death and quaking in their boots and too scared to do anything, these people simply started buying it cheap. And then as price and the FOMO started going, the retail traders like me at the time, we started buying it up over here. And so they took their cheap thing and sold us their expensive thing, right? And then it crashed down. And so many of us were saying, oh my God, I wish we'd bought Bitcoin back in the day when it was really, really cheap. Well, guess what, guys? Guess what? It's cheap. This is the price it was back here, right? Back in 2020, right? And yet so many people are going, I'm scared to buy it. And so only the people that are aware of this pattern are buying it now. And what's going to happen is price is going to eventually, don't know when, but eventually it's going to start to come back up again. And what's going to happen is all of a sudden the banter shows are going to have thousands of people in every one of them. And people are going to go, oh my God, Bitcoin's going to 4 billion. And everybody's going to be jumping in like crazy. And this thing that you bought for really, really cheap, like the whales, right? If you wanted to be a whale, if you want to be a whale, got to act like one now. We buy it when it's scary. And what happens is when things get really expensive up here, we will sell our Bitcoin to them at a significant profit. That's what whales do. And that's the kind of the plan for going forward. So anyway.
Absolutely.
Yeah. Guys, I think we knocked it out of the park. I want to thank those of you that hung in there. Bubbles, love you. Whoever else stayed on here for 24 hours, love you. I want to give a huge, huge, huge shout out to Chris, who organized this. This was a labor of love to herd a bunch of kittens around to try to get everybody lined up. And then a huge, big old shout out. David, why don't you come up on stage and just come say hi if you're awake.
Come take a bow. David has monitored. David has monitored the back end for 24 hours. He's been there the whole time.
Yeah, your camera's not working. You killed it.
No.
Yeah, anyway.
As soon as I turned it on.
Anyway, guys, seriously, David has been engineering in the back of this thing for 24 straight hours. And you are our hero. You deserve to go have a beer and go crash out for the next 24 hours. But I just want to let you know how much Shawn and I and everybody just appreciate the kind of work and dedication you've put into this. It's been pretty spectacular.
Absolutely.
Thank you very much.
This is not the last one.
We're it. You and I kissed it, man. We did it.
There's more to come, man.
Yeah. We'll do it again next month, baby.
You know what's going to happen now, right? You know what's going to happen now. David's going to take all this alpha we've shared over the last 24 hours and not have to work next month. And we've got to find someone else to do his job.
I hope. Oh my gosh, I hope that's true. I would.
I wish. I couldn't remember what I did 5 minutes ago.
Yeah, because David's in on all our sessions, and he's going, okay, I'll take that trade over there and that trade over there. I get all the secrets. Yeah, I know. Hey, I would love to hear that you just stole everybody's trades and secrets and made $1 million and retired you and your mom. That would make my day.
Fantastic.
Okay, anyway.
All right, guys. It is 10 a.m. here on the east coast of Australia. I actually postponed a couple of jobs this morning, and I need to get to work.
Shauno, thank you so much. I'm doubly appreciative of the fact that you got to share this stuff with the American audience. People have been clamoring for it, and just to really appreciate you, brother.
Thank you.
Thank you very much for being here.
And with that, we bid you all adieu. I'm actually heading off to a rehearsal right now. And thanks, everybody. We will catch you next time. Peace out.
Trade safe. Thanks, everyone.
Yep.